Very much in focus.
Okay, here we go. Time for the equity market session this Thursday morning here in Europe. We're expecting a positive start. Let's show you some numbers, give you an idea of what is going on. We think the FTSE could lag, and that's kind of largely related to what's happening in the commodity space. Commodities, actually, the basic resources sector got hammered yesterday, so it'll be interesting to see how that one trades today. Let's talk a little bit about where we're going to see other markets moving, though. FTSE's going to be kind of flat. Other markets are expected to be significantly more positive. So the Stock 600 starting to see a little bit of life in that direction, up by 0.4%. But we're expecting the DAX to be up 0.8%. We're expecting other markets to be up around 1%. US futures currently point to a positive picture as well, so the momentum should continue as we work our way through. The IBEX is up by 0.9, the AEX is up by 0.6, the CAC is up by 0.7. The FTSE is actually performing a little bit better than anticipated, maybe. But nevertheless, a positive session, I guess, at an index level is what we are seeing here in Europe this morning, Anna.
Yeah, I mean, yesterday was pretty dreadful for all sectors in Europe, apart from energy. So energy was the only gaining sector yesterday. And so we see a bit of a reversal of that, frankly, this morning. Energy plus a few others are to the downside. Not a huge amount, but down by 0.8% on energy stocks broadly. Food, beverage and tobacco, consumer discretionary, grocery stores, so a number of other sectors moving lower. But to the upside, then, it's basic resources, it's more cyclical stocks. So basic resources, banks, technology, all of those are having a slightly better day. Industrial goods and services also trading higher, with the focus perhaps of late on the defence sector, but that's interesting that we are seeing that particular move. But it doesn't seem to be it's not the defence sector that's leading us higher this morning.
Tech is up. SNL's kind of, it got hit hard earlier this week, but it's now continuing to bounce back. Industrials look fairly good this morning. Banks are back up. I think BAT's ex-dividends, so just be aware of that. But it is the kind of the defensive end that is weakening up. Nestle's a little softer. Shell, Novartis, BP, Unilever. We're basically just getting a flip from what we've seen earlier on in the week. And that seems to be the overall narrative. Buy tech, sell oil.
Yep.
Seems to be the story.
Yep. Let's get a wider perspective on these markets then. Helen Jewell is with us, International CIO for Fundamental Equities at BlackRock. Helen, very nice to speak to you this morning.
Morning, Anna.
So yesterday we saw, with all the activity in the Middle East over the last couple of days, we saw a sort of knee-jerk reaction to let's go back to the things we did in March, which was around a higher oil price, that moved bond markets, moved energy stocks, and it led to a lot of selling of everything else in terms of European equity markets, because we're pricing in more rate hikes. Was that overdone? I mean, how much should we be responding to higher oil prices, do you think, in this current context?
It's a weird market at the moment because you've got three things that are really going on. The first is exactly the bite you talk about, and that's the macro side. So that is oil prices, which of course is driven by nervousness about the Middle East. Interest rates are in that bucket as well, and what might happen with rate hikes. You know, when you've got inflation on one side and softening of jobs on the other. Then on the second, you've got the fundamentals, which is the earnings and the earnings power and what that might look like. And then on the third, you've got the crowdedness of positions. So on any given day, it all depends which of those is actually the stronger factor. And I think at the moment, it all depends on what the day before looked like. So I think at the moment for today, then what it's looking like is, because of all the moves that we saw yesterday in terms of energy, it's almost a reset of that. But for me, out those three buckets, the one that is always going to be the most important is, of course, the earnings and the fundamentals. And we're going to have earnings coming through again, ASML next week. So these are the kind of things that really going to be driving, and it all goes back to AI. So everything else feels a bit You've got to pay attention. You've got to be aware. That's reasons that you have diversification within portfolios. But those are the two things. It's very, very difficult at the moment, really, to make a very, very clear investment and long-term portfolio positioning call based on those.
Yeah. So is it all about AI, or is it about finding ways, finding diversity at this point as well, away from AI? I suppose, are we looking to diversify into things that are AI related or AI adjacent, or are we diversifying into things that are, as far as possible, disconnected from what's going on in AI?
It's a little bit of both. So the AI connected is, of course, mainly the infrastructure and the sustainable energy names. We've talked about that a lot. The correlations there with the AI trend and the AI theme is still about 0.5. But then you've got other areas of the market which have got very low correlation. For example, healthcare. So healthcare actually has been trading with a zero correlation to AI. Almost like the ultimate diversifier.
Because it's so weird, isn't it? It could be such a beneficiary of AI.
Absolutely, absolutely. So on that basis of that, it has a very low correlation, yet it could be a beneficiary. It is also naturally a more defensive name. It plays into demographics. And valuation-wise, this is a sector that historically trades at a bit of a premium to the market. It's actually trading at a bit of a discount. So it feels that the risk-reward in the healthcare looks compelling, but there's no catalyst. And we're in a market at the moment that feels like it wants the catalyst, so that's the downside.
And is there bandwidth? I mean, we just seem to spend so much time talking about AI that we get any time to talk about anything else.
You guys talking about healthcare.
We'll talk more about healthcare. You say it's hard to invest in this kind of... to have a longer-term perspective on what is going on. So you guys run huge amounts of money. How are you... What does medium-term look like to you at the moment? Kind of what timelines are you thinking about?
So the next few years are actually more straightforward from the AI theme perspective. So we really do believe that the next few years are very clear from an AI theme perspective because of the amount of capital that you'll see being invested in that space. Now, longer term, of course, there are questions. Firstly, in terms of how long you can see the beneficiaries of that spend really continue to do well. And there's going to be questions in terms of, for those hyperscalers, will and look more like we saw, for example, in the telcos in the late 90s, early thousands, or will it be more like the cloud? They are the kind of big questions that the market will be grappling with. There'd be no doubt that at some point, I'd say 2 to 3 years from now, that those questions will start to be impacted.
Why do you think it's that long?
Because of the committed spend that we're seeing at the moment in the market.
The committed spend can change. Commitments are, there are commitments and there are commitments. And if the market turns around and goes, actually, we don't think that this is going to generate the ROI that you're telling us it is, and we don't think that the beneficiaries, that the people are ultimately going to use the AI are getting the benefits they need from it, doesn't that timeline get shorter a lot quicker?
Possibly, but the level of the numbers is so significant that there's quite a lot of headroom around it.
But the market may value that. The market may value that as being a negative. You're spending too much money, folks. That's not a good thing. That's a bad thing. Yeah, I mean, it will be. There is every capex cycle has the point that the capex overspend starts to happen. We don't believe that we're there now. Okay. So the 10 trillion that has been committed, or we see that's been committed over to 2030, that is kind of 10% of the current global GDP. That's our forecasts of the commitment of the spend. There's quite a lot of headroom that could come down just a little bit, and there would still be a huge amount of capital being invested in the system. The other thing is that historically, these hyperscalers, they had of their free cash flow. That has changed. They are now having to raise debt. There is some nervousness around that. But from my perspective, that's entirely normal. When you have these big capex spends, there is always a point that they go from being free cash flow positive to negative. It's almost what wasn't normal is that period of time when they didn't need to raise capital and they didn't need to be free cash flow negative to do that. So I think we're at the kind of still relatively early in this kind of big change in terms of human spend. There is no doubt that this will come, but we think for the next 2-3 years is there. That means from an investment perspective, you lean into the AI theme.
You do the kind of secondary beneficiaries of that. But you do, Guy, need to diversify those portfolios, A, because the risks are not kind of, there is a risk around it, and secondly, because of the day-to-day of what we're seeing in the market. So that's where it comes in, healthcare, LATAM, even the UK, really interesting diversification trades.
Yes, I want to come to one of those, some of those in a moment. But so does that picture that you paint there then, Helen, that withstands higher interest rates, does it? Because with this phenomenon of the changing role that these big tech companies are playing, they're now not these fortress balance sheets. They've still got strong balance sheets, but they're now going out and raising debt as well, and they weren't doing that so heavily before. Does that change the way we think about them and interest rate rises?
Not if it's only a small interest rate rise. I think if it's 25 bips, 50 bips, which is kind of maybe what's been factored in, whether that actually comes given some of the softer job data that we saw last week, the week before, that is a question mark. But there's actually, I don't think it actually does make that much of a difference. It will make a big difference if inflation is really, really persistent and really, really sticky, and we're talking about 50 bips or 1% rates. That is a different ballgame. But 25 to 50, I think the market is already pretty much factoring that in. The other area that the market is also factoring in is consumer weakness. So notice in those diversifier trades, consumer was not part of that bucket. And so consumer weakness, which maybe will be more hit as a result of interest rate hikes, that is already, if you like, not being factored into what we're seeing from the diversification. So I don't think it matters as long as we don't get much more than, say, 50.
Yeah.
I'm just seeing AstraZeneca on the screen.
Yes.
I'm just trying to work out why.
It's nothing we did. Nothing we said.
I think they've had some phase 2 results.
Exactly.
So that is idiosyncratic, not healthcare. Yeah. I believe. But you guys are the ones with the Bloombergs in front of you, not me.
Why knew it? Why knew it? I don't know how to pronounce it. I'll say
idiosyncratic.
Failing to prevent heart problems. So this is a failing to meet primary endpoint in a test, and so as a result, this is weaker. So tell me more about the place. You mentioned LATAM as a place that's really uncorrelated, which sounds like an interesting place to go because we don't talk about it very much then, Helen. So what's the story?
Well, I'm a mathematician by background. So my favourite stat around this is the proportion of the MSCI accredited is about 0.7, 0.8% versus the proportion of GDP, 7 to 8% global GDP. That feels incorrect to me. So the opportunity set from where the actual growth is from a global perspective to where the valuations are is really interesting. And that's what we're looking at, really, where we're trying to focus on the diversifiers, is where are the valuations kind of compelling enough to feel that the downside risk is pretty limited. Without that, it's not going to give you the diversification trade that you need, which is why I mentioned healthcare, which is why I mentioned LATAM. And given this weekend and what we've got going on in the football, let's kind of finish off talking about the UK as well. Some interesting diversification. And the tennis, of course. Yesterday, a great day at the tennis, Guy.
There we go.
We could win Wimbledon. I'm getting way ahead of myself. And the World Cup. Who knows?
Amazing.
And the markets. And UK could win the markets. I mean, the returns that we've seen year to date, given what we've seen in the markets, is tremendous. If multiples hadn't changed, the returns year to date would be 19. They're at 9.
Somebody said the gilts have outperformed the hyperscalers as well, I think, over the last few months.
Yeah, the Mag 7 have become the Lag 7. So...
heard it here first. Helen, nice to see you. Thank you very much.
Great to see you. Thanks, Guy. Thanks, Anna.
International CIO for Fundamental Equities at BlackRock. The core 6 looks like this. We'll come back to AstraZeneca. I think I finally figured out why the FTSE's underperforming today. You're looking at a picture of tech up, defence isn't having a bad day. Pharma is a little lower this morning. Novo's under pressure as well. Chloe is here, though, with details of what is happening in the German industrial space.
Good morning, Guy, indeed. And this is an M&A story with this German engine maker buying the privately owned defense firm FFG for 1.6 billion euros. As we have been talking about with Thales and Excel Technologies earlier this week, there seems to be quite a lot of deal-making activity in this European defense sector at the same time as this NATO summit is happening as well. So definitely a sector in focus, and we have Deutsche this morning very much benefiting from this new deal. Moving on to AstraZeneca, which is taking quite the hit this morning after some disappointing clinical trial results. This is of a drug which is a so-called gene silencer drug, and it was supposed to prevent heart diseases, and it did not meet that primary endpoint in a clinical trial. So this is a big disappointment there for AstraZeneca, and we can see that really dragging down those shares, down almost 10% this morning. Moving on to Computer Center, an IT firm here in the UK, up very strongly, almost 13%, after saying that it expects results this year to be comfortably ahead of expectations, with the first half profit expected to be double from that of last year. So doing very, very well and seeing that reward there in those shares. Staying within IT, and we've got Wolters Kluwer as well, that is up about 5% this morning after being upgraded by JP Morgan, with analysts saying that the valuation was very compelling and that this is a company that could also attract some private equity interest. So we've got this there. And finally, another upgrade, but that this time is for Glencore. The mining company has been upgraded to a buy rating by Goldman Sachs analysts, and we are seeing that drive up the shares this morning, up about 3% for this mining company.
Chloe, thank you very much. Chloe Melly with those stocks on the move. Coming up, we'll be back to one of them we've talked about already this morning. Volkswagen CEO is set to unveil a sweeping restructuring plan for the struggling car maker. We will preview the key meeting next. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. You're watching the opening trade. We're 17 minutes into the session. The FTSE feels very idiosyncratic this morning. It is the outlier, as you can see at the bottom of the screen. The reason for that is that AstraZeneca, which is one of the, I think it probably is the biggest market cap weight in the FTSE 100, it's definitely near the top one or two or three, is knocking 71 points off the FTSE today. The FTSE is in points terms down by 26 points. But 72 is what the AstraZeneca story is taking off. So the rest of the market's got to work really hard to continue to push higher. Shell's down, BP's down. So the oil story is not exactly helping very much either.
Yeah, absolutely. And with that in mind, the oil story, where we are a little weaker on the oil price after a big jump yesterday. Oil is fluctuating amid renewed hostilities in the Middle East, with the US striking Iran for a second straight day. And we've heard plenty of reporting about Iran responding. Now, market participants are looking at the Strait of Hormuz, of course, very carefully, where traffic has ground to a near standstill once again, threatening an already fragile energy supply chain. Let's bring in Bloomberg energy reporter Stephen Stapczynski. And Stephen, what confidence can we have about what is really happening, certainly on the Omani side of the Strait of Hormuz then? Because it seems that as soon as we get these flare-ups, the transponders go off, there's all kinds of interference takes place, ships are in strange places, traveling at strange speeds. What visibility do we have about what's really happening through that strait?
You know, in terms of the ships that do have their transponders on, it's much more active on the Iranian route. Still, activity has dropped to the lowest level since the middle of June, when the U.S. and Iran signed their interim peace deal. There could be some dark transits happening, but according to our reporting, there are a lot of ships that are just being cautious. You know, there was a ship that was hit on Tuesday. It was dark, and it was still hit by Iran, and Qatar was trying to. It was a Qatari-owned ship, and the vessel was trying to hide their location. So even if you have the transponders off, there are still some risks. So I think clearly there is a reduction in traffic going through Hormuz. That's one of the things that the market is closely monitoring. The second is the tit-for-tat attacks that are happening between the U.S. and Iran, because right now, you know, you're seeing oil prices down. That's likely due to a relief that, you know, Iran just targeted U.S. military bases, it seems, in other, you know, Gulf countries. If this were to expand to energy infrastructure, which it hasn't yet, the attacks between the U.S. and Iran, then you could really start to see fears that oil prices rise, because if infrastructure gets damaged, it's more than just opening up Hormuz again, it's also repairing that infrastructure.
Stephen, are ships going back into the Gulf?
We are seeing also a bit of a slowdown in that level as well. There are a lot of ships that have been stuck, and they're using this as an opportunity to get out. But there's been a slowdown in empty ships coming in. And of course, that's a key part of expanding exports through the Persian Gulf, is getting more and more empty ships in. Because if you don't have the empty ships to load the fuel, you can't get more out. And one thing that I've noticed, at least for liquefied natural gas, there are 2 empty ships that are nearing the strait, but outside of those 2 ships, a lot of other vessels have really kind of pushed away from the Gulf of Oman on the outside. So it seems to be a bit of a checkered picture, but overall, just the amount of traffic has been falling.
Stephen Stapczynski, thanks for the update. Always appreciated. Let's turn our attention to the auto sector. Volkswagen CEO Oliver Blume is set to present a plan today for sweeping restructuring at the company's supervisory board meeting, which is going to take place this afternoon. Bloomberg understands the cost-cutting drive could eliminate as many as 100,000 jobs and close 4 German factories. Stefan Nicholas covering this for us. Why is this necessary? This is massive. Do we think the supervisory board is going to sign off?
Yeah, good morning. This is certainly the biggest restructuring any VW CEO has attempted in many years. Blume thinks it's necessary because competition in Europe is rising. New entrants like BYD from China are really putting up competitive pressures with affordable EVs and hybrids. Energy and labor costs in Europe remain pretty high for VW. And all of this is happening in a shrinking market that has not come back to the levels we've seen before the pandemic. So this is a major attempt by Blume to make VW leaner, faster, and more profitable. It's gonna meet heavy and difficult discussions in the supervisory board. And yeah, there's going to be tough negotiations coming in the next few weeks. And the final result is still out.
Yeah, and Stefan, what kind of omen is this then for the European auto industry more widely? Are we going to see more car manufacturers responding in the same way to this rising competitive pressure and the low sales you reference?
Yeah, for sure, that's to be expected. VW is sort of a microcosm for the entire industry with these competitive pressures rising. So we're gonna be seeing cost cuts as well from the other big manufacturers: Stellantis, Renault, Mercedes, BMW. They're all in cost-cutting mode to sort of adapt to this new world and to better compete with the Chinese and also clean up their balance sheets and defend profits.
Stefan, are we getting to the point where the argument that the German car makers have pushed forward, i.e. we should allow the Chinese in here because we're allowed in there and their market is key for us, how much longer is that going to hold water? Because the Chinese car market is really, really tough, highly competitive, and the Europeans are struggling in it.
Yeah, it's really a difficult situation for these car makers. They're still selling quite a few cars in China, especially the Germans. So they don't want extreme protectionist measures happening in Europe because they don't want to damage their businesses in China. At the same time, these same Chinese companies are now increasing pricing pressures also in Europe. So this is a really delicate balancing act for all of these companies. And yeah, for sure we will see tweaks and changes going forward. But yeah, ideally both still need each other. The Chinese need the European market to grow, and the Europeans still need business in China.
Yeah, so Stefan, tell us about the evolving relationship between the European and Chinese car manufacturers in terms of manufacturing for each other. There are a number of situations we've covered where Chinese manufacturers have come to Europe and actually they've involved European plants in a sort of contract manufacturing style. Is that growing?
Yeah, for sure. I mean, there are two things happening. One, the Chinese, the big ones, are building their own plants. BYD is setting one up in Hungary. But at the same time, all of these European car makers have underused plants. And instead of shutting them down, closing them, and letting a lot of people go, which would lead to sort of political pressure, they are now making these deals with the Chinese car makers that come in and fill some of these underused plants. So that could technically be a win-win situation in terms of jobs. But on the other hand, a lot of analysts are saying this is kind of a Trojan horse where we're inviting in the competition and making them stronger. So another difficult situation and not an easy one for CEOs.
Stefan, thanks for the update. Appreciate it. We'll watch the news from this meeting a little bit later on with a great deal of care. Stefan Nicola on the car sector. Quick update on AstraZeneca. The stock is down and is dragging the FTSE down with it. This as we see an update on a key genetic cardiology therapy that the company has been in partnership on that we understand has failed to prevent the heart problems that it was meant to target.
Yes, indeed. Now, just looking through some research from Bloomberg Intelligence on the subject, they say that these results around this specific trial result, this makes the company's ambition of more than $5 billion in sales in Wainua, and I'm sorry if I'm mispronouncing that, it makes it unlikely that the company is going to be able to reach that because it makes expansion rather difficult. So that's why the stock is selling down, I suppose, if others share that view. And we do see the stock down by 9% in this morning's session.
Yeah, this is one of the biggest capped stocks on the FTSE 100.
Absolutely.
Huge points.
As you were saying earlier, top three, certainly for this one, and oil and banking make up the others. Coming up on the programme, we will talk about the defence sector. Saima Hussain, aerospace and defence equity analyst at Alpha Value, will be with us. We're just coming off the back of that NATO event in Turkey, the NATO gathering, where they've outlined billions of extra spending. Where's it all going? How is this reshaping, certainly, the European defence landscape? This is Bloomberg.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
For U.S. markets.
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade, 30 minutes into today's session. It's Thursday, and everything at the index level seems to be moving about 0.4%. Not necessarily all in the same direction, though. Let's have a look at these markets. In terms of the overall market, we are up by 0.4%, and a similar kind of move applies to the DAX and to the CAC 40. So we're seeing both of those moves, those markets moving a little bit higher. And most sectors are actually in positive territory. But the FTSE 100, because of its exposure to the drug sector and also to the energy sector, is in retreat today, down by around 0.5%. So it's AstraZeneca. It's also the energy space. We saw big gains for energy stocks, Guy, yesterday, and today we see the reverse of that. So as a result, we're under pressure on the London market.
2 to 1. Yeah, we'll come back to that in a moment. 2 to 1 is kind of the ratio we're seeing internally. 382 up, 204 down. The market's a little light on volume, though, this morning. When we were going down, the market was actually seeing some quite high volume, which is interesting in terms of the overall market positioning story. Let's talk about the leaders and the laggards. CompuCenter is up on guidance. It is doing relatively well this morning. That stock is up. It's not big, but it's up by nearly 10%. Wolters Kluwer's got an upgrade. I think it's a JPM upgrade. And Deutz, we talked about this in the defense space, auto space, industrial space, M&A story there, driving that stock up by 4.5%. So that's kind of the upside story. The downside this morning is actually, as Anna says, probably where the more interesting narrative lies. Astra's getting hammered. This is an idiosyncratic story, but it has an index impact, and you're certainly seeing that in the FTSE 100. We'll get you some more details in just a moment. Shell is down. That's the oil story, just reversing. And Capita Group down by 16%. Not a massive stock, but again, just a big percentage move is what we're seeing with it, Anna.
Let's get to some of the other stories we're covering this morning then, Guy. The US military struck Iran for the second straight day to further degrade Tehran's ability to attack commercial shipping in the Strait of Hormuz. US Central Command said about 90 targets were hit, including air defense systems and missile storage sites. According to Iran's press TV, the Islamic Revolutionary Guard Corps struck US bases in Kuwait and Bahrain and threatened to expand the attacks. And Bloomberg has learned that the SK Hynix US listing is more than 7 times oversubscribed as the South Korean memory chipmaker prepares to price its offering later today. The US offering would raise about $24.5 billion, according to Bloomberg calculations, and would rank among the largest ever debuts in the US by a foreign company. Shall we update you on AstraZeneca as well? AstraZeneca shares sinking this morning on news that its gene silencer drug, that's Wainua, failed to help prevent heart problems in patients with a rare and potentially fatal disease of the organ. A successful trial could have led to billions of dollars more of sales. Jefferies estimated ahead of Thursday's update. Now, Astra is looking to establish itself in the disease area, where the market for therapies is expected to be worth $18 billion by 2030. Guy. In fact, I'll read on. Let's get more on this story with our Bloomberg Health reporter, Ashley Furlong. Ashley, help me out with the basics. Probably I mispronounced the drug in question, but what more can you tell us about the trial?
So this trial obviously failed, and this is actually just in one additional indication. The drug is actually already approved for a much broader indication. But what we're seeing in the market this morning is not necessarily about Wainua and the specific drug, but it's more about the confidence that investors have in AstraZeneca's ability to conduct really good trials. And that's always been a strength of AstraZeneca, is to have sort of really watertight trials when they when the management puts out really strong statements around trials. People expect the trials to be successful, and so that's, I think, more what we're seeing this morning, rather than there's sort of a several billion at risk here, but that's quite a small amount in the bigger picture for AstraZeneca.
Okay, so this is a credibility issue. That is what is being priced here.
Exactly. There's several billion that are, is at risk with this negative trial readout. But it's more about the credibility issue and about whether AstraZeneca, whether there's problems potentially with other trials. And as one, analyst said this morning, it's just a market at the moment where you can't really have bad news.
And Ashley, how does this fit into AstraZeneca's wider plans, wider strategy? Where does this leave them?
So AstraZeneca's CVRM portfolio, which is like the cardiovascular disease, is growing, and this is also part of the weight management area where they also want to get into. But this is quite a rare condition, and it's quite a specific market where AstraZeneca isn't really playing at the moment. So it doesn't really have sort of wider knock-on implications for potentially for other medicines. But it's still several billion that are at risk. This drug, I think, is estimated to have around $5 billion in sales annually over the next couple of years. They hope to reach, and that's at risk, really.
Ashley, we'll continue to watch the coverage as it develops. Thank you very much indeed for kind of giving us the nuance around it. Ashley Furlong, Bloomberg's Ashley Furlong, updating on AstraZeneca. Let's turn to some of the other moves we're watching this morning. Shares in the German engine manufacturer Deutz have jumped after it agreed to buy a closely held military vehicle maker, FFG, for 1.6 billion euros. More consolidation in the European defence space. It adds to a busy period for M&A in Europe that we've seen over the last few weeks. Let's get some analysis on what is happening here. Simon Hussein, aerospace and defence analyst at Alpha Value, joining us on this area. Simon, I just actually want to kind of pick up on this M&A theme that we are seeing maybe developing this morning. How much capacity, how much need is there within the European defence space to consolidate at the moment?
So I think that's one of the biggest challenges in European defense sphere is really about capabilities. And so we are seeing a lot of M&A recently. So for instance, we are seeing Thales that is buying Exhale. Even Safran actually wanted to buy Exhale. So I think there is a lot of M&A. The thing is, we have moved from a demand era towards a capabilities era. And so now we really need to produce more and be more efficient and ramp up production and scale up very fast to meet this defense spending.
If it's about delivering capability, is it about bigger companies securing their supply chains, or is it about acquiring a broader horizontal array of assets?
I do think that we are seeing both, actually. I think that for instance, with Safran that wanted to buy Excel, it's really about horizontal acquisition, even though they had some common capabilities. But we also have this vertical integration that is becoming more and more important as we have a lot of supply chain bottlenecks. And so in order to scale up and ramp up very fast, companies need to secure their supply chain. And it is actually becoming as important as having technological advancement.
Simon, good morning. So there's vertical and there's horizontal M&A taking place, and there's a real pivot towards buying more European product and Europe taking care of its own defence. But that's a long-term narrative. So help us understand how close to the beginning of that narrative we still are, Simon, and how far there still is to travel.
I think that it's a very challenging question, actually. I think that European procurement is becoming much more pragmatic than ideological. The thing is, as I mentioned, we need to scale up very fast. And so we are seeing some partnership outside Europe. So Leonardo, that has a partnership with Baykar, or even Dassault Aviation that might consider UAE or India for partnership. And a lot of countries are still buying from the United States when urgency matters more. We also have Poland that is sourcing equipment from South Korea. So I think that we are really emerging towards a capability-first model versus a Europe-first model. And we have seen also a lot of multinational partnerships that have failed recently. We can mention the Future Combat Air System, the Eurodrone, even the postponement of KNDS IPO shows that multinational cooperation across Europe is becoming more and more challenging. So we are still far away from this European consortium and consolidation, even though we do have some strong partnership already in place.
So those are the challenges, even within Europe, then, to do further consolidation, perhaps, and cooperation. You mentioned in your notes, Simon, that modern warfare, obviously, we know this operates in innovation cycles, software cycles. So very quickly, we see new innovation and new product coming to market, and yet the purchasing has not maybe caught up with that. Is that changing?
I don't think that it is changing, at least not fast enough. So basically, Eurodrone is a perfect example for that. The thing is that for multinational European programs, they are designed over a period of 10 to 15 years, so we're speaking about a decade, while the modern warfare really evolves in software or software cycle, which means in months. So we have this gap between the programs that are designed over decades versus the modern warfare that needs fast innovation.
Yeah. Simon, we've seen overnight confirmation that the Ukrainians will be able to build under license Patriot missiles. There is this push in Europe for domestic capability. And I'm just wondering how you think the US primes are going to react to this. Do you think we are going to see more US weapons being built in Europe under license? And do you think that will satisfy governments in Europe?
So I really think that it is a possibility. The thing is that the US projection capabilities are becoming more stretched with everything that is happening in the Middle East with Iran. So the United States has to help Ukraine, it has to help Israel. So overall, the projection capacity of the US are really constrained, especially as the United States will have to rebuild at some point its own inventory. So I do think that there is a tendency towards building locally, even in Europe. And I think that this will happen more and more. And the fact that we have still this technological gap will reinforce the idea that the US might provide more licenses, and that the Europe, even though it wants to reduce its dependency on the United States, will have at some point to accept those licenses. So I do think that this is just the beginning of a bigger trend, a much bigger trend on new licenses.
Simon, thank you very much. Thanks for your analysis. Simon Hussain, aerospace and defence equity analyst at Alpha Value, helping to take stock of some of the developments at NATO and beyond. Coming up, we'll get back to the tech sector. SK Hynix prepares for its imminent US listing, expected to rank among the largest debuts in the US by a foreign company. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back. This is the opening trade. 46 minutes into a session that shows some real divergence between what the FTSE 100 is doing and what the rest of the market is doing. The rest of the market is probably giving you the bigger picture. The FTSE story is pretty idiosyncratic. Yes, there's oil and weakness in oil majors, but there's also the AstraZeneca story, which is taking a chunk out there, and that is related to some of their trials around one particular drug.
It's a pretty big chunk. We'll continue to monitor that story throughout the morning and the wider effects on the healthcare sector. Okay, let's talk about tech. Bloomberg has learned that SK Hynix's US listing, which is coming very shortly, is more than 7 times oversubscribed. This is the South Korean memory chip maker prepares to price its offering later today. Now, according to Bloomberg calculations, the offering would raise over $24 billion and rank amongst the largest ever debuts in the United States by a foreign company. Let's bring in Bloomberg senior strategist Neil Campling. Neil, I'm confused. I thought foreigners have been selling the Korean market aggressively recently, and now apparently they want to buy the SK Hynix listing, the ADR, and it's 7 times oversubscribed.
Yeah, there's obviously one of the most volatile parts of the market
globally has been Korea, dominated by the two tech giants, Samsung and Hynix. Part of the effects of that volatility is around these levered ETFs in Asia around the memory trades. So perhaps the appetite for the US listing is seen perhaps as a means of getting away from some of the volatility, even though the listing will be linked obviously to the underlying stock. So there are mixed messages for sure. There is appetite clearly for the offering. Has that come from retail? Is it institutions? Difficult to know. It is easier for foreign investors, especially US investors, to own stock listed in the US than it is to necessarily invest directly in South Korean stocks, because you would need a local ID or otherwise use international brokerages, etc. So it's an easier path for them if that's the exposure that they want. But clearly there is appetite from somewhere within the market for this listing.
Yeah, it's interesting. Our story does talk about how this 7 times oversubscribed does include institutional investors, some long-only funds, and sovereign wealth funds. To your point, we don't know what percentage to all of those and what kind of retail demand there is in there. Is retail participation going to tell us something useful if we're trying to establish whether this is a sign of a peaking market and bubble conditions?
I think, to be fair, I think it'll be a healthier sign if there's low retail participation, who are very much kind of, if you like, based around more short-term momentum parameters. And we look at the shareholder register for the likes of Hynix's most direct competitor, Micron, and it's a very good list of institutional shareholders on that register. So it would be a good sign if it is mainly institutional for sure. Retail are more speculative in nature. I think we'll get more colour from perhaps what the option markets tells us a few days after the listing with regards to where options are trading around longer term contracts, or whether they are more retail focused in the 0 or 1 day short term options kind of markets. So look for key indicators around those kind of measures, I think, to get a sign whether retail is involved or not. In terms of the colour we get. We saw this with SpaceX as well, didn't we? In terms of we got some better clues, I think, from the options market about a week after the initial euphoria around the opening trading prints.
Is tech back to being a place to hide from geopolitical tension?
Tech is seen as kind of insulated from those risks, for sure. Doesn't really have the direct, obviously, oil exposure or Hormuz exposures, etc. So that is certainly seen as a positive. The key catalysts clearly are going to be what happens in terms of the guidance coming out from the upcoming earnings season. So far, with tech, especially on the hardware and the semi side of things, we've had earnings momentum in terms of acceleration, expectations. Tech has been the heavy lifter of growth and earnings expectations going forward. That's likely to continue. But the question is, how big will guidance, or more importantly, how will investors react to guidance in late July? And particularly look out, I think, for Microsoft's first official guidance for their fiscal year CapEx guide. That's going to be a key catalyst for the entire chip sector and tech momentum for sure.
Neil, great to catch up. Thank you very much indeed for the update. Neil Campling on what is happening in the tech landscape this morning. Talking of which, SK Hynix's chair will be speaking to Bloomberg. That interview, we think, at 3:30 London time.
Let's look ahead to other things we're watching out for today. We have an EU finance ministers meeting. We have a VW supervisory board meeting, which is going to be fascinating because of the conversations around closing factories at VW. We've talked about that this hour. 12:30 p.m. London time, ECB publishing the account of its meeting. They're not supposed to be called minutes, no, but they serve a purpose of helping us understand a little bit what was discussed. And 12:30 p.m. we have the UK Labour leader nominations. They are opening up. We'll see if anybody else puts their hat in the ring. We're pretty sure Andy Burnham's going to be in the mix. 1:30 p.m. UK time, US initial jobless claims will be the data point of the day, I suppose, stateside.
Yeah. What are we watching this morning in the markets? What's the big theme that stands out to Skylar? Let's find out. Anything like oil's interesting, but not that interesting in as much as it feels actually fairly stable this morning. there's an idiosyncratic story out of the UK, but what is the broader picture you're picking up on?
I think it's just this bearishness within bonds, as in we had the oil move earlier this week, and the thing that was most punished was bonds, and just over and over again, it seems like a beaten up market. And a stat that kind of astonished me was the last 9 consecutive days, German 10-year yields have risen. So yes, more recently that has to do with the oil price rising. That feeds into inflation expectations. We know the ECB react hawkishly, but the move is actually steepening. So that's 10-year driven in that what you've seen is term premium was looking like it reached a 1-year low and bounced. And so a lot of that move is because of that. And I think that's a structural force within the market in that we're getting more supply shocks. That means your bond equity correlation is slipping. It's not providing the same insulation. You have this huge wave of issuance, not just from governments, but AI is feeding into credit, it's feeding into equities, and you have high economic uncertainty. And so we're at levels in yields that are very low historically relative to where the policy rate is. And I think that just means there's a higher floor, and you get these shifts where when nothing's really happening in terms of in terms of markets or, catalysts, the trend should really still be upwards.
That's interesting. So we've got the BOJ gently hiking rates. We've got lots of issuance coming through, so the supply side. So lots of things just on top of each other, adding up to maybe more term premium then to use the example of Germany that you referenced there. Are we also going to see corporate spreads widening then, Skylar? Because they seem quite resilient to some of these higher for longer dynamics.
Yeah, I mean, I think the corporate market's quite hard because you don't really get widening unless something goes quite wrong. So I think it's a hard thing to say because typically that's actually your forewarning of something more concerning underneath the hood. And I think particularly right now, yes, spreads are tight, but investors are still very happy with the AI trade. Exposure to credit markets that way seems quite popular still, and you are getting a pickup over government bonds, which increasingly don't look that safe actually relative to some of the credit that's out there. So, I mean, it's very hard to make a call for significant widening is what I'd say. Yeah.
What did you make of Walsh? What did you make of the minutes? The sense, the take seems to be hawkish. Is that enough?
Enough to get a hike, enough to get higher yields.
No, but is it just, he's hawkish.
Yeah.
Is that enough to kind of keep the market moving forward with the idea that we're going to get rate hikes? Because I read the kind of the headlines, and it didn't seem that hawkish.
Did not? I don't know.
Skylar. Yeah, but I kind of had this expectation that he was hawkish already, that he'd pushed pretty hard on the idea that price stability is the key metric for him. I didn't feel like there was a massive update to that. It's just a continuation of a theme.
I mean, 2 things that stood out for me was AI is inflationary.
Yeah,
that's a change.
Yeah, that's true.
And then the second, that they did consider a hike at the last meeting, which wasn't confirmed from what you would have seen from the dots. And so that's the kind of shift that they're going to. But I mean, it's hard, right? The market already prices a hike. Yes, it's been brought forward, but to get multiple hikes, you need to see how the data evolves. And I think that's really what the Fed is telling you as well. We need to watch inflation next week. Do you have inflation rising? Is core in particular worrying? But I think we're definitely at least have enough to know that the bar is quite high to price out those hikes.
Yeah, I did think it was interesting, that reflection on what were the possibilities in June, because I definitely didn't come away from the press conference thinking, oh, well, they talked about whether to do a hike.
Yeah.
But I didn't get that impression at all. Okay, Skylar, thank you very much. Skylar Montgomery-Koning from our Markets Live team. Let us return to FTSE underperformance today.
FTSE underperformance, Astra underperformance. We are seeing certainly a big hit to AstraZeneca this morning. It is down on the back of a trial result relating to a heart therapy that was expected to do well. It's only one potential operational use for this therapy, but there are concerns around now how Astra is treating its clinical trials. Sam Frizzelli is the guy you want to talk to about all of this kind of stuff, and I have great news for you. He's going to be joining us in 15 minutes on The Pulse. I will be at the helm of that show. It is coming next. Hope you enjoyed this show. From Anna and from me, this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Newsmakers and market movers. This is The Pulse.
Good morning, 9 o'clock in London. Welcome, you're watching The Pulse. I'm Guy Johnson. What do you need to know? Let's figure it out. Oil now a little lower, actually. This, despite the fact that we've seen fresh US strikes on Iran. Traffic through the Strait of Hormuz returning to a near standstill. We had a hawkish set of Fed minutes last night, with some officials making the case for a hike in June. That was certainly a surprise. Plus, AstraZeneca shares tumbling after its late-stage trial fails to prevent heart problems in patients with a rare disease. We'll come back to that with Sam Fazeli in just a moment. Astra's down 10%, and that is having a meaningful impact here in Europe. Broadly, though, what you're seeing, and maybe this is a surprise, Brent crude is down a little this morning. We're down by 1%. I think the reason for this appears to be that we are not seeing oil infrastructure being targeted. We're seeing the Iranians in particular targeting US military sites, and that is being taken as a positive for now. So Brent down 1%. S&P futures are up. They had a decent rally towards the back end of the session yesterday over in the United States, but Europe is taking a big hit today. I think AstraZeneca's in the top 6 in terms of the market cap weight stocks that we have here in Europe. I think it's the second biggest one on the FTSE 100 as a result. And let me spin the board forward. I will show you what is happening to the FTSE 100. It is underperforming this morning, and the reason for that is fairly straightforward. You get a big heavy cap weight stock like Astra down, and it drags the rest of the market lower. So the FTSE underperforms by some significant margin, but it's also down because Shell is down and the oil stocks are down across Europe. And the reason for that is that we are seeing oil lower. This despite actually President Trump launching a second straight day of US strikes against Iran, threatening further to escalate an already fragile ceasefire. He said yesterday the ceasefire was over. In the past few hours, we've heard from US Central Command saying forces hit around 90 Iranian targets overnight. On board Air Force One, Trump said Iran was desperate for a deal.
We have many ways we can win, but we've already won militarily. They have very little left, and they want to make a deal so badly. They called a little while ago. They want to make a deal so badly. I just don't know if they're worthy of making a deal. I don't know that they're going to honor the deal.
Okay, let's get an update. Let's go to Dubai. Abir standing by. Abir Abu Omar joining us on the latest. So what is the latest? We've had further attacks. The Iranians have hit back. Talk to us about how the situation has escalated.
Good morning, Guy. Yeah, the situation is escalating by the second now. It does seem a little bit of a muted retaliation by Iran so far. True, they have hit countries in the GCC, namely Bahrain and Kuwait. We're hearing some infrastructure damage in Kuwait. Bahrain also reporting that sirens were sounding earlier in the morning, saying that there were attacks. They intercepted missiles by Iran earlier. And this is similar to attacks that we've seen over the past couple of months or so, Guy. Similar actions by the United States have led Iran to retaliate in a similar fashion. And so this is the latest in the region when it comes to the these tit-for-tat strikes by the United States and Iran. You're seeing oil, which you mentioned earlier, actually reversing gains, down 1% at this point. So the market doesn't seem to factor in that this will go to a full-scale war, similar to what we've seen in March. Now, President Trump at the NATO summit yesterday did say that as far as he's concerned, ceasefire talks are over. But then he did say that negotiators, Jared Kushner and Steve Witkoff, can go back to negotiating with the Iranians and that they'll have to come back to him. So what he's saying from the market now is probably us not going back to a full war front, including countries in the GCC. But it's definitely a fast developing situation here in the Middle East. Iran saying that since July 8th, over a dozen people have been killed, some 78 people injured. And so Iran threatening that if the U.S. continues these strikes, it will strike back. And one other main important thing in all of this, relevant to oil, is Iran's assertion of power on the Strait of Hormuz. We're seeing movement in the Strait of Hormuz in the early hours of the morning, near a standstill, according to our colleagues on energy team. So that's another thing that we have to follow over the next few days to see if those shipments through the waterway will continue to make their movement.
Thank you for the update, Abir. Abir Abu Omar joining us out of Dubai on the latest in the Gulf. Emmanuel Coe, Head of European Equity Strategy at Barclays, joining me around the table. Good morning.
Morning, Guy.
Do you need to reposition for re-escalation? Is that what you're doing right now?
We don't, and I think we are trying not to overreact too much to headlines. I think some reality check, I think, for those markets is not a bad thing. You know, there was a lot of excitement in many parts of the market, you know, tech, and then look, all went down a lot, maybe too much, too fast. And our view was we should be in a $70 to $80 range. That's where we are back now, which I think is fair. You have to expect some degree of uncertainty and volatility during summer. We are skeptical that this Iran thing is going to stop and you know, for good anytime. Yeah. But I don't think there is a strong intention from Iran or the US to really cross the red line.
So what do you, if you're just going to get constant flashes of fighting, what is the right positioning around that?
Look, firstly, I think, you know, diversification. I know it's a bit cliche, but, you know, when you go to school and learn finance, the first thing you are being talked about in terms of portfolio management is diversification. I think tech pullback was a reminder that not putting all your money in the same basket makes sense, and, you know, having some diversification into non-tech heavy part of the market makes sense. But also with regard to the war, you know, need to find a way to have optionality, i.e. we still believe that there's a path toward the escalation that should put a cap on the oil price. That's our view. But we don't want to get carried away in really positioning for oil price back to $50, if you see what I mean, right? So I think our core positioning is still very much driven by earnings. And I do believe that this positioning reset is a good thing ahead of the reporting season, which is very much starting next week. I think earnings will be key to unlock further upside for the equity market and to reaffirm leadership. You know, the leadership for the second half of the year is still going to be driven by earnings. If you grow your earnings, if you can prove the market that you can grow, you can, you know, deliver organic performance, you should be rewarded. So we want to be invested where we see earnings growing the most. And that's why we are still long the investment tilt sectors. We think investment is driving growth. War is driving more investment. Technology is driving more investment. So I think the investment impulse, whether you have oil at 75, 80, or 65, won't go away. And this is what is driving our positioning within some of these investment winners.
Okay, there's two questions that arise out of that investment story. The first one is, do you not feel that, if you look at valuations in aggregate, particularly around that kind of space as well, they look by historical standards very extreme to the right-hand side. Are they sustainable at these kinds of levels?
Well, firstly, we had a bit of reset in positioning in the last couple of weeks, and some of these investment winners, like look at miners. Miners are down almost 20% from the highs, which is how much they fell during the first round of the war back in March. So some of these things have come down quite a bit already. You know, semiconductor stocks are down 15-20%. They're still up a lot, but you know, they're down from the peak. And for tech in particular, I don't think the valuation are that expensive because the market doesn't believe in the sustainability of this earnings super cycle. So earnings are still being revised up. And by the way, the equity performance this year in most part of the world is lagging. So the strength in earnings. So we've seen valuation coming down. So the market is not overly euphoric, I would say, about the earnings power or sustainability of these stocks. I think Q2 numbers will be very important. If you can prove the market that you still have some firepower and you can still grow your earnings and deliver some clarity on the earnings guidance, I think the market should recognize that and get back into an uptrend to some extent.
Does the investment story work with higher rates?
Look, I think there's a limit to how much the market can absorb here. And obviously, as part of this more volatile period, you had this hawkish repricing from Fed expectation driving volatility. Look, I'm not in the camp of seeing the Fed hiking this year. I think they're going to be in the hold. Look, they need to have optionality, and I think Walsh managed to regain optionality, by talking hawkishly. And I think he had to be sounding credible and somewhat independent to the market. There is an inflation risk. There is an inflation issue in the US. Inflation is above the Fed target, so they have to be credible and firm about inflation. But on the other hand, I think there is also maybe the feeling that down the road, inflation should still be trending lower. I think the administration and Walsh in particular are still very much on the view that long-term inflation should be coming down as a consequence of this productivity boom in the US. But look, I think one of the sources of volatility in the summer is this end of this 3 or 4 year long easing cycle, where most of the central banks cutting rate over the past 3 or 4 years, and then in the last 2 weeks, we had ECB hiking rate, Bank of Japan hiking rate, the Fed sounding more hawkish. There's a risk that, obviously, if real rates keep going higher, that's going to start to hit the equity market. But I think a lot of this repricing has happened already.
Can I just talk about the symmetry of risk as well within the market? Is the risk at the moment that the upside is bigger than the downside, or that the downside is bigger than the upside? Because that kind of makes a difference in terms of the way I position, particularly around the optionality kind of trade that I need to be putting on. How are you thinking about kind of how I want to stagger my risk? Is it worth missing out on some upside for some downside protection, or is it just upside? The danger is I lag at this point, and I miss out on the upside that could, at this stage in late cycle, be quite vertical.
Look, I think you still have to be invested. Again, we think there is enough reason to stay invested, i.e. we don't see central banks rocking the boat, and we expect earnings to drive more upside. But look, I think there is a positioning risk, definitely. You have a lot of money which is invested in the equity market. If you look at allocation by household in the US, by mutual fund, it's pretty much record high. So you can say at the index level, the asymmetry is probably negative. There is more downside if something goes wrong than upside if everything goes well. Now, we just flag that you have massive dispersion and polarization within the equity market. So even though indices look very high, one part of the market has gone up significantly, and the other has been lagging quite a lot. And our call is to still mostly stick to the winners, but we also want to have a little bit of broadening into some of the laggards, which can either give us a little bit of a catch-up potential if some of the risks that were driving the market in H1 fade somewhat, but also give us some hedge, again, market coming down and some of these momentum winners pulling back more. So I think diversification and some rotation into the laggards is a way to hedge some of these, pretty high level of markets.
There's been the bunch of markets have quietly been doing things that have surprised me. The FTSE's actually been doing relatively well. Some of the continental markets here in Europe have been doing relatively well, despite the fact they've actually got very sort of low AI exposure. Where am I looking for that kind of uncorrelated equity position at the moment?
Look, I think a lot of things which have gone up are still a function on AI, i.e. the broader ecosystem around investment has driven market quite a bit. And I think banks is very much the reason why IBEX or FTSE MIB, so Spanish or Italian market, are doing so well. And banks are somewhat benefiting from this, reflationary boom and investment boom, right? So they're not purely playing on AI, but I think they're part of this ecosystem of sector which are really growing earnings a lot and are seen as winning in this backdrop of strong nominal growth. To me, the big question is what we do with the consumer, because consumer has been a clear underperformer. Whether we look at consumer staples, consumer discretionaries, autos and luxury, there's a clear bear case on the consumer right now. So it's your two-speed economy or K-shaped economy where investment is driving the show. Consumer is somewhat suffering from the lack of support and this kind of high inflation. Our view is that consumer is still a no-go in most cases, but we've been adding back to luxury as a way to diversify and start to get a bit more into the top-end consumer, which in our view could somewhat benefit from this investment boom. We are seeing wealth effect booming in the US, part of Asia, and look, if ultimately the war shock is receding or being contained, that could help part of the consumer to shine, but we still very much, believe in the top-end consumer as opposed to the low-end.
Bottom end of the consumer, the K is still there. Manuel,
Indeed.
nice to see you. Very
Thanks,
nice to see you stopping by to see us. Manuel Coe, Head of European Equity Strategy, joining us from Barclays. What we're going to do next, we'll look ahead to the SK Hynix highly anticipated ADR listing in the United States. Global chip stocks continue their roller coaster ride. Another wild session. That was SK Hynix at the close a little earlier on today. We'll do all that next. This is Bloomberg.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg. Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome back. 16 minutes past the hour. AstraZeneca shares under significant pressure today, slumping on news that its gene silencer drug, Wainua, failed to help prevent heart problems in patients with a rare and potentially fatal heart condition. The man you want to talk to about this stuff is Sam Fazeli from Bloomberg Intelligence, and we found him. He's here. Good morning.
He made it in.
He made it in. And it's great to see you. Tell me, what do I need to know?
Yeah, I mean, to be honest, Guy, this looks a bit of an overreaction. The drug in consensus estimates is at about $1.5 billion. The company had targeted $5 billion, so okay, that's a big chunk. It doesn't change the $80 billion really 2030 target. So I'm a little bit surprised at the extent of the reaction. Obviously, it's a drug that is for a form of cardiomyopathy. So as your, the heart problems, right? Let's put it, just keep it there. It's a very specific type of issue. It's never nice to have a negative data set, but they've had so many data sets read out positively that it's not a surprise. It's drug development at the end of the day. So I'm a little surprised by the reaction.
Okay, one of the reasons I've heard for the scale of reaction is that it's a credibility issue, that people are extrapolating this and saying Astra's promised big things with this and it didn't deliver. Can I extrapolate that in some of the other trials that it's got ongoing? Is that a legitimate line of argument?
I mean, it's an argument. All right. I mean, people have to find a reason to explain the share price drop, I guess. Yeah. The reality is that drug development is difficult. So if the management, and they had been out there sounding very positive about this data coming out, or positive about the data coming out, and it fails, it does raise a question as to why were you leading us to think that this was going to be a slam dunk. But it's biology. Things happen. And I think it's, Astra's been through these days. I remember 10 years ago or 15 years ago, they had a trial fail, and everybody went, this is over. Yeah. And, we were at the 40-pound levels those days before the Pfizer approach. So, again, I would say that this is drug development. It happens. Is it going to read out to read across to a cancer drug or another trial for obesity? I don't think so.
So it's not there isn't a credibility problem here with the way it runs its trials.
No. Now there is a risk there are other failures coming.
Right.
And no, I mean, this company has had. Look at how much success they've had. So, I don't think you can really make that claim on one trial failing.
Is there a point? Are we at the point though in the market where the market is just punishing any kind of failure? But it's not as if the pharma sector is particularly highly valued at the moment. It's been through this huge downdraft, and therefore I'm surprised that you're getting such a big reaction at what feels like the sort of the bottom of the pricing cycle in terms of drug stocks.
I wanted to turn around and say, okay, this has got anything to do with the issues resurfacing in the Middle East. The market's not feeling good about things, so if you get a bad news, you go for the jugular, right? But I think the story here is Astra has been one of the better stories in the healthcare, in the pharma sector, at least on the European side. In the US, it's been Lilly and AbbVie doing really well. So maybe this is a reason for people to think, okay, I've had a good run, I'm going to take some profit.
Okay. Taking a little bit of profit, maybe in the mix as well. Sam, it's great to catch up. Always a pleasure to see you. Thank you very much indeed for stopping by to see us. Sam Fazeli of Bloomberg Intelligence. Let's turn to another big single stock story that we're watching carefully here in Europe this morning. The board of Volkswagen is expected today to consider plans for a massive restructuring of this global car giant. Bloomberg understands the proposals could ultimately eliminate as many as 100,000 jobs. We could see 4 German factories closing. We're joined now by our automotive reporter, Stefan Nicola. Just talk me through these plans. Oliver Blumer is the CEO. He's pushing this through, but he's got to put them and get them through the supervisory board. Just talk me through what we're expecting from this meeting.
Yeah, good morning, Guy. This is certainly the biggest restructuring any CEO has attempted in many, many years. Blumer is meeting the supervisory today to sort of table his plans. As many as 100,000 job cuts, 4 German plants closing. His push is meant to make VW leaner, smaller, more profitable, faster. And, he wants to ready VW for mounting competition in China, in Europe. The likes of BYD and Xiaomi, they're already dominating on EVs in China. They're now coming to Europe and intensifying the competitive pressures there. Blumer will face tough opposition in the supervisory board. Labor obviously won't like job cuts, won't like plant closures. So expect to see tough negotiations today, but also in the coming weeks and months. Today is the starting shot for these tough talks.
If Volkswagen's doing this, will others have to follow?
Yeah, most likely they will. The story of VW is one that's reflected across the sector in Europe. All of the main European automakers, Stellantis, Renault, BMW, Mercedes, are all in cost-cutting mode. They're all responding to the same pressures of rising competition from China, and they're doing so in a smaller market. Europe has not come back to levels we've seen before the pandemic, so that's only increased the pressures on CEOs, and they're all struggling to either fill plants or become more efficient.
Stefan, thanks for the updates throughout the morning. We'll look forward to the coverage as we monitor this important meeting taking place of the Volkswagen Supervisory Group. Stefan Nicola on that story. Let's turn to tech and talk about what is happening there. Bloomberg is learning that SK Hynix's US ADR listing is more than 7 times oversubscribed. The South Korean memory chip maker is set to price its offering today, with the ADRs to begin trading on the NASDAQ tomorrow. Let's bring in our Seoul Bureau editor, Denny Thomas. Denny, let's talk a little bit about this. I'm fascinated. Foreigners have been selling Korean tech aggressively over the last few sessions, but now we've got this ADR being 7 times oversubscribed. What's going on? Just explain what is happening here and how important this is.
Yeah, so this is a big moment for tech. This is a big moment for Korea and the two tech the chip makers that have been really in the spotlight. This takes Hynix to a new kind of a orbit, and what we've seen is because of the uncertainty around whether the investments are going to be AI investments are going to be coming through fully with returns. There's a lot of nervousness around how these stocks will behave going forward, and that has caused a lot of volatility. Since the ADR news came out late June, the local stocks are down about 17%, and it's been very volatile, which makes pricing of any of these pretty hard. But despite all that, we've seen a pretty strong book develop when the book closed yesterday, and we have a good bunch of long-going funds. There are hedge funds in it. There are sovereign wealth funds in it. So by the look of it, the book has been pretty strong. It's not a kind of a quick hit kind of people coming in, and that's a good sign for what ADR is, what SK is trying to achieve here. Now the big question is, where the book is going to settle and where the price is going to be. There's some expectation that there could be a premium to what the market is trading now, but that will come to know in the New York session today.
In terms of what's happening domestically, we've obviously seen huge volatility, as you just highlighted. The market in a bear market yesterday. What is the sense here? Is this just a short-term blip? Is there serious concern around what is happening with valuations? Just talk us through what you're hearing about the domestic sense of what is going on with the stock market.
Yeah, I think the huge run-up that these two stocks have had and the dominance they have in the Korean market and the ETFs that have been issued around these stocks, that is creating a lot of volatility, and that's not a good sign. But fundamentally, the business is going good. I mean, if you look at Samsung, they came out with their blowout results. Their profits are up, their operating profit guidance is up about 19-fold, and about 50% up from the previous quarter. So fundamentally, it doesn't look like anything is slowing down. But yes, because of the big run-up, people still don't have the confidence that it can be sustained. But I think, to me, the ADR momentum and the book build that has happened, that's a clear sign that global investors are willing to back a stock like this. It still trades at a discount, and that's where SK has a bit of an edge in terms of convincing global investors that, look, we run up 200% this year, but compared to our competitors, we are still discounted, and that's where we have our chip.
Denny, thanks for the update. Really appreciate it. Denny Thomas joining us out of Seoul ahead of the SK Hynix pricing that we're going to see a little bit later on today. Talking of which, we're going to hear from the SK Hynix chairman as the chipmaker makes that US debut. That conversation, 3:30 p.m. London time. Make sure you tune in for that. Coming up, we are certainly seeing some significant fluctuations in the price of crude. We've seen tit-for-tat strikes overnight between the Iranians and the United States. What does this mean for the price of crude, which is actually surprisingly a little lower today? Why is that happening? What is the signal we should take from it? Francisco Blanche is going to be here to answer that question. He'll be here next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
To the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Thursday the 9th, half past the hour. Welcome back. You're watching The Pulse. I'm Guy Johnson in London. Quick update on what you need to know this morning. Oil now lower. We're down by, let's call it 1.5%. This despite the fact we've seen a fresh wave of US strikes on Iran. We've got Iran hitting back. The Strait of Hormuz is at a near standstill. We'll talk about this in just a moment. We've got a hawkish set of Fed minutes out of the Fed. Some officials actually making the case for a hike in June. Plus AstraZeneca shares under significant pressure. It's a late-stage trial surrounding a heart therapy failing to prevent problems with a rare condition. The market is taking this one badly. The stock's down by 9.5%. So we've got some single stock stories. We've definitely got some macro events that we need to price in. Let's talk a little bit about what is happening with the crude price, which I think is fascinating this morning. So crude is down. Crude is down by, I can give you the Brent price, 1.5%. We're down, yeah, almost exactly 1.5%, 76.86 on Brent. TI is down by a similar amount. This, as traders basically look at the situation in the Middle East, look at the situation in terms of supplies, and look at what is happening in terms of the conflict between Iran and the United States. So yesterday we had a massive session. Some of that's now being unwound, despite the fact we've got an upping of hostilities. What's going on? Why are we seeing this, what appears to be a relatively calm reaction this morning? Well, let's try and get an answer to that question. Bank of America's head of global commodities and derivatives research is Francisco Blanchi. Joins us now. Francisco, I got an oil price that is up on a 2-day basis, but down in session. Can you explain what's going on?
Well, it's a little difficult to fully understand what's going on, Guy. But I would say that you have to remember the market has been pretty chilled about the return of barrels since the memorandum of understanding was signed about a month ago or about 2 weeks ago. And I think since then we saw a resumption of flows, and the general assumption is that despite the ceasefire being breached a few times, eventually there won't be a full return to combat, and there won't be, I think, a complete curtailment of flows over the second half of the year. So that's, I think, what's been priced in. Having said all that, it's also very important to remember that we are starting at a much lower point in terms of inventories. So should we see a return to active conflict over the course of the next few weeks and therefore, let's say, a more permanent shutdown of the Strait of Hormuz and crude oil flows, the price of oil could quickly shift up and break into the $100+ a barrel range. Now, of course, I don't think that's the expectation that anyone's building in right now, but that's kind of a clear risk. Plus, also there's a risk to energy infrastructure in the region, because until now we've seen, of course, tankers and LNG carriers being struck by drones and missiles, but what we've not seen is energy facilities like we saw during the war, for example, in South Pars or in Ras Laffan being struck. That, I think, would be also changing potentially the game for energy markets.
So as long as the Iranians only hit military infrastructure, the market will stay relatively relaxed.
I think so. I think the oil market is basically viewing this as another episode of negotiation between the U.S. and Iran. Of course, both sides they have different perspectives, as we've learned over the course of the past few weeks. They both seem to think they've moved forward their interests, but at the same time, I think the Iranians have a history, have a habit of really pushing very hard on negotiations, and maybe part of the friction we are seeing today is kind of potentially the result of that. Of a set of misunderstandings on both sides as to what the memorandum of understanding is really supposed to mean, and it is definitely a risk to the market. And obviously we are getting closer to the U.S. midterm elections. We've seen also the Fed potentially changing to a more hawkish stance. But the equity markets have taken the upside risks in oil market remarkably well. So I think that's also given comfort to the U.S. side to press their case in the negotiation of this memorandum of understanding and turning it into a deal. So I think both sides seem to think they have an edge.
Francisco, if you're an insurer, if you are a ship owner, if you're a ship captain, how do you feel about putting boats back into the Gulf? You've got them out. Do you want to put them back in again?
I think it's a very, very tough call to make right now to get boats back into the Strait, given what we've seen, and that's kind of the point I think that the Iranian side is trying to portray. Remember, one of the big asks during the days that led to the negotiation of the MOU was the ability of Iran to charge for passage across the Strait, and which has been a very contentious point in negotiations. And of course, if you are an insurer, you're going to look at these actions here and think that maybe this is a much riskier environment than what you may have thought in the past. So it definitely pushes up the premium. But as I said, I think the market works under the assumption that both the U.S. and Iran have a strong interest in allowing energy flows to continue through the Strait of Hormuz, because they both stand to gain. The U.S., of course, by lower energy prices and lower inflation and lower interest rate expectations potentially, and Iran equally stands to gain by monetizing their oil and potentially monetizing through the charging of fees in the Strait. So both, and I think that's the reason why the market's not gone crazy at the end of the day for oil prices, is that's what traders see. They see an interest. But of course, there's a big risk of miscalculation on both sides. And as I mentioned earlier, if we hit infrastructure that has a more permanent element to it than a ship, that could really change the dynamics here very, very quickly.
Francisco, I do slightly wonder this morning whether I'm looking the wrong way when it comes to understanding what is happening with the global energy story. Because you talk about hitting infrastructure. The Ukrainians are hitting Russian infrastructure aggressively at the moment. We've just seen the Russians talking about an export ban on diesel. Is that actually where the problems may lie, and we're being misdirected by looking to what is happening in the Gulf right now?
Look, Guy, there's two elements here which I think are very risky coming into the winter. And of course, we're in the summer right now, so we are just enduring the sweltering heat. But as we go into the end of the summer season and to the end of the injection season for natural gas, I'm particularly worried about TTF prices because we've seen an LNG tanker from Qatar being struck this week. And I'm also worried about, to your point, diesel, because this is the tightest portion. The middle distillates is the tightest portion of the energy markets. We know refineries are a huge bottleneck. We know there's a lot of refining capacity in the Middle East, and also there is a lot of refining capacity in Asia that's been starved for crude oil. So yes, I am concerned about that, and I think the market will become quickly concerned if the level of hostilities increases over the course of the next few weeks.
How bad could the winter be? How tough? Are we heading for another energy shock, gas shock in Europe this winter?
Well, so right now, as I'm sure you're aware, we are looking at a big increase in natural gas demand in Europe, even in the U.S. Temperatures are pushing up gas demand, although that's a bit of a separate story. But we are seeing the higher temperatures leading to more gas demand. We are looking at potentially less nuclear power generation because the heat makes it more difficult to cool the reactors because it warms up the the water in the rivers, particularly in France. So all of these factors, I think, can set us up for a more challenging winter. Now, it's early days, but one thing is clear to us is that we will not be, particularly when it comes to TTF, we will not be at the 80 or even 90%, much less 90% level of inventory fills that typically is what gives us the comfort that we will go through winter. Now, there's a strong El Nino, so maybe it's a warm winter, and maybe that saves the day for us once again. But whether it's a chaotic systems, is really difficult to know how the winter will shape up. But yes, coming into winter, things could look quite different than they do today, and some of these problems could reappear very fast.
Francisco, definitely got to watch this space very carefully. Thank you very much indeed for the update and the analysis. Francisco Blanche, Head of Global Commodities and Derivatives Research, joining us from Bank of America. We'll come back to the commodity story and the El Nino story a little later. Let's talk about how the events that we've seen in Iran over the last couple of days have overshadowed the NATO summit that has taken place in Turkey. The meeting obviously ended with President Trump saying a decision on US troop levels in Europe would hinge on how allies addressed his concerns over Greenland and their support for the Iran war. We're joined now by Bloomberg's chief Europe correspondent, Oliver Crook, who's in Ankara for us. Just talk us through kind of how this summit evolved and how we left it. This time yesterday, it felt like divisions were really kind of elevated, but as we maybe left the summit, some of those had been narrowed.
Absolutely, Guy. I mean, this really felt like a marathon of a summit. You know, Trump came in quite sort of angrily on a number of issues. He was sort of reiterating the Greenland issue. This is obviously an issue that the Europeans would like to bury and never hear ever about again. But again, he kept reiterating the United States should have Greenland. So this was a sort of big red flag going into the meeting. There was, of course, the continued criticism that none of the NATO allies had adequately supported the United States in their military action in Iran. There was, of course, the spat with Spain, basically saying that he would cut trade ties with Spain if they didn't contribute 5% of GDP for NATO. But the tone really shifted, apparently, in the room when he was surrounded by that ring of 31 other leaders of the NATO countries, all sitting together, all discussing, and really having a sort of unifying message. Trump left that meeting, I think, much more serene, much more positive, saying that there was a lot of love in the room, that he wished that the media had actually captured how much unity and how much they were on the same page. And I think as far as NATO is concerned, I mean, listen, you're only going to get so much from Donald Trump on the question of NATO. You're probably not going to get a sort of full-throated support of Article 5. He's going to want to use that sort of sticking carrot to try to get what he wants from NATO allies. But this is probably one of the best outcomes you could have hoped for the Secretary General, Mark Rutte, who had organized this entire meeting and really laid all the groundwork in the weeks in advance for this to go very well. There are a few questions still remaining as we leave the summit looking into the future. There is, of course, this question about troop movements within Europe, American troops, whether or not they're going to be drawn down. There is a review review on that the Department of War is doing over the next 6 months, so we'll get the outcome over the next 6 months. That being said, all the NATO officials that I spoke to over the last couple of days said that this is going to be a very orderly transition. Whatever the United States is going to do, they're going to telegraph it very widely. There's also a question about whether or not there will be another NATO summit next year, if it will be held in Albania. Apparently, there are deliberations about whether to do these summits every 2 years. Some within the NATO community think that maybe having another summit while Trump is still sort of relatively early in his presidency, maybe not having that will sort of not give the opportunity for him to sort of blow up the summit again. But again, I think that everybody can leave this summit feeling pretty good, most of all President Zelensky.
Yeah, let's talk about that. That was a surprise to me. If you talk about kind of a narrowing of gaps, it was that meeting between Trump and Zelensky that really stood out.
Absolutely. I mean, you have to look at this relationship, how it's sort of evolved over the last 18 months from the Oval Office to Ankara. It's a completely different relationship. And I think as far as solidarity with the Ukrainians, this is as much solidarity as we've ever got for President Trump. In addition to the fact we had this sort of very practical addition with the Trump administration saying that effectively they're going to allow the Ukrainians to produce those American Patriot missiles domestically within Ukraine, an absolutely huge win for President Zelensky.
Oliver, thanks for the update. Continuing coverage from Oliver Crook at the NATO summit, which is now wrapped up in Ankara. We'll continue to update you on the fallout from that. Some really interesting sort of strands developing. What we're going to do next, as traffic in the Strait of Hormuz grinds to a near halt once again, we're going to look at the outlook for fertilizer prices. We'll also look at coffee. Important things if you work on an early morning show, I can tell you, and cocoa, and the impact that we've seen. Climate change, we were talking about earlier with Francisco, a huge factor here as well. I'm going to fold that all together. That's what's coming up next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Welcome back. Watching The Pulse. I'm Guy Johnson in London. Let's get back to the topic of what is happening in the Strait of Hormuz. Traffic in the Straits seems to have come to a standstill once again, this after the US struck Iran for a second straight day. Up until the latest escalation, fertilizer exports through Hormuz had been picking up considerably after a huge volume of urea, etc., was trapped inside the Persian Gulf. What happens next is now a key question for global inflation, what happens with food supplies, and what the next harvest is going to look like. Judy Gaines, president of J. Gaines Consulting, joins us now. Judy, great to catch up. The price of fertilizer coming out of the Gulf, urea, etc., had come down really quite sharply after hitting a peak earlier this year. Would you expect it to go back up again now?
So it'll go up, but the initial shock brought prices much higher. There was that overreach, and I don't think we're going to get to those levels. Whenever there's panic in the market, you have this initial panic, but the market's had time to adjust to it. Supply chains shift, people accommodate different suppliers, and therefore that initial surge of tightness, the fear, is gone.
Okay, so we can manage through this process, but are we going to manage through it with a higher price than we've had over the last few years? And is that something we're just going to have to learn to live with?
Oh, absolutely. The base has been elevated, but we're not going to see that excessive volatility that started from the initial reaction when the Strait was first closed and the war broke out.
So to work it through the supply chain, how does this affect farmers? What does it mean for crop prices?
Well, crop prices, the costs go up, and they've got to manage that. So in some extreme cases, possibly they'll cut back on inputs, which ultimately shows up in the quality and the quantity of output. But recognize for commodities like coffee and cocoa, prices have been at historical highs, and therefore there's a little more cushion for farmers than if prices were severely depressed to manage the higher costs.
Okay. What I'm hearing from the farmers I talk to, and I don't talk to that many, but I talk to some, is that they're becoming much more creative in terms of the fertilizer that they are using and how they're working their way around this. How much substitution can there be for traditional fertilizers?
Well, there's a lot of regenerative farming practices that absolutely help to cut back on inputs. So the healthier the soil, the better off the farmer is. But that takes a lot of work to get to that point. But you can make substitutions. You could use chicken manure. You wind up with a lot more flies and smell on your farm, but it actually works.
Yep.
On some Brazilian coffee farms, they're using the chicken manure and obtaining very, very high yields.
So talk to me about coffee prices. This is something that's very close to my heart. Why are they up as much as they are? And does the yield at the moment tell us a story of scarcity? And if not, why are we seeing the prices we're seeing?
Okay, so we've gone through several years of tightening supply. And Brazil is the world's largest producer. And they've had an unprecedented run of poor weather. And for the crop that's being harvested right now, the expectation was that it was going to be the massive bumper crop of high quality and would help to refill the buffer of supplies and turn the balance from one of deficit for 4 straight years to one of substantial surplus. Plus, high prices are the best cure for high prices, and so other countries would also see an improvement. Let's not forget that there's also the threat of a super El Nino, and that would impact some key producers. But what happened in Brazil was that suddenly the skies darkened and you got this unusual rainfall in June and parts of May. So there's 3 cold fronts that came in, not bringing frost, which is the normal fear for this time of year, but brought very heavy rains to some communities. And as a result, the soil became drenched. A lot of the coffee fell to the ground. Now they're able to sweep that up, but it damages the cup quality. And there was also additional fears that there's going to be another successive series of storms coming in that could disrupt and delay the harvest further. So we went from having the potential of this big supply coming on and likely depressing the market to all of a sudden that Brazil crop isn't ready yet and it's delayed and the quality isn't what people were expecting.
Okay. You mentioned El Nino and the possibility of a super El Nino. How are you thinking about that? What is the story over the next 18 months? What is that going to mean in terms of ag prices?
So it's very different from one region to the next. And a lot of people all of a sudden hear Super El Nino and they're fearing the worst in terms of drought for some key coffee and cocoa producers and sugar as well. The thing is, you have to pinpoint down other teleconnections to understand what the impact is going to be. There's no two El Ninos that are alike, and typically a strong El Nino will peak in December. So, for example, in cocoa, West Africa, where the two largest cocoa producers are, typically you could see drier weather during the dry season, the harsh Saharan winds blowing across and hurting the future crop and the crop that's on the trees. But there's also been a very warm southern Atlantic Ocean and the temperatures are very high and therefore that's drawing in moisture. If that pattern can hold, it can be a bit of an offset for the drier weather, and so you might not have the same damage. That warm ocean, the Atlantic, is also what has driven the rains into Brazil, coincidentally, and is creating fears in the cocoa market of too much rain right now, and has pushed prices up from $4,000 a ton to $6,000 a ton. So the culprit isn't drought. It's been a big right now. It's too much rain.
We know about that here. Judy, thank you for joining us. Judy Gaines, president of J. Gaines Consulting, joining us from Panama up early. Let's quickly wrap things up and just talk a little bit about what is going on. We've had a couple of things that I just want to focus on with Skylar, who joins me around the table. Two things I want to ask you. Why is the oil market so relaxed this morning? And how hawkish were those Fed minutes?
On the oil market, let's start there. Yeah, it is quite relaxed, right? In terms of, if we think about current levels, it's 25% below the levels we had through April and May. I do take some kind of message from the fact that we have had a reaction and that you've had so much noise out of Trump around US-Iran. So it was kind of, why would this trigger something? And that, yes, you did get an actual policy action in terms of the waiver for Iranian oil being removed. But there wasn't really a difference in terms of this noise and other noise. And I think the answer is you're getting kind of a theta decay in the ability of the ceasefire to constrain prices, as in you have this environment where not a lot's getting through the strait. At the same time, reserves are being drawn down. And so we have a lower bar now, the further that you could have these negotiations go on for prices to go higher. But I think until you get like complete stopping of transit through the strait or kind of involvement that is infrastructure being targeted, then the market's relatively relaxed because we haven't had the worst case outcome.
The Fed?
The Fed, yes. Relatively hawkish. I think what we've seen is two key points. The first is that they're seeing AI as being more inflationary. And I think that's the big shift we've had this year, right? It's boosting growth, it's boosting inflation, and then on top of that, you've had Iran. And then the other big shift is just that hikes could have happened last month. And so we're increasingly looking for hikes this year, and the question, I think, is just how many.
I see. Answering all the questions. Skylar Montgomery-Cunning from our M-Live team. Okay, US futures are up. The Nasdaq's up by 0.6%. The S&P is up by 0.2%. That wraps things up for the Pulse, but the brief is coming up next. Vonnie Quinn will take you through the run-up to the market open. This is Bloomberg. Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Tariffs, I think,
are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh strikes, the U.S. and Iran trade attacks for a second day, testing the fragile ceasefire. Stocks rebound, though, oil erasing some gains despite renewed tensions. And IPO appetite. SK Hynix's U.S. offering sees strong investor demand. All right, looks like a little bit of stabilization around the world. Let's begin over in Hong Kong with Winnie Su for the latest from Asia. Winnie.
Yeah, good morning, Bonnie. It's been a very jittery session in Asia today as investors really grapple among the different factors, including the Middle East tensions and also some hopes around the AI trade. Now you have the MSCI Asia here fluctuating throughout the whole day after 2 days of declines. But the most volatility again seen in South Korea's Kospi index, trading in fact in the green at the end of the day. However, the gains mostly led by SK Hynix, which is up more than 5%, as you just mentioned, ahead of that U.S. listing tomorrow. Now, appetite is very strong. We are seeing it being oversubscribed by more than 7 times. Now, flip the board, we take a look at the Chinese assets because mainland Chinese shares, CSI 300, in fact, up more than 2%, leading gains in Asia, driven by the rally in chip makers. Also, some optimism ahead of the memory giant CXMT's IPO next week. And also, when it comes to currency, also leading gains in Asia, following that stronger fixing from the PBOC.
Yeah, we're getting an Asia IPO a week, it seems now, Winnie, in the US. That's Winnie Su in Hong Kong. Thank you. Now let's get to London for a look at Europe with Justina Lee. Justina.
Good morning, Bonnie. Now, today feels a little bit like yesterday in reverse, with oil containing some of those gains. So, of course, the Stocks Europe 600 is bouncing back a little bit. And now the exception here across Europe is the FTSE 100, which, of course, has a lot of those oil major names, but is also dragged down today by AstraZeneca, the pharma company whose drug trial just failed to kind of contain a disease. And so if we look at currencies here, the euro is bouncing back a little bit. Of course, dollar strength is a bit contained today. We flip the board here. Same goes with pound sterling. It's also strengthening a little bit. And all across Europe, bond yields are falling, led by the short end with those rate hike expectations changing. And actually today, UK gilts are outperforming the rest of Europe. And so I think everything, again, we're going back to just oil watching here in Europe, Bonnie.
Exactly, Justina, and as you say, contained, so we did rise, but we are seeing just a little bit of a fall off today, and that may be helping with stocks, though we did see a bit of a flight to the safety of chip stocks. Who would have thought it yesterday? So we saw pretty aggressive buying into the close. We were still lower on the S&P 500 for the day, but only by about 0.3%, and the Philly Stocks Index was up 2.2%. It looks like that may continue today because we have the Nasdaq 100 futures pointing to an even stronger gain than the other indices, but they're also pointing to gains. It's a fascinating dynamic because up to yesterday and the bellicosity of President Trump, we had been seeing a lot of jitteriness, a lot of selling off in U.S. stocks, and now it seems like the tech trade might be a trade of safety. Let's take a look at yields because, of course, we got the FOMC minutes. Little milk toast, that was the word that Michael Feroli used. Paul Donovan put it even more succinctly, saying, could go up, could go down. Essentially, we don't know what the next move is going to be from the Federal Reserve. Two-year yield coming off just ever so slightly from yesterday's position. It's still all the way up to nearly 420 though, and that 30-year yield is staying extended at 507. Not much movement at the back end of the curve, just at the front end of the curve, pricing out just ever so slightly those rate hikes. And this is your picture for oil then. So we did move higher. We're off those highs, but as you can see, just by a little bit, and we're still at 73 and change on WTI, and Brent crude still above $77 a barrel, a far cry from where we were just about 25 or 6 hours ago. All right, let's get to some individual pre-market movers now. We'll go back over to London and Chloe Melly. Chloe.
Good morning, Vonnie. U.S. tech is back in the green this morning in pre-market trading. After some weakness recently, it seems that this very strong demand for SK Hynix offering in the U.S. has really reassured investors about this AI trade. And so we are seeing the likes of Intel and Micron very much in the green this morning. Moving on to Ionis Pharmaceuticals, which has developed a drug with AstraZeneca over here in London. But this is a heart drug that has failed clinical trials. So this is a huge setback for both of those companies, given that it would have been something that would have led to billions of dollars more in sales of that particular drug. And so we are down almost 15% there. And finally, Levi's is also in focus. The company boosted its outlook, boosted its dividend, and the earnings came in ahead of expectations. But it seems that this outlook boost was just not quite enough to encourage investors, to reassure them. And so we are seeing actually quite a bit of weakness despite what seemed to be quite strong results from Levi's. We're down about 6% in pre-market trading.
All right, Chloe, thank you so much. Chloe Melly there. Coming up this hour, we're going to discuss efforts for a lasting peace deal between the U.S. and Iran with Anna Rosenberg of Mundi Investment Institute. And later in the hour, Andrew Graham of Jackson Square Capital on why he remains bullish equities and particularly the AI trade. Traffic in the Strait of Hormuz grinding to a near halt after the U.S. struck Iran for a second straight day, hitting around 90 military targets. Bloomberg's Abir Abu Omar joins us now from Dubai. What is the situation today in the Middle East, Abir?
Good morning, Vonnie. Back and forth, it looks like, between the United States and Iran. As you have mentioned, the United States hit Iran for a second straight day. More than 90 targets were hit in Iran. Iran reporting earlier some bridges in the eastern side of Iran were hit. And then what Iran decided to retaliate with, essentially, is hitting countries in the GCC, namely Bahrain and Kuwait. Now, this is similar to actions that Iran has taken in the past when these skirmishes have happened, even after the MOU was signed in June, Vonnie. And so we're hearing that Bahrain is reporting sirens. They're reporting that their interceptors were intercepting missiles that were launched in the early hours of the morning. Kuwait as well, saying that interceptors had detected those missiles, some infrastructure damage there as well. And so that is essentially what we're seeing in terms of the retaliation. It seems for the time being, Vonnie, that it's muted, and this is why you're seeing Brent crude prices and NY crude, I'm seeing on the screen, reversing those gains that we saw earlier in the session. It does feel like the market is not expecting this to go back to a full force, full full-blown march type of situation where we're seeing kinetic warfare in the wider region. But at the essence and at the heart of all of this remains the Strait of Hormuz, where what our energy colleagues are reporting is that the traffic or the movement there has come to a near standstill in the early hours of the morning. And this is really because Iran had hit a ship at the beginning of the week, and it said that, or it cited the fact that those ships that are not sticking to the routes that it lays out will be targeted. And so this remains at the heart of this. Iran asserting dominance over the waterway is at the heart of this. President Trump saying that he doesn't know whether we're going to go back to a full-blown war, but he says that if we go back to that situation, it would be a very quick win for the United States. Iran not backing down, saying that if the U.S. strikes, Iran will strike back.
All right, Abir, thank you so much, Abir Abu Omar in Dubai. For more on the exchange of attacks and where we stand exactly with Iran, Anna Rosenberg, head of geopolitics at Amundi Investment Institute, joins now. Anna, are we back to square one in any way here?
No, but we are also not back to how it was prior to the war, and this is something that we have been flagging for some time. This situation was never going to go back to prior to the war, simply because this war has unleashed forces that Trump alone cannot contain, and we are seeing this currently play out. In theory, the MOU should make the Iranians happy enough to stop striking, but this isn't happening, and the question is, why is this not happening? And I think what we're seeing playing out is, well, internal power dynamics within the Iranian regime that have different ambitions. Some want the MOU to continue, some want to reap the rewards of sanctions relief, etc., while others think it is more valuable to control the Strait of Hormuz. And this is why we're seeing those tensions play out. The ceasefire is not over yet. I think we're seeing a temporary tit-for-tat. The constraints that led to the ceasefire in the first place on Trump to pull back and offer Iran such attractive terms are still very much there. Therefore, it's more likely that the ceasefire holds after this tit-for-tat. But nevertheless, this is, of course, a high-risk environment that we're going to be in this tit-for-tat for quite a while.
How much are the funeral ceremonies for the Ayatollah impacting Iran's response at the moment? They're still ongoing. In fact, they moved to Iraq in the last couple of days.
Yes, it's a display of power, and it's not a good sign that the U.S. decides to strike Iran at a time of a fragile ceasefire when they have an important celebration. So that overall shows you how fragile that relationship is and how fragile the ceasefire is, and why this situation is, at best, a temporary ceasefire, likely to last, I would say, until the midterms elections to some degree, because Trump wants a little bit of economic calm as a result of this. We have seen a change of power in the Middle East, and Iran is currently trying to reap the rewards of the MOU by cementing its geopolitical power and its power at home. And this is why we're seeing the funeral procession go into Iraq.
When it comes to the Strait of Hormuz, you know, I had thought that the Iranians were in talks in some way with the Omanis. How many routes are there now, and is there any that's acceptable to all?
Well, in theory, what has happened, and this is also why we have seen the attacks from Iran, is that it seems that ships are using more the Omani routes, which is basically outside Iranian territorial waters. And this is something that Iranians fear, because if this route becomes more established, it means that the Iranians are losing control over traffic in Hormuz. And for them, this is now a really once in a lifetime, if you will, opportunity to cement their hold on the strait. And this is why they want to introduce fees. So if the route gets established around Oman, then that's a problem for Iran further down the line. But the traditional route was centrally through the Strait of Hormuz, also into Iranian territorial waters, and they want it to go back there, because also the route around Oman is pretty thin and narrow and a lot riskier. But the US can't allow the Iranians to charge for traffic through Hormuz, because this would threaten freedom of navigation. And this has been a principle that has benefited the US since the end of the Second World War. But the Iranians are really pushing here. They want to introduce those fees. And I think that's what's going to likely come head-to-head between the US and Iran. Who is ultimately going to control Hormuz? Will the US budge and allow the Iranians to charge for it at one point? This could upend freedom of navigation as we have known it.
Yeah, absolutely. Anna, right as it was winding down and the ceasefire was really taking effect, we had, you know, the House of Representatives, the Senate, just basically chastising President Trump, saying that it was not backing him in this war anymore. Now that hostilities seem to be escalating again, he absolutely and very transparently doesn't have the support of Congress, right? Does that make a difference this time around?
I mean, again, we have to go back to how we got here in the first place. This deal was a surprise to the degree of what the US offered Iran. This is a very attractive deal for Iran. Iran got huge sanctions release, promises of assets being unfrozen without having to give in anything. And the fact that this deal was materialized in the first place shows you how of a weak negotiating hand Trump had in the first place. So this tells you that there are constraints on him that are very powerful, and the Iranians know that. What has happened since is that Trump has realized that the deal has not been well perceived in the US. It's been perceived as a weak deal. The oil price hasn't, you know, gone up that much. So now he seems to be a little bit more willing to re-escalate. Obviously, the political support is important within the US, but he's been doing a lot of executive actions. And when push comes to shove, ultimately, he's going to act based on what he thinks is in the interest of the US, with or without the support of the political framework at home.
What's the base case for you and the Mundi Investment Institute and your clients going forward? How does this resolve in some way?
Well, our base case is that this MOU is broadly going to hold probably until the midterms, because, as I said, because of the constraints that we saw before. Nevertheless, this is not going to be calm. We're going to see ongoing disruptions in the Strait of Hormuz, pretty much like we are seeing right now, simply because, as I said, there are underlying power dynamics, power struggles within Iran with different interests, and therefore you see ongoing attacks in the Strait of Hormuz. That's our base case. This sporadic disruptions will continue. At the same time, I think now it is more important to look at the kind of traffic that is going through and the rerouting that is taking place, because that is what ultimately will determine market reactions. And we have seen a lot of rerouting in oil, but also in other areas. And as long as there is not a big, narrowing down of things flooding into the world economy, the geopolitical fallout is not that relevant for markets. So we need to look really now at what goes around, what goes through Hormuz, and what can be circumvented.
All right, Anna, thank you so much for all the context this morning. That is Anna Rosenberg of Amundi Investment Institute. Now to other top stories trending on the terminal this morning. Volkswagen facing a make-or-break board meeting as CEO Oliver Blume pushes a sweeping restructuring that could eliminate up to 100,000 jobs and close 4 German factories. Management says deep cost cuts are needed to compete with Chinese EV makers, but labor unions and politicians are expected to fight the plan. Porsche's first half deliveries fell 16%, the weakest first half sales in 6 years. North America and China drove the decline. Porsche says the drop reflects the end of production for the combustion engine 718, strong demand last year for the all-electric Macan, and the end of U.S. tax incentives for electric and hybrid vehicles. AstraZeneca shares fell after one of its experimental drugs failed in a major study. The treatment didn't lower the risk of heart-related deaths or serious heart problems in patients with a rare disease. The setback is a blow to AstraZeneca's push into what analysts expect will become a multi-billion-dollar market. Coming up, one of the biggest ever U.S. debuts by a foreign company. We look ahead to SK Hynix's highly anticipated U.S. listing. This is Bloomberg.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ola, Saudi Arabia, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The SK Hynix US IPO prices today. According to sources, the listing is more than 7 times oversubscribed. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, 7 times oversubscribed sounds great, but it's expected to raise $24.5 billion. Huge, but is it a little less than we expected?
Yeah, it is, and I think that really just reflects the mechanics of what's happened to their share price over the last week or so, which has been a kind of wider tech sell-off in Korea following those Samsung results, which were really strong in absolute terms, but no more than the market was expecting. So yeah, I think actually it's a little bit contradictory that you see some selling pressure in Korea, but actually such a strong level of appetite in the US market. And I think maybe that reflects a couple of things. Firstly, there's going to be some US investors that can't directly invest in the Korean market, and so they're probably wanting some exposure to the memory trade. That's kind of a real core part of the AI story. Maybe some investors also just looking to kind of hedge their bets a little bit and take out some exposure to Micron and shift it into SK Hynix. And SK Hynix trades at a bit of valuation discount to its US rival Micron, and maybe some people are thinking that actually by having a bit of a US listing that might help to push the multiple up a bit.
Unbelievably, shares are up nearly 700% year over year in Korea. But of course, ADRs are slightly different, Matt. Once they list, is there any sort of impact one way or the other on shares in Korea, or does Korean trading have an impact on ADRs? How does that all work?
Yeah, so each ADR represents about it's a tenth of a Korean share. So these are new shares that are kind of sponsored by the company. So I think you do sometimes see a bit of an arbitrage opportunity between the ADRs and the kind of local listing of companies. So I think again that may be something that's attracting specialist investors into this particular listing to kind of take advantage of some of those opportunities.
We're also now seeing CMTX looking to list next week. Is it just that we're noticing these listings in the US more, Matt, because of what's been happening in Korea, or are these a fresh, spate of listings, and will we expect to see more of them?
Yeah, it's interesting with ADR listings. You kind of see them come in cycles almost, and we're certainly seeing a bit of a positive swing back there. Historically, the US has been a great place to list. There's huge liquidity there. Investors typically apply bigger valuation multiples to the underlying assets. So I think there's a lot of attraction to invest there or to kind of list there, and it's a great place to kind of raise additional equity. It does come with additional administrative burdens, and that's sometimes put companies off or prompted them to kind of delist. But I think right now, if you're involved in the tech sector, you want to be having exposure to the US investor base as much as you can.
All right, Matt, thank you so much. Matt Bloxham there of Bloomberg Intelligence. Coming up, a look at what's making headlines in your front page news. This is Bloomberg.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield, and personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up in the New York Times, Democratic Maine Senate nominee Graham Plattner has suspended his campaign after a woman accused him of rape, allegations he strongly denies. His exit throws a key Senate race into turmoil as Democrats race to pick a new nominee before the July 27th deadline to challenge Republican Senator Susan Collins. Next up in the Financial Times, President Trump surprised NATO allies by softening his stance on Ukraine at the alliance summit in Turkey, praising President Volodymyr Zelensky and backing a plan to let Ukraine manufacture U.S. Patriot missiles. European leaders hope the shift signals stronger U.S. support and pressure mounting on Russia. And in the Wall Street Journal, J.P. Morgan is launching a new investment banking team to target deals for companies worth $100 to $500 million. The bank says aging baby boomer business owners and growing private equity demand are fueling opportunities in smaller M&A, an area where it sees less competition from rivals. All right, this is your market outlook for the day. We have futures bouncing back after some aggressive buying towards the close yesterday. The S&P was down about 0.3%, but a little bit of a safe haven, it turns out, in terms of the war trade. Not much movement on the U.S. dollar index, nor the 10-year. Next up, Andrew Graham.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh strikes, the US and Iran trading attacks for a second day, testing that fragile ceasefire. Stocks rebound, oil raising some of those gains despite renewed tensions. And IPO appetite, SK Hynix's US offering sees strong investor demand. So we are seeing futures looking to bounce this morning. NASDAQ 100 in particular, the stocks ended up the session up 2.2% yesterday. It was almost like semis were a safe haven as war seemed to loom again, or at least the fear of kinetic escalation. In terms of treasuries, not too much movement, a little bit of movement at the front end of the curve, down a couple of basis points on the yield there after the FOMC minutes basically showed a divided committee, as we knew, but could go any which way for a next move, up or down. Michael Froley calling them milquetoast. And then in oil, we did see rising oil prices yesterday, but they came off a little bit at the end of the day. We're down just ever so slightly now, about 0.5%. But still, you know, Brent crude still close to $78 a barrel. Let's get to some individual movers now with Chloe Melly. Chloe.
Good morning, Bonnie. This U.S. chip-making sector is seeing that read across from the U.S. listing of SK Hynix, which has seen very, very strong investor demand, as you were saying. And so there's this boost to the AI trade that is coming back after the recent weakness that we had seen in that sector. And so we are seeing Intel, Marvell Technologies, Micron, all up more than 3%, so quite strongly in pre-market trading this morning. Moving on to Ionis Pharmaceuticals, which is down very significantly, plunging about more than 21% actually after its heart drug that it developed in collaboration with AstraZeneca failed the clinical trial results. And so analysts are saying this is a huge setback for both companies and also a test of their credibility. So that explains that huge drop. And finally, we're also in the red for Levi's, which has actually boosted its outlook, raised its dividend, and had earnings ahead of expectations. But it seems that this forecast boost was just not quite enough and underwhelmed investors. And so that explains this fall this morning. We're down about 6% for Levi's despite those quite strong results.
Chloe, thank you so much. Chloe Melly there in London. Stocks in general then bouncing back after a brief risk-off spell. For more of the markets, Andrew Graham, founder and portfolio manager at Jackson Square Capital, joins us now. What was yesterday? Was it a look for a safe haven trade, or was it something a little bit different? Was it just that we had sold off enough and it was time to buy the dip?
I think it's time to buy the dip. It looks to me it has all the earmarks of a classic, position unwinding, exacerbated by single stock levered ETFs in Korea, and I think it's run its course roughly 20% drawdown in a lot of those names, and the Philadelphia Semiconductor Index is still well above levels that people would identify as technical support. It's probably about 7% below current levels. So a lift here doesn't surprise us, and I think it's an opportunity to add exposure.
But we had, risen so much. I mean, some of these names are up several 100% since the beginning of the year. Would you not be a little bit nervous getting in even at these lower levels?
So I think if you don't have to buy Micron and the new SK Hynix ADR, and if, it's just not even necessary. The entire AI theme sold off, and some of those names are our highest conviction names in networking equipment, specifically the optical transceivers like Coherent and Lumentum. So opportunity to reload there. I think they're just a casualty in this position unwind, and that's an opportunity. We also think that now is a decent time to expect the hyperscalers to show an improved return on invested capital. I think that's what this whole thing is about in the background, not just positioning unwind, but this concern or worry that during Q2 earnings season, these guys could lower their 2027 outlook for CapEx. I do not see that at all, don't see it anywhere, and I would expect, if anything, it has an upward bias.
At some point they have to, right? Does there come a point for the market where it's not a problem that they dial back that CapEx spending?
Yeah, I think maybe over time, particularly if you do it gradually, like if they are able to sort of widen that gap between operating cash flow minus CapEx, and that's really been the issue, right? That the semiconductors have underperformed. That the hyperscalers have underperformed the semiconductors. That looks a little bit like, I don't think a lot of people are talking about it, but it does look a little bit like the 99-2000 period when you had the communication services stocks lagging well behind the communication equipment names, right? The Nokias and the Ciscos and so forth. So that's the similarity, and you can maybe point to that and say that's a little eerie, right? And that bothers me. But the time is coming. Like, if it's not this quarter, it's next quarter, and I would expect it to happen sort of naturally. Token costs are falling. Token prices have stayed where they are, right? And that spread, that margin, leads to incremental revenues. It leads to incremental margin improvement.
How do you know where to put your money or put your profits in the AI trade right now? Do you just splatter it across the AI trade, or you picked out some areas? Why those areas? Is it a valuation thing? Is it that they're going to be next up for scarcity?
There's a scarcity component to it. We're talking about the optical transceivers, and then there's a roadmap to co-package optics and so forth. The company that controls that tech horizon is NVIDIA. And if you look at it, if you look at the roadmap, you're going to have to go to light at some point. Copper's not going to cut it, in 2 or 3 more versions. And whether the AI trade collapses tomorrow or not, it may delay the inevitable, but the inevitable is that it's all going to go to light, and you're going to be needing co-packaged optics when you go to scale-up architecture, which is probably going to start happening in a real way next year.
The escalation of hostilities again, if it continues, does tech continue to be a little bit of a haven for investors? And why is that? Has it ever been the case before?
Because it's a secular grower. It's not really dependent as much on consumer behavior and things of that nature. So it's just money rotates that way. And so, part of this uptick we're seeing maybe this morning and a little bit yesterday has something to do with that. But I wouldn't make that a big part of the theme. These things are off 20%. That's pretty natural and normal. I think it's probably maybe bigger than what we realized last time in the momentum unwind, but that's just because you have all that added leverage, and that was the pain trade. It was the obvious pain trade. That's what we have to try to do, is identify where people are, everybody's sitting on one side of the boat, something's bad's going to happen, and so all that leverage in those single stock ETFs, that had to unwind, and that's what's been happening.
Andrew, there was a question mark over whether it was the time to start getting into China AI plays, right? China 6, 12, 18 months behind the US maybe, but catching up at some point, and it's cheaper. Would you buy into that argument, or are you purely looking at US stocks? Purely
looking at US stocks. I have a hard enough time doing that. But what I thought was notable is that the open source Chinese models are closing the gap with the US frontier models. And the Brookings Institute estimate is 6 to 9 months behind the best frontier labs. It's Claude Mythos. As you remember, we had to shut Claude Mythos down because we were worried about vulnerability discovery and things like that. So I don't see much likelihood that U.S. corporates are going to skimp when it comes to spending on cybersecurity. So names like Palo Alto and CrowdStrike probably even first. And then we recently added a small position in Tenable, which is really all about vulnerability discovery and management.
What about Broadcom? I know it's something that you're very much looking at. It's only, and I put that in quotes, up 12% year to date. That would be fine in a normal year, right? But in a year where we're seeing 700 percentage points on stocks, 12% is nothing.
Yeah, I get that relative underperformer compared to the group, okay? So you can identify that, but it's the era or the age of compute ASIC silicon is here. The Frontier Labs decided to monetize at the end of the fourth quarter, right? We started the whole inferencing phase, and there's a whole trade that goes along with that. But inferencing, period, whether it's agentic or not, is just hungrier. It's 2 to 3 times more compute hungry. It's 3 to 4 times more memory hungry, and that's where some of these shortages are building into the channel. Broadcom is part of the solution. You could also say Marvell. And custom ASICs. Custom ASICs can reduce costs, overall cost of ownership, probably 20 to 30% less than a GPU, and energy usage could be as much as 50% less. So that's where it's going. I would expect ASICs to outweigh in terms of market exposure, would outweigh GPUs probably sometime in the middle of next year.
All right, it's been a pleasure to have you in this morning, and thank you so much, Andrew Graham, founder of Jackson Square Capital. Now to other top stories trending on the terminal this morning. Wall Street banks are missing out on Hong Kong's AI fundraising boom. 2 Chinese firms raised nearly $5.8 billion this week using mainly domestic banks as US and China tensions reshape deal-making and Chinese lenders gain ground in the city's red-hot AI capital markets. Cantor is accelerating its Middle East expansion, hiring 16 fixed-income professionals, with most based in Abu Dhabi and others in London and Singapore. The team will be led by a former Stifel executive as Wall Street continues investing in the Gulf despite renewed regional conflict. Aston Martin's creditors are banding together as the luxury car maker's financial pressure grows. A group holding more than half its secured bonds has formed a united negotiating bloc after mounting losses, rising debt and weak demand pushed its bonds into distressed territory. Fitch warns the company may need a lot more cash over the next 4 years. Coming up, we'll look at what the latest exchange of attacks between the US and Iran could mean for the ceasefire. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
oh boy,
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving sometime.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The U.S. renewed attacks on Iran overnight, hitting 90 targets, marking an escalation of violence that does threaten efforts to reach a permanent peace deal. Bloomberg Government's Mika Zollner joins us from Washington. Mika, we weren't getting that far into negotiations anyway, right? So what does this change? Does it make Iran more belligerent? What might change in the future because the U.S. has started striking targets again?
Yeah, the U.S. is on a very, very murky territory right now when it comes to what's going on in Iran. President Trump, as we saw, essentially declared the ceasefire over. There's escalated attacks now happening, and more that the president has been unafraid to just publicly say. So, we don't really know yet what to expect from Tehran, but obviously they've escalated attacks on the Strait of Hormuz, which has prompted a lot of this. And I think that there's going to be more. This is also shaking up the markets and, of course, having a strong impact economically as well. So we're seeing some of that relief go away. And I think that there's still questions yet to be seen. The White House has yet to hold a briefing in the past 2 weeks. So I think that there's a lot of questions that need to be answered. And we're going to see that when the president returns or has returned now from NATO.
Yeah, exactly. What was the thinking in Washington, Mika? I mean, were people surprised that the president did this at this time? Particularly given that the funeral for the Ayatollah is still ongoing, and also, it wasn't really telegraphed that he was going to start doing this.
Yeah, I don't know if I would say that people were surprised. As we know, the president's really unpredictable. The peace deal in itself was shaky. I do think that there are some concerns that are being raised from people in the president's orbit and Republican lawmakers as well in terms of, what is going to be the direction here and how long is this now going to last, and exactly what is the path forward. So we all have these questions. I think that we're going to, potentially see answers soon. But yeah, the timing is, I think, a little bit concerning for many people.
Just want to bring it back to the domestic now, and Graham Plattner suspending his main Senate campaign after the new assault allegation. He said basically they were not going to let us have it. Who's going to take his place? What is the Democratic Party thinking, Mika?
Yeah, there's a series of candidates that have already launched exploratory committees to replace Graham Plattner, and I think that we're going to see this strong battle now within Democrats in Maine who are now deciding whether it should be someone that is more progressive, someone that is more moderate. This is a huge challenge for the Democratic Party in a race that is very pivotal and critical to take on moderate Republican Senator Susan Collins, who has maintained strong electoral victories. This is a huge relief for her as well, that the party has this, but we are going to see, potentially there's a stronger candidate with all the baggage that Plattner had. But I do know that this is something that Democrats are obviously watching very closely, and we're going to see which ideology kind of battles it out here.
Yeah, exactly. Mika, thank you so much. That's Bloomberg Government's Mika Zollner in Washington. Another story we're following closely is SK Hynix's US IPO. Sources say the listing more than 7 times oversubscribed. Joining us now is Bloomberg's Neil Campling. Neil, give us the context. Is 7 times oversubscribed a lot for, new ADR issuance? And, do analysts like yourself expect that shares will pop tomorrow?
Yeah, it's a great question, Molly. I mean, as far as for an international listing, this is a very large.
Neil Campling might rejoin us in a moment, but I think we get the gist of what he was going to say, that it is a very large oversubscription, and we are expecting those to trade tomorrow. And in fact, on Monday, the ticker changes from SKHYV just to SKHY, so be on the lookout for that as well. Now, we also have PepsiCo reporting second quarter results before the bell. Investors are focused on whether weakness in its North America foods business is easing. Analysts say turnaround efforts continue to face headwinds, raising concerns about quarterly sales and the company's full-year outlook. Let's get to Maddie Parker, Bloomberg consumer reporter. Maddie, the North American turnaround was just getting underway. What is the problem? Why are we not expecting to hear good things?
Yeah, morning, Bonnie. So yeah, PepsiCo are reporting second quarter results this morning. As you say, I think investors are going to be really, really focused on how the North American business in particular is doing. The first quarter was fairly robust, but the question really is whether this is going to be any sort of durable recovery. I feel like I often come on the show and talk about consumer companies, and it's difficult to avoid the elephant in the room, and it's something that PepsiCo's grappling with and its fellow consumer kind of packaged goods companies, which is that consumers in the US are facing weaker sentiment, they're facing years of inflation and a weaker labour market, and it's actually very difficult when you're trying to push those kind of snacks like PepsiCo are doing. That's Lay's and Doritos and Pepsi, of course, in a market where people just don't have the cash really to be expending like that, and particularly when they're leaning into more healthy food habits as well.
Yeah, I wonder, is activist Elliott pushing for bigger change? How is that relationship going these days?
Yeah, of course. So they've had to kind of engage with a sort of activist investor in Elliott, and it's interesting. They've kind of heard their concerns have been taken on board. They've kind of altered their strategy a little bit to try and lean into kind of some of those habits that we are seeing. We know the consumers are leaning away from the kind of sugary eating and really kind of going into more healthy products, but we also know consumers fundamentally, bottom line, are value driven at the moment. And PepsiCo are kind of leaning into that a little bit more. They've kind of expanded their sugar-free options. They've expanded their kind of larger affordable crisp packets or chip packet options. And they've even lent into things like Doritos protein, which is kind of like you can get a protein hit now from your crisps or your chips. So it'll be interesting to see kind of how those products are picking up, and particularly if investors are kind of pleased with the turnaround that they're seeing at the moment.
Yeah, and it will be a read across for other makers of these types of snacks and drinks, right? Because they even have a protein drink, which I hadn't fully realized. This protein, craze has literally become a craze. Do we know anything about how Pepsi's protein drink is doing, or as you said, protein snacks?
Yeah, well, I think it'll be interesting to see. I think there's going to be naturally a bit of consumer skepticism, I guess, around whether you're going to really get the protein hit that you need, maybe from the kind of sugary drinks and the snack options as opposed to your usual sources of protein like meat and kind of like the pulses and the options like that. So I think it will be interesting to see how they're doing. I'm not entirely sure how consumers have initially responded, but I think these results can be quite telling in terms of their push on that front.
Maddie, what else are you watching out for in terms of read on the consumer before we begin next quarter's earnings in earnest, which actually is not that far away, a week or two?
Yeah, totally. I mean, I think one of the big things that we're going to be watching from a lot of companies kind of across the board is how they've been able to kind of dampen a little bit of actually the price inflation that we were worried about kind of at the start of the year. Of course, the kind of conflict in the Middle East is something that, particularly in earnings calls, we were all joining. It was the number one question on the agenda every single time. Everybody was asking CEOs how much price is going to inflate by, and a lot of them were saying, oh, the kind of latter half of the year, maybe when we see some of these kind of inflationary pressures kind of creeping through. So I think that's definitely something that across consumer companies we'll be keeping an eye on, particularly when we know that sentiment is down and kind of spending is quite dampened. It's the last thing that consumers want to see. It's be interesting to see if they're able to grapple with that well.
And we know back around COVID, when inflation was really hurting companies, we saw them put things in smaller packaging, and that really didn't go down too well with the consumer either, Maddie. So how are companies, managing so far with cost inflation? Are they able to push it on to consumers? Are they suffering margin-wise?
Yeah, well, a lot of them are saying we have to actually the absorption of those costs is going to be quite significant, and they're going to have to kind of try and navigate that. It's kind of creeping through in some of the results, but as you say, looking forward to kind of the second half will be really quite telling in terms of that side. I think consumers at the moment are going to be offset, as I say, they're watching their pennies. They're not looking to be buying smaller products for kind of increased prices. So it'll be interesting to see. I think one of the other trends, and something that we talk about a lot actually, is the impact of kind of weight loss drugs and GLP-1s on the consumer base as well. It's something that a lot of companies are leaning into, is actually making smaller portion sizes and kind of pushing those forward. So that's kind of a nifty go around in terms of trying to get some of those smaller products out on the shelves. But yeah, it'll be interesting to see how consumers are actually responding and whether they've got the cash to be spending on discretionary products like this.
Yeah, exactly. A lot of innovation in the sector too. Bloomberg's Maddie Parker, our consumer reporter, thank you so much. Coming up, we're going to get you set up for your trading day. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today, your Thursday trading session. We were just talking about it. PepsiCo's second quarter results, they're out before the bell. We got some more Fed speak as well today from John Williams and also Laurie Logan speaking. And SK Hynix prices today starts trading in the US tomorrow. Let's take a look at your outlook then, macro-wise, because yesterday was a very interesting session. It started off with a lot of jitters, a lot of bellicosity from President Trump, but walked back a little bit later on in the day. But we did see a rise in oil prices, and we're very closely monitoring the Strait of Hormuz for action, or at least lack of action. We're going to see whether ships stop sailing through and what that means for commodity markets. Right now, we're off our highs, but we're still up at 78 for Brent, and we're still above 73 for WTI. Now, these are about 25% below the peaks, right? And we're not really at levels that we were when we were right in the heart of the war, but definitely escalation is on the cards. European gas futures just coming off their highs as well. There had been a pretty massive advance over the last couple of days for European gas. When it comes to everything else, it seems like the escalation trade helped the AI trade randomly. It's so strange to see that the AI trade, and particularly tech, was a safe haven actually for investors yesterday. We actually saw the Philly Stocks Index up 2.2%. This even as Korea had sold off and went into a bear market, and as jitters just were abounding when it came to the AI trade. Nevertheless, maybe dip buyers had come back out as well of the woodwork. We did see the two-year yield drop just a little bit, even as the rest of the curve continued to stay steep after the FOMC minutes. As Paul Donovan put it, could go up, could go down. Michael Froley of JP Morgan saying the minutes were pretty milquetoast, didn't really tell us anything new. And we've a pretty stable US dollar index today. That's it for Bloomberg Brief. Surveillance is next. This is Bloomberg.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market. Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The AI trade has gone from uber bullish to a bullish bearish combination.
View this sell-off more as an opportunity than a reason to panic.
The AI trade will continue to find support.
A lot of it then depends on the durability of AI.
If that falters, we've got a real problem on our hands.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, crude inching lower, tension simmering, the U.S. wrapping up a second day of strikes on Iran. Just as a few Fed officials are getting the itch to hike interest rates, an equity offering from SK Hynix is more than 7 times oversubscribed. Big demand ahead of that listing.
Today is a perfect example of how deep and liquid the U.S. equity and bond markets truly are. Despite all of the worries that you're talking about, the increase in attacks in Iran, this question about inflation and the Federal Reserve possibly hiking rates, this question about persistently higher oil prices, and SK Hynix saying, even though we've had a semiconductor rout, it is a good time to go to the U.S. and raise almost $25 billion, one of the biggest outside of the U.S. Equity raisings in the United States ever. Raising a question how resilient this market is and just how wide the pool of capital is looking to invest in any part of the AI story.
To your point, it might be just short of a record for a foreign company, that equity listing, raising close to $25 billion. Look for that. On the equity side, maybe. That's where the debt still is right now. We've seen some pushback earlier this week on the debt side.
Yeah, the idea of Amazon coming to market, really seeing a bit of skepticism. A lot of people characterizing that as people weren't expecting this. This is coming with different types of protections. This is coming with a longer duration. At the same time, is it just a matter of skepticism around the overall concept, or is it just we want more money? Because ultimately what you've seen is plenty of demand just exacting a bit of higher premium to offset any potential risk. So this isn't a lack of money willing to invest. This is investors saying, you know what, we have leverage too, and we want more money. And essentially, they're getting it.
Some money went back into the AI trade in the last 24 hours. Chips had a better day. I just wonder how much of that was the so-called war trade. The money going back into the things that worked the last time things really took off between Iran and the U.S.
We saw the equal weight underperform for the first time in a long time. Exactly to your point, during a period of time when the war calmed down, oil prices went down, and people were expecting disinflation to reassert itself, everyone was saying the market's going to broaden out. This is going to be a much more inclusive rally. Suddenly, the haven trade was exactly the trade that was exactly the most pain earlier, which is the semis and the hyperscalers. And that seemed to be the one performance yesterday, other than energy, was that tech trade.
Crude was inching lower. It's now inching higher, up by 0.2 on Brent crude this morning. Brent at 78, WTI at 73. I'm not sure how you would describe this current phase. This moment we're in between the US and Iran, the president gets to decide whether it's a ceasefire or not, I guess, and he says it's not a ceasefire. So you have a series of strikes. He's called them love taps in the past. I'm not sure what this is at the moment or where it's heading.
We were talking about language. Love taps, not my love language. Tiff, maybe that's also a quarrel between lovers. Let's not go there. Skirmish, the issue to me is the market is looking past this. They are saying ultimately, yes, it is raising the temperature, and yes, oil prices have to be priced higher, but it isn't in a wholesale freakout. We're not hearing people call for $120 a barrel. Maybe we're not getting the right people on to really talk about those prognostications, if you still are doing that.
We'll get them back.
Jeff Curry, please come back on. But there is a question here about how far this can go, given the sort of glut that people were predicting would reassert itself later this year if there was normalization.
Margins are so fine right now at the Federal Reserve. The difference between doing nothing and doing something is like that wide at the moment. A lot of people say this Fed is divided. Looking at those minutes, it's a difference in degree, not a difference in kind. And if you look at the inflation backdrop right now, any kind of hiccup in energy could tip things one way versus the other.
You're nailing exactly the point here, which is, was anyone on the Federal Reserve opening the door to rate cuts going forward? Or is this a hold or a hike? And that is a dramatic shift in terms of reaction function and, frankly, mentality at the FOMC, even though you potentially don't have a July rate hike on the table, and that's potentially because we don't really know. This did seem to signal that people were very concerned about a protracted inflationary push, not just coming from oil, but also from AI. So real question for next week when we get CPI, what is the threshold that really puts July into action?
Next week on Tuesday, what a morning we're going to have. Tons of bank earnings, lots of economic data. The Fed Chair Kevin Walsh speaking later that day, I believe, as well. Let's talk about the earnings. PepsiCo dropping just moments ago. Core EPS 220, the estimate 219. Lisa, just running through the detail. The detail gets your attention. The stock is up by about 1/3 of 1%.
What's fascinating to me is that Pepsi last year came out and said that it was going to cut prices. People had argued that they had been increasing prices way too much and people had stopped buying. What they did was actually see a decline in North American revenues as a result of what they had done, which was cut prices. They said they are going to go persist with this because they want to increase the revenue. The revenue increased more than expected, the organic revenue, about 7%. They also had an FX tailwind. This, though, is interesting. This is the consumer. I don't know if it's discretionary. Is it discretionary to get Lay's potato chips and Pepsi Cola? Either way, it really highlights how people are still buying some of these goods, even though they had pulled back a little bit earlier this year.
Is there a World Cup commercial that David Beckham is not in right now? He's in the Lay's commercial too, isn't he?
I think so.
Right, Verizon, Home Depot.
They did hint that that might be helping to perhaps bolster their earnings.
Okay, stock is up by about 0.5% this morning. Less than 1%. Equity futures up by about 0.2% following 2 days of losses on the S&P. Coming up this hour, we'll catch up with Bob Elliott of Unlimited Funds as tech mounts come back. Norman Rule of CSIS as the US and Iran trade attacks for a second day. And Rolf Bulk of Food From Equities as SK Hynix attracts strong demand ahead of its US debut. We begin this hour with stocks pushing higher. Bob Elliott of Unlimited Funds writing, it's becoming increasingly clear that most AI investment will experience poor returns even if things go well. Future income growth is getting increasingly squeezed from all sides. Bob joins us now for more. Bob, good morning.
Good morning.
Is it becoming increasingly clear? And what are you looking at that's painting that picture for you?
Well, I think the basic picture of, if you look at a plan for $5 trillion of CapEx over the next 5 years or cumulatively through 2030, and you think about what sort of revenues have to come on that $5 trillion of CapEx in order to get anywhere close to a reasonable return, you're talking about, at a minimum, a few $1 trillion, right? $2, $3, $4 trillion of revenue in order to make a good return. And that is an extraordinary amount of revenue that has to happen. If you look at the hyperscalers today, what did they make in the last 12 months? $1.5 trillion. So you're talking about over the next 5 years, they're going to add on top of the $1.5 trillion, they're going to add, $3-4 trillion of additional revenue. That is an incredible amount of revenue that they have to get. Now, each one of those different hyperscalers is seeing the opportunity to be the lead, and so each one may be making a rational decision, but in aggregate, it is largely impossible that we're going to see this sort of revenue growth.
Let's build on that. The biggest source of comfort for this equity market right now is earnings. Are you saying that could be the source of risk in the years to come?
Well, I think anytime you're looking at a market, what's going to end up happening is how things come in relative to expectations. And so it's really important to look at what the expectations are right now. And right now, over the next 3 quarters, markets are expecting, or analysts are expecting, 31% annualized earnings growth on top of the extraordinary quarter in the first quarter. We're not talking about 5 years forward type earnings, although even those are at the highest level they've ever been in 50 years, the highest level they've ever been in terms of expected earnings growth. And so you have very, very high expectations. And most of what people are doing is penciling out what was a great quarter in the first quarter to exist not just through the end of the year, but through 2027 and out into the future. And that is a recipe for disappointment. You're already starting to see lots of cracks in the view of how productive the AI trade is going to be, how much investment is going to occur. We see data center growth slowing considerably. It was doubling a year ago. Today, it's growing at about 15% from the latest data. Those are the sorts of numbers that are not going to achieve 31% annualized growth rates in earnings across the entirety of the equity market.
That said, slowing is not exactly a terrible proposition considering how fast some of these have been growing. I was looking at SK Hynix and the revenue increase year over year for the first quarter. It was about 200% year over year when you take a look at just the overall revenues. I mean, if they just come in at 150% growth year over year, are people going to start crying? I mean, what is the pace of deceleration that you're expecting that really could cause some concern?
Well, in order to get trillions of dollars of revenue on all this hyperscaler investment, you need revenue growth in the AI sector to run at more than 100% a year, compounded over 5 years. What are the odds that that's going to happen? Well, it's never happened in any sector at any scale in history. We're talking about cloud computing. You're talking about, back in the web days, smartphones. None of those have seen that sort of compounded type revenue growth in a sector. Not to mention the fact we're talking about $4 trillion of revenue growth. That's more than 10% of GDP of the U.S. economy going to hyperscaler revenues. That is a largely implausible outcome.
So a lot of people are probably listening to this, nodding along, saying, yeah, he'll be right, but maybe in a year. And in the meantime, the music's still playing, so we're going to keep dancing. What do you do with this? Even if eventually you're right, do you act on it now?
Well, trading bubbles is a tricky proposition for anyone who's been in markets for a little bit of time has gone down the road of the early short and feeling the pain from it. And so there's sort of, I'd say, two different ways to approach this. First of all, if you're a largely long-only investor, right, the trade-off here is do you lean into this mania, or do you say, are you thankful for the gains, rebalance back, and prepare for a little tougher environment ahead? And so really it's about rebalancing. That's the most conservative way to deal with this, is to not lean in. There's all this pressure to lean in. Don't lean in, rebalance back. And wait for, there's going to be a time, and the question is, what is the spark? And sparks that pop bubbles are very, very hard to recognize on a forward-looking basis, but there will be something. Maybe it's this tiff or skirmish that happens in Iran that starts to create expectations of Fed tightening, something like that. Maybe that's what drives it. But you have to be prepared that this could shift, and it could shift very, very quickly.
Well, last time in some ways it pushed people back into the tech trade. Do these renewed tensions create any different kind of results?
Well, I think it then comes down to what's going on, as Lisa mentioned at the outset, in the financing markets. If we get a world where the Fed is forced to engage in more tightening because this Iran trade, or because the Iran conflict starts to heat up again, we start to get inflationary pressures, the Fed really does have to be a little more restrictive. That's the sort of thing that could easily start to funnel back, right? If you can't get the debt issuance that's expected, if the equity markets aren't quite as open as people are expecting, that sort of tightening of liquidity is the thing in the financing markets that would then start to lead back in terms of what's going on in how much CapEx they can do, and from the CapEx, the earnings, and back.
A few Fed officials got the itch at the June meeting. Do you believe July is live?
Certainly. I mean, I think if you look at what's going on with oil prices, the only reason why July wasn't live was because oil prices were down basically at where they started the war. That's changed. Now, it's hard to know exactly how far this is going to go, but I think it's important to recognize from a macro fundamental perspective, the conflict in Iran and the Hormuz problem has not really been resolved. I mean, we only got ship flow through that was maybe a third at peak of what it was pre-conflict. And so what that means is we are barreling towards a loss of inventories. That's still happening. You see what's going on with the SPR, it's going down. You saw what was going on with Chinese oil imports. That was at 5 million barrels a day in June, even after the MOU was largely signed. And so this inventory drawdown is basically creating the illusion that everything's fine, and people sort of look past the political element. But if that ramps up, we're still on a knife's edge in terms of creating a loss of inventories that would create a price spike ahead in oil.
Bob, it's good to see you. Appreciate the framing, thank you. The bear case there from Bob Elliott of Unlimited Funds on the AI trade. Twos, the yield curve looks like this morning. The very front end, twos at about 420, a few weeks out, Bramo, from that Fed meeting.
Yeah, and people trying to figure out whether it's live, whether there's enough willingness to do this. I'm still thinking about what Bob said, which is you rebalance. What do you rebalance into? What isn't related to the AI trade right now? Is it European stocks? I mean, ultimately, is it vacation shares? I mean, at what point can you rebalance away from this?
I'll take a vacation right now. You want to take a vacation
I think
right
that,
now?
yes, sir.
Totally on board with
It'll just be bars on the screen. Sorry, guys.
We'll hear from Delta Airlines tomorrow. They'll talk lots about vacations. I'm sure there's tons of demand. Tons of demand over at Delta. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, good morning. The U.S. military striking Iran for a second straight day. U.S. Central Command saying about 90 targets were hit. The Islamic Revolutionary Guard says it struck U.S. bases in Kuwait and Bahrain and threatened to expand attacks. The Federal Reserve releasing the minutes of its June meeting, the first under Chair Kevin Warsh. A few officials saying there was a case for raising interest rates, though they ultimately supported the decision to leave them on hold. SK Hynix's U.S. listing is more than 7 times oversubscribed. Sources telling us here at Bloomberg it has attracted demand from institutional investors. According to our calculations, it's likely to be among the largest ever U.S. debuts for a foreign company. Tune into Bloomberg tomorrow at 10:30 a.m. for an interview with the SK Group chairman. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes. Up next on the programme, taking game at Iran.
We just hit them very hard. They did a little something today, but it was really retribution for last night. And when they hit, we hit back much harder.
Up next, we'll catch up with Anne-Marie on the ground in Ankara, Turkey, following the NATO summit. Plus, Norman Rule of CSIS, live from New York City this morning. Good morning. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
We are coming off a 2-day losing streak on the S&P 500. Pretty muted, mild stuff. Haven't had a 2-day stretch so far this month. put that together just yesterday. This morning, a small bounce up by 0.2. A bounce back on tech as well, up by 0.6. It's interesting to see the tech trade. A lot of people talking about the rotation away from checks and then the war away from chips, and then the war kicks off again and people go back to chips and semis, and the tech trade picks up again.
Yeah, a real question here. Can the broadening out trade work if you have inflationary pressures persisting and potentially a live Fed? And that is ultimately the angst that you're seeing play into this market at the same time that they're saying, but tech's going to be just fine.
How live is this Fed story? Twos right now, 420. Yields coming in, 2 basis points or so. There are some people getting the itch of the Federal Reserve to hike interest rates. You could see that in a minute just yesterday. Will they act on that itch later on this month?
Yeah, some participants, according to the minutes, which were about a fifth smaller, about 1,000 words smaller in terms of this statement, fewer words. Yes, well, I had AI do it, so I could be wrong, but it went from some like more than 5,000 to a little more than 4,000 words. Nonetheless, people are taking a look at the potential to need to raise rates. Ultimately, it doesn't just depend on energy prices, also AI. So again, the Fed is also an AI trade.
Why would they ever 5,000 words? But anyway.
It's a great question.
Right.
But that's without footnotes. A couple other things stripped out.
Okay.
But it could be wrong because it's AI.
Okay, you double check.
I will.
Brent crude right now, 78, just about unchanged, going nowhere after a 2-day rally on WTI 73.56. Under surveillance this morning, taking gain at Iran.
We just hit them very hard, and I'd say we hit them 20 to 1. Every time they hit us, we're going to hit them 20. They did a little something today, but it was really retribution for last night. They hit actually 3 boats, not 2. And when they hit, we hit back much harder.
So here's the latest this morning. The US striking Iran for a second straight day. Tehran responding by targeting American sites in several Gulf nations. Anne-Marie joins us now from Ankara, Turkey, the site of the NATO summit that wrapped up in the last 24 hours. Anne-Marie, good morning.
Good morning, Jonathan. Just as the president left mere hours after he left the NATO summit, he did what he said he, quote, was probably going to do, and that was strikes once again for a second day on Iran. CENTCOM was out with a statement saying under the commander-of-chief's direction, they wanted to degrade the capabilities of Iran to go after commercial vessels in the Strait of Hormuz. And what we've learned so far is that 90 targets were hit, and you're looking at places where there's drone and missile storage, coastal surveillance systems, air defense systems in Iran. And as you mentioned, Iran has struck back on countries like Kuwait and Bahrain that have U.S. forces and installations in the arena. It's quite difficult to understand what moment we are in right now. The president said the ceasefire is off, but then when pressed by reporters at that press conference, he said he doesn't think it's going to start again. So he didn't want to commit to all-out war, which makes it feel like we are just in the middle of a stalemate. How long can this continue where we just have skirmishes here and there with attacks on both sides? I think this stalemate potentially is the status quo the market's going to have to get used to.
Anne-Marie, stay close. We'll catch up with you again in the next hour. Norman Rule of CSIS writing the following. Iran appears willing to risk a renewed large-scale conflict with the United States if that is the price of forcing others to treat Hormuz as a waterway subject to Iranian permission. Norm joins us now for more. Norm, welcome back to the program, sir. How would you define this current phase now the president has said the ceasefire is over?
Good morning. Well, the president has basically undertaken a much broader series of attacks against Iran than our retaliation to previous Iranian strikes against shipping. It's not only meant to degrade Iran's capabilities, but it's meant to send a message that the United States is willing to expand this conflict. It's unclear and uncertain and even unlikely that this will change Iranian decision-making regarding its intent to have administrative control over the Strait of Hormuz. But it could buy us a period of an interregnum where you could have an opening for diplomacy for the Qataris and the Pakistanis to engage Iran to come up with a more stable situation.
Norm, do you get any sense that maybe the attacks that the U.S. has done on Iran were sanctioned by the UAE and Qatar after they were attacked personally by Iran?
That is very unlikely. The United States does not seek the concurrence of other countries for its targeting packages, but the United States would coordinate with all of its partners to ensure that their defensive capabilities are appropriately aligned in case of Iranian retaliation. And we have seen Iran attack Kuwait, Bahrain, and now there are reports that there may have been an attack on a military communications facility in Doha.
At this point, what's the path forward, Norm, given the fact that ultimately the ceasefire seems to be dead, both the economic prongs related to the sanctions also torpedoed, and now you have renewed attacks? Do we have any pathway to some sort of nonviolent resolution?
Unlikely. At present, we have a situation where economic erosion within Iran continues. Iran is under severe financial strain, far more than it will admit. The administration likely believes that that is going to have some impact on Iranian decision-making. Our capability to reduce Iran's capabilities by degrading their systems is also important. But in the near term, Iran continues to see that its route is to obtain administrative control of the Strait of Hormuz and to attack those locations in the Gulf that host American bases. That's likely to be a turbulent new normal with interregnums of peace for the foreseeable future.
Norm, given how things have played out more recently, it was just the US alongside Israel. NATO members didn't come along. Given the last 24 hours and the promising meeting the president described with NATO members, do you see any reason for NATO members to participate militarily in the weeks to come?
Some NATO members have reportedly provided useful defensive capacity to Gulf states. That's going to continue. I think you're going to see some limited technologies being provided to the Gulf states for counter-drone and other activity, but the actual involvement in military operations remains unlikely, both in terms of what capacity NATO members would have to bring to this, but also the fact that they would then be directly involved in a conflict that may not have an end that they can understand or at present.
Does the same logic apply to Gulf allies?
No, because Gulf allies are stuck in the region. London and Paris are a long way from the missile and drone strikes, but Doha, Abu Dhabi, Kuwait, and Manama have to deal with this every day. But there is a much closer military integration with the GCC through our traditional NAVCENT relationship, and that relationship remains sound and excellent based on my understanding.
They have been very restrained, given what they've faced, Norm. Do you see that changing?
They have been restrained, but there are reports that at least the UAE has conducted a limited number of military action. I don't see this changing. The Gulf states are not interested in expanding the conflict. They're not going to allow themselves to be punching bags, but they see their defensive capabilities, the U.S. response, and the diplomatic track as producing a situation that buys them the best possible sort of stability that they can hope to achieve in this environment.
Norm, it's good to see you. As always, sir, thank you. Norman Rule there of CSIS on the current trajectory for the situation in the Middle East. Described increasingly in the last day or so as a new normal. What does that new normal mean? How do you internalize that as a market participant this morning?
Key question is how much oil gets through. Ultimately, if they're agnostic about exactly how or what kind of precedent this sets for transporting goods on the seas, a real question, how much do you still have oil vessels willing to transport? And a lot of this will rely on whether the U.S. retains presence there and defends some of those ships going through the Strait of Hormuz with or without the assistance of NATO allies and allies in the region.
Oil this morning holding on to 2 days of gains, inching higher for a third, up by 0.5% on Brent at $78 a barrel. Up next, we'll catch up with Rolf Bulk of Futrim Equities as SK Hynix sees massive demand for its U.S. debut.
are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel. And energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates. That will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Two-day losing streak on the S&P 500. This morning, here's the bounce, up by 0.1%. On the Nasdaq 100, up by 0.6%. The story of tech, really interesting, because the onset of war, the start of war back in March, concentrated reinforced bets into the chip trade, into the tech trade. And then this morning, what did we see? Once again, tech outperforming. What did we see yesterday? We saw money go back into the chip trade once again. Does this upend the broadening out? Does it upend the broadening out? We saw massive underperformance in the equal weight just yesterday. That's a question for equity investors this morning.
And it's difficult to really get your hands around because single name volatility has surged to record highs relative to the index level volatility. So this is a name specific story as much as it is an index specific story. Nonetheless, if you have inflation reasserting itself and potentially a live Federal Reserve in the face of higher energy prices, that could upend some of this rotation that people were saying, the rest of the economy finally catching up. Although at a certain point, then was the tech story really a tech sell-off, or was it just a rotation trade that got that gained a lot of steam?
A healthy rotation.
Exactly, a healthy.
Within the equity market. You know, money not going out of the equity market. It's good, it's healthy.
Yeah, it's hard for me to understand the single name volatility is healthy, considering that you're seeing it absolutely spike and that you could win or lose all your money if you're betting on specific stocks, but nonetheless, healthy, like yogurt and granola.
Yeah, nothing healthy about a situation in the Middle East right now. Low sugar granola, Bremer.
I know what that's to say. I knew I was going to get some kind of characterization there.
You know how it goes.
I know.
Let's turn to crude.
Here.
Brent and WTI. Brent crude this morning. Brent yesterday breaching 80 for the first time in almost 3 weeks. This morning back down to 78. Biggest one-day bounce we've seen since early May. Biggest two-day rally that we've seen going back to, I think, late April. So we had an 8% move over the previous 2 days. Add a little bit more weight to that, 78.50 this morning. The other part of the story we need to figure out in this market is how does this inform this? How does that, the energy story, inform what's happening in the bond market? 2s, 10s, and 30s. Yields just a little bit higher in the last 24 hours. This morning down 2. But let's call this 420 again, going into this Fed meeting. And you can see in the Fed minutes, I know lots of people want to say the Fed's divided. We'll call the Fed divided, this Fed split, sure, whatever. But the margins are so fine right now that you have to wonder whether just a small movement in the energy story, just a recalibration of the outlook, just on the margin, will change things sometime soon.
And the recalibration actually is the correct way of phrasing it, because we've seen oil prices significantly higher than where they were to start the year, but not so high that they might curtail some of the consumer behavior. And that is actually the most toxic brew for a central banker that is looking at higher prices from oil, but also higher prices from AI and the other inputs that they also mentioned in the meeting minutes. That's the reason why this is actually much more palatable and actionable than, say, $120 or even $100 a barrel, because suddenly that would raise the question of stagflation. This doesn't really raise the stag part. This just raises deflation.
There's some problem with deflation, that's for sure. 2s right now, 419.53. There's been some problems with deflation for the last 5 years. As we count you down to the cash open, 3 hours away, let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We start with the check on the memory and chip trade this morning with names like Micron and Intel building on yesterday's gains after a rough stretch for the group, and the renewed optimism is coming from SK Hynix and are reporting that the deal is over 7 times oversubscribed. The next test comes tonight when it is priced. Before investors get an even clearer read on demand for the memory trade tomorrow when SK Hynix's ADRs start trading on the NASDAQ. Turning to AstraZeneca, those shares plunging 9% in the pre-market after the pharmaceutical company suffered a rare setback. One of its experimental heart drugs failed a late-stage trial, dealing a blow to what many saw as a multi-billion-dollar opportunity. But what analysts are saying is the bigger concern is that this is a hit to investor confidence, since management sounded optimistic ahead of the results. And we end on Levi Strauss. This is one of the first companies out of the gate to report earnings. Shares are falling 6%, even after it delivered a solid quarter. It delivered a beat and a raise, and it even raised its dividend. But after a strong run in the stock this year, investors were looking for an even bigger increase to its guidance, which could be an early sign of what companies are up against this early earnings season, where simply beating is not enough. John?
We've seen that movie a few times already in the last week, Yahara, thank you. That bar is reset higher, super high, going into earnings season. On our radar this morning, the US and Iran exchanging strikes for a second straight day. US Central Command saying it hit about 90 targets in Iran. The IRGC claiming it fired missiles and drones at US bases in several countries across the region. Elsewhere, minutes from the Fed's June meeting showing policymakers were split on the direction for interest rates. Fed Chair Kevin Warsh describing the meeting as a family fight, with several officials seeing a case to hike due to elevated inflation risk. And finally, SK Hynix seeing massive demand for its US listing. The memory giant's offering is more than 7 times oversubscribed, on track to raise over $24 billion US, making it one of the largest ever debuts by a foreign company in the US.
Yeah, behind only Alibaba's $25 billion debut, which again points to how deep and how hungry the US market is for AI listings. Interesting to note, this comes after a massive sell-off in some of these names in South Korea. Yes, the index had been up so much that this sell-off could be considered a brief skirmish or a love tap by investors. At the same time, we are seeing an incredible amount of money being raised in the equity market, despite some of what we've seen in terms of volatility. I'll point to the why. I was taking a look at the earnings, the revenues for SK Hynix. Revenue in 2025, the first quarter, was $12.1 billion. Revenue in the first quarter of this year was $35.9 billion, and it's expected to be more than $55 billion for the second quarter. This is a massive step up, and this is what investors are trying to get a piece of.
And this is why it's had a massive, massive run over in South Korea. Mandeep Singh of Bloomberg Intelligence is standing by. He joins us now for more. Mandeep, just frame the next couple of days for us, the next 24 hours with this listing.
I mean, look, they've timed this perfectly, because this is the strongest memory cycle that you can think of, in the past 30 years. And it feels like this has legs. I mean, yes, it's a cyclical industry, but there is no doubt that, the oligopoly pricing that these 3 companies have, it's going to carry that forward, in terms of top line growth. And even if, there are optimizations done at the LLM layer, nothing seems to be changing in terms of the fundamentals for these memory companies. So from that perspective, I do think, they have durability in terms of earnings. It could taper, the positive revisions may slow down, but there is no doubt the fundamentals are probably the best we have ever seen for memory.
Mandeep, some of these companies are truly world-class. When they're located abroad, though, they often look at the US market and the valuations here. Someone with envy, how much of this story is about that? Looking at valuations available in the US and doing something about it?
Yeah, look, I mean, even now, within the US, these companies trade at probably the lowest multiples, even though their top line growth is insane, and it may carry forward for a while, but the multiples are just the lowest. And so from that perspective, there is a narrative shift that needs to happen. And, if they can frame it as a structural change as opposed to, the industry being cyclical, that's going to go a long way in terms of the re-rating, especially around the multiples that they have fetched in the public markets.
Single-digit PEs, Mandeep, just amazing given the growth they're generating. Mandeep, thank you. Mandeep Singh there of Bloomberg Intelligence. Rolf Bulk of Foods from Equities writing, the listing is mainly about broadening US investor access and narrowing the valuation gap with Micron. SK Hynix is one of the clearest ways for investors to gain exposure to AI memory demand. Rolf, I'm pleased to say, joined us now for more. Rolf, I'm pleased you picked up on the gap between, say, Micron and SK Hynix. Can you just describe for our audience how big that gap is right now and how it could narrow in the months to come?
Yes, good morning, John, and thanks for having me. Well, as Mandeep just mentioned, there is a gap here. Currently, Micron trades at around 8 times forward earnings. Hynix is only at around 6 times, so it is a material gap, and I would not expect that gap to close in its entirety. SK Hynix remains a Korean-based company with Korean-based manufacturing, which carries an inherent risk of trade, of regulatory changes, all of these things that Micron is less exposed to as a US-based company. So I do think that there will be somewhat of a Micron premium and that will persist. But that said, I do expect that the gap is going to close over the coming months as a result of this listing.
Rolf, does Hynix need the money, or is this going to the build out of new factories, or is this just simply stockpiling cash and trying to boost the valuation for years to come?
Yeah, Lisa, it's formally the proceeds of this IPO are going to go in their entirety to CapEx, so to the build out of new fabs. That said, SK Hynix is on a trajectory to make more than 90 billion, 90, of free cash flow, so after CapEx expenditures this year alone. So no, they do not need the money at all. This is probably one of the companies in semiconductors that doesn't need any funding at the moment. But it is a way for them to gain exposure to the US market, and that is how it should be perceived. And if they turn around and end up buying back an equivalent amount of shares for this listing, for that amount, I think investors will be very pleased with that type of decision.
So this is a close the gap kind of moment. I do wonder, Rolf, if you do expect them to build out their capacity to build memory chips, and we've seen the Korean government get behind them to raise almost $900 billion to build more capacity. At what point does that reduce their pricing power? At what point does that increase the supply to offset the demand that's just been on fire?
Yes, this is the risk for the memory trades, that capacity build-outs of Samsung, of Micron, and of Hynix in aggregate are at some point going to catch up with this demand this buoyant demand that we have seen and that we expect to continue over the coming years. Now, the thing is with these fabs that it takes years to build out these fabs. These are complex buildings with ultra-high clean standards for the clean rooms that the equipment goes into. It takes years. There's no way to shortcut these type of build-outs. And with that in mind, I don't see any scenario in which supply is going to catch up with demand for the foreseeable future, likely until the 2030 timeframe. So yes, it is a consideration, but very much a long-term consideration at this point.
So Rolf, do you think these stocks, these names, given the PEs we just talked about, do you think they're undervalued?
Well, typically memory, as Mandeep mentioned, it is a very cyclical industry. And this is why these companies have traded on price to book rather than price to earnings in the past. It is only more recently that investors have started to think about these memory names as more traditional companies, less cyclical companies. Undoubtedly, they will remain some of the more cyclical ones in semiconductors. But we know from Micron, from the earnings of last month, that over 50% of their revenues is going to come from long-term supply agreements, which are agreements in which they lock in volume and pricing to a large degree on 3 to 5 year terms. So if 50% of your revenue is going to come from long-term agreements on which you book gross margins in the 50-60% range, then likely, yes, that should warrant a higher multiple than the 5 to X times earnings these companies currently trade on, yes.
Just incredible earnings from some of these names. Rolf, it's good to see you. Thank you, sir. Thanks for the framing. Rolf Bulk there of Futrim Equities, going into an important 24 hours for SK Hynix. With an update on news worldwide this morning, let's get to your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. PepsiCo shares inching higher. The food and beverage giant reporting second quarter earnings that beat expectations. Strong global performance and demand for its beverage lineup offsetting a revenue dip in North America. The company reaffirming its full-year guidance. Meta is investing around $10 billion to build its first data center in Canada. The Alberta-based facility will have 1 gigawatt of power capacity and will run largely on natural gas-fired power. Meta plans to use the computing power for its AI models and social media apps. Volkswagen's executive board pushing a sweeping restructuring plan that could eliminate up to 100,000 jobs and close 4 German factories. Management says deep cost cuts are needed to compete with Chinese EV makers. And that's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, the itch to hike rates.
This market has backed out all of the rate cuts.
Our call is for the Fed to keep policy on hold for the remainder of the year.
If I think about the risk to a hike, that risk is most pronounced for July.
Up next, Claudia Sam of New Century Advisors, live from New York City. You're watching Bloomberg TV.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Stocks this morning positive by a tenth, up by 0.5 on the Nasdaq. The tech trade back in fashion in the last 24 hours, thanks to this move in crude, close to the 80s on Brent. I'm only half joking. Brent crude 78.65, up by 0.8%. 2 days of strikes. What is this new phase? And is this volatile back and forth the so-called new normal? And what does that mean for the supply of energy?
At this point, people are watching the flows. I don't know how they're watching them because a lot of the ships have turned off their transponders, but they're trying to gauge exactly how much oil is still shifting and how much demand from places like China has diminished so that the potential mismatch can be offset. Look, these are the questions that people have. It's a much more nuanced look than earlier this year when you saw tensions on, oil up, oh my gosh, Armageddon. It's not that kind of feeling right now.
But you've said it, other people have as well, persistent. The longer this persists, the bigger the problem potentially for central banks, because it just keeps nudging inflation higher or keeps it elevated at a time where it's above target and there's a massive tailwind coming from AI spending. They've got to grapple with a lot of things.
I was looking at Costco earnings that came out yesterday, and you saw that higher oil price feed into their profitability and just sort of the overall sales. It's not enough, though. It's like 2%, 3%. It's not something that people would push back against enough that would actually solve the problem. And this is the issue for central banks and the reason why the ECB is being so aggressive, potentially, at least in rhetoric, and really why there are questions in the market about whether the Fed will do the same.
How does this move in crude shape the outlook for interest rates? Switch up the board and get to the bond market. Twos this morning, yields pulling back by 2. Down 2 basis points to about 419. Let's call it 420, resetting just a little bit high, going into a big week next week. We'll get some inflation data, and we'll hear from the Fed Chair, Kevin Walsh. Under surveillance this morning, the itch to hike rates.
This market has backed out all of the rate cuts and now maybe even pricing in a rate hike.
I'm not as convinced that a hike is coming.
Our call is for the Fed to keep policy on hold for the remainder of the year.
It's really about the inflation data. If I think about the risk to a hike, that risk is most pronounced for July.
So here's the latest this morning. FOMC meeting minutes revealing several policymakers saw a case for raising interest rates, with 9 officials anticipating at least 1 hike this year. Fed Chair Kevin Walsh declining to submit his rate forecast. Claudia Sam of New Century Advisors writing, "We have a low information chair, but not a low information Fed." Claudia joins us now for more. Claudia, welcome. Well framed. Appreciate that. What have we learned from a high information Federal Reserve, even if we have a low information Fed chair?
Right, so we got the minutes yesterday, and we got finally some answers, or at least some details to this question of what'll it take for the Fed to raise interest rates. The Fed's reaction function is alive and well. We had to wait 3 weeks to hear anything about it, but the minutes really did deliver on the substance of what those rate hikes would take, and they put it out in scenarios, and it very much goes back to the inflation outlook.
Claudia, that includes the AI spending, and that came up a few times in the minutes. If you just bring up the PDF and search for AI, you'll see it mentioned several times. Given the move we've just had in energy in the last 24 hours, how fine are the margins, Claudia, separating a hold from a hike? And could a renewal of tensions in the Middle East tip it one way versus the other?
Right, so the scenario for a hike is one where inflation stays elevated. And one thing that was very striking in that scenario was it did not discriminate on the source of that inflation, right? They mentioned AI, they mentioned the Middle East, they mentioned tariffs. So really, it's anything that keeps inflation high and doesn't start moving it soon to 2% would be enough to, and there was a lot of agreement. If that were to happen, most of the, or almost all of the participants said they would raise rates. So I think that's where we're just looking for, inflation to start moving back towards 2%. And you do get a sense of some impatience. Like they want to see it soon. This is not like we're waiting until 2028 to see inflation moving down. So I think that's important. And it does bring the focus back to the inflation data. It's not a Fed that is divided in how we react to inflation. They're divided in what's coming next with inflation.
Claudia, are you surprised by how big a shift it was from simply dropping the easing bias to no one anticipating rate cuts anytime soon? The idea that it's not as if this committee is split between people who think that there should be rate cuts and rate hikes. The committee is split, as John was saying, between people who are going to stay on hold and hike rates. This is no one being a particular dove. Is that surprising in terms of the pace of that shift?
The events in the Middle East really were a big shift in terms of the Fed's thinking. And it's not so much that, we have an energy shock. I think it's also that we have another cost shock. Last year, we had tariffs, and the Fed was very patient. We're going to look through this. We're going to wait and see it happen. And just as tariffs are rolling off, we are hit with another major cost shock to push up inflation. So the events really shifted early this spring. And I think this is a good example of the Fed can shift pretty quickly as events shift. This is very much a data-driven, this is very much a reality-driven, and you're seeing it not just at the Fed. Other central banks are reacting in a similar way because it is a global shock we are reacting to.
Right now, people are pricing in about a 0.25% chance, 25% chance that there will be a rate hike at the meeting later this month for the Federal Reserve. I just wonder which side of the which camp you're in right now. The people who believe that the Fed kind of bought itself some time by having these task forces to go through some of the metrics versus a Fed that truly could be live even as soon as in a couple of weeks' time.
So the meetings are live. I think the runway to a July interest rate increase is pretty short, but by the fall, they're going to get more CPI prints. They're going to get more information on inflation, more information on events happening. So I think something would be more likely to happen in the fall in terms of a rate increase. And what was clear in the minutes, this is a Fed that is combing through the data. They're discussing how to react to it. They're not waiting for the task forces to come back and enlighten them. They will get that information, but that's not what is kind of determining when the Fed acts next.
Claudia, you've worked at the Fed. We often talk about your experience there. Looking back, it's unusual just to hike once. Usually we're thinking about a series of hikes. Do you think under this new Fed, with new leadership, you could get a one-off hike, just a single 25 basis point move and then wait and see?
You could imagine a scenario, but it would have to do with events are shifting rapidly that would make the hike, another hike not necessary. I think, a model of something like we saw last fall where there were a series of, 25 basis point cuts to deal with downside risk to employment. You might see a flip side of that is a series of 25 basis point increases to deal with upside risk to inflation. Going one and done is unusual, but, we live in unusual times. So I don't want to take it off the table.
Claudia, it's good to see you. As always, appreciate your reaction. Claudia Sam there of New Century Advisors, a low information share, a slightly higher information Federal Reserve at the moment. The tell for me at the moment is just the characterization of how restrictive we are at the moment. And if you look at the minutes, very few think we are sufficiently restrictive. In fact, of the group that think we are restrictive, they say slightly. I think that is a tell, because the question for me right now for any Fed official is, do you believe we are sufficiently restrictive to get inflation back to target? Do you? And I'm not convinced that many people on the FOMC believe we are.
The market isn't convinced either, which is why people are pricing in a rate hike as soon as September even. When you take a look at the lower information, I was interested in the word count, so I ran a program, and evidently at the June meeting minutes, it was 4,440 words, versus the April minutes, which were 5,680 words. That's stripping out footnotes and some other characterizations. But it really isn't that much less. And what I find interesting is that exactly what we heard from Claudia Sam there. It's not a low information Fed. We are hearing quite a bit from the members, and frankly, this did point to a much more skew toward a rate hike in the not so distant future.
We're spending trillions of dollars on data centers, and this is how we're using it to count Fed statements.
I could have some pieces of fruit tell you this in a very lovely way.
In a cartoon.
And cartoon, and that probably would use even more tokens. So
you could make a movie.
I could do that by
just saying.
The
you
next
know what?
commercial
With
break.
regards to the World Cup, we typically call it AI slop. The AI videos, like the mini movies they're making with the World Cup, the content's been pretty good.
Oh yeah, like the Norwegian guy.
Yes.
Oh my God, I literally lost about an hour and a half last night.
Right, the content's been good. Up next, David Levitz of JP Morgan Asset Management, General Karen Gibson of Academy Securities, Vitos Beduto of RBC, Greg Peters of PGIM.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S., or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We've had a very resilient economy.
Inflation concerns are back in play.
We've probably seen the peak in inflation for the year.
It's a sustained high core inflation with pressure for inflation to go higher.
We don't think the Fed's going to move this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action, look like this. Equity futures right now, the S&P up by 1/10, following 2 days of losses on the Nasdaq, up by 0.5. Back into the tech trade, that is where the outperformance is. Yesterday and again this morning. In the bond market, 2s, 10s and 30s shaping up as follows. A reset higher in the last 24 hours at the front end of the curve. 2s back to 420, 10s close to 460, 30s close to 5.1%, setting the tone for the price action over the past few days. This move right here in crude. Crude bouncing from the high 60s to the mid 70s on WTI to 74. Brent crude, a brief break of 80. Just recently, 78.76 this morning, and up by 1%.
Yeah, some people might look at this, including myself this morning when I came in and oil prices were lower, and I thought, that's crazy. It seems like things are just escalating. Why aren't prices going higher? And the answer is prices already have had their biggest 2-day shift going back, depending on whether it's Brent or WTI, to either April or March. And you do have, of course, this sense that oil tankers are still getting through. That said, the shift up in prices still has the Fed and the ECB squarely in play, and these are prices that are going higher. Yet another inflationary shock, as Claudia Assam said, which is threatening the broadening out trade, but also speaking to what is a neutral rate in an economy that seems to be beset by inflation shock after inflation shock.
Forgive the pun, but this won't be smooth sailing. None of this will be. This will come with lots of...
I'm not forgiving the pun.
Okay. Lots of volatility. And for a Federal Reserve on the edge, and I don't think there's much between holding and hiking right now on this committee. This can tip things one way or the other, and that's been a theme for us so far this morning.
Yeah, and right now the market's trying to suss out how much this is a one CPI print type of event, or that the Fed could then hike rates later this month after we get CPI next week, or whether they're going to need a series of hot prints to really take action. Another key question is, does this hurt equity market valuations? Does this hurt risk assets at a time where everyone seems to be raising money and the AI trade wins if things are volatile, maybe has some chips taken off the table, but still a very robust trade? I mean, ultimately, is that enough to kill this rally?
Based on this, no. SK Hynix 7 times oversubscribed. Based on that, not yet.
You know what's fascinating? Even though we saw volatility in the Korean market, even though we saw a massive sell-off by SK Hynix and Samsung, they're coming to market with the second biggest ever debut for a foreign issuer in the U.S. for the equity market. It seems to be really well received. So even that wasn't enough to scare some investors away.
That follows a record IPO from SpaceX. That record IPO followed a monster equity capital raise from Alphabet. What was that? $85 billion. And there's more to come.
Yeah, so this market is wide open. Bigger question right now is, what is the price they're going to exact for that? Even with the U.S. Treasury yesterday selling $39 billion of 10-year notes, well-received auction, well oversubscribed. You could talk about all those metrics. Highest yield that these 10-year notes were sold at going back to last February. So people are looking for more, but they're still willing to put their money to work.
You saw the pushback to Amazon as well, which is why the question we've asked, I think, is the right one. Are we testing the limits of demand? No. Are we testing the limits of demand at these rates, at these yields? Yeah, you've got to offer some concessions to get that supply away now. That was the pushback from fixed income so far this week.
So now people are asking, at what point will the cost be too much for some of these AI companies and frankly for governments to borrow? And the answer is we're not close yet. And so you can just imagine where we're going to be going forward. In other words, people are still borrowing. People are still going out there and tapping the capital markets.
More on that equity offering from SK Hynix later this hour. Equity futures right now in the S&P positive by about 0.1%. Coming up, we'll catch up with David Levitz of JP Morgan with investors lining up for SK Hynix's U.S. offering. General Karen Gibson of Academy Securities with the U.S. and Iran exchanging strikes. And Vitos Baduto of RBC on what could be a record-setting year for M&A. We begin this hour with stocks rising as big tech jitters ease ahead of SK Hynix's U.S. listing. David Levitz of JP Morgan writing, we believe in the structural story around the adoption and implementation of AI, but recognize that the journey is unlikely to be linear. David joins us now for more. David, good morning. Good to see you. Good
morning.
How fractured is this trade right now?
So I think what you're seeing is you're seeing markets and you're seeing investors begin to differentiate between all the different pieces that go into this. You know, chips are only one piece of the puzzle. You also have to build the shell for the data center, then you have to run the data center, you have to get people to pay for the compute. And so it's not this view that, oh, you know, we love AI and we're going to buy everything that has AI associated with it. I think people are beginning to delineate a bit more between the different pieces and where there may be excess supply, where there may be robust demand, and where, to your point, you may see challenges from a financing perspective to get things done at attractive prices.
Give me the split right now. Excess supply, robust demand. What's the split, the divide for you?
So I think that we're still in an environment characterized by very robust demand. I think that the risk to me around supply is primarily in the chip space and the hardware space. You know, this is where obviously a lot of investor enthusiasm is, and you know, if history is any guide, when there's a lot of enthusiasm, people tend to get a little bit ahead of themselves. You can end up with too many chips, and that actually helps the people that are running the data centers because it brings down the overall cost. Where I think demand is going to remain quite robust and arguably more structural is when it comes to actually building that data center and then operating that data center, right? Again, chips are just one piece of the puzzle.
So if it's not going to be smooth sailing, maybe you should take some chips off the table. Oof, I'm so sorry. I couldn't help myself.
See?
That was, it's really fun. I'm enjoying this. I just wonder, at what point do you prefer equity still to bonds, given the fact that increasingly bond investors are demanding an increasing premium for the privilege of lending, for the privilege of being able to borrow money for some of these investments?
So I think when it comes to the equity versus debt question, it's really a three-part question. Do I want to own the equity? Do I want to own the investment grade bonds, or do I want to own the high yield? Because high yield is much more oriented towards the picks and shovels. And again, you can see some of the pushback on the hyperscalers. Free cash flow has gone to zero. Now they're trying to figure out how to finance this going forward. I wouldn't be surprised if we see them continue to issue equity the way that we have on occasion up until this point. For us, we find high yield credit really appealing here, not because we're going to see massive spread compression, but because effectively we can get paid around 7% with a third of the volatility of equities. When it comes to the equity side of things, a lot of enthusiasm around tech. When we watch the other parts of the market soften up and sell off, we actually view that as an opportunity, because if we're right about this whole AI productivity story, a rising tide will lift all ships, and that'll be good for the rest of the market, not just the tech, which has benefited up until this point.
Just to crystallize the point, are you seeing the pendulum start to shift away from the equity market to, say, the high yield market, to more of a fixed coupon that guarantees a certain return at a time of incredible and increasing volatility?
I do, and I think that there's also kind of the certainty, if you will, and again, they're junk bonds, and so you will see defaults at some point begin to pick up, but I think that certainty gives people comfort, and also kind of where it sits in the broader AI supply chain, right? This is what's building the data centers. This is what allows the whole thing to work, and that's very different than the debt that the hyperscalers are bringing to market. And by the way, they've already backed a lot of this high yield debt, and so you have this implicit guarantee that if things go south, you're still going to get paid. I mean, if you're an investor, that's a pretty attractive proposition, given how much U.S. equities have moved over the past couple of years.
Let's just take it back to stocks, the great rotation. Where are you and the team on the rotation now, given the restart of a conflict, a renewal of tensions between the US and Iran?
So I think that volatility is a feature and not a bug of this administration. And so, you know, whether it's what's happening in the Middle East or whether what's happening with tariffs, right, they view volatility as a tool in their toolkit. I think that there's definitely been an interruption to the rotation here, but I think when you take a 12-month forward view, you think about what's happening in the economy, okay, we've got growth, which is pretty good. That's why we have some inflation pressure. Maybe the Fed needs to hike, maybe they can hold. We think that they'll hold, but again, I think that we're going to need to see a few hot inflation prints before they do anything. I mean, this is one of these environments where if the Fed does feel the need to hike before the end of the year, they're arguably hiking for the right reason, right? Because growth is well supported, inflation's a little bit hot, and they're just trying to bring balance back. And I think as investors kind of digest all of that, and as you see things hopefully settle down from a geopolitical perspective, that breathes life into the broader equity market and allows that rotation.
So does the rotation, is it independent of the rate hike debate or not?
I think it is. I think unless we were to see an inflationary environment like we did in 2022, when the Fed's sitting there and the ECB's sitting there and they're like, oh man, we really missed this one, we got to catch up really fast, that's very different than a maintenance hike, right? A maintenance hike is saying, you know what, we feel like things are a little bit too hot, we're going to try to cool them down, not we're going to go from 0 to 5 1/4 over the course of a couple months.
So you don't think what we've seen over the past couple of days, which is the outperformance from tech, really persisting? You think that the path of travel for the next 6 months really is equal weight, continuing to outperform regardless of what happens with oil prices and regardless what happens with the Federal Reserve?
Look, I think tech is going to remain well supported. Again, we view this as a structural story that's going to play out over the next 10 to 15 years, but I do think you will begin to see that rotation. I would also highlight that one of the other ways we're playing this tech story is through markets that haven't necessarily appreciated as much as the US. And so for us, looking to places like EM, parts of China, that's an interesting way of getting this tech exposure at a more favorable price. And I think at some point valuations will become an issue for investors. That'll support the rotation, that'll support non-US markets.
If a Fed rate hike wouldn't curtail the outperformance potentially of the equal weight, what will a rate hike actually do? Will it slow inflation if it's exogenous factors that are coming in and bolstering prices? So
here's the thing about a rate hike. What the Fed is worried about is a labor market that tightens further and wage growth that reaccelerates. And I don't think we're on the cusp of that. I think the labor market is tight. I don't think the labor market is particularly strong. And so to see wage growth begin to accelerate, which is what would precipitate a series of Fed hikes, I mean, to me, that's possible, but it's not necessarily all that probable. This is going to be more to address lingering inflationary pressure from tariffs, a little bit of inflationary pressure from oil, because again, it hasn't gone back down to where it was pre-conflict, and we know the longer energy prices stay elevated, the more that price pressure broadens out into the economy. Those are things that you can manage. It's when you see that labor market begin to heat up, that's when you really have a problem.
EM equities up 19% so far year to date. Outperformed the NASDAQ and the S&P.
Yeah. EM, meaning what?
AI.
Yeah.
Well,
I mean, that's the question. Some people are saying if you strip out South Korea, if you strip out those names, there still is outperformance in the EM story, just simply because they were ahead of the curve when it came to the rate hiking cycle, and now some of them are actually cutting rates. Also a question of which emerging markets are tied to hard assets. I was down in Brazil, and the shocking amount of resources. I mean, they have rare earth minerals that they could potentially develop. I mean, how much do you start to see some of this tapped into? Of course, there is that tricky issue of government, but whatever. I mean, these are the things that people are looking at.
These were your channel checks in Brazil, right?
I did lots of channel checks.
I have no doubt
I did channel checks, and the monkey's very cute.
Yeah, you have a good time? Still living on it, aren't you?
I actually think that, you know, I should probably channel check again sometime soon.
Yeah, I agree with you. Maybe I'll come along for the ride.
Okay.
Just sort of check
Let me tell you, it's really beautiful.
I have no doubt
the
about
beach
it.
of Copacabana is really lovely.
Good stuff. All right. David, do you get to do that over at JP Morgan? Just pick a destination and go there? Do some channel checks?
Unfortunately, not as much as I like, but I want to latch on to something that you said. You were talking about, you know, resources and rare earth minerals. The thing that I'm recognizing is that everything is becoming an AI trade, right? Whether you're going to reap the productivity benefits of using the tools, whether you're part of the supply chain that allows the thing to come to life. I mean, AI is everywhere, and so it's how you play it, not whether or not you play it. I think that's the big question for investors going forward.
See, that was very valuable.
I appreciate it. Thank you for keeping it so serious.
That was really good.
Thank you, David. David Levitz there of JP Morgan Asset Management with an update on news worldwide. Let's get you Bloomberg Brief. Vonnie has more. Hey, Vonnie.
Hey, John. Traffic through the Strait of Hormuz coming to a near standstill after the U.S. struck Iran for a second straight day. Among larger vessels, only a U.S.-sanctioned supertanker was seen heading out of the Persian Gulf alongside an Iranian-flagged container ship. PepsiCo shares falling in the pre-market. The company's second quarter organic sales growth missing estimates. Lower prices cutting into its North American snack business. Pepsi reaffirming its full-year guidance. UK Prime Minister Keir Starmer is signalling he'll consider granting a public holiday if England wins the World Cup. The team faces Norway in Saturday's quarter-final. The final is set for July 19th, which is potentially Starmer's last full day in office before Andy Burnham succeeds him. And that is your Bloomberg Brief. John.
Vonnie, thank you. Potentially his last day in office, the day of the World Cup final. Is he going to attend? Of course he's going to attend, surely.
I mean,
if England's in the final.
Well, look, who wouldn't attend, first of all? But second of all, I mean, is he going to be rooting for Holland at a certain point? I mean, come on, like, doing the bro.
Why would he root for Norway?
Because it's, I mean, Erling Haaland, the AI videos are great.
What is wrong with you, Bramo?
Well, he won't. I know he will. If he vote for England, I know. Okay. He'll be like, you know, very excited.
I'm booking the flight now. I'm out. Channel checks to the south of Italy. The latest on olive oil. How are those trees doing?
How are those lemons?
I'll bring you an exclusive report.
I can't wait.
In 2 months' time, after I wrap it up. Up next, trading fire with Iran.
We just hit them very hard. They did a little something today, but it was really retribution for last night. And when they hit, we hit back much harder.
Up next, we'll catch up with General Karen Gibson of Academy Securities, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
equities, a small bounce this morning, up by 0.1% on the S&P 500, up by 0.4% on the Nasdaq. The Russell, some underperformance. Saw that as well yesterday. The Russell 2000 small caps just about unchanged. In the bond market, 2s, 10s and 30s. Yields settling around 420 on 2s. We're down about a basis point or two heading into jobless claims later this morning. About an hour and 15 minutes away. Setting the tone for the bond market worldwide in the last 24 hours. These moves in crude. Crude up by 1% this morning, 79, just short of $79 a barrel on Brent crude. Under surveillance this morning, trading fire with Iran.
We just hit them very hard, and I say we hit them 20-1. Every time they hit us, we're going to hit them 20. They did a little something today, but it was really retribution for last night. They hit actually 3 boats, not 2. And when they hit, we hit back much harder.
So here's the latest this morning. The US military striking about 90 Iranian targets in a second straight day of attacks. Tehran retaliating against American allies in the Persian Gulf, nearly halting traffic through the Strait of Hormuz. With the latest from Ankara, Turkey, following the NATO summit, Anne-Marie has more. Hey, Anne-Marie.
Hey, Jonathan, good morning. Just hours after the president left the NATO summit here in Ankara, there were another round of attacks, a second day of attacks on Iran. This is something the president did highlight and preview that probably could happen during the NATO summit. And CENTCOM came out with a statement saying that under the direction of the commander-in-chief, they wanted to degrade Iran's military capability, especially when it comes to the Strait of Hormuz, their ability to attack commercial vessels. And you can see that in the 90 targets the U.S. military went after. It's things along the coastal line when it comes to logistics and when it comes to surveillance of that Strait of Hormuz. In response, though, we have had Iranian attacks on U.S. installations in Kuwait, Bahrain. As Norman Rule mentioned in the last hour, more reporting about U.S. military capabilities as well in Doha. The big question is, where does this leave the truce that they stuck with, that MOU? The president said earlier yesterday that the ceasefire was over. Then he was pressed by reporters if we were returning to an all-out war as he made his way back to Washington, D.C., and he said he doesn't think so, he doesn't know, but if it was a war that we would win. So now we're left with a situation where the ceasefire has certainly been tested, actually broken. It's not an all-out war, but it's certainly not peace. And that's potentially the stalemate that the world and the market needs to get used to.
Anne-Marie, from the market's perspective, it is very easy to look at this as an almost comical story. The back and forth with no resolution. We have strikes and then maybe we back off a little bit. We claim that we've had a call. You forget just how serious this moment is. And the threat level against the safety of the president is in mind as well. And he alluded to that in the news conference just yesterday. Anne-Marie, not lost on many reporters right now is that the president arrived on one plane in Ankara and left on a different one. Are we finding out why and what happened?
Yeah, the president said yesterday in the press conference he's enemy number one. He was continuously pressed by reporters in the press conference and as well when he finally got to that new Air Force One in the United Kingdom. Why was this change of plane, especially since he went over to Turkey in the new Air Force One that was a gift from the Qatari government? There's more reporting coming out that this was at the request of the Secret Service because it doesn't have all the defense capabilities, and they thought that it would be safer to take the old plane to the United Kingdom and then make the switch there. So a lot of questions about this. When the president was very not forthright, though, about this. He was saying how he wanted to just show off the new plane to the U.S. troops, but clearly this was more than that. This seemed to be a security issue. And to your point, Jonathan, it wasn't just once. The president has alluded to a number of times over the past 24 hours that he is on the target list for the Iranians. This dates back also to Trump 1.0 after the killing of Qasem Soleimani. And the president and the Secret Service felt there was this needed precaution to keep him safe.
Anne-Marie, with the latest in Ankara. Anne-Marie, thank you. This from the New York Times this morning, that people briefed on the new plane's capabilities, who spoke on the condition of anonymity to discuss sensitive security issues, said the new plane does not have all the features of the older plane.
Yeah, it was stripped out entirely, and I think it cost something like $1 billion to retrofit with all of the features. Still working through exactly and making sure that all of them are secure. to guarantee safe passage.
That's the latest from Ankara. Let's build on this conversation with General Karen Gibson of Academy Securities, writing, when President Trump says the ceasefire is over, it is a political and potentially operational signal that he may no longer be committed to using restraint when employing military force. General Gibson joins us now for more. General, welcome back to the program. What do you think that means for the next few months?
Well, I think this is very reminiscent, obviously, of the tit-for-tat strikes and counterstrikes that we went through in late June. In essence, at core, I think it is a difference of opinion, a difference of interpretation between how the U.S. and Iran are viewing the rules that we agreed to in the MOU, supposedly, for the transit of vessels through the Strait of Hormuz. There are many other areas of potential conflict in the MOU. This is just one that we'll have to work through. The Iranians are insistent that they will control the transit of vessels through the strait. And of course, that's something that we staunchly oppose. And I see very little room for overlap between these differing viewpoints between Iran and the United States. I don't see a speedy resolution of this essential difference.
General, in the meantime, a real question about what the U.S. will do to ensure that oil tankers can continue to pass through the Strait of Hormuz. Do you have a sense of what the U.S.'s appetite will be to protect non-Iranian crude tankers that are trying to traverse the strait?
I think the United States is probably prepared to do that. Certainly, it's a capability that we have, and the decision to do so would be a political decision. The U.S. Navy has that ability, and in fact, has been assisting some of these vessels with their transit through the Omanian side of the strait. The question is really, though, to what extent can we protect against vast numbers of drones and missiles, shore-launched missiles that are difficult to detect, that are very agile, and that provide a very minimal warning before they are fired.
General, the troop presence that we currently have, that the United States currently has in the region, how much do you expect that to be sustained at the level that it currently is at for the foreseeable future, as a result to what Norm Rule was yet saying is the new normal going forward?
Yes. So I think the heaviest burden, obviously, is on the naval forces and the Air Force. And some of the vessels have been there for some time, rotating through those vessels. It's also a very heavy lift on intelligence, surveillance, and reconnaissance aircraft, and the various sensors that we have for detecting threats, because that's really a very heavy lift in protecting commercial vessels that would be, as well as our own forces and our own bases that would be transiting through there. Not such a heavy lift for our ground forces. We do have ground forces deployed there, but they are obviously less engaged in this.
General.
We've been engaged in much longer conflicts in the Middle East before, but it really is a heavy burden on the Navy and the Air Force.
Don't apologize. We appreciate your time. Thank you from us, as always. General Karen Gibson there of Academy Securities on the latest situation. That map tells the story really right now. This is what the fight is over, for the Iranians at least. They have a very specific path in mind that they want ships to take, and it's right by the coast of Iran and not of Oman, and they want to charge a toll. That's what the battle is over at the moment.
And right now, the United States and a lot of allies are saying that that is an unsustainable solution, that a toll will not be something that can become the status quo. So you get this stalemate, and clearly it has fizzled in terms of the memorandum of understanding. That memorandum of understanding has broken down, and it is unclear if there is a path to bring it back. So if this is the new normal, is it going to be who is going to help protect that other corridor near the coast of Oman to avoid any kind of attacks coming from the Iranian forces?
And based on the experience of the past few days, that's very difficult to do, given the attacks on ships that we have seen, the ships that have tried to go around the coast of Oman. Brent crude this morning, 79 at the moment, WTI around 74. Up next, we'll catch up with Vitos Peduto of RBC on what could be a record-setting year for M&A. Plus, Yahira has your morning movers. Memory stocks rising ahead of SK Hynix's US debut. Micron up 4% from New York City this morning. You're watching Bloomberg TV.
be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment. 3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
The up and about 2 hours away, equity futures on the S&P 500 shaping up as follows. On the S&P, following 2 days of losses, a bounce of about 0.1%. Money going back into the tech trade in the last 24 hours. The Nasdaq higher again by 0.6%. Thanks to the war, because of the war, to some extent, maybe, yeah.
Look, it's a very difficult thing to exactly nail down. Nonetheless, this is the playbook. When people start to get worried about higher oil prices, suddenly inflationary pressures, central banks back in action, they say, well, tech won't be affected, so why don't we go into tech? This is added by the fact that we've already seen a sell-off, so people might be going back into it at a time where it seems like the demand isn't going away, and it just seems to be expanding out to more players.
Turn to the bond market. Twos this morning, down a single basis point. Some data 60 minutes away. The 2-year around 4.20. Yields resetting just a bit higher at the front end of the curve, informed by this move in crude. 2 days of gains on oil. You can make it 3, up by 0.8. Brent crude just short of 79, 78.69, and maybe on the margin changing the outlook for interest rates just a little bit.
Yeah, and partly because they are not surging that much more. We're not talking about $120 Brent crude, and the fact that it isn't rising more means that there isn't going to be the demand destruction. People will absorb this. That is going to be an inflationary pressure that can persist without necessarily curtailing demand. Again, we talked about it earlier. It's the stagflation without the stag, which is just inflation, and that's the reason why the Fed officials are worried.
Crude this morning up 1%. As we count you down to the up and about, a few hours away, let's get to your morning movers. Some single names. Yahara has more. Hey, Yahara.
Hi, John. As you all said, the memory and chip trade is back on this morning with names like Micron and Intel building on yesterday's gains after a rough stretch for the group. And the fresh optimism is being injected by SK Hynix in our latest reporting here at Bloomberg that the U.S. listing is more than 7 times oversubscribed. The next test comes tonight when the deal is priced before its ADR start trading on the Nasdaq tomorrow. Meanwhile, we are seeing Salesforce shares under pressure, down 4.3% after one Wall Street analyst poured cold water over its AI ambitions. KeyBank downgraded the stock to sector weight, saying customer checks show little signs that Agentforce, its flagship AI platform, is showing meaningful traction. The analysts say that any boost from AI could be further away than thought, if it even comes at all. And we end on PepsiCo. Shares are barely down, just 1% in the pre-market. But this is an interesting story because this is a company that slashed prices earlier this year to try and win back consumers. And while its earnings show some signs that it is gaining traction, it definitely came at a cost, weighing on revenue in its North American business. John?
Yahara, thank you. Thanks for the update. One more stock, Meta. In the pre-market, down by about 1.7% this morning. This from Reuters just moments ago, that Meta plans to start manufacturing an artificial intelligence chip from September as part of its plan to boost overall computing power to 14 gigawatts next year. Showed an internal memo reviewed by Reuters, the lead paragraph from them this morning.
Yeah, codenamed Iris to specifically cater to their needs. It just points to how Meta is trying to expand into some hyperscaler-like features. When we were talking about earlier them selling some compute capacity, now talking about mimicking what you see from the likes of Amazon or even Google trying to manufacture their own chips. At what point is Meta saying our business model doesn't make sense with the amount of spend that we're doing unless we also have hyperscaler-like activities? Again, watch the space to justify the spend that people have pushed back on.
It's been a confusing month, that's for sure.
I am very confused.
Neo-cloud firm on the side, maybe in the future.
I think I need to do some channel checks.
Meta, down by 2%. What does that involve? Trips to Virginia? check out some data centers?
I think that it's going to Bali. I think that Bali is going to have a really
data centers in Bali.
Big business.
New, huge. I'm sure management will be convinced. On our radar this morning, the US launching fresh retaliatory strikes against Iran for a second straight day.
We just hit them very hard, and every time they hit us, we're going to hit them 20. They hit actually 3 boats, not 2. And when they hit, we hit back much harder.
Traffic through the Strait of Hormuz grinding to a near standstill as President Donald Trump says the ceasefire is over. Elsewhere, SpaceX, xAI, unveiling its latest chatbot, Grok 4.5, to the general public in a competitive bid against Anthropic and OpenAI. The model was built in partnership with AI coding startup Cursor, CEO Elon Musk calling it a faster, lower-cost Opus-class model. And finally, SK Hynix seeing a strong investor demand ahead of its US debut. Sources telling us here at Bloomberg the listing is more than 7 times oversubscribed, set to raise nearly $25 billion, ranking it among the largest foreign debuts in the US.
Yeah, and the conversation we were having earlier about why they're coming to market I found really interesting, and you nailed it about Micron and the idea that Micron has a multiple that is so much higher than SK Hynix, and SK Hynix is saying, well, we could do that too. We just need to list in the US and have access to this market. And to some degree, that is the sole purpose. It shows how much demand there is and how much the image of memory chip manufacturers has changed, going from a cyclical business to one that is structural with a lot of locked-in contracts that are multi-year, as well as just overwhelming demand that has given them a premium that really hasn't been seen historically. And clearly, they're able to tap into that even at a time of volatility in the Korean market.
And given the amount of supply we're seeing elsewhere as well, which we've talked about endlessly. Let's turn to M&A. 2026 shaping up to be a record year. According to data compiled by Bloomberg, global transactions exceeded $2.5 trillion in the first half. The surge putting deal makers on course to pass the record haul set back in 2021. Vito Spaduto of RBC writing M&A is at a historic halfway point, and it is broadening out beyond the mega caps. The engine is strategic, not speculative. Vito joins us now for more. Vito, good morning. Good to see you.
Great to be back.
That last line is really important. Strategic, not speculative. Can you just sort of build that out for us?
Yeah, I think it builds on the theme we've always talked about, which is, good strategic M&A gets done. And if you're thinking about the long term, that's where the benefit is. And so what we're seeing is, you've talked about the fact that the market has been broadening. Year to date, I think we're seeing, depending on the sources you look at, globally, M&A is up 42%. On the back of being up 40% last year. But in the U.S., it's even more magnified. It's up about 69% through the first half and up over 50% last year. But what's been interesting, and since I was last here, we were talking about the first quarter where there was a clear divide between the large cap and the smaller cap. And so if you looked at it, it was really driven by these large cap transactions in the first quarter. And it was especially clear in the U.S. where you saw deals over $5 billion were up 200% in Q1. Obviously it's a 3-month sample set. But deals below $1 billion were down 14%. You go 3 months later and through the first half now, we're seeing large cap still driving it, up 128%. But the reality is it's a broader participation now, and we're seeing deals below $1 billion up 22%, and that's just with 3 incremental months. So what that tells us is that the larger players, the larger corporates, have considered their significant strategic opportunities. They've either executed on them or they've moved on. And now they're thinking about what else can I do to add on. You're also, the other thing that's on the sideline is, private equity hasn't really been as big of a participant year to date or last year as they have historically. But on the corporate side, we are seeing them pursue smaller transactions. We are seeing a plethora of sell sides preparing to access the market in the second half of this year. And I think, we're obviously talked about in the last half hour a lot of what's going on from an external noise perspective, and maybe I'm belittling it. But I think the corporates especially have gotten very resilient in this environment. They've seen an MOU in place. They've seen it pulled back. They certainly are concerned on the geopolitical front, but they're also seeing methodologies to play through it.
You track confidence levels. How high is C-suite confidence right now?
So when I was here last, we had the first quarter measure where it was up to 59 on a scale of 100. So it was above the 50 neutral point. So CEOs felt pretty confident about the forward outlook, and they thought there was going to be a good level of activity going forward in their businesses, in their sectors, and so forth. We saw that drop in the second quarter and down to 47, and the key difference being the start of the Iran conflict. And so the CEOs were all of a sudden pulling back a little bit, but they was still pretty close to neutral. They identified geopolitical concerns as their leading concern. Their second largest concern was sort of AI and the impact on their businesses going forward. But from a geopolitical perspective, the concern is not so much where are oil prices or what's going through the straits. It's what is it going to cause in terms of inflation going forward? Is it going to cause inflation higher for longer, just like rates higher for longer? And is it going to make it more difficult for me to operate my business? And so I think we're seeing a lot of resilience on the part of the C-suite, and they're playing through this, and I expect that to be the case. But it is certainly, they're watching the headlines just as much as anybody.
Has that curtailed the full-year outlook for total M&A?
I would say it's not changed my view on it. I always thought going into this year we were going to have a record year in the U.S., and we're not, I still feel that pretty strongly. I think it's difficult to get to the record year we had globally in 21, where you had such a broad geographic participation. And so just to put that in perspective, keep in mind that last year, the second half was the real acceleration, right? When we've been together, we've talked about that last year in the first half, I think everybody was trying to get their arms around the market, around this new administration, and we had talked about it taking at least 6 months. And then you saw the second half incredibly accelerate, and that's what drove the volumes last year. So I think the comparison to last year is going to be difficult in the second half. The first half of this year is roughly equivalent to what we did in the second half of last year. And in the U.S. market, we will see volumes exceed 21. I'm pretty confident of that. I think globally we're not going to see that, but it's going to come pretty close, and it's certainly going to be above last year. But the other piece we're seeing is that technology has always led the way, and it continues to. But right now, and I noticed that in the graphic you put up, you talked about excluding the SpaceX transaction as an example, right? The reality is, even without that, you're seeing an incredible market out there. And so technology, that sector is still greater than the next two sectors combined, which are healthcare and energy and utility.
Are you seeing the financing window not close, but start to get a little bit more exacting, a little bit more expensive, a little bit more discerning?
There is some incremental risk being priced into it as they're trying to fund and you talked about Meta and Amazon, and they're sort of moving towards hyperscalers. I'd argue they're hyperscalers today, right? And if you look at the financing that they've gone into the market with, and right now, obviously from the headlines, Amazon's in the market with a large debt capital markets transaction. If you consider since last November with this transaction, they'll have raised over $100 billion of capital in the debt capital markets. Maybe that's gotten slightly more expensive right now, but there's still appetite for it. And I think people are just adjusting to the current rate environment, and they're figuring that out. The other piece, which we haven't mentioned, is the equity capital markets are on a tear. And our heads of equity capital markets put out a piece last week where they had to adjust the headline. They were originally saying this is the best market since 21, and now it's become the best market ever, right? And I thought that was a clever way to put it, because even excluding the SpaceX transaction, you've still got such a large participation. And the reality is the industrial sector, if you take out SpaceX, is the largest participant in the IPO market this year.
As you look across asset rent, you look at, say, debt and equity at the moment, if I had to raise capital, I know it's super simplistic to ask this question this way, but is it easy to raise equity capital than through the debt market at the moment?
It depends on who you are, and it depends on what your forward outlook and story is, just like anything else. I think the investment grade community is seeing a fairly ample debt financing capacity out there, and they're taking advantage of it. And we're seeing that across the board. You're seeing it for M&A purposes, and you're seeing it for general purposes as well. I think from an equity perspective, what I'm watching closely is what is the broader participation in the IPO market. because I mentioned the private equity community and the largest amount of assets that they've ever had in history in their portfolios. They're watching closely how much this IPO market opens up and how much it becomes a realistic exit alternative for them. And not necessarily that they're going to tap it, but even if they're going for a sale, having a realistic public market alternative creates that competitive tension. So that's one of the areas we're watching closely. And we actually expect industrials and consumer and retail, for example, to be big participants in the second half of the year.
Vito, it's good to see you.
Thank you for having me.
Thank you, sir. Appreciate it. Vito Spaduto there of RBC. Let's give you an update on news worldwide with your Bloomberg Brief. Vonnie has more. Hey, Vonnie.
Hey, John. Thank you. Meta preparing to start manufacturing its own AI chips. Reuters reporting the Iris chip will begin production in September. The move is part of Meta's plan to double its compute capacity to 14 gigawatts in 2027. The developer behind an evacuated New York City high-rise says he'll reconstruct 15 upper floors after identifying under-reinforced columns that caused part of the converted apartment building to sag. The Department of Buildings says the structure is stable. An investigation into the cause of the issues is ongoing. Wimbledon's semi-finals are set. Germany's Alexander Zverev defeating American Taylor Fritz in straight sets to advance. He'll face hedge fund scion Arthur Ferry. On the women's side, Linda Noskova and Marta Kostyuk made it through to the next round. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thanks for the update. Up next, a family divided.
What will be interesting is how much of a read we get or don't get into that closed-door family fight. We don't think the Fed's going to move this year.
Sounded like local news then, didn't it?
It did. I was
right?
a family
Up
fight.
next,
I was
family.
like, a family divided.
A family divided.
Yeah.
Roll the package.
I was about to say. Yeah.
Is it really divided when 9 of them want to raise rates, though?
It started with a leaf packing.
There's like that much between them right now. Some want to hold, some want to hike. Greg Peters of PGM joins us next, live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Equity futures positive by 0.2% on the S&P 500, on the Nasdaq higher by 0.8. Under surveillance this morning. Got to do this again. A family divided.
But what will be interesting is how much of a read we get or don't get into that closed-door family fight that Chair Warsh keeps talking about. We don't think the Fed's going to move this year. I think it is this sort of getting used to the discomfort of less transparency.
Governor Powell left behind at Chicago Airport.
Yeah.
It's the start of Home Alone, right? Right? Here's the latest this morning. Let's move on. Minutes from the Fed's June meeting showing increasing inflation concerns, with half of the policymakers seeing a case for a rate hike and the other half supporting keeping them unchanged. Greg Peters of PGIM writing the following: our base case scenario is one where continued growth momentum supports nominal growth and the Fed hikes rates in 26. Greg joins us now for more. Greg, welcome, buddy. Good to see you. How close do you think we are to those higher interest rates from this Federal Reserve?
I think we're pretty close. I think what's most important is the shift, right? If you just take our own forecast as an example, a couple weeks before Warsh stepped up to the podium, we moved from 2 cuts this year to 3 hikes. And I think that directional shift is really what matters here. And so we can debate whether they start in July or not at all, but I think that vibe shift is really what the market is feeling and should be feeling. I personally think they're pretty close. I think, the minutes kind of help cement that, at least in my view. And I feel like they're vigilant around inflation. I think that's what central banks are supposed to do.
It's been a problem, though, for a number of years, Greg. What's the catalyst for the vibe shift? You alluded to it a little bit. Just build on it if you can. What's the catalyst for that massive shift at this Fed?
Well, I think there was possibly a misread of Warsh himself, that he would be dovish and just do the bidding for the president. And he came out quite strongly that, inflation fighting is what matters. And that's all he focused on. And make no mistake, we're well above the 2% bound here. So it makes sense to me. And, they have to get credibility back to a degree. And I think focusing on inflation is a way to do that, because they're far away from that 2% level.
Greg, initially when we saw the new FOMC's tone, the yield curve flattened. There was a sense that the Fed would have a greater chance of hiking rates, and that actually brought down the long end. Recently, that's changed it, and actually you've seen a yield curve steepening reassert itself. In other words, even as you've seen that 2-year fixed around 4.20, you've seen the long end yields rise. Do you think that that's something that's going to persist? Do you think that that's signal, or do you think that's noise?
I think it is a signal. What I think the yield curve reflected was that the surprise, this is called surprise, that Warsh came in much more vigilant around inflation, and that kind of pushed down the back end of the curve. That was a pretty big move. I think we've settled into a more kind of rational place, but I think the pressure over time will be for the curve to steepen. Do I think it's a here and now necessarily? No. But do I think, over the next quarters, years, I think the pressure will be for steeper curves, not flatter curves, just because, I've heard you guys talk about it in the past, just the unrelenting supply that you're seeing, not only out of the kind of AI ecosystem hyperscaler space, but let's not forget, you have a lot of sovereign debt that needs to be financed here or over the next, several years or so, and that'll put pressure as well. And all those factors, I think, will contribute to higher yields, not lower yields.
Has that changed your view on long duration bonds or even medium duration bonds, given the fact that increasingly you have seen yields rise, the supply seems to be unrelenting, and inflationary pressures seem to be persistent, even with the prospect of tightening by central banks?
No, it hasn't changed my view. It's been a frustrated view more than anything else. So, my view all along, our view at PGIM has been, this supply is interest rate insensitive, right? You think about the hyperscalers as an example. They're playing a different game. They don't really care if it's 50 basis points, 100 basis points, you name it, higher in yields or spreads. They are going to finance what they are going to finance. Federal governments, same issue. They have to come to market regardless. And I think that puts pressure just on yields and particularly the back end as debt sustainability, mania, bubbles, all those factors start to come into play, at least into the conversation. So, so I think this is the beginning, not the end. And I think you'll see this pressure on long end yields. So I think that is a persistent story. But if you look at yields in the belly and further in, I think that is where we're most excited because the yields are high. It does roll down. You're not taking excessive duration or spread duration risk. And so I think it's a very different place in the middle to the front of the curve versus the back end of the curve.
Well, let's sit on the back end. Long bonds at 5. What kind of number, Greg, do you think we could look at in the next 12 months?
I could see that kind of steadily rising. I think 5.5 is quite good. What you're seeing now, what's capping yields in the back end is the yield itself. So what's really interesting is that, as soon as yields kind of move above 5 and like investment grade 30-year corporates are, close to 6, investors get really excited. But as the longer this persists, I think the more investors will adjust to that not maybe being enough. And so it takes time, right? And so I think this is a early innings of this revisitation, revaluation of what attractive means, just given the supply. And so, I can see, U.S. Treasuries and, 30-year corporates, moving higher here pretty substantially.
Interesting. Greg, thank you. Greg Peters there of PGIM Fixed Income. It's not alone. I've heard it a few times. If you look at the offering from Amazon earlier this week, that's pushing AI-related debt offerings. Lisa mentioned the number earlier this week to around $335 billion so far this year. What's that, double last year? The debt coming from Treasury is not going to end. That supply is going to keep coming. That competition for capital will lead to higher interest rates.
Yeah, and what Greg was pointing to there, the one thing that's been capping yields is the yield itself. And people get excited about it because they haven't seen it for a number of years, but they'll get less excited as that yield continues to climb and they might be able to get more. And we saw a perfect example of that yesterday with the $39 billion of 10-year notes auctioned. Because yes, there was plenty of demand and people actually pushed back on my observation about how high the yield was and said, talk about how well the auction went. It went really, really well. But the yield was the highest going back to February 2025.
Back. What's wrong with these people, Bramo?
Oh, people are absolutely allowed to. Please, push back, and I'll push back again.
Question the Bramo. Up next, Michelle Weaver of Morgan Stanley, Savvy Sith of Raymond James, Nita Richardson of ADP, Matt Stuckey of Northwestern Mutual, the third hour of Bloomberg Surveillance just around the corner.
Famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, now a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again. And they finally brought it up to $1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
It's
the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ola, Saudi Arabia, and this is Bloomberg.
The AI trade has gone from uber bullish to a bullish bearish combination.
View this sell-off more as an opportunity than a reason to panic.
The AI trade will continue to find support.
A lot of it then depends on the durability of AI.
If that falters, we've got a real problem on our hands.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your price action of scores look like this. Equity futures on the S&P recovering a touch. We're up by a few tenths of 1%. A bounce back again on the NASDAQ, up by 0.75%. The money going back into tech in the last day or so. In the bond market, 2s, 10s and 30s, 2s around 420. Yields a little lower on the session, down 2 basis points, 30 minutes away from jobless claims. Setting the tone for this market in the last few days, this move in crude. 2 days of gains. Can you make it day 3? Up by 0.8% on Brent, just short of 79.
We already have had a pretty substantial move, which is the reason why you're not seeing a bigger move today, considering the fact that tensions only seem to be escalating. Another round of strikes by the United States on Iran overnight. One notable thing, though, is that we're not talking about how that could potentially upend the risk asset market. Increasingly, the risk asset market has moved on, not because they are ignoring it, but because they have sort of accepted that it does inject a little bit more inflation, but it doesn't upend the idea of what we're seeing in AI or potentially even consumer spending.
There's chaos in the Middle East. Is it bullish for tech stocks? Is that what we're saying? Is that the trade of the last 24 hours?
You know, that was the trade earlier this year, that even if you didn't see a broadening out in the rest of the economy because of high oil prices, you do get that AI secular trend that will give that a boost. That said, it's not clear right now. I mean, yes, you are seeing that in the price action today and yesterday, but what we just heard from David Lebovitz, he came on and he said, look, I actually still think the broadening out trade is going to withstand and outperform simply because these are the companies that are going to benefit disproportionately going forward, regardless of whether inflation is just a touch higher.
Underperformance on small caps, underperformance on the equal weight, dominating the session through Wednesday. Into Thursday, equities up by 0.2% on the S&P. Coming up this hour, we'll catch up with Michelle Weaver of Morgan Stanley, with stocks finding a firmer footing. Savi Sith of Raymond James downgrading Delta Airlines ahead of earnings. And Matt Stuckey of Northwestern Mutual, with SK Hynix's equity offering receiving some big demand. We begin this hour with stocks pushing higher as tech bounces back. Michelle Weaver of Morgan Stanley writing, investor positioning in semiconductors has become extreme. The sell-off can be viewed through the context of our house call for a broadening in performance. Michelle joins us now for more. Michelle, good morning.
Good morning. Thanks for having me.
Good to see you. Does this move in oil upend that broadening story?
No, I think whenever you have these periods of geopolitical instability, you always have to go back to the fundamentals. The fundamentals have to remain your North Star. And the fact of the matter remains, we're still in a really strong earnings environment for U.S. stocks. We saw the average stock in the Russell 3000, so just the typical small company, up 10% year over year in the first quarter. That's the strongest earnings growth they've seen since 2021. And you'd really need to see oil above $100, $120 for a sustained period for me to start getting more nervous on some of that broadening out call where that becomes a problem for input costs for companies.
We saw a massive quarter as well for the chip players. They had fantastic earnings. They saw fantastic gains. Why is the money going to drift away from that story a little bit more?
So I really think a lot of it comes down to positioning. And I want to be clear, I am not calling into question at all the longer term AI theme. I think the longer term AI theme is very much intact. But after you saw that incredible run post last earnings season, you had very, very high positioning, very high exposure within the semiconductors names. So I think now you're just seeing some of that natural repositioning, rebalancing as you head into earnings season, as you want to start trimming some of your risks there. But overall, the AI theme is still intact.
Is it healthy to see so much volatility in single name stocks, even as you see the overall index kind of remain fairly stable in the face of a whole bunch of different shocks?
I mean, I'm not surprised by the volatility, just given all the headline risks. So we're hearing all this. People are rotating under the surface. Now we've seen money moving back into tech because that theme is so durable, and I think people are a little bit more comfortable there. But overall, I'm not surprised by the volatility we're seeing, just given all the concern around oil, given concern around inflation, given the concern that this raises for consumers. But I think it's not surprising.
There's also an issue going forward with earnings as they trickle out about what kind of profit margin we could see from some of the consumer-facing companies. We did see profit margins expand, even as consumers didn't feel really good about inflation. Yeah. In fact, they feel pretty terrible about it. They really hate it. Right now, you're seeing the likes of Pepsi come out. They cut prices last year. That's reduced some of their revenue in certain parts. Do you expect the same, that increasingly consumer pushback is going to crimp margins, or do you think that that kind of margin expansion can continue?
I think it's a risk for companies that have more exposure to the middle to lower end consumer, because we're still seeing the K economy very firmly in place in the US. If I think back to where we were heading into the year, we'd hoped that inflation was going to start to cool down. Unfortunately, given the moves in oil, that effectively acts as a regressive tax on the lower income consumer. And so lower income consumers are still very much stressed. We do run our own proprietary consumer survey though, and we're seeing an improvement in sentiment. It's not outright positive, but people are becoming less negative than they had been a few months ago. So the consumer's in an okay place. I'm not seeing anything terribly concerning around credit cards or auto delinquencies, but they're in a middling place right now.
How relevant is sentiment to the equity market story? I think the way people feel is important, but to the equity market story, is it relevant?
I think it's important to keep an eye on, especially as we go throughout the year. If you have negative sentiment for an extended period, I'll start to get more concerned. But overall, we've seen people continuing to spend through this. They're not happy, but the spending has continued to hold up. Maybe they're going to push back more on prices, but they are still going to go out and spend and get what they need.
Cue the Federal Reserve. Does it step in and hike interest rates, and what does it mean for your call?
So our economists do not think that the Fed are going to hike this year. They think they're going to remain on hold for the balance of the year. I think, yes, there are renewed concerns now around oil prices and inflation, but if I think back to last week, we got a softer payrolls number. And as we saw in the FOMC minutes that came out yesterday, the majority of the members are comfortable with remaining on hold for the rest of the year.
How much would a rate hike actually materially change your view, though?
One, I don't think would have a huge change on it. Overall, though, we do need rates to remain contained. But I think one hike, that's not going to completely change the story.
There's also been a theme that's increasingly prevalent in our conversations with different analysts, which is, are we in an earnings bubble? Forget the evaluation, forget the AI, but are we overestimating how much earnings can continue to expand? We're getting a taste of that when it comes to a couple of companies. Samsung reported earnings, fantastic earnings, punished. We saw that again today, overnight, just on the margins with Levi Strauss. What's your sense of this being kind of the sort of foretelling, the foreshadowing leaves for what's to come?
Yeah, I mean, overall, I think earnings are still very much powering the story. We're coming off of a multi-year earnings recession for the average stock. That's really what's driving that call for a broadening out. We'd seen a lot of the market being powered by the AI infrastructure names, and while we're still very positive on the overall AI thematic, I do think you're going to start to see some broadening in performance as you see those companies continue to do very well in earnings. Earnings revisions breadth is still surging. I do think that is supportive for the market. I don't think, we're going to see all these earnings beats and the market is just going to look the other way and sell the news.
This market has reset expectations higher, is what you're getting at, Bramo.
Thank you. Yes,
Not just on those
much
two
better.
names. I mean,
No, it's
like,
true.
so much higher going into this quarter.
We've gotten used to double-digit earnings growth and then some, and the idea that we were speaking about with Bob Elliott, he was saying that we're pricing in more than 100% growth in some of these hyperscalers, some of these tech names, over the next 5 years, every single year. Is that plausible? Is that possible? And that is potentially where some of the disappointments could
Michelle,
come.
where are the beats going to come from? Now we have reset the bar so much higher. Coming into this year, that's been the surprise, a positive earnings shock. How do you shock a market twice?
So I mean, I wouldn't say it's been priced in throughout the market, though. It's been priced into some of those semiconductors names, and that's why positioning got so outsized. But I wouldn't say that it's been priced in throughout the market. It's really that large cap tech that had been driving things higher. But now I think there is still a lot of room and a lot of capacity for those positive earnings revisions and for hopefully what we'll see a very strong earnings quarter to come through and be priced into the broader part of the market.
Favorite sector right now?
I really like biotech. I think that's an interesting sector.
How come?
It is very beneficial from M&A. You had the story on earlier. We're seeing very, very strong M&A. I also think it's a very interesting play on AI adoption. So I think that it's one of the sectors where you can really see improvement in both the product as well as the efficiency. We're seeing a lot happening within AI-enabled drug discovery. So I think biotech right now is a really interesting play on both the M&A theme as well as the AI adoption theme.
Interesting. Michelle, thank you. Appreciate it.
Thank
Michelle
you.
Weaver there of Morgan Stanley, heading into earnings season, which officially kicks off next week, which I don't really understand because it started, and down to report in 24 hours.
Yeah, which is the ultimate kickoff. But really, JP Morgan is like, no, it doesn't start until we start.
Do they say that or do we say that?
I mean, I think that we've bought into it.
Why do we buy into it?
I don't know, but we do. We always say it starts next week, even though it's already started. I mean, we were getting some today.
Starts for the big banks next week.
I mean, yeah, but whatever.
Okay.
Can I just say,
sure,
I can get behind the biotech trade. If they can cure cancer with AI, I'm all there. I'm very excited about that.
Yeah, everybody else.
I mean, honestly, like that is.
On board with you.
I spend time like researching just where the developments are, and some of the more difficult ones. I think it's wonderful.
That is worth the data centers, without a doubt.
Much more so.
I don't think that is an original take, though, Bramo. I think a lot of people are on board with that idea.
Thank you.
All right.
I'm glad that I've got a vote of confidence.
Let's get you an update on stories worldwide this morning. Everything else you say is original, truly. Contrarian. Your Bloomberg Brief with Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Maine Democrat Graham Plattner says he's suspending his campaign for a U.S. Senate seat. The announcement coming after he lost support from several Democrats following a sexual assault allegation, which he denies. SK Hynix's U.S. listing is more than 7 times oversubscribed. According to Bloomberg's calculations, it's likely to be among the largest ever U.S. debuts for a foreign company. And tune in tomorrow at 10:30 a.m. for an interview with the SK Group right here. Russell Investments being acquired by a group of investors led by the venture firm B Capital and CalPERS. Sources telling us here at Bloomberg the deal is valued at $2.8 billion. It's aimed at getting the 90-year-old asset manager, Russell Investments, ready for the AI era. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie later this hour. Up next, the morning calls plus Savvy Sith of Raymond James downgrading Delta Airlines ahead of the earnings report in the next 24 hours. That conversation up next. at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
If you look at the hyperscalers today, what did they make in the last 12 months? $1.5 trillion. So you're talking about over the next 5 years, they're going to add, $3-4 trillion of additional revenue. That is an incredible amount of revenue that they have to get. In aggregate, it is largely impossible that we're going to see this sort of revenue.
That was Bob Elliott of Unlimited Funds, the high bar for earnings expectations. This is something that Liz Ann Sudders of Charles Schwab questioned. Just the idea that maybe this time the bubble might be in the earnings and not in the price. Ramo, it's something you mentioned just moments ago. That's very unlike what we saw, say, 25 years plus ago when we had the tech bubble.
Yeah, this is what maybe we're seeing on the margins, not necessarily with the tech names, although Samsung is a great example of that. Came out with very good earnings report. Their stocks tanked because of overall sentiment, but also the likes of Levi Strauss. Have we baked in good news, even though we haven't necessarily seen the proof yet?
So we've had some pushback. It's notable, Levi's being one, Samsung a much bigger story, Micron's margin's a problem for everyone else, all these kind of things coming together. Then you've just got the normal stuff, the bread and butter. How's the consumer doing? Can they tolerate higher prices? What's the read on PepsiCo this morning? Is that a tell of what we might see this quarter?
So last year, Pepsi said that it was going to cut prices on some of its products by about 15% after they'd been accused of raising prices much beyond what the average consumer could afford, the basket of goods getting too high. What they did see was a 2% decline in its revenue in its North America business. And they talked about how consumers are pushing back as a result of inflation. The CEO saying results were tempered in the quarter as U.S. food and beverage category performance moderated with consumer budgets tightening due to rising inflationary pressures. Is this a concern for particular brands that cater to lower and middle income consumers, or is this something that can be a more widespread phenomenon where you start to see on the margins consumer pushback?
The latest from PepsiCo this morning. Here's the latest price action. A bounce up by 0.2 on the S&P, on the Nasdaq 100 up by 0.85%. A better story for tech in the last 24 hours, just as people talk about a rotation away from chips. The money goes back to chips because of this move in crude. Brent and WTI. Brent and WTI this morning pushing higher by 0.4% on Brent, $78 on WTI at about 73. Just briefly yesterday breaching $80 a barrel on Brent for the first time in 2 or 3 weeks. A 2-day rally on Brent could become day 3. Just a small gain so far this morning. That's in about 14 minutes time. Get the data. We get some jobless claims. Jobless claims have done nothing for a long, long time. The data that has started to move, ISM this week, a bit softer than expected. Jobs last week, a bit softer than expected. Will you see that in more data at a time when this Fed is actively considering higher interest rates? And twos, that yield is still well north of where the policy rate is right now.
Yeah, another way of asking this is, when will the labor market matter again? Because right now it's not mattering at all to the Federal Reserve because it seems to be stable. Do you get a peak perking up in some of the numbers, the wrong kind of perking up of the initial jobless claims that could potentially put it back in focus given the fact that we have seen a weakening? Or are we just seeing volatility in data that has been highly volatile?
It would be shocking to see higher claims, wouldn't it? Like materially higher claims, because claims have done nothing for so long.
This is a non-event at this point. I think it is fair to say that it is not on the radar for so many different people. We have not spent any time talking about this. This used to be the key real-time indicator of the labor market, and currently it seems to have flatlined.
The previous week was 215 initial jobless claims. The estimate in our survey, 270. Let's see what we get in about 13 minutes' time. Let's get you some morning calls. First up, Bank of America adding Meta to its US 1 list, joining the firm's best investment ideas. The stock is down this morning by close to 4%. Your second call from William Blair, initiating coverage on AMD with a market perform rating, saying it's well positioned to benefit from the AI boom. That stock is up by 3.6%. And your third and final call from JP Morgan, cutting its price target on Exxon to 158, seeing limited upside ahead with its revised valuation. That stock is down by 0.6%. Let's talk about the earnings. We mentioned Delta a few times this morning, kicking off airline earnings before the bell tomorrow. Savi Saith of Raymond James downgrading the stock, writing, quote, "We continue to view Delta as a top pick for long-term investors. However, following the recent run-up in shares, somewhat narrower near-term upside valuation prompts our rating change from strong buy to outperform." Savi joins us now for more. Savi, welcome to the program. It's good to see you again. Let's talk about what you are expecting to hear, to see from this company going into the weekend.
Thanks for having me, John. I think it's from a demands perspective and from a pricing perspective, I think the message is going to be quite positive. It's the one kind of silver lining in the backdrop of all of this kind of fuel pressure the airlines have been facing, is that especially in the backdrop of last year when demand got hit from all the policy uncertainty, airlines have seen some really good fare increases, levels that you really haven't seen in past years, in being able to pass through higher fares and have them stick, and see very little kind of demand pushback from passengers. So I think the revenue side of the story is going to be positive, and I think all eyes will be how sustainable that is.
How do you get a sense of that, Savi, when there's so many different moving pieces that are real time? I mean, isn't this just sort of something exogenous that's going to be a market-wide story that they can't really predict?
The one thing, Lisa, that airlines do have in their control is capacity. And that's where you've seen some very proactive moves. Now, we have unfortunately had Spirit that had gone away. That's taken about 1 to 2 points of capacity out of the system. But beyond that, the industry as a whole is keeping capacity flat. And if you look at demand, it usually grows 1 to 2 times GDP. And given the strong economy, we are kind of undersupplying the market, and that's helping keep those average fares moving higher. So that is the kind of the key here from an executive standpoint. I think that given the level of uncertainty, there's going to be a lot of caution in adding back any capacity and trying to control the situation as much as they can. And I would say on the other side, at least fuel has come down from the heady levels we saw earlier this year.
We talk about JP Morgan when they come out with earnings, and that supposedly is the kickoff of earnings season, even though it really is Delta coming out tomorrow. And we say, is this a bank story or is this an overall economy story? And Delta, I think we can ask the same question. Does this give an indication of traveler appetite and of the broader airline story and the economic story, or is this a Delta story which is catering to a higher end consumer that has the capacity to spend and to travel much more so than in other places?
That's a fair point. It is going to be a consumer story overall, but it is, if you look at airlines, they are kind of medium to high income household exposure, and Delta kind of maybe, and some of the legacy carriers a little bit higher end of that. So it is a consumer story. It is the consumer that has really held up airline revenue and corporate as well, actually, because corporates have come back in a very big way this year after really being conservative last year in reaction to all the kind of the policy changes that you've had, or the policy uncertainty that you've had. Look, there are Delta-specific stories here. They have very kind of unique revenue and margin opportunities than some of their peers. But overall, I think tomorrow it will be a story of the consumer and the economy.
When we talk about technology and we talk about the banking sector, a lot of the focus this earnings season is going to be on the CapEx. We've heard a lot of discussion around CapEx. When it comes to the airlines and Delta specifically, how focused are you on CapEx when it comes to new planes, when it comes to the supply of them, as well as the increasing prices for the components given some of the supply chain constraints?
Yeah, that's really important. Like, what I would say about Delta is they have kind of over the past 10 to 20 years approached CapEx in a more stable manner. In the past, in this industry, you'd have these boom and bust. And you still have some Delta peers that have these very kind of high CapEx years and very low CapEx years. Delta's made a point to be a lot more consistent in CapEx and having a balance sheet and a profit profile where they can continue to invest year in and year out without having to kind of take CapEx down. So we expect very steady CapEx story from Delta. You know, the component cost, that's definitely an issue for the industry. That flows more through OpEx for the industry. And again, much like fuel or any other cost, they really have to, you know, use strong demand and or capacity adjustments to try and pass that through.
If you asked people to guess right now which stock in the airline business was outperforming out of Delta, American, and United, I think you'd guess accurately across all three. You'd say Delta was the highest, not far behind would be United, America would be lagging. That's been the story so far the year, up 26% on Delta, United up by 13, American up by close to 8. It's kind of changing over the last month though, Savvy. American Airlines is starting to do something. What are they getting right at the moment?
Yeah, I think what you've seen there is Americans really trying to turn earnings around, and it really depends on which time period you're looking at here. If you look quarter to, you know, the second quarter, American had significant increase in their shares, and the reason for this is their earnings are a lot more volatile. So in high fuel prices, I think people feel a lot worse about American. They have a high leverage. But if fuel is no longer a concern, they are doing some of the right things to really turn around that story, and that becomes the focus. So it really depends on kind of the macro environment and where the shares go.
Savvy, it's good to see you. As always, thank you. Savvy Scyther of Raymond James, heading into earnings from Delta. Have you seen Delta's new basic business?
I have heard about it.
Okay.
I've read about it, but I haven't seen it.
Do you know the trade-offs? These are the trade-offs. If you want a lower fare to fly premium, first class and business, these are the trade-offs. Seats assigned after check-in, trade-off number 1. Fewer earned miles, trade-off number 2. Reduced checked bag allowances, number 3. No complimentary or paid upgrades, no same-day confirmed or standby changes, and fees for changes or cancellations.
And no access to the Delta One Lounge. That's another aspect of this as well.
Is that
I believe
one too?
so. I believe that is also no access, but you get a lie flat bed for a much lower price. And so how many people are saying, look, if I'm going to be traveling overseas, I want to get there and be okay, I'm willing to pay for the lie flat bed without all of these add-ons potentially. You know, interesting how they're trying to segment out every single person and their specific need and their specific price point. That, I think, it might be the path of travel.
I'm going to do my channel checks in a moment and see what the fare difference will be.
Yeah, you're going to do channel checks, and then you're going to execute to see exactly how you're going to feel.
To tell people the experience of what it was like.
Yeah, and meanwhile, Ryanair is saying, you know, we're going to pay you to go, you know, you're going to have to pay us to go to the bathroom.
Like one of those digital packages, Bramo, of me peering through the window of the Delta One Lounge. I can't get in. I can't get in. And then fly business to Brazil.
To Brazil, to Rio de Janeiro. You can go on the beach of Copacabana.
Sure. Up next on the program, breaking jobless claims. We'll get reaction with Nita Richardson of ADP from New York City. You're watching Bloomberg TV.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The up and about 60 minutes away. Equity futures this morning on the S&P firmer by 0.3%, picking up here as we get closer to the cash open. On the Nasdaq this morning, higher by 0.9. Jobless claims seconds away in the bond market heading into it. The scores look like this: 2s, 10s, and 30s. Yields on 2s down 3 basis points to 4.19, setting the tone for that. This move in crude higher yesterday and the day previous to that. This morning up again for a third consecutive day, up by 0.7%. Guess what jobless claims came in at? Mike McKee has the number. Hey, Mike.
17K.
Well, John, the foolish consistency of little minds is back again. 215,000 jobless claims were filed last week. That's almost exactly the same as the week before, revised up to 217,000. Continuing claims, 1,814,000. That is just a tiny bit higher than 1,806,000 the week before on a revised basis. So basically, the Fed has told us in the minutes that they are sort of certain that the labor market is relatively steady at this point. It is inflation that worries them, and the jobless claims keep that a worry front and center in the sense that there doesn't seem to be a problem in the labor market at the moment.
Mike, from now on, I think you can just record the hit ahead of time, maybe the day before, and we'll just play it out at 8:30 Eastern time on a Thursday morning. Before you go, I prefer to do it live. Let's talk about this Federal Reserve. In the minutes, Mike, what was your takeaway? What do you think it implies about what might happen at the next meeting in a few weeks' time?
Well, I think basically what they told us at the time, and remember that was the day that the memorandum of understanding was signed with Iran, was that they expected or they thought that we were going to see inflation perhaps start to diminish as the year went on, and that meant they would probably leave rates where they were, not cut rates, but because they wanted to bring us closer to the 2% target. Now you've got Groundhog Day again with Iran. So I think the takeaway is that they're going to be still focused on inflation, and maybe the odds of rate increase because of inflation go up. We'll obviously be watching on Tuesday for CPI, not only for services, which they're worried about, but now we got to add AI to all the concerns in terms of CPI.
You could see that, Mike, all the way through the minutes as well. The contribution from the spend to higher prices in America. This headline just dropped just moments ago that Micron is reporting up to $3 billion in investment for U.S. semiconductors. Mike, we're seeing it all over the place. Hundreds of billions of dollars of capital being raised and invested into this story. Mike, that money that's being raised, a lot of people come on the program and say it's rate insensitive, that these companies are going to do this whatever the interest rate is. They're going to spend and invest regardless. How does the Fed handle that?
I don't think the Fed worries about it in that sense, because at this point, what we're talking about is a 25 basis point move, maybe 50 basis points. That doesn't even take us back to where we were a year ago. So the Fed is able to think about what's going to happen a year from now. The biggest thing about what you were just saying is that all that money is being raised, but it's not being spent all at once. It's going to be spent over a period of time. And the problem is there's a shortage of equipment, both electronic and construction, to fulfill all these data center promises. And so that would suggest that this inflation is going to be sticky going forward. So they're going to probably be looking at inflation as a concern well into 2027.
Mike McKee with the latest. Michael, thank you. Looking ahead to inflation data next Tuesday. Next week, July 14th, is ridiculous. Almost every single big bank on Wall Street reports earnings that morning. We'll get CPI, and later in the day, I believe we'll hear from Kevin Walsh, the Fed chair. So next week is like one day, it's Tuesday, then go to the beach and take the rest of the week off, because a lot's going to happen next week on Tuesday.
I think there are some other companies reporting earnings that are very upset and feeling very hurt right now. John, because they are reporting
Morgan Stanley on the Wednesday.
Yep,
stick around for Morgan Stanley, and anyone who else who might be offended and reporting earnings, stick around for them too.
Look, it will be really important, and we will get a sense on all the major themes on Tuesday. Not only their earnings from the big banks, but also their CapEx plans on tech, because that's actually been an increasing story. And then Kevin Walsh, does he come out and just talk about something that he saw out the window that day, or does he actually give guidance about how he sees inflation? This Micron story is interesting because the $3 billion is going into plants that can produce semiconductors in the United States. At the same time, the SK Hynix memory chip over in Korea, the capacity output has to increase to meet demand, and everyone's raising money to do that.
To meet tons of demand. Micron up by 6% in the pre-market right now. What do you do with claims 215? Like,
absolutely
what do you do?
Should
we just stop talking about it? Stop reporting the number?
Well, right now it seems like the Fed has stopped reporting the number. They have stopped talking about it because they are not looking at the labor market, because it is flatlined in terms of not necessarily non-existing, but just in terms of the number changing. I think that's interesting.
As I'm saying that, Nita Richardson of ADP alongside me just going, no, we've got to talk about claims.
I am itching to jump in right now.
I'm sorry. I hope I've not offended you as well. What do I do with claims, 250?
I'm going to give you a fresh take.
Please.
Okay. So we've had enormous stability in jobless claims, but the health of the labor market is how it's treating new entrants. So let's go there. If you look at very early career, I wrote a blog this week about teenage unemployment. It's the highest unemployment rate we've seen outside the pandemic period in the last decade. It's around 14.5, 14.6%. It's harder for these inexperienced workers to get a job. And then I'd like to push back to those who are trying to get into this labor market, those who have been unemployed for 27 weeks or more, above 20%, 27% now. We haven't seen this level in 4 years, going all the way back to the pandemic recovery. It's hard to enter this labor market as an inexperienced worker, and it's hard to get back into this labor market. And that's what we're seeing. It's not just the layoffs, it's the roll-offs. I think that's what you're going to see, because one thing about being unemployed and getting unemployment insurance is that you have to be active in looking. If you give up, you're no longer counted as part of that active and looking that leads into the unemployment rate. And the longer and higher we see these long-term unemployed, the more likely we're going to see that discouraged worker share go up. And so this is the cost of a very stagnant labor market. This low hire, low fire labor market has a cost, and it's a cost we don't see because these people aren't in the labor market.
You don't see it because when you see a 4.2% unemployment rate, it would imply this labour market is quite tight.
Right.
How would you characterise it?
I think it's quite still. And we've talked about this before, there's just not a lot going on. There's not a lot of dynamism. Some of this is because of demographics. People are leaving early. Maybe they got their retirement boom already, their house price boom already, and they're ready to leave. There's plenty of other stuff to do besides work in this economy. Maybe it's just that they just never found their footing in this labor market because the turnover is so low, those opportunities are so uneven, they're not opening up in the same pace, and they've given up. And so we have to look at this, we can't look at this initial jobs clump number in isolation. If you pack on the other data, what we see is a labor market that's not very inviting to those on the outside.
Is it wonderful, though, on the inside? I mean, I'm asking because are the people who actually are employed getting more effective, getting more efficient, and getting paid a lot more and seeing wage increases at a faster clip?
You know, at ADP Research, we've been writing a lot about how there's very little turnover, that workers are kind of staying put. Some would say stuck. Some would say happy. There's a lot to be happy about in this labor market. If you already have a job, you have stable wages, that's great. You may have some hybrid work from home, that's great. But there might not be a lot of upward mobility because we're not seeing the churn. So it's a mixed market. But if you're happy where you are, you're likely to stay happy because the wage growth has been fairly robust.
You know, I want to go back to where you began about youth unemployment, or the idea that teens are having a harder time getting a job. Is this an issue of the jobs not being available, or is this an issue of the jobs they want not being available, that they get out of college and they want to go to an office and push some paper around rather than say, I'm sorry, go become a plumber or an electrician or build a data center?
I don't know if they want to go to an office at all, Bramo. For some of them.
True. Stay home and push papers and feed their pets. I'm just seriously curious about whether it's a skills mismatch here.
Well, when I talk about early career, I'm talking about the earliest. I remember my summer job as a 16-year-old at a pizza place with irregular hours, irregular pay, but lots of cool points because I could feed my friends free food. Then I went to a library with really predictable hours and pay, and the economist in me loved that more. But we're not even seeing that. We're not even seeing the retail sector or the leisure or hospitality sector take very young workers and teach them about the labor market. There are things that you can only learn through experience. And even a 16, 18, 19-year-old gains from being invited into a summer hire. We're not seeing it in the same levels. And then you get to slightly older workers, those who are in college, who may be home for the summer. Again, unemployment is higher for them now than we've seen in the last few years. And then you get to the college grads, and we already know, we've told that story, that it is harder to enter into this labor market. So our early career trajectory is stagnating along with this low hire, low fire labor market. It's something we should talk about more and not dismiss when we think about the health of the labor market.
I washed dishes and refined my Italian speaking skills.
There you
really
go.
got a deep understanding of cursing in Italian. Right?
And the necessary suds.
And an unappreciated skill in the labor market, for sure.
Without a doubt. You should see how fast I am at home now, just clearing the kitchen.
You know what? If you need to practice, I think we got a sink full if you want to come practice.
I'll give that a miss. I'll practice cursing, though. Commercial breaks, we can do that if you want.
I've heard that, actually.
No?
Yes,
Nita, thank you. Appreciate it. Nita Richardson of ADP. Let's get you an update on stories worldwide. Let's get to your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, we're recapping the data we just got. Jobless claims coming in at 215,000 last week, slightly lower than the estimated number of 217,000. Continuing claims for the week in line with expectations, coming in at 1.81 million. SpaceX AI launching its latest chatbot, Grok 4.5, to the general public. Elon Musk's company calling it the company's most intelligent offering to date. It's designed for coding and agentic tasks. Micron shares are higher. The memory giant announcing it'll invest up to $3 billion for U.S. semiconductors in an effort to bolster the supply chain stateside, including $500 million in financing support for Taiwanese chipmaker Global Wafers facility in Texas. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thanks for the update. Appreciate it. Up next on the programme, we'll set you up for the day and the week ahead. Plus, we'll touch base with Matt Sturkey of Northwestern Mutual, seeing long-term opportunities in AI as SK Hynix gears up to join the NASDAQ.
we are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura. I'm Salar de Uyuni in Bolivia, and this is Bloomberg.
When we watch the other parts of the market soften up and sell off, we actually view that as an opportunity, because if we're right about this whole AI productivity story, a rising tide will lift all ships, and that'll be good for the rest of the market, not just the tech, which has benefited up until this point.
That was David Levovitz of JP Morgan Asset Management weighing in on the tech trade and the equity market. Your equity market doing better, up 0.25% on the S&P, up by close to 1 percentage point on the NASDAQ as we head towards the opening bell, 45 minutes away. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We are seeing Meta shares falling in the pre-market, down 3.3% on this reporting from Reuters that the company plans to begin production of its first in-house AI chip in September. This could eventually lower Meta's computing costs, but it puts the focus squarely back into how much this company is spending on AI infrastructure. So this is a very different message from our reporting last week that Meta is planning to monetize that infrastructure through a cloud business, and it is a very different stock market reaction. While Meta is under pressure, some of the companies helping it build that chip are seeing gains. Broadcom is up 3.8% in the pre-market. It is helping design the chip, while TSMC, which will help manufacture it, is also higher. We are also seeing SanDisk rise 5.4% as Reuters reports that it secured a long-term supply agreement with Meta in flash storage. And on the other side, we are seeing shares of IBM and Microsoft falling in the pre-market on our reporting that Starbucks is looking to build more of its own software using AI. And so it's developing tools that could eventually replace some of the software that it buys from both of these companies. John?
Yahira, thank you. Thanks for this morning. Looking ahead to the day ahead and the week ahead, check it out. In the next day or so, we should hear about SK Hynix ADR pricing. They'll start trading tomorrow. Look out for that. Plus, we'll get numbers from Delta. And then it's Tuesday. Look at this for a headline act. Check it out. JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, Citi, all reporting earnings on the same morning. After we wrap up all of that, we'll get CPI data at 8:30 Eastern time, and then later on that morning, Fed Chair Kevin Walsh testifying on Capitol Hill, squeezing all of that into just a few hours.
If you want a fire hose, here it is. And key question is, how thematic will some of these threads be? Inflation, number one. Geopolitical risk, number two. Strength of consumer is number three. And then, of course, the Fed's reaction function really plays into all of those things. Will Kevin Walsh give any sense of that? I do think that the big banks are going to be important, though, to give a sense of the corporate confidence going forward as well, as we were speaking about with Vitas Perduto.
Of the three, how would you rank them of importance for you? As you think about Tuesday, what's more important?
I would say earnings. I think earnings absolutely, because right now CPI is potentially volatile as a result of a number of different characteristics, although another data point to potentially go into the FOMC's meeting. And I don't expect Kevin Warsh to say anything. Ultimately, I think that he's going to be pressured by a whole host of people, and he's going to stick to his script. That's forward guidance. I'm not going to provide that to you. Ultimately, we're looking at all things, but we're going to bring inflation down. Inflation's a priority. People will freak out. He'll say inflation's a priority. We have some disinflationary aspects.
You ran the script for him.
I mean, it's you know, how do you get around actually saying anything that could potentially?
That's how I'd stack it too, by the way.
Yeah.
I think everything goes downstream from the banks. The banks are going to be financing all this investment. All this investment will generate inflation. There's your CPI next in the order. And then the Fed's got to respond to all of that, because a lot of this right now is out of their hands. Even with rates where they are, a lot of this is out of their hands.
And Kevin Warsh, in some ways, is saying, over to you, markets. Let's figure out what you think is going to be the way, the path of travel, and we're going to look at you as one of our indicators.
Let's look to Micron. Let's look to Micron as some of the investment we're seeing right now. Micron up by more than 6%, climbing high this morning. The company pledging up to $3 billion to strengthen the U.S. semiconductor supply chain. Ed Ludlow tracking a story for us. Ed, what's your reaction to that? Number's not massive. What's your response?
The number's not massive, but every memory chip starts with a silicon wafer, and silicon wafers take a very long time and lots of money to get right on the yield side. So $3 billion, $500 million specifically, is going to Global Wafers, a supplier of silicon wafers. I would also point out, for size and scope, like Micron this week made a $250 million contribution to the Trump Accounts initiative. So this is a company that's committed to spend around $200 billion over time to onshore its supply chain and build its own capacity in the United States. The reaction in the stock is interesting. That is a big number and a big move. But you know, we've talked endlessly about the pressure memory names have been under, and maybe it's more in the context of SK. That this is kind of getting now some trade and some enthusiasm.
So Ed, just build on that. SK,
yeah.
Hynix is coming out with a big debt offering, equity offering rather, tapping the equity market.
Yeah.
ADR's listing here in America. What's behind that move?
Yeah, so like on the face of it, you go, okay, they're going to raise about $24 to $28 billion, depending on where we net out. They need to build out capacity. But there's been a sort of valuation gap. They've traded at a discount to their peers, which are Micron and Samsung. Around the world, portfolio managers would love to have more access to Korean technology and Korean names, and they can't for various reasons. So that's a psychological part of it. And SK, you know, it's about 57–60% of the high bandwidth memory market. So every time we're talking about the crunch and supply crunch in HBM chips, you know, SK is at the heart of that AI story. That's one reason that the market's paying attention. I've learned a really interesting lesson of late, including with SpaceX, John, which is like the headline is 7 times oversubscribed in terms of demand. I would think about it more in a dollar basis, right? If you're doing 7x a $28 billion deal, that's a big dollar number. And that probably gives you a sense of the attitude and enthusiasm towards it.
Ed, thank you, buddy. As always, Ed Ludlow on Bloomberg Tech in a few hours' time. Look out for that. And don't miss Ed's interview with the SK Hynix chairman tomorrow at 10:30 Eastern time, as we're having that conversation about those numbers coming out of Micron. Just to put a line on it, $250 billion through 2035. They've raised their planned U.S. investments to more than $250 billion, and that is up from a previous number of, I believe, $200 billion, Bramo. So that is a big number.
Yeah, and talking about how this investment will support their goal of producing 40% of their DRAM in the United States. So taking those Taiwanese companies' prowess, understanding, intelligence, bringing it to factories in the United States to have domestic production facilities.
This is the take from Matt Stuckey of Northwestern Mutual, writing, AI demand remains strong and continues to support long-term growth opportunities. Matt joins us now for more. Matt, welcome. How strong is the demand for some of these offerings to invest all of this money in this theme?
Well, I mean, I think you talked about, you know, just briefly about how oversubscribed SK's ADR listing is going to be. But, you know, I think also you look at these companies' capital allocation plans. We talked about Micron spending $250 billion, upping that from 200. Just, you know, a few weeks ago, we talked about how SK Hynix and Samsung, you know, issued out their capital budgets, and that level at about $512 billion was 50% above analyst estimates. And so not only are investors excited about the future, but these companies themselves are putting their money where their mouth is in terms of expanding their capacity to meet the demand of the moment.
Do you think, Matt, rate increases would make a difference to these investment numbers?
Not at a 25 or 50 basis point level, Jonathan. I think in terms of the roadmap that these companies are having, it is kind of more of a secular view. And while a policy rate increase is a headwind to a little bit of the financing costs, it's not hugely material for these companies when credit spreads are as tight as what they are. However, with hyperscalers tapping the debt markets and the equity markets for capital, it does make it more capital market sensitive just by nature. And so, that fragility lens, in terms of how you're financing these things is higher versus just financing it through operating cash flows. But an incremental move by a policymaker, 25 or 50 basis points is priced in the forward curve.
And potentially even debt markets as a result of the demand for their IPOs for their equity sale gives you a sense of how much appetite there still is.
The story's not changing, but the price of the story is. It's getting more costlier to make some of these investments in certain places, which is why some of these guys are doing what they're doing, right? Because there's so much demand and prices are increasing by so much, they can build out this capacity.
There are a couple of different things happening here. On one hand, SK Hynix wants to build out capacity because of how much demand there is for the memory chips. How much is the Micron effort to move production to places like Idaho really being driven also by a number of policy shifts in the United States, as well as just around the world to make supply chains more domestic, more resilient?
NASDAQ futures this morning up by 0.9. Coming up tomorrow, we'll catch up with George Goncalves of MUFG, Lisa Shallon of Morgan Stanley. Very punchy call from Lisa on chips. Ed Hosseini of Columbia Threadneedle joined us, and Nancy Lazar of Piper Sandler from New York City this morning. Good morning. This was Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Trying to turn around 2 days of losses for this S&P. 30 minutes to go into the start of cash trading. I'm Danny Berger.
And I'm Bonnie Quinn, and you're watching Open Interest.
Coming up, chipmakers lead stocks higher as SK Hynix gears up for its U.S. debut.
Retail warning signals. Pepsi says shoppers pulled back in the second quarter, weighing on sales.
And tensions simmer in the Middle East as the U.S. and Iran exchange fresh strikes.
Well, let's get to some stocks to watch. Interestingly, it's the chip stocks, wouldn't you know, but this time it's for better reasons than yesterday. It looks like there was some stabilization, and so now we're seeing chip stocks rising. Also a little bit of a safe haven trade after escalation appeared to just take a little pause for a moment. Also, we're preparing for a huge listing of SK Hynix that starts tomorrow, and Micron is planning to spend $250 billion on U.S. investments through 2035. That said, Meta is an exception today. It's lower by almost 4%. It's planning to start building chips in September in Canada, and that is according to a report, Danny.
And Meta really struggling to catch a bid over the past month or so. We've also had a lot of retail earnings. You pointed this out, Vonnie. Pepsi, they had sales growth that disappointed. They did slash some prices. They did, though, I will point out, raise the price of their smaller bags of chips. They say inflation's a problem. That means sales are a problem. Pepsi down 3%. Levi and Costco also falling. Costco June sales were shy of estimates in a sign of consumer weakness. And Levi, their upgrade to expectations wasn't enough to satisfy investor expectations, Vonnie.
All right, I can't believe we're into earnings season already. Well, let's get back to the AI rebound with Bloomberg Tech host Ed Ludlow. Ed, was this a safety trade this morning a little bit because, you know, there was an escalation to the rhetoric, at least in the Middle East yesterday? Or was it just that, you know, Korea looks a little settled now, and maybe we can buy the dip again?
There is evidence that, you know, in the 24-hour trading period, what happens in Korea follows through to the US session, right? We learned that the hard way when Samsung had their prelim numbers. It's a confluence of factors, right? News cycle is crazy this morning. A lot of upside. Micron coming out with, you know, the increased investment commitment, which is seen as a good thing. And I think there is a lot of sort of treading water to SK, right? Pricing into trade tomorrow of ADRs. And, you know, one reason that SK is doing this, not just to sort of go through the mechanism of raising capital, it's the vibe. You know, US investors kind of get the AI story.
Can I just say that it's incredible that the vibes are still immaculate, if you will, despite this volatility that we've had, that they're still 7 times oversubscribed.
It's also like not universally true, that attitude. You know, all week long on Bloomberg Television, people that we care about have been saying, well, we actually see a rotation out of chip stocks into, for example, hyperscalers, Mike Wilson, Morgan Stanley. Why? Well, in part because of the near-term performance, offer an insane quarter of gains. You know, like you can look at any case study. SK Hynix has had a rough go of it in Korea in the last few days. It's still up 250% year to date and almost 1,800% over 12 months. Like, it was time to cool it for a lot of people.
How is Meta suddenly turning into a chip maker? I mean, it's spending a lot of money and it's doing it in Canada.
What should I say? I take a little bit of grievance with that because Meta's down on a Reuters report that their MTIA Meta Training and Inference Accelerator 400, codename Iris, will go into production in September. Riley and I reported that in March. None of it's new. What's new is that it's based on an internal memo where Mark Zuckerberg is telling Meta employees that the cost of relying on NVIDIA is painful. But the rationale for Meta, as many others are doing, of having their own in-house silicon program alongside being big buyers of NVIDIA and AMD GPUs, is that the diversity helps and it de-risks against tight supply in the future, pricing swings, et cetera. So those kind of details in the Reuters report are somewhat incremental. And I would just say go back and read the Bloomberg, or watch the video, by the way, because they let me go into the lab and play with it. But you know, that roadmap, Meta had committed to a 6-month cadence of going generation to generation on its own chips anyway, and it had already gone through testing and was headed towards production when I went to look at it in March. So, yeah.
I would always recommend an Ed Ludlow exclusive over everything else.
I appreciate that.
Thank you so much for joining us. Ed. It's such a pleasure to have you in New York. It's Bloomberg Tech's Ed Ludlow, and of course, tune in to Bloomberg Tech at 11 a.m. And more importantly, well, not more importantly, all shows are equally important, but Ed is going to be speaking with the SK Hynix chairman, Che Tae-won, at 10:30 a.m. right here on Bloomberg TV. Now, Pepsi earnings, they did miss estimates. Price cuts failed to spur sales growth, with executives blaming inflationary pressures. Bloomberg Intelligence senior analyst Ken Shea covers the company and joins us now. Ken, where did Pepsi go wrong? Did they just need to slash prices even more?
Yeah, hi, Danny. PepsiCo's, their game plan earlier in the year was to drive growth and improve margins at their big Pepsi Foods division, a third of their sales, 40% of their operating profits, big division. The problem was higher gas prices dissuaded consumers to go to the gas pump, go to the grocery shopping. Traffic at the places where it sells a lot of these goods just kind of fell off. So the game plan hasn't changed. It's just that the way they're going to get there at the end of the year, they reiterated guidance, is going to require a little more in terms of price cuts and sustain stronger than expected performance by its international divisions.
Ken, is Pepsi following the Elliott playbook, and what else does Elliott wanted to do?
Well, the Elliott playbook was really, get better growth out of its highly mature Pepsi Foods division, and to a lesser extent, beverages as well. And, they're making progress. But again, when these plans were set, that was before, the war broke out and gas prices shot through the ceiling and consumers pulled back. So the game plan, like I mentioned, hasn't changed. And I think Elliott has to consider, some of the macro events that are out of Pepsi's control here. The good news from this quarter is that, aside from, basically meeting or slightly beating expectations on top and bottom line, were that the international divisions were just so strong. They really performed really, really well. And I think they're in a position, after years of investment of growing scale in these units, can continue to do so and kind of mitigate a lot of the pressures on food and beverages North America.
All right, Ken, thank you so much. That is Ken Shea from Bloomberg Intelligence, and Pepsi down about 3.5% now in the pre-market. Brent, though, climbing back towards $79 a barrel as the U.S. and Iran exchange strikes for a second straight day. President Trump said aboard Air Force One that retaliation would be much stronger.
We just hit them very hard, and I'd say we hit them 20 to 1. Every time they hit us, we're going to hit them 20. They did a little something today, but it was really retribution for last night. They hit actually 3 boats, not 2. And when they hit, we hit back much harder.
Bloomberg chief political correspondent and surveillance co-host Anne-Marie Hordern joins us now from Ankara following the NATO summit. Anne-Marie, can we expect even more strikes, or should we expect things to dampen down for a moment at least until the president gets back to the United States?
Well, potentially. Those strikes happened just hours after he left Ankara, Turkey. It was a second day in a row. And according to CENTCOM, this came at the direction, obviously, of the president, the commander-in-chief, with the goal to degrade Iran's capability to go after commercial vessels in the Strait of Hormuz. So going after and hitting 90 targets really along the coastline when it comes to military naval logistics, when it comes to storage for drones and missiles. These are the kind of facilities the U.S. was targeting. And then we had the Iranian response, and they went after U.S. forces and bases in Kuwait, Bahrain, as well as another military logistical center for the United States in Qatar. It's very confusing right now about where exactly we are in this moment of time between this truce. The president said the ceasefire is off. When pressed by reporters aboard Air Force One on his way back to Washington, he said he didn't think so in terms of, is this going to be a full-out war? So now we're in this standstill where the market and the world is just awaiting to see how long this might last. Is this the new status quo? And how much more for the tit-for-tat escalation of strikes, not just rhetoric, we may see out of Washington and Tehran?
And the background for all of this, Anne-Marie, is where you are, reporting from Ankara just after the NATO meetings and the NATO summit, having this escalation. What has been the posture, the opinions, and the role of other NATO members as escalation occurs again?
Well, you had the NATO Secretary General come out and said he thought it was appropriate that the United States hit Iran as they broke the ceasefire when it came to that first day of strikes. Remember, the president did warn us that there was going to be a second day, possibly, he said. There possibly could be a second day of strikes. And you did see some countries come forward, like Turkey, saying they would be willing to send minesweepers to help the United States clear the Strait of Hormuz for any mines that have been dropped. But obviously, there's been a lot of friction between Washington and Brussels with the European allies, each of them taking a very different approach in how they would help the United States when it comes to the conflict of Iran. And this is where the president has had some issues with countries like Spain, Italy, and the United Kingdom. Potentially, it's going to get a lot harder for Europe at this moment. We just had some breaking news. Bloomberg reporting that Ras Laffan, this is the world's largest LNG gas plant in the world, from Qatar, they are deciding to pull back and not ramp up that production given the latest tensions, and this may mean that it's just going to get a lot tighter when it comes to liquefied natural gas market.
Anne-Marie, thank you so much for joining us. Bloomberg's Anne-Marie Hordurin reporting live from the NATO summit in Ankara, and what she's mentioning is perhaps part of the reason we've seen more aggressive pricing in European markets for hikes than here in the U.S. But even so, we have seen yields move higher in recent days. We're now pricing at about 50% odds that we get a hike, not this month, but in the next meeting. That starts to back off this morning. We're down by about a basis point. The S&P is able to rally 0.25%. The NASDAQ 100 up 1%. Semis continue another day of gains after the gain yesterday, despite wider losses for the S&P 500. Brent crude, not a huge reaction, Vonnie, still up 1/3%, but under $79 a barrel.
Taking a little bit of a pause there after that gain yesterday. Well, maybe we should take a look at some other movers on the radar. Mattel down as Goldman Sachs cut it to sell with a street low price target of $12.
And then there's Porsche reporting its worst sales in 6 years. Weak demand in North America and China, shares down 0.7.
And Starbucks developing in-house tools, AI tools with the help of AI that could replace some software applications that it buys now from Microsoft and IBM.
And we're going to talk about this story with our BI analyst, Anurag Rana, later in the show, because that is fascinating. It's what software makers said wouldn't happen, seems to be happening. But first, coming up, AstraZeneca down after a failed drug trial, risk hurting the brand's credibility of airtight final stage drug trials. What went wrong? We discuss next, right here on Open Interest.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Some more details coming through about SK Hynix's cross-listing expected tomorrow. We already know it was 7 times oversubscribed. SK Hynix now set to guide the U.S. offering price to $149 per ADR. That would imply a 3.1% gain versus its South Korea close. Interesting the reason they might be gaining there. Part of the reason they want to list in the U.S. is to catch up with the valuations of their American counterparts. They now trade at about a 5 times forward earnings. Micron trades at 6.5 times forward earnings. So assuming this pricing holds, we would see SK Hynix trade at 6.4 times forward earnings. So just catching up to Micron. So the pricing of that certainly makes sense in the context. And tomorrow, be sure not to miss Ed Ludlow. He'll be speaking with the SK Hynix chairman, Chae-Tae-Wan, at 10:30 a.m. right here on Bloomberg. Vonnie, what else are you looking at?
Well, high interest, Danny, is what I'm looking at. I look at what else is making headlines around the world. Eric Trump's Bitcoin bet has erased more than $600 million from the family's fortune. His company, American Bitcoin, is experiencing a deep downturn, with shares falling over 94% from its peak as it sticks with a crypto-first strategy, even as rivals pivot to AI data centers. Russell Investments being acquired by B Capital-led group, including CalPERS, in a deal valued at $2.8 billion. The new owners say they'll invest heavily in AI to build a more customized portfolio set. The $416 billion asset manager expected to remain under current leadership after the deal closes next year. AstraZeneca shares are slumping after it suffered a rare setback in a trial of a new heart drug. The results blindsided analysts who say trials are meant to be airtight, and the findings could be a blow to Astra's credibility, Danny.
Let's talk more just about that, Vonnie. Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli joins us now. And Vonnie said it. I mean, the AstraZeneca team has really built up this reputation for airtight final stage trials. So what went wrong that this wasn't a success?
I mean, they have, but look, clinical trials, biology has a nasty habit of trumping you sometimes, of getting you, catching you off target. I mean, you know, if Lionel Messi or one of the big football players misses a penalty, you don't write them off, right? Or you don't, you know, it doesn't change the trajectory of the game significantly. So here, I think it's a bit unfair to particularly pick on this issue. The point for AstraZeneca is that this was supposed to be the less risky of the trials that were supposed to read out. And now we have 2 other sets of data coming by the end of the year, where people have already assumed there's a high risk of, I don't want to say failure, but disappointment. So now it's hard to know who's going to be stepping in to buy ahead of those readouts.
Yeah, I mean, they're essentially all moonshots, Sam, right? I mean, you hope that one of these will work and you try and do your best to make sure the outcome is positive, but you just never know. And the ones you think may not have the better chance may end up being the ones that are the moneymakers for you. Is there anything salvageable from this for AstraZeneca, or does have to throw away the technology completely?
Oh, not at all. The product's still on the market. This was going to be an extra layer, a significant layer on top of what they already have in terms of approval. So this is the for a cardio disease that's caused by abnormal accumulation of a protein in the heart muscle. So they have an approval. This is going to be heading to the $1.5 to $1.8 billion revenue anyway. And what I think has upset people here, or at least has created a situation here, is that it's hard to see how people are going to step in to buy unless they're long-term investors and look at the value proposition in general. So, but I mean, let's face it, these companies do, they're not complete moonshots. They do phase 1s, they do phase 2s, they do translational biology. A lot of that happens before they go into a very expensive phase 3. Some companies have the luxury of taking bigger risk because they have the cash flow to do that, and they want to do that. They have the different risk appetite to others. So I think AstraZeneca probably belongs to that category of they're prepared to take bigger risks in some things that they're doing.
And I guess part of this is all part of the goal of hitting $80 billion in sales by 2030. Sam, how important is it that AstraZeneca also does more to expand away from what they're known for, which is oncology, maybe not away for it, but add on these additional types of treatments and diseases?
Yeah, I mean, it's important. Oncology is one of their key areas, probably the largest space that they're in. The point is they do have a whole bunch of other work that they're doing, PCSK9 for lipids, a drug for obesity, which we'll have to see how that pans out. They're moving into different areas. In general, the thing is, the company has talked about today, tomorrow, and the day after tomorrow. I think what people are going to start beginning to think about now, remember, it's 2026. The day after tomorrow is 2030. So as you go to 27, people are going to start thinking about, sorry about this, the day after tomorrow, right? What's going to be driving there? And it becomes less obvious. So that's where I think folks get a bit more nervous when it comes to failures for that longer term support.
Sam, always a clinic, literally. Thank you so much, Sam Fazeli from Bloomberg Intelligence. Coming up, Rayanne Mitrione tells us why she's looking through market risks, including geopolitics, inflation, tariffs, interest rates. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your Opening Trade.
Only on Bloomberg.
Market risks continue to get chugged off because of earnings. Callan Family Office's Rayanne Mitrione says whether it's geopolitics, inflation, tariffs, or interest rates, these factors may influence sentiment and market direction in the short term. But over time, earnings drive markets. Our focus remains on the underlying fundamentals, which continue to support a positive outlook. Let's bring in Callan Family Office market strategist and founding partner, Rayanne Mitrione. Rayanne, great to see you this morning. And look, your call for why you are bullish has been echoed by so many. And I just wonder what you think of the bar for earnings that has been set. We've seen a lot of earnings upgrades. Are you very confident that this is a corporate America that's going to be able to beat it?
Good morning, Danny. The bar is high, and there's no doubt about that. I mean, expectations for earnings growth this quarter are again over 20%, which would be the second straight quarter of over 20% growth, the seventh consecutive quarter of double-digit growth. So there's a lot of optimism that's been priced in. But what we've seen is that the earnings strength that we've seen recently really has been broad-based. It's been across sectors. It's been in mid-cap and small-cap in addition to large-cap. So it's not just concentrated in tech, but the optimism is high, and we are continuing to see analysts increase estimates for the remainder of this year and into next year. So we need to see the companies deliver on these forecasts in order to keep seeing the stock prices move up as well. But earnings have been growing so quickly that the market's actually a little bit cheaper than it was at the beginning of the year, with PE for the S&P down to 20 from about 23 to start the year. So we have seen that growth, but we need to see it continue for stock prices to hold up.
Would it give you pause, Rayanne, though, that it seems like it doesn't take that much for a massive repricing to happen? So, for example, we just had a massive repricing of memory chips, right, even though they were up a phenomenal amount. After Kevin Warsh took the helm of the Fed, we had a massive repricing in the bond market.
Absolutely, and especially when you're looking at the chip sector or technology in general and anything tied to the AI trade, we've seen those stocks move up so much, so quickly, that any kind of concern that comes up, whether it's concerns around the return on investment we'll get, or whether the demand is still there, or if we're seeing the productivity gains that we all want to see from this, like any question to that can move those quickly, because the higher the valuations, the more susceptible they are to pullbacks on any kind of potentially negative news. But we do think there's still more room to run. We're still in relatively early stages of AI adoption. So the demand should continue for some time, but we do expect that there could be more volatility in those areas going forward.
Rand, just quickly, I mean, some people have called it a rotation, but this is a NASDAQ that's moved less than 1% at 16 out of the past 20 sessions. It's been pretty violent. Is this a rotation? Have we found new market leadership? Has something changed?
We have seen a broadening out, and I do think there's some of that is really as a rotation that, just because of the returns we've seen, it's normal to see some profit taking. I don't know that it's necessarily that there isn't confidence in the AI trade anymore, but there are areas of the market that have been doing well, and we've seen small cap returns have doubled that of the S&P this year, and emerging markets are up over 20%. So we've seen really strong returns in other areas as well.
Right.
And so we do think that there's a rebalancing taking place, but not that we have serious concerns.
We're going to continue this thought with Rayanne. She's sticking around through the opening bell, Danny.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Let's get this trading day started. You are watching Bloomberg Open Interest. I'm Danny Berger. Seconds till the open, and it is a rebound. The S&P is up 0.25% after falling 2 consecutive sessions. Yesterday it fell, even though, and we had 78% of members tumble, so it was a pretty widespread fall that we saw. The Nasdaq up nearly 1%. That did okay yesterday because the chip makers were doing fine, and they're doing fine yet again today. The Dow Jones up 0.1%. Ringing the opening bell down at the New York Stock Exchange, we have Azul. They're Brazilian airlines that have come here to list in the U.S. away from the New York Stock Exchange Americas. So something's in the air of wanting to come and list here in America. Of course, we're going to get SK Hynix tomorrow. At the Nasdaq, you have Iron Dome because SPACs are back, baby. It is a SPAC. They're called the Iron Dome because they're specifically looking for Israeli tech companies, Israel's Iron Dome, et cetera, et cetera. But yeah, it's been pretty amazing to look at the SPAC volume that's come so far this year, a sign of just how much liquidity and robust capital markets are. Just looking at some of the big tech players this morning, NVIDIA doing a whole lot of nothing. I had a good day yesterday on reports that China would allow AI companies to buy H200 chips. Micron also having a very good day. It is up 6.1%. It's going to be spending $250 billion on U.S. investments through 2035. We're also going to get an SK Hynix listing, as I mentioned, tomorrow too, so that should shake things up. Meta, though, having a very not so good run. Reuters repeating, let's say, a Bloomberg scoop that we had some time ago, that it's going to start building chips in September. Meta shares, those are off on about 4%.
Yeah, dull time for Meta indeed. Lots of retail headlines as well, Danny. Pepsi's sales growth disappointed after it slashed prices. Levi's forecasts, meanwhile, underwhelmed investors. And then also Costco. June sales there were just shy of estimates. It's all signals of consumer weakness and just a little bit troubling.
And we're back with Callan Family Office Market Strategist, founding partner, Rayanne Mitrione. Rayanne, I actually want to start you with that, with the consumer earnings that we've gotten. Pepsi was remarkably weak. Levi's didn't live up to expectations. I was looking at a report from Deloitte this morning saying that back-to-school shopping would be down 6% this year because of economic uncertainty. Is this a time to rotate away from consumer names? Is the consumer not as strong as it once was?
I do think there has been some pressure increasing on the consumer. I mean, as we've seen, elevated prices and higher inflation over the last few months. It's certainly something to watch. I mean, the commentary that we got throughout last quarter's earnings season painted a pretty stable picture of the consumer overall. So that's definitely something that we want to be looking at throughout this earnings season when we're listening to the consumer companies, when we're listening to the bank stocks, and really everything, because that is such a big driver of the economy in the U.S. And it seems like we're off to some mixed results to start. So it is something to keep a close eye on.
If you want to diversify, Rayanne, what do you do? Because if you decide to get out of the U.S. and diversify geographically, for example, it's still very difficult to get away from the AI trade, as you point out. 30% of the MSCI EM index is, your 3 top AI companies.
That's very true. The AI trade really is permeating a lot of different parts of the market. And I don't think that's a bad thing, because they can still behave differently at different times. But we do still think emerging markets are a good place to be invested in, a diversifying tool. And there are parts within the emerging markets index that are very different and outside the AI trade that have also been doing well and having strong earnings. The developed international markets have a much lower exposure to technology overall, and especially, the leaders in the AI trade. So that's another way to diversify. And then again, within the US, just looking at different sectors and investing in value stocks or small caps and mid caps. Again, there are exposures to that trade really throughout, but there are ways that you can really diversify your portfolio to have some benefits there.
But maybe you don't even need to go abroad to get EM stocks. We're going to get SK Hynix's listing tomorrow. Rayanne, how are you thinking about that? Is that something you'd want to buy once it's listed here in America?
I mean, that company has had incredible growth. I mean, like we just talked about, it's the #3 largest stock in the emerging markets index. It's, up over, it's more than tripled its stock price this year, and it's listing to raise more capital to, fuel more manufacturing capacity for all the demand that it can't keep up with. So it certainly is part of the same type of trade, but the company has been doing extraordinarily well and has, incredible demand in the pipeline. So I do think there's a place for those types of companies in portfolios.
What are you doing along the yield curve, Rayanne, or where are you buying in terms of bonds, corporate bonds, munis, and so on? What's attractive right now?
Well, most of our clients are taxable investors, so a lot of our fixed income exposure is in the muni bond market, and the muni curve really is so incredibly steep right now. So there isn't a lot of value really on the short end relative to taxables. You have to go out a little bit farther. We're in more of an intermediate type duration mandate, but you really have to go out 15, 20 years to get really nice pickup in yield. But we're complementing that exposure with some muni high yields. We're also in some ways with private credit. So we're looking to diversify that exposure as well.
Curves are getting steeper throughout the U.S., Rayanne. I was just looking, and we have a chart of this, at the 30-year real yield that is now the highest since 2008. This thing has just been creeping higher. Maybe it's because of higher growth expectations. Maybe we think the neutral rate's going to be higher, or just anxiety over ballooning government debt. Whatever the reason it is, this is typically something you'd see and say, this isn't great for risk assets. Why do you think it hasn't weighed on risk assets more, the ever creeping higher of long-term yields?
Yeah, that's a great point. And there's just been this optimism in the market. And even though it doesn't feel like there's a lot of exuberance, I mean, we're basically right at all-time highs. And I do think a lot of that has been propped up by the optimism around AI. The economy has remained strong. Consumers have continued to spend, but it's really so much dollars going into investment. And then really, again, the strong earnings picture that we just have companies continuing to do incredibly well. And I think that's very reassuring to the market. I mean, corporate America is doing incredibly well, and it's translating into the stock prices as well. And we actually have the equal weighted S&P is slightly ahead of the market weighted this year, which is also a healthy signal that we're no longer just being led by a handful of mega cap tech names.
Rayanne, do you have anything in place, or maybe I should say, what do you have in place in case everything kicks off in the Middle East again, or we get, a massive sell-off in the chip trade for whatever reason, or the two together like it looked like we were going to get just 2 days ago?
The narrative does keep changing on a daily basis, even maybe by the minute. So we really do believe in having diversified exposures. We want to make sure that we have the right risk tolerance for each client and the right amount in risk assets versus bonds versus alternatives, so that when we do get pullbacks in any particular area, where whatever the impact on the portfolio is not outside of expectations. I mean, most of our clients are ultra high net worth investors with multi-generational time horizons. So moves in the short term don't have too much of an impact, and we're really investing for the long term and want to maintain those exposures rather than trying to time the market, which can be complicated. So just having long-term diversified allocations and making shifts on the margin and rebalancing like we have been really has been helpful.
Rayanne, we're going to have to leave it there. Thank you so much for joining us this morning. Rayanne Mitrione from Callan Family Office. About 8 minutes into your trading day, let's get a check on these equity markets where you have a somewhat even split of gainers and losers, but still we are moving higher because it's the ping pong of the chip stocks. One day they're up, one day they're down. Today just so happens to be an update with Micron talking about $250 billion worth of spending that they're going to be doing in the U.S. And we're all bracing for the SK Hynix listing. So leading us higher, Micron itself is adding 9.5 points to the S&P. The S&P is up 25 points. Broadcom, AMD, Applied Materials, Lam. I mean, it's a who's who of all of the top chip stocks after they also gained yesterday too. That's all of the gainers, like up through number 11 of biggest contributors to adding on to the S&P 500. All of them are chip stocks. If you look at the downside, it's this trade-off. It's the check writers versus the check takers. The check writers are falling, and that is the big hyperscalers, the Mag 7, Microsoft, Meta, NVIDIA. Meta is now down 26% from its all-time high. So we are in a bear market, and that continues to build. Costco and some of these consumer names having a not good day. Pepsi, they had earnings. So those shares fall after they mix expectations. So if you look at the sectors, it is indeed those consumer staples that are having the worst day. Staples down 1.8%, followed by communications because of those hyperscalers. Energy, that is down after trending higher for the past 2 days on escalation in the Middle East. And as I mentioned, the chip stock's doing well. So Infotech, that is up 1.5%, Bonnie.
Well, we're going to continue this conversation, Danny, in just a moment. Coming up, as you say, chip makers rising ahead of SK Hynix's U.S. listing. We're going to be discussing all of it with Mandeep Singh in a moment. This is Bloomberg Open Interest.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Vienna report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Stellantis getting downgraded at JP Morgan, which says the car maker's recovery is taking longer than expected. The firm says Stellantis still needs about 14 months to see lower parts costs and won't recover quickly without major job cuts or factory reductions. Next, Five Below getting upgraded at Mizuho, which says the stock looks like it's better value now after its recent drop. The firm also says the company is keeping new customers and could do better than Wall Street expects later this year. Finally, a downgrade from KeyBank for Salesforce. The firm says it's not seeing signs that the company's AI product will drive faster growth. The firm says customer feedback has been weak and it's hard to find reasons to expect meaningful upside anytime soon. Just about 2.5% lower, Danny.
Yeah, and Salesforce also getting slammed with the rest of software on fears of Starbucks apparently axing a lot of their offerings, trying to turn in-house with AI. But on the other side of this trade, chip makers are once again driving the market. Semiconductor sentiment is improving, and demand for SK Hynix's U.S. listing is off the charts, 7 times oversubscribed. They're said to be guiding the offering at $149 in ADR. Let's bring in Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. And Mandeep, I heard you talk about this on Surveillance, about this idea of wanting higher valuations. And lo and behold, it looks like if they were to trade where they're pricing it, their valuations would essentially catch up with Micron.
And look, Micron has traditionally traded at almost a 30 to 35% premium to both SK and Samsung. And Samsung is more a conglomerate. So from a pure play perspective, I think that's one of the primary reasons they want to be listed on the U.S. exchange. And to my mind, it would be an easy trade to buy the U.S. ADR and sell the, the Kospi listed shares.
Well, that's just it. There is an opportunity there. But I mean, are we sure that they're going to pop day one? It certainly seems like it's 7 times oversubscribed and so on, but you just never know, do you?
No, I think with anything in memory right now, given the fundamentals are so strong, I mean, these companies have really insane growth that is going to carry forward at least through 2027, and that's a consensus view.
But it's troubling though, Mandeep, how long before we have a 2 times leveraged SK Hynix, ETF here, and a 3 times, and then we have the same sort of trouble as Korea has been experiencing?
I think the Korean market, again, I don't know the dynamics over there, but it seems like a lot of profit taking and, consolidation, as opposed to, again, nobody can argue a change in fundamentals for these companies simply because they've guided to backlog. Like when Micron reported, they said they have $100 billion in backlog from these companies, hyperscalers and some other customers. So these companies have visibility now, and it's not a question of supply-demand affecting pricing anymore.
But to that point, Micron and some of its U.S. peers have shifted to this model of longer-term contracts.
Yeah.
Do we know if SK Hynix has done that? And if they haven't done that, can they be at the same valuation as Micron if they don't have that same business model?
I mean, to my mind, when you are signing this long-term contract, you are capping your pricing growth to an extent if you're a Micron. So from that perspective, I mean, pricing growth is what's driving these, insane growth numbers that these companies are printing. So at some level, Micron is saying, we want more visibility, and we can limit our pricing growth at this point. For someone like SK Hynix, which is 55% share in HBM, maybe they have more leverage and they don't have to do these pricing agreements. Although I think if you have to change the narrative, you do want to show a backlog similar to Micron, just to say we have visibility to 2030 and our growth is not going to fall off a cliff.
So what will U.S. investors expect, Mandeep? So first comes the ADR, next comes what? Is it investment? Is it sharing dividends? Is it buybacks? What is it?
I mean, I think the TSMC is a good proxy for what we can expect from, someone like SK Hynix. And again, TSMC ADRs traded a slight premium to the Taiwan listing. And over time, I do expect, they will try to be good stewards in terms of, making sure the investors are happy around capital allocation, dividends, and buybacks. So to my mind, this is really aimed at lowering that premium gap they have with Micron, and it's a good first step.
Simon White made this really interesting point on the MLive blog, basically asking, is demand capped at any point? And as we reach all of the possible users, and he basically made this argument that as the models get better, even if you have the same amount of users, you're still going to need more memory, and you're still going to need more inputs. I just wonder for these companies what it takes, if ever, to stop viewing them as a boom and bust type industry and stop viewing them as cyclical.
Well, that's a big change, and I don't want to say the phrase "this time is different" simply because,
that goes wrong a lot?
It goes wrong a lot, and look, I mean, at the end of the day, if this wasn't an oligopoly, and I was seeing new entrants enter the market the same way as we are seeing on the inference chip side, there are so many new inference chip players now. So to me, that is a threat, but there are no new memory players. We don't hear about them.
Why not?
It's just nobody wants to enter the business. There are upfront costs involved. We went through a painful phase of consolidation, and these companies have been very disciplined about their CapEx.
So they don't have that much of a moat, but effectively they do because it's so expensive to get into this business.
Yes.
All right, Mandeep, thank you so much. Mandeep Singh from Bloomberg Intelligence with all of the intelligence. And don't forget, tomorrow, Ed Ludlow is going to be right back here. He's going to be speaking with SK Hynix Chairman Che Tae-won at 10:30 a.m. Cannot wait for that interview, and it's going to take place in the middle of open interest, Danny.
Indeed. Coming up, IBM shares are under pressure after Starbucks revealed plans to build AI-powered software. In-house that conversation next. This is Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Stocks moving higher, really thanks to tech, thanks to the chip makers. Another day of a rally for them, but it was 2 consecutive days of declines for the S&P, up 1/3% and 1/4%. Russell 2000 small caps doing okay. Dow Jones just barely hanging in there. Micron, I mentioned the chip makers doing well. It indeed is, ahead of SK Hynix's listing tomorrow. Not great news for some of these consumer companies. Pepsi, a disappointment for their earnings because inflation means that consumers are spending less. Levi's, people wanted more of an upgrade. They didn't get a big enough one, so those shares down. Pepsi down 4%. This one is interesting, though. Starbucks, trying to work alone when it comes to AI. So Starbucks shares are up 1.2% because they've started to ditch things like IBM and Microsoft, hoping that they can build something in-house. Bonnie.
Yeah, exactly. We're going to speak about this now with Bloomberg Intelligence senior analyst Anurag Rana, Danny, because as you say, Starbucks is ditching IBM essentially and Microsoft. Anurag, what can the AI tools that it's building do better and cheaper than the tools that Microsoft was allowing it use, and the same for the other companies that it was using?
Yeah, so the Bloomberg News story talks about a couple of tools that are very specific to either maintenance or tracking up some inventory. I personally don't think they're getting rid of either Windows or Office. Those are, very different products. And that's kind of our big thesis on the software space, that when you have critical mission-specific software that a firm is running on, those are very tough to unseat. But if you have ancillary products or if you're selling software to smaller companies, those are the ones that are at risk. And frankly speaking, this is not the first time we're going to hear this. This is going to be a recurring theme over the next several years, that so and such company has taken AI and coded some portion of the software in-house.
Anurag, Matt and I, when we've talked to software executives on this show, they often bring up, like, we're okay because we have this data moat, et cetera, but one of the things they also say is that these enterprises don't want to spend the time and personnel it takes to continue to update these systems and track them. And I wonder about that latter portion. If the moves from Starbucks suggest that that actually isn't a headwind, that there is a lower bar to replacing some of the software within enterprises.
See, one of the things I would say, and even in the story, it mentioned by the end of their fiscal year, they're going to save $10 million. That's out of the $400 million that they spend right now. That's about 2.5%. Now, again, as I'm saying, I don't think these are the core systems of record that you have. There could be some add-ons out there. Now, there are engineers, smart engineers within the firm that can say, you know what, this is just a headache for us to deal with. We will take this out. But the bigger question is, what's going to happen if you start using AI and token costs? That's something that people are not even used to at this point. So, and I'm not saying that AI software is not going to be successful. I think it's going to be a very slow transition. And I also see the incumbents actually adding their own software products, which are much more nimbler, much more better in the years to come.
And essentially, maybe they just need to be cheaper. I mean, can AI really do things like track your inventory better than the program you already have installed, that you already know, and so on, Anurag?
See, again, a lot of that happens is this a custom software? Is this a company that's so unique that it needs to do things differently? I mean, frankly speaking, there is only one Starbucks. It's not as if, there are 50 banks that can use a common system. So I do not know what exactly that they are tracking, what they are tracking with it. But if it's a custom software built specifically for them, they have all the reason to say that, listen, let me do this in-house.
So, Anurag, just to take a giant step back to end this, the software stocks are selling off of the back of this, specifically IBM and Microsoft. Salesforce also had a downgrade, so that's not helping this. But is this a reason to turn negative on software stocks to see a company like Starbucks making this move?
I think the sentiment is going to be very negative in the near term because there is no catalyst at this point. And the catalyst is only going to come when we see a recovery in enterprise spending on the non-AI side of it. Right now, budgets are being allocated from all of tech into the AI infrastructure side of thing. And what that's doing, it's getting the consulting companies and it's killing the software companies. But sooner or later, they will have to come back and spend. Now, whether that's next year or so, we really don't know. But it's only at that time some of this narrative will change as it relates to software and consulting names.
Anurag, always a joy to have you on. Thank you so much. One of the best in the biz, Anurag Rana of Bloomberg Intelligence. Coming up in the next hour of Open Interest, Amy Wu Silverman on what she's watching in option markets, plus the Flexport CEO Ryan Peterson shares insight into the Strait of Hormuz traffic, and ICAP's Dan Suzuki on changes at the Fed and inflation risks. All of that to come in hour 2 of Bloomberg Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
ABC News. I'm Sherry Preston. Former U.S. Olympian David Hearn has just appeared in D.C. Superior Court and pleaded not guilty through his attorney to the felony charge he faces for allegedly damaging the Lincoln Memorial reflecting pool. Outside the courtroom in Washington, there were protests in support of David Hearn, whose lawyer says the felony charge against his client is ridiculous. In Houston on Wednesday night, a large crowd marching through the city in protest of another ICE-involved fatal shooting. ABC's John Quinones reports from Houston.
A Mexican national, Salgado Araujo, had been living in the U.S. for more than 3 decades. His family saying he was a construction worker on his way to a work site in his van with other laborers. ICE officials said they were attempting to stop his car as part of a targeted enforcement operation. His family says he was close to obtaining legal status.
Immigration officials say the man tried to run them over with his vehicle, an allegation the family denies. The family is calling for a full independent investigation. Maine Democratic Senate candidate Graham Plattner out, the Democratic Party in, very busy finding a replacement after accusations of sex assault.
As he announced his intent to depart from the race, the embattled candidate insisted the allegations against him aren't true.
This is all false.
In an 11-minute online video, Graham Plattner defiantly said the decision to suspend his campaign was effectively made for him by the party establishment.
It is a system that is built structurally to make sure that movements like ours cannot flourish.
Maine's Democratic Party will now hold a convention to choose a new candidate to take on incumbent Republican Senator Susan Collins. Stephen Portnoy, ABC News, Washington.
Renewed airstrikes against Iran overnight, and Iran retaliating by firing on U.S. military facilities in Kuwait, Bahrain, and Qatar. You're listening to ABC News. President Trump last night departed Turkey in the old Air Force One, not the new one who flew there.
The new plane, donated by Qatar, reportedly does not have the same defensive capabilities. Trump denied security concerns were behind the switch.
So you're saying there wasn't a security concern? No. Why would it?
But passengers on the plane were told to keep their window shades down during the flight. The Qatari jet was flown separately to a base in the UK, where the president boarded it for the rest of the flight home.
ABC's Karen Hua. Looking for some one-of-a-kind movie memorabilia? ABC's Danny New has a preview of a sale that's taking bids now.
Many of the items from cinema's biggest hits ever are now going up for auction. For example, the hoverboards from Back to the Future Part 2. Brian Chanis from Heritage Auctions gave me a virtual tour of some of the biggest pieces of movie history that you can now bid on over the next week or so. After the Wicked craze of the last few years, maybe you fancy one of the hats the Wicked Witch of the West wore on screen in The Wizard of Oz. And speaking of headgear, how about Willy Wonka's golden top hat in Willy Wonka and the Chocolate Factory?
Singer Bonnie Tyler has died. Her chart-topping power ballad Total Eclipse of the Heart came out in 1983 and has had 1 billion downloads since then. She earned 3 Grammy nominations, represented Britain at the Eurovision Song Contest in 2013. Bonnie Tyler was 75 years old and had been suffering an intestinal illness at a Portuguese hospital. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube, streaming live on Bloomberg.com as well. Scarlett Fu is out on assignment today, not to worry. Jess Menton sitting in for the next 2 hours. Jess, thank you.
It's going to be fun. I heard you were at the beach yesterday.
Every day. Every day. The only thing that's keeping me from the beach is this next 2 hours here. We got a lot coming up here on the Bloomberg Intelligence program. We're checking with Dan Williams. He's a reporter for Bloomberg News. He's in Jerusalem. Get the latest reporting coming out of that part of the world. Ann Berry, founder and managing partner at Threadneedle, to get her thoughts on these markets. Elizabeth Behrman, a Bloomberg Autos industry team leader. Volkswagen, the labor folks at Volkswagen, they're pushing back on the CEO's push for cuts at that automaker. So we've got the latest there. Ken Shea, Bloomberg Intelligence consumer products analyst, will give us the latest breakdown of Pepsi earnings that reported today. But right now, let's go to Charlie Pell and kick this whole thing off with a Bloomberg Business Flash.
Hi, thank you very much, Paul Sweeney. You mentioned PepsiCo, stock lower now by 5.3%. Interestingly, rival Coca-Cola also lower by 1.7%. This Bloomberg Business Flash is brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract. If you're right, learn more at ibkr.com/predictions. A Bloomberg exclusive Meta Platforms has unveiled a version of its AI model, Muse Spark 1.1, that includes a new paid tier for developers, marking the first time that Meta has charged businesses for access to its models. Our Kurt Wagner broke the story. He was talked with Mark Zuckerberg, and Kurt will be along to talk about it right here on Bloomberg Intelligence at 11:53 this morning. Meta Platforms trading lower by 1.6%. We are seeing a tech rally, however, today. Call it a rebound. We got NASDAQ up 0.5%. The NASDAQ 100 index up 1.4%. And our Mag 7 index, though, trading lower, down 1.1%. To put all of this in context, S&P 500 index up 25 now, up by about 0.3%. Dow Industrials up 64, up 0.1%. 10-year 4.55%. Spot gold up $51 the ounce, back at 41.27. That is a gain of 1.2%. We've got crude oil stabilizing. WTI now at 72.91 a barrel, down just about 0.9%. Barrel of Brent crude 77.55, lower today by 0.6%. Tech stocks getting a lift after SK Hynix drew strong demand ahead of its U.S. listing. Now, this deal will raise about $24.5 billion for the memory giant. So, what to read in to SK Hynix? Ethan Devitt is managing director of Menenda Group, and she was a guest this morning on Bloomberg Surveillance.
when we have a flow of assets into a highly desirable stock, and there will be some shareholders who cannot get access to the Korean stock market directly, it's inevitably going to take away from a similarly profiled area of a portfolio. So other high-tech stocks, other large-cap tech stocks are likely to see flows out. Right. We saw flows out of Bitcoin into SpaceX, a similar kind of flow. I don't think it will affect the more defensive areas.
Ethan Devitt of Mineta, interviewed on surveillance. Sources tell Bloomberg SK Hynix is telling investors it does intend to price its U.S. listing at $149 per ADR. Recapping, stocks higher, S&P up 26 right now, up by about 0.4%. That, Jess and Paul, is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much. We appreciate that. Jess Menton sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. So Charlie is just reporting. We got some green on the screen. And Jess, this morning when Tom and I started Bloomberg Surveillance, oil was up like 6 or 7%. Now it's down 1%. I have no idea how that commodity trades.
Right. I mean, especially just given the constant news that's coming out of the Middle East between Washington and Tehran. But of course, we were just talking about PepsiCo and Coca-Cola. But if you look at consumer staples, second worst industry group in the S&P 500 today, down more than 1.5%. But that's because the food and beverage group is down actually 1.5% because that's where PepsiCo is housed. So looking at that and the opposite end of that, obviously tech. And we're going to have Judy talk a little bit more about some of that.
I mean, I'm a Coke person, but you put a Pepsi in front of me, I'm just
I feel like I still like a good Pepsi.
I'm just as happy with that. All right, let's get a look at what's happening out there. Stocks on the move today. We can do that with Bloomberg's Judy LaGrue. Judy, what are you looking at?
Good morning, Paul. First and foremost, I'm looking at Micron, ticker MU. The stock today is surging as much as 8%, and it represents its largest intraday jump in 2 weeks. And this is coming as the company announced today that it is raising its planned spending on new plants in the U.S. to $250 billion. And this is to help meet demand for its memory chips, which has been fueled by the expansion of AI infrastructure and demand as well.
Yeah, and so obviously we're seeing the stocks today up about 5%. So that's why you're seeing the NASDAQ 100 up even higher there. What other stocks are you looking at right now?
Sure, Jess, I'm looking at AstraZeneca, ticker AZN. The stock is falling as much as 8.7%, and it is on track for the largest intraday drop since January. And this is after suffering a setback in a new heart drug trial. The company said that a gene slicer drug that it's developing with Ionis Pharmaceuticals failed to help prevent heart problems in patients with a rare and potentially fatal disease. So the important part here is that this announcement really blindsided analysts who pointed to management communication and discourse that maybe looked to be more confident than today's announcement might indicate. So looking at that for sure today.
And of course, we can't forget Meta. I know you're watching that. META is the ticker symbol on that. What's the latest when it comes to the Mag 7, which people have been trying to dub it the Lag 7 just because it had been underperforming some of its peers in recent weeks, and especially its software components. But what's the latest?
Sure. So a lot of things going on with Meta today. The stock is down, but of course, first and foremost, Reuters reported that Facebook plans to start manufacturing its AI chip in September. So that's one sort of item there. The second here, too, is that Meta is starting to charge developers for access to its models. And Mark Zuckerberg called this pricing very, quote, aggressive and attractive. So this is the first time Meta has charged developers. So interesting to watch here. What I also think is really interesting to look at as well is that Qualcomm is up on this news about 2% right now. So I think one thing to note here is that Meta is working with Broadcom to design, TSMC to manufacture, and it has some long-term agreements with Samsung for memory chips, SanDisk. So it's a really sort of, collaborative effort here. But again, looking at that stock movement, Meta, Qualcomm today as this news is coming out.
All right, Judy, thank you so much. Appreciate it. Judy LaGrue, she's a reporter for Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for the 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Just getting back to the geopolitics front here, the U.S. and Iran trade airstrikes as fears grow of a return to war. Let's get the latest reporting out of that part of the world. Dan Williams, reporter for Bloomberg News. He is based in Jerusalem. Hey, Dan, is the rhetoric and the action over the last 24 to 36 hours, has that set back materially Any potential for a near-term peace agreement here?
Yes. Clearly, when you resume a shooting war, even if it's beneath the threshold of the full-on war that was launched by Israel and the US against Iran on February 28th, it's worth remembering this time Israel is not involved in direct fire against Iran nor receiving it. Nonetheless, this is the most intense exchange of fire since the ceasefire was declared there. And yes, it would be bound to retard talks, although it's worth remembering that President Trump in Ankara, when he said the ceasefire is dead, in his opinion, also said that his negotiators are welcome to continue trying. So I think that as long as the United States keeps the negotiations in play as far as it's concerned, this wouldn't be over entirely. We wouldn't see a full return to war. And I think what both sides is trying to do now, either side is trying to prod the other into an understanding of the defiance that they retain. The Americans have been especially troubled, at least to judge by what Trump said in Ankara, that having given the Iranians, as he put it, a reprieve for the week-long funeral rites of their slain supreme leader, the signaling out of that funeral, including marches today with huge banners, has been messages, open threats to kill Trump. So I think the messaging there has been very off-putting to him. There may be a degree of personal pique here. It would seem that both sides are jockeying now to assert themselves should there be a continuation of those talks.
Dan, when it comes to the whipsawing rhetoric between Washington and Tehran, is this a negotiating tactic or is it a signal of an escalation in fighting?
It's definitely an escalation in fighting. There have been fatalities, at least on the Iranian side, and it's worth remembering that whereas previously with smaller exchanges, the United States focused on classic military targets in and around the Strait of Hormuz, they've moved now deeper into infrastructure targets. There are reports of an attack near the Bushehr nuclear plant on the periphery, not the plant itself. Also, the destruction of a strategic train line in the northeastern part of Iran, not just used for commerce by the Iranians, but also used to bring mourners to Mashhad, which is going to be the final resting place of Khamenei, that slain supreme leader. So the messaging here is becoming more personal, more pointed, closer onto civilian targets or civilian infrastructure targets, though I imagine CENTCOM would argue that all of those targets struck had a military value. I think there's definitely an escalation there and a warning that the Iranians have a chance to get back to talks, to get back in line, to stop threatening shipping. It's worth remembering that their attacks on shipping in the Gulf is what set off this series of scores of retaliatory attacks by the US. But the Iranians so far have been mounting their own attacks, including what they call American targets in Gulf Arab countries. And just today, in the recent hours, missile attacks on Jordan. So they're also firing further afield, straying away from Gulf targets, westward toward a country that actually borders Israel. So that's worth watching, even though the Israelis now feel content and secure in not being part of this round of attacks. If those missile strikes by the Iranians go further west, end up endangering Israeli targets, we will see Israel entering the fray.
Dan, about 30 seconds left here. Is the feeling from your reporting that either the U.S. or the Iranians have real incentive to negotiate an end to this war, or are we just going to let this thing drag out?
I think the incentives will be the same as they were 3 weeks ago when they signed the MOU. The Iranians were feeling the pressure economically of not having free traffic in the Strait of Hormuz. So is the United States, at least through its allies in the region. And I hope and I anticipate that once the economic realities set in once more, Iran is not in a good position. It may be signaling defiance now around the funeral. It's possible that then when they take a more cold-eyed assessment of the economics of their situation, they might be brought about to re-enter the talks. That is yet to be seen. For now, they seem to be firing back to the best of their abilities, albeit not at Israel.
Dan, thank you so much. We always appreciate your reporting. Dan Williams, he's a reporter for Bloomberg News. He is based in Jerusalem, boots on the ground, as they say, getting the latest reporting from there. And again, it just seems like, you know, I was talking to an oil analyst earlier in Bloomberg Surveillance. I mean, they're kind of modeling out this is going to drag out for a while. And so you better, if the energy markets are kind of feeling that. And again, we saw oil up 6-7% earlier this morning. It's now down 1%.
Yeah, and the energy sector in the S&P 500 down more than 1%. Yep. And obviously the question what that means for inflation and the Fed moving forward.
Absolutely. So the oil market's saying, all right, we can get comfortable with this level of hostility, I guess. Again, equity markets slightly higher. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ just dipping into the red right now, trading lower by 35 points, down 0.1%. S&P 500 index a little changed, up a point. The Dow pushing higher, up 41, now up by about 0.1%. We are seeing a resurgence in tech companies. That is giving a rebound of sorts on Wall Street. Stocks also rising as oil steadies. Right now we do have West Texas Intermediate crude down by 1.3%, 72.55 a barrel on WTI. Brent, the global benchmark, 77.16 barrel of Brent, lower today right now by 1.1%. Again, the S&P little changed, up 3 points right now. The SOX, the Philadelphia Semiconductor Stock Exchange Index, ripping higher by 2.9%. Semis giving a lift to stocks. The VIX right around 17, and the 10-year at 4.55%. A 2-year currently at 4.17%. Gold up 1% to $41.18 the ounce. And again, West Texas Intermediate crude, $72.59 a barrel. Earnings news. PepsiCo trading lower after saying consumers pulled back in the second quarter, slowing its efforts to revitalize its North American snack business. PepsiCo down 4.1%. Rival Coca-Cola down by 1.1%. Also out with earnings, Levi Strauss, another consumer-facing company, up today by 1.5%, $24.74 right now for Levi Strauss. Meta's Mark Zuckerberg is setting an aggressive price with Meta's pay-to-use AI. Meta Platforms has unveiled a version of its AI model, Mars Spark 1.1, that includes a new paid tier for developers. Our Kurt Wagner spoke about it with Mark Zuckerberg. He broke the news, and he'll be along to talk about it right here, 11:53 a.m. on Bloomberg Intelligence. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Jess and Paul, that is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much for that. We appreciate it. Jess Metton sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. When you think about the war in Ukraine, it's gone on for so long, so much longer than people thought. And the second thing that one of the other things we think about is how drones have become a central part of warfare these days. And it looks like the folks in Ukraine, the Ukraine army, they're kind of leading the way on that. So, but there's opportunities out there for investors in technology, including drones. And Barry has some thoughts. She's a founder, managing partner at Threadneedle, joining us from New York on Zoom. And thanks so much for joining us here. Talk to us about your experience with drones.
Well, I almost became a sort of defense drone investor by accident, Paul. I invested a long time, over a decade ago, in a business called Drone Racing League, which had developed its own proprietary drone technology and was using it for consumer purposes, actually, sort of hosting races in places like the Brooklyn Navy Yard and leaning into the experiential, getting streamed on places ESPN. But part of that technology was spun out into a military applications drone business. It's called PDW. I'm an investor in that by extension. But that really prompted me to look at drones more broadly. You've seen the development in Ukraine, as you mentioned. And so I started to look at the next extension of autonomous, which would be into subsea. And if I go back in my past, I've done a lot in oil and gas. There's a business, one in particular, I've added to my portfolio, Oceaneering, which has hidden within it an autonomous subsea vehicle platform. They're called ROVs, these products, which just used to be used for checking offshore oil platforms. They now obviously have military applications and are used for trying to protect and test other critical infrastructure. The long way of saying, Paul, that the drone thesis or the autonomous thesis has its foundations in other places. And so I'm looking a lot more closely at folks like Lockheed Martin, which just this week announced the acquisition of Ultramarine to move into this subsea drone area. So it's a trend that's going to continue. I'm looking at Raytheon, I'm looking at General Dynamics and others who are looking at this space as well.
Another one, and I'm looking at, is AeroVironment. AVAV is the ticker on this. It's down about 5% today, down almost 40% this year. But I'm sure, as you know, about a week ago, it did improve its outlook. And part of that had to do with the Defense Department requesting a record $75 billion in drones for 2027. So how do you view a company like that? Is that something you're also investing in, or just in general with what the government's doing there as far as the outlook for that particular industry group?
Well, there's particular companies, but the industry more broadly that I'm looking at, the White House has actually come out and said that it is looking, along with the Pentagon, to try to develop domestic manufacturing of drones here in the United States. And if we take a look at what's going on geopolitically, we've seen cheap Shahed drones used by Iran for strikes in the Middle East. They've been used by the Russians as well. And what Ukraine has demonstrated is the ability to build up relatively quickly enough domestic manufacturing capacity to use its own drone production. And the US has looked at that. I think it's been inspired by that. The White House has been very clear that domestic drone supply chain, domestic manufacturing is a strategic priority, is looking to extend equity and loans to try and support the development of that business. That was reported in the Wall Street Journal last month. So I think there's a lot more to come for this industry. There has been sell-off, to your point, because the market has said we need to see the cash flow generation of these kinds of businesses. But this is one of the few industries where I'm more forward-looking than I am looking at the current free cash flow generation profile.
Speaking of forward-looking, what is your view, and as you talk to folks about the best way to play AI these days, is it still just buy the chips, or do you try to get creative and find AI-adjacent type opportunities?
You know, I, on this one, am not particularly inclined to get too creative. I just do think that there are going to be clear winners in the AI trade. If you take a look at someone like NVIDIA, I'm in NVIDIA, we all are de facto, whether it's through tracker funds or we've been buying it on the upswing. If you take a look at where NVIDIA is trading as a multiple of EBITDA or free cash flow, it actually seems fairly attractive. You know, at one point trading in and around Walmart, now being compared to the likes of Hershey. So I'm really sticking with the nuts and bolts. But one place I do think has been oversold, Paul, has been cybersecurity. I've been like a broken record on that here on your show. I think the demand for cyber is going to increase. I think the capabilities of cybersecurity is going to increase with these AI developments. And so that's one area that I do look at that's not picks and shovels, but is actually an application that I think needs more attention.
What about when it comes to Tesla? I know that's a stock that you're still keeping a close eye on. I mean, it's down 12% so far year to date.
Well, Tesla, I didn't really buy into. I did buy into GM and Ford, which has worked out pretty well. But I've always looked at Tesla, quite frankly, as one that's going to end up getting merged into SpaceX once SpaceX went public. I still think that is going to happen. I think there's going to be shareholder appetite to see Elon Musk have a true official convergence of his varying interests. So I look at Tesla and SpaceX in conjunction, one with the other. And I think as SpaceX's share price continues to adjust post that IPO, I think the idea of a merger is even more compelling.
Anne, thanks so much. Always appreciate getting a few minutes of your time. Anne Berry, founder and managing partner at Threadneedle. Get her thoughts on some of these markets and some of these technologies out there. I tell you, the auto industry is really in the midst of a years-long transition, evolution from internal combustion engines to EVs. And what I think a lot of us were told, 5, 6, 7 year transition. It's going to be a lot longer than that.
Right. And to Anne's point, what Ford and GM having going for them over Tesla that you might not have thought about before.
So it includes our good friends at Volkswagen. Europe's largest automakers under intense pressure at Volkswagen to slash costs and improve efficiencies, which has revived tensions between management and labor leaders. Let's get some more on this. Elizabeth Berman joins us here, autos industry team leader for Bloomberg News, joining us via Zoom from Hamburg. Elizabeth, talk to us about what's going on at Volkswagen, the huge German automaker.
I think you put it so well just now, just saying that the EV transition, we all thought this was going to be a fluid, fairly sort of hockey stick transition. And now what we're looking at is just taking a lot longer. And it's going to take a lot more painful adjustments for the industry to come through this. And VW, as a mass market as well as premium car maker, is right in the middle of this. So they're struggling to really come up with the types of EV models that consumers want to buy, although that has been getting better of late. And then secondly, they're really struggling in China, which for decades has been their major source of profits. That's really plummeted there because people are turning to domestic brands, people are just buying less because they're dealing with a real estate crisis. And on top of it all, they're now struggling also with tariffs put in place by the US. That's really hurting their Porsche and Audi brands because they do not produce any cars in the US, so they're having to pay these tariffs. And now they're saddled with these high-cost, labor-intensive, high-energy cost plants in Germany in particular, and they're trying to reform these. But this is where VW is very unique. They have this unique setup where you have this co-determination with the labor leaders, and at no other major industrial company do labor leaders hold as much sway as at VW. So any kind of progress on reforms, on restructuring is really hard won and usually gets watered down to a significant degree.
Elizabeth, how many factories and workers could potentially be impacted as Volkswagen, of course, as you know, Europe's biggest car maker, comes under those pressures to reduce costs?
So back in 2024, the current CEO, Oliver Blume, he managed to win an agreement for the company in Germany to reduce positions by 50,000. That's already quite a huge number, and put in context with VW's global number of employees of 650,000. And they didn't close plants at the time, though they had set out to say, well, we actually kind of want to close 4, but they walked that back, which I mentioned before. Decisions do tend to get watered down. Now that plan is back on the agenda, shutting 4 sites in Germany and doubling that number of cuts among employees to 100,000.
So, Elizabeth, you mentioned China. What is the situation in China for Volkswagen there? It just seems like China's really, the manufacturers are like BYD, they're really getting their act together and putting out quality products at very competitive prices.
Absolutely. So that's happening in China. If you're wanting to sell an EV in China, chances are that consumers will pick a local company over Western car makers by now. It's not just because they prefer the BYDs of this world. It's also that the Western car makers, including BMW, Mercedes, VW, they've just not had competitive products. We've covered this quite a bit within the team. We call it China speed. It's a word that is pretty commonly used in sort of the industry by now, but they're just able to churn out really attractive cars in much, much shorter timeframes. We're talking 2 years compared to historically 7 years among Western car makers, so they are catching up as well.
Hey, Elizabeth, we only have about a minute left, but talk to us about internally what's going on at Volkswagen and the struggle the CEO might have to try to push through some of those attempts to have deeper cuts.
I'll just mention one thing. Within the supervisory board, labor leaders hold half the seats. And then you've got the federal German state of Lower Saxony holding another 2 seats and certain veto rights on strategic decisions, among which are plant closures. Lower Saxony usually votes with the labor leaders because they want to protect jobs. Then you have the setup that I'm talking about, how difficult it's going to be to push through really significant moves.
Right. Elizabeth, thank you so much. We learned a lot there. Elizabeth Behrman, she is the autos industry team leader for Bloomberg News. She is in Hamburg, Germany today, so joining us there on Volkswagen. S&P 500 up at 19 points, about 0.25%. The NASDAQ's up about 0.25% as well. WTI crude oil is down $1 here, $72.45. So kind of turned from earlier this morning when it was up 5-6% on some of those heightened tensions there in the Middle East that have been reported over the last 24 hours. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. Tech is back, specifically chips. We're looking at the stocks now up by 4.1%. That, of course, the Philadelphia Stock Exchange Semiconductor Index, the Dow, the S&P, NASDAQ, all advancing. And NASDAQ had been swinging between gains and losses, but right now up 0.4%, as is the S&P, higher by 27. The S&P up 0.4. Dow Industrials up 121, up by about 0.2%. The NASDAQ 100 Index up 1.1%, and that SOX bears repeating, up now by 4.2%. All of this with the VIX back below 17, a 10-year at 4.55%, the 2-year 4.17%. Gold is up 1.1%, 41.22 the ounce, and oil stabilizing today. West Texas Intermediate crude down 1%, 72.79 a barrel. Federal Reserve Bank of New York President John Williams says that among the drivers of inflation in the U.S., he is most focused on demand driven by artificial intelligence. The next Fed decision, by the way, July 29th. Seema Shah is Chief Global Strategist at Principal Asset Management. She was the guest this morning on Bloomberg Surveillance.
We are expecting core inflation to peak fairly soon. So much, of course, does rely on the geopolitical conflict and the idea that energy prices do stay low. So I have to say that although we have this view that the Fed is not going to be changing policy rates this year, a lot of noise and uncertainty around that.
Seema Shah of Principal Asset Management on Surveillance this morning. As for energy, again, WTI 72.84 a barrel, down almost 1%. Oil majors lower as well. ExxonMobil down 1.9%. Chevron down 0.8%. ConocoPhillips lower now by 1.5%. Meta's Mark Zuckerberg is setting an aggressive price with Meta's pay-to-use AI. Meta Platforms has unveiled a version of its AI model, Muse Spark 1.1, that does include a new paid tier for developers, marking the first time that Meta has charged businesses for access to its models. Now, our Kurt Wagner spoke about that with Zuckerberg, and he will be along to talk about it at 11:53 a.m. right here on Bloomberg Intelligence. Recapping, S&P higher by 0.4%. Going to repeat, that's VIX right now just below 17. The SOX, the big story, though, surging 4.4%. Jess and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Jess Metton sitting in for Scarlet Fu today. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker Studio and streaming live on YouTube as well. PepsiCo reported some earnings today. The company said consumers pulled back in the second quarter, slowing its efforts to revitalize its North American snack business. Stock's down 4% today. It's off almost 5% year to date. Let's break it down, some of those results. We can do that with Ken Shea, consumer analyst there at Bloomberg Intelligence. Ken, what'd you learn from Pepsi?
Yeah, hi, Paul. Well, PepsiCo today pretty much gave a report that was widely expected, quite frankly. They hit their numbers, maybe a little bit above top and bottom line numbers. But what they said was that their game plan that they set out earlier this year to revitalize their businesses from a top line and a margin point of view is still in place, even though they hit a speed bump in the second quarter. And that speed bump is higher gas prices. No shocker there. People kind of knew, it was going to be a tough quarter for them to make, really good progress. Their big businesses, Pepsi Food, that's about a third of their sales, about 40% of the profits. It's the big enterprise they have there. It basically was a little short of expectations. Consumers pulled back a little bit, as you mentioned, despite the company's innovation efforts. And the company basically has to make up some of this lost ground, they said, in the second half, particularly the fourth quarter, to hit their numbers, which they reiterated.
Hey, Ken, talk to us about shrinkflation, because that's something that PepsiCo got knocked on a few years ago when they were having to boost some of the volumes in some of their chips, because, of course, it produces the world's most popular chips through its subsidiary Frito-Lay. But what are you seeing with that, and how does that translate to margins?
Yeah, hi, Jess. Well, yeah, I agree. Earlier in the year, and actually, let me take a step back. Since the pandemic, PepsiCo and many other big consumer companies had, because of supply chain disruptions and cost inflation in general and so on, had been pretty aggressive on the price increases. Unit pricing was up really, really sharply over the last few years. So earlier this year, with the help of an activist, they said, look, we need a better balance between volume and unit pricing. And so what we're going to do is going to roll back pricing a little bit and try to get volumes back in course. You know, and by doing that, not only is it a better balance and easier to manage, quite frankly, but you're helping operating efficiencies. You know, you need to have volumes moving along in a positive way to get the, you know, that fixed cost absorption kind of equation to work. So what they're doing now basically is they're getting back to a more balanced approach. At the same time, though, when they set that plan, that was before gas prices shot up. So the challenge they're going to have in the second half is they want to stick to their game plan of being more balanced with volume and pricing, but they're going to be challenged by having an environment where costs are back up again. You see the news today, and gas prices are back up. That, you know, the company's going to have some cost issues. How they reconcile that, it's a good question. We're going to have to wait and see.
Ken, what does Pepsi say about its portfolio of brands? Are they comfortable where they are? Are they looking to add brands? Are they looking to pare back on some of their brands? How are they fixed?
Well, I think PepsiCo is pretty comfortable. I mean, they made some acquisitions in recent years. You know, Skete chips. They had the Poppy probiotic sodas last year. They spent quite a bit of money on them too. I think their game plan really is three-pronged, Paul, to answer your question. First, they are setting out to have their products be more affordable. And that was the prior question. That is, you know, pull back a little bit on the unit pricing, smaller packaging sizes, maybe that's shrinkflation, but also on the list price side as well. Second, let's be more in tune with where the consumer's going in terms of their diets. And so they're making bigger bets on protein, fiber, what they call enhanced hydration. And they're doing that with a lot of new products featuring all three. And then finally, they're very well known to be in the grocery aisle and the convenience store, and they want to be better known as an ingredient in home preparation. So they want to bring Doritos into the kitchen. When somebody's making tacos at home, well, what about Doritos? That's certainly going to help. They've come out with something called the walking taco. You take a bag of Doritos and you can make your, ground beef and put in your tomatoes and other cheese and ingredients, and you have a taco which you can walk around with. It's a portable one. You know, it's kind of gimmicky, but it's doing well. They're promoting it, and you know, it's getting consumers to recognize these brands to be more than just something they pick up at the convenience store and grocery store.
So, Ken, are Americans buying back goods in large volumes? To your point, how does that translate when it comes to a lot of these consumer packaged good companies and their ability to raise prices?
Well, they're going to be challenged to hold prices, like I said, in the second half. I mean, PepsiCo did say, you know, we're seeing cost inflation picking up in the second half, and didn't say what they're going to do about it. But I would suspect you're going to see some more price increases in the second half. Now, having said that, one of the silver linings to the story for a lot of these consumer companies, including PepsiCo, is that they're getting refunds from the tariffs. You got to remember, back in April, they were deemed to be illegal, and these companies are getting nice refunds. What PepsiCo is doing about it is they're going to apply a lot of these proceeds to help them reduce costs, and you know, it may help them reduce the incentive to take price increases.
Ken, thanks so much. Appreciate it as always. Ken Shea, consumer products analyst at Bloomberg Intelligence, joining us from Princeton. Are you a Pepsi or a Coke person?
Dr. Pepper, since I'm from Texas.
Right.
So it's going to change it up there.
And you can get that around here.
Yeah.
You can get Dr. Pepper.
You can. It's not as easy.
Right.
But you can still find it.
Okay, because that's brewed in Texas, right?
Yes. Yeah.
Okay.
No, it's a big deal down there.
It's a big deal. Okay. Yeah. Again, I identify as a Coca-Cola person, but you put a Pepsi in front of me.
I feel like, you know, either way, you know, if you have pizza, burgers, I'll have a Coke or a Pepsi.
But Fritos are my #1 go-to kind of snack, so I'm all
chips.
down with that. Yeah. So looking at the markets here, I'll tell you the big change for me has been oil. Tom and I started here early this morning, and oil was up, 5, 6, 7% on the back. So there's a tax by the U.S. on Iran, renewed attacks. But now we've seen it kind of reverse course. We've got down about 0.6% for WTI crude oil, sitting right at $73 a barrel. Keep an eye out on that. S&P's up 25 points, the Dow's up 60 points, and the NASDAQ is up 106 points. That's 0.4%. 10-year Treasury yields 4.55%. This is Bloomberg. Good morning.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Jess Menton sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. Bloomberg's new monthly podcast series, Emerging, has launched today. It explores the many forces reshaping the world's fastest rising economies, from geopolitics and climate to AI. And hosts Menaka Doshi and Haslinda Amin lead insightful conversations on the risks and opportunities. In the first episode of Emerging, Bloomberg's Menaka Doshi spoke with Srikanth Velamakanni, co-founder of Fractal Analytics, and Ganesh Ramakrishnan, professor of ITT Bombay, on how India is trying to translate its strengths into a competitive edge in AI. In this portion of the conversation, they discuss whether countries like India need to pursue a frontline AI model. Let's take a listen.
The US is known for still maintaining a lead in frontier models. China, I believe, is the highest AI publication rate, highest patent output in China. South Korea has, I believe, the highest innovation density in terms of patents per capita. In the next 3 to 5 years, will India join that rarefied group? And if yes, for what accomplishment?
What I would like India to do is also have frontier status in terms of having frontier models, as well as having papers and patents, which, we already have the third largest number of papers, research papers published. Yes, quality of papers may be a different question altogether, but the number of high quality papers is also increasing at a very rapid pace. India has amazing talent. Once it's unleashed, I think you'll see progress. So whether it's papers, whether it's models, applications, all these metrics, India could be a leading player in the world.
Srikanth, why are you wishing a frontier model for India?
I think India needs a frontier model, because just think about
why.
From a sovereignty standpoint, we discussed that having a frontier model is crucial to that, not because we don't want to use other people's models, but we also need some models that are working on some of the most critical security sensitive areas like defense and other areas. So it's super important that India has that, because even if you look at the latest models like Mythos and Fable 5, why do we think they are a threat? Because they have the ability to persist and find multiple ways and get to the outcome and work for 10, 15 hours at a stretch without making a mistake. That is their power, right? If that can be done, it means that India's security systems can be under attack. So we need sovereignty from an AI standpoint. So these models have to be built.
And the frontier model capability will also extend to small models, by the way. It's a capability.
Sure. I just felt like it brought us full circle in the discussion around sovereignty.
And I would like to just add one more point, right? When I say adoption can be our big USP, it needs to translate into products. We cannot be doing body shopping in the name of adoption, right? Adoption should let startups build deep tech products, platforms. It should be platforms that lead to adoption.
All right, that's Bloomberg's Menaka Doshi speaking with Srikanth Velamakanni, co-founder of Fractal Analytics, and Ganesh Ramakrishnan, professor at ITT Bombay. Joining us now is Menaka Doshi, Bloomberg senior editor. Menaka, that was a fascinating discussion here. I'd love for you to just give us a sense of where is India, does it believe, in terms of developing AI itself and really being on the cutting edge?
Hi, Paul. Thank you for having me on the show. We are very, very far behind in this AI race, and I think if you look at the discussion that was at the center of this very first edition of this podcast, AI sovereignty, even there, the result would be, I would say, somewhat mixed. If you go by Jensen Huang's 5-layer AI stack approach, then India's score is very, very poor, right? We have energy, but we have no chips, all imported. A very small fraction of the world's data center infrastructure or compute capacity, no frontier model, but a strong startup ecosystem to build apps. So it's a lowish score there. The score improves if you widen the gaze to a broader AI ecosystem, right? Because then we can add to that one of the largest pools of engineers from across the world, and about 1/5 of the world's data that's produced in India. So I think the question that India is confronted with and India is trying to find sort of solutions to is, can data and talent give it the leverage it needs in this AI arms race of sort? And that is really also core to that edition of Emerging, which is a brand new podcast that we've just dropped today. You get a chance to listen to more of it.
We're excited for that. So to your point, can India become an AI power without producing a frontier model?
No, that's a pitch debate. I can't claim to have a response or an answer to that, but what I will lay out for you is both sides of this debate, right? And before I start, I should make the point that India is the second largest market for OpenAI and Anthropic. So, in terms of market opportunity, it's incredible, right? This is the world's most populous country. Now, some of the biggest tech personalities in India believe that we should build, or India should focus on building the app layer and not get too entangled in the resources required to build the frontier model, because India simply doesn't have those resources. Whereas others are very concerned, given the day and age we live in, that what happens if we are wholly reliant on Western models and one of those models is switched off. We just saw that happen very, very recently. Yes. So I don't think there's an easy answer to that. But what India is, the last bit I'll tell you is what India is experimenting with is a whole host of domestically developed small models and medium-sized models to try and compete and complement the frontier ones.
Menka, thank you so much for joining us. Menka Doshi, Senior Editor of Bloomberg News, with this podcast. Emerging is the podcast available now across platforms, including YouTube, Apple, and Spotify. For our listeners in the U.S., remember, you can hear us on satellite radio. Sirius Channel XM 121 is presented by Golden Crest Metals. Stay tuned. More coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, coming up in this hour, Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst covering retail. She's going to join us. Levi's reported some earnings. We'll break that down. I am a Levi's person, by the way. Daniela Serturi, Bloomberg Restaurants reporter, talked to us about Starbucks. They're going to tap AI to cut reliance on Microsoft and IBM software. So there you go. We'll break that down. Double short mocha, by the way.
Ooh,
at
really?
Starbucks. Yeah,
there we go.
That's how I roll. Jaewon Kang, Bloomberg News retail reporter. Mini mania grips U.S. companies, luring shoppers with tiny items. No idea what's going on there, but that'll be fun to talk about here. Dee Zhao, portfolio manager at Thornburg Investment Management, going to talk to us about this SK Hynix U.S. listing. It's going to be like $25 billion. It's huge. So we got a lot coming up. Also, we're going to talk to Kurt Wagner, Bloomberg senior reporter covering social media. He had a big interview with Mr. Zuckerberg of Meta, so we'll break that down as well this hour. Right now, let's go to Charlie Pella for a Bloomberg Business.
Hi, thank you very much, Paul and Jess. We are looking at an update right now. The Dow, the S&P, NASDAQ all advancing. Got to begin with chip stocks, specifically the SOX. Right now, it is up by 4%. Then, of course, the Philadelphia Stock Exchange Semiconductor Index, the SOX again ripping higher by 4%. NASDAQ up 0.5%. The NASDAQ 100 Index rallying now by 1.1%. Putting it all in context, the S&P up 31. That is a gain of 0.4%. Dow Industrials up 133 on the Dow, a gain now of 0.3%. This with the VIX below 17 now, a 10-year at 4.55%. The 2-year 4.17%. The 30-year 5.06%. Gold up $50 the ounce to $41.28, up 1.2%. A retreat for crude WTI now at $72.31 a barrel, down 1.6%. Brent crude back below 80, well below 80 now, $76.88 a barrel on Brent, down by 1.5%. Chip stocks surging right now. We do have the Dow, the S&P, NASDAQ higher. I mentioned the SOX is rallying 4%, but among some of those chip names right now, we've got Micron up by almost 7%. Intel Intel up 2.4%, and Broadcom now trading higher by 1.3%. As for the AI trade, Ann Berry is managing partner at Threadneedle Ventures, and right here on Bloomberg Intelligence, she told us she's not trying to get too creative with those AI stocks.
But I just do think that there are going to be clear winners in the AI trade. If you take a look at someone like NVIDIA, I'm in NVIDIA, we all are de facto, whether it's through tracker funds or we've been buying it on the upswing. If you take a look at where NVIDIA is trading as a multiple of EBITDA or free cash flow, it actually seems fairly attractive. You know, at one point trading in and around Walmart, now being compared to the likes of Hershey. So I'm really sticking with the nuts and bolts.
Ann Berry of Threadneedle Ventures, and again, NVIDIA shares, they are trading lower now by 1.4%. Meta Platforms has unveiled a paid AI developer model for the first time. Our Kurt Wagner broke the story. He spoke about that with Mark Zuckerberg, and he'll be along to talk about it at 11:53 a.m. right here on Bloomberg Intelligence. Recapping, S&P up by 0.4%. I'm Charlie Pellet, Jess and Paul. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Just met sitting in for Scarlet Food today. Scarlet Food will be back tomorrow. Her people are telling me, so that's a good thing here. We are here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. We had some earnings out from Levi's. They reported some number here. The outlook, less than some investors had hoped. Let's check in with Mary Ross Gilbert. She's a senior equity analyst covering retail for Bloomberg Intelligence. She's based out there in our Los Angeles office. Levi Strauss Company. Let's go to stock movers first. That's right. Thank you, Mark. Look at do stock movers first. And we can do that with, we're sitting here in our studio. We can do that with Christine Aquino. Christine, what are some of the stocks you're looking at here in the marketplace?
All right, Paul, we got to take a look at Micron because they have a lot of money to spend. So Micron shares, ticker MU, those shares are up more than 7% at the moment. And that's because we got news from the company saying that it plans to increase spending on new plants in the U.S. to $250 billion. They're going to put $3 billion towards securing domestic supply chains for semiconductors, including $500 million in strategic financing for a company called Global Wafers, which is a Taiwanese silicon wafer supplier. And so all of this is part of their efforts to, carry out spending through 2035 and support their goal of producing 40% of their DRAM components in the U.S. a decade from now. So it looks like they're well on their way to doing that.
Let's turn to the worst performer in the S&P 500 today, Paramount. What's happening?
Paramount, yes. Paramount, PSKY is the ticker, and those shares are really underperforming today. They are down 6%, actually moderating a little bit from earlier declines of about 9%. That would have been the biggest drop since early December, but still very much in the red. We did hear from Arete Research downgrading Paramount Skydance to sell from neutral and also reducing its price target to the lowest on the street, a mere $2 versus its current trading price of around $9. And so analysts very much worried about the amount of debt that they're going to be saddled with should the merger with Warner Brothers Discovery go through. And of course, that bid is set to close out in September of this year and would create, according to Arete Research, 6 turns levered U.S. media stock with $86 billion in gross debt. So a lot of debt. Quite worrying for a lot analysts.
Yeah, 6 times net debt to EBITDA is too high. I mean, the market prefers for these companies 3 to 4 times. So, that's going to be a tough one there. So, all right, one more.
Let's take a look at PepsiCo as well, Paul. So ticker PEP, also not doing well today. So those shares are down nearly 4%. We did get their second quarter earnings. Not a good look for the consumers that they are catering to. PepsiCo saying that consumers pulled back in the second quarter, primarily because of higher gasoline prices. They're specifically seeing a decline in revenue in the North American food business and a flat volume even after they cut prices by as much as 15% in some brands. And I think the problem that they're having is a lot of their brands like Doritos, Lay's, even Gatorade, all have competitors, both in terms of the home brands in the stores that they're selling and also just kind of cheaper alternatives. And so that's really the problem that CEO Ramon Laguarta was highlighting. Consumers just doing much worse than they anticipated, hence the poor results.
And they called out on the call the higher gas prices just taking money out of consumers' pockets for some of those discretionary spending. So that's another company, another part of the economy where the higher gas prices were impacting businesses. Now we've got oil coming back down again. We'll see how that translates into gasoline prices, which have come down, obviously, off their peak. Christina Aquino, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports in the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. As I said, let's get back to Levi Strauss. They reported some earnings here. Mary Ross Gilbert, she's a senior analyst covering all the retail stuff for Bloomberg Intelligence, joins us. Mary, talk to us about Levi's. What did they disclose on their earnings release?
So yesterday they had great numbers, right? Their organic growth was up 6%. That was about 200 basis points better than what analysts were looking for. They were looking for 4%. And their guidance, they raised their guidance. And it's really due to the first half performance. So their guidance now for organic growth is 5.5% to 6%. It was previously 4.5% to 5.5%. They are seeing strength across women's. Women's was up 11% in the quarter. Beyond Yoga, which is their small brand but growing fast, was up 16%. Asia up 12%, and Europe, DTC, up 7%. But wholesale is the biggest part of the business, and so you have to really look at the first half because you will have fluctuations in the quarter based on shipping. That was up 9% in the first half. So with all the strength that they're seeing, raising guidance, there's still upside to their guidance because it's really based on the first half performance. So what they're guiding into the second half is really conservative, and that's their objective. They really want to beat. But what this says is that the brand is relevant around the globe across income groups. So for example, they have the Levi's signature brand label, which is in Walmart, and that was up in the first half, up high single digits, right around 8 to 9%. And they're seeing that, being high single digits to low double digits in the second half. So again, no weakness anywhere with the consumer, even having, at the low end. And then at the high end, their blue tab premium denim doing very, very well. But also non-denim, their non-denim bottoms, which really allows them to increase their addressable market, was also up strong in the quarter. So they're really gaining traction, and there's just more to go.
Well, looking at its stock, LEVI, the ticker, up about 2% today. And even on a year-to-date basis, that stock is up about 20%. If you pull it back, though, the last 5 years, down about 10%. So obviously trailing broader benchmarks in that span of time. What do you think moving forward is the biggest thing that obviously shareholders want to hear from them as far as improving when it comes to the outlook for that kind of growth in their margins?
Yeah, so it's a good question. I mean, first of all, when you look at the margin expansion that they're looking for the full year, they did raise estimates a tad bit, but it was actually below what consensus is looking for on the margin side. So that could sort of explain there was a little bit of volatility after their earnings. Other than that, once again, if you look at the margin expansion they're experiencing in Europe, they have a global enterprise resource program that they're expanding throughout the globe. That they're going to complete that in 2027. So in Europe, where they sort of started it, it's complete, and we saw their operating margin expand 400 basis points. That was partly due to lower distribution center costs too. So I think that you're really going to see margin expansion grow, and again, potentially faster than the top line. So I think there's really a lot of traction here because women's is still a smaller part of the business, versus men's. So that's why you're seeing double-digit growth there, but also across categories in tops and wovens and outerwear. So, and then with the campaigns that they have going with the World Cup and the logo that they had to cover up at Levi's Stadium in San Francisco, that gave them a great opportunity from a media campaign that actually drew over 1 billion of impressions. Wow. So all of that is really resonating with consumers, and I really see upside, and I think that could really shift the performance in the shares over time.
Mary, thanks so much for joining us. Always appreciate it. Mary Ross Gilbert, she's Bloomberg Intelligence Senior Equity Analyst covering the retailers there. Levi Strauss out with some good numbers there, stock trading higher. Interesting story on the Bloomberg terminal today from our good friends at Starbucks. Starbucks is developing in-house tools with the help of artificial intelligence that could replace some software applications it now buys from companies such as Microsoft and International Business Machines. Let's get some details here. Daniela Sartori joins us here, a restaurant reporter for Bloomberg News based in Chicago. Daniela, talk to us about Starbucks and kind of what they're trying to do from a software and AI perspective.
Sure. So really what they're doing is instead of reflexively buying out, going out and buying software, now what they're trying to do is look at, okay, does it make sense for us to actually build some of these applications in-house? They customize a lot of this software anyway. Just imagine what it takes to really, personalize your order at Starbucks. Well, for example, the POS, the point of sale system, has to be able to reflect that, so baristas can actually ring up your order. And so they're like, okay, if we're going to customize the software anyway, does it make sense to build it? And we're in an age which, with artificial intelligence, it's just that conversation just gets a little easier because AI can help.
I wanted to point out, too, because software stocks are actually lower on the back of this announcement. So if you're looking at IBM, that's down about 2%. The ticker symbol is IBM, of course. And then ServiceNow is flat, but marginally lower. And then Salesforce down about 2%. CRM is the ticker on that. So why the dynamic there? Obviously, is it more just because of the competitive landscape?
So this move by Starbucks feeds into this broader conversation in technology space about whether with AI, customers or maybe startups can just, build tools that can replace some of the software that is now sold by some companies like IBM and Microsoft. So basically, I think with Starbucks, what we're looking is at a case study of this actually happening inside a company. So it's really fueling sort of this ongoing conversation in this space, if that makes sense.
Yeah, this is what the market's been concerned about, and we've seen the sell-off in some of these software names and software as a service names because people are saying, boy, some of these things can be kind of done with AI and maybe cheaper, and and that's kind of what we're seeing in this story. So, I mean, in your story, Daniela, we see that Starbucks is spend about $400 million a year on software alone. Are they thinking they can materially reduce that?
They can. I mean, their chief technology officer has outright said, as we reported, that there are opportunities to cut spending in software. This one part of Starbucks technology organization called Enterprise Technology is looking to cut their spending by about $10 million by the end of this fiscal year, which for Starbucks ends in September. So they're definitely basically, okay, taking a step back and saying, all right, first of all, let's review every contract and service, make sure that we have the best price there. And are there places in which it actually makes sense for us to build our own product with the help of artificial intelligence? So it's definitely something that they're taking a second look at. Obviously, this is also part of something broader that Starbucks is doing, which is they are going through a turnaround and they are looking to cut costs. So this review is also part of that. And then we have AI helping make that a little bit easier.
Of course, as you know, the turnaround with Starbucks, this has been ongoing for the last few years now. What kind of timetable have they laid out to shareholders?
In terms of the turnaround itself?
So
they did issue for the first time some, financial goals for 2027, 2028. If we recall when Brian Niccol came in as CEO in 2024, he actually pulled guidance basically to just totally reset. And we actually have seen that the plan that he has implemented, generally speaking, has started to yield results. Their sales growth has picked back up, and he has really focused on things like customer service, on just having products that people really want to buy, and they've also started to remodel stores. So basically, the tech is sort of the backdrop to all of this, right? Like a lot of the tools they use are just things that are behind the scenes to help them manage the business.
All right, Daniela, thank you so much for joining us. Daniela Sartori, restaurants reporter for Bloomberg News. I've noticed at my Starbucks, Route 35 in Wall Township, New Jersey, they've updated the decor. So they did do a refurbishment, some new furniture. Going back to some of the little things like put a happy face on your cup or something.
Oh, yeah, that really makes your day.
Putting your name on your cup or something. In addition to the sticker, which makes it, I'm sure the sticker makes it much more efficient, and people aren't getting the wrong drinks and so on.
I was actually at one recently at an airport, and they have, of course, a bunch of new different kind of crafty type of coffees. Didn't really feel like coffee, but they have also like protein kind of options too, which like I didn't get that one, but it's fine.
Yeah, I just keep my first Starbucks I went to was waiting to go in to see Janice Funds in Denver, Colorado.
Really?
This is 25 years ago. I walked in there and had no idea what I was doing. No idea how to order, what are the sizes, what are the things. I mean,
now look at you.
But I had time to get, now I'm a pro. They know me there. S&P up 35 points, the Dow's up 90 points, and the NASDAQ up 160 points. This is Bloomberg. Good morning.
headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher in this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors Turning to gold for stability? Get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. An update for the Dow, the S&P, and NASDAQ. We are seeing a resurgence in tech companies, and that's providing today's rebound. Got to begin with the stocks as semiconductors rally now by 4.5%. Chip stocks higher. NASDAQ up 0.7%. The NASDAQ 100 index rallying by 1.3%. Putting it all in context, S&P 500 index up 40, a gain there of 0.5%, with the Dow Industrials up 147 now, a gain there of 0.3%. The VIX just above 16, a 10-year at 4.54%, the 2-year 4.17%. Gold up $50 the ounce, up 1.2%. A retreat for crude, now down 1.7% on WTI, 72.28 a barrel. Brent 76.90 a barrel of Brent right now is trading lower. We've got Brent crude lower by 1.5%. Among oil majors, ExxonMobil down 2.3%, Chevron down 0.8%, ConocoPhillips down 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Jess and Paul, that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Jess Menton sitting in for Scarlett Fu. I'm Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Heightened, I guess, escalated tensions in the Middle East with some attacks on both sides here. So what would you expect? Oil to be higher, but it's not. Oil's actually lower here by about 1.7%, as Charlie was just reporting. That's bringing bond yields in as well, about 3 basis points, and stocks higher. So go figure. Maybe the market's kind of getting used to what's going on out there in terms of these crosswinds. But let's check in with somebody who does this stuff for a living. He's paid to think about these big macro issues and how they impact markets. Peter Cheer, head of macro strategy at Academy Securities, joins us here. Peter, this morning I woke up and oil was higher. I said, okay, that kind of makes sense, and people were a little jittery, but we've kind of reversed course here. Is that just a sign that this market's kind of getting used to the fact that this might be a longer type situation in Iran?
Yeah, I think everyone's kind of accepting that there are going to be these peaks and valleys or ebbs and flows, but ultimately both sides want oil flowing. Both sides will get what they want. This is posturing. People want to have better negotiating stances. Probably not a coincidence that the president was at NATO when we flexed our muscle globally and showed what we could do again. So I think that market's kind of playing it right. If anything, I think equities did a good job ignoring it for the past 2 days. Bond markets wanted to sell off on higher oil. I think the bond market made a mistake. Oil is kind of a secondary story unless we're going to see a real serious escalation, and we just don't see that being in the cards.
Hey, looking at single stock volatility versus what's happening on an index level, that would tell you that at least option traders aren't thinking that this is macro risks right now. It's more idiosyncratic because, of course, when you see lower correlations right now leading into earnings season, that typically is what happens. How do you view over the next month? Because obviously next week we'll have CPI, Kevin Warsh will be on Capitol Hill, and earnings season all kicks off on the same day on July 14th, next Tuesday. And then, of course, the Federal Reserve decision at the end of the month on the 29th. So over the next month, what do you think is the biggest catalyst here?
So I still think we're trying to figure out to me, it's two economies, right? The AI-driven data center compute build-out economy and the rest of the economy. And that's been firing on all cylinders, right? The data centers, compute's just being built everywhere. Prices are able to be, ramped up, and companies are accepting it. I think we saw some of the first cracks last Thursday when, for the first time, Zuckerberg said Meta might actually sell some excess compute. And we went from a world where the only mistake you could make is not having enough compute to maybe being able to sell it. To me, that's the real question here is, yeah, we know the next 6 months, year are all looking good on this. But will people start questioning where they want to be 2 years from now? That, to me, is the biggest risk to the market, is some change in compute. And it is kind of funny, though, you point that out. And some of these compute kind of companies have already sold off very hard. So some of that is getting priced in the market, but I think there's more risk, and I don't see how the rest of the market or the economy does well if the compute starts fading. That compute spending is such a huge driver.
So, Peter, we're going to come into, as Jess mentioned, kind of the earnings season here. Boy, the first quarter earnings were so good, and that arguably was what's been driving this market all year. What are your expectations for the second quarter?
One, I think we just went through such a quarter where everything was so good, people looked at it. And it's funny, you just talked about the idiosyncratic risk, right? What I did notice is the earnings we're so driven by a handful of companies, right? If you look at the index level earnings, they're awesome, but strip away those companies, the rest did not look as good. So again, I think it's going to be harder to win through the earnings game. I think people are becoming, a little bit, hey, we're back at, record valuations. We need to see this. It was 2 weeks ago, the one company, I believe it was Micron, did give clear indication that they have orders locked in for years to come. I think that's what's going to need to be done, right? It's not just this quarter's earnings. It's really going to be, what have you sold next year? What are you selling 2 years from now? And how certain are you that those sales are coming through? And again, it's going to be very driven by compute, I think.
And toward the end of the month, as we were talking, not only the Federal Reserve decision, but it comes the same week as a lot of those big tech earnings as well, and the hyperscalers. What are you expecting to hear from them when it comes to that AI spending and CapEx? And how do you think markets could potentially react, to your point, when you're looking ahead to the future here?
I think we expect, and it's built in, that all is, going well, sales are on pace, that there's no slowdown in the need for compute. So I think anything that kind of, puts a doubt in there will have a disproportionate effect. And that's where I do think market structure has been very helpful to this industry on the way up. I keep looking at SOXL, so it's the triple leverage stocks ETF. It's 20 some odd billion. That has been amplifying the moves in both directions, and I think it amplifies them mostly on the way up, but it will amplify on the way down if we get any cracks. And you start looking at this. I'm having a lot of conversations with hedge funds. You get news that looks like it should be a 0.5% to 1% move day, and it becomes a 2 to 3%. And I think that's a lot to do with market structure. So I think right now we're probably a little bit more susceptible to the downside, though it would still help on the upside. And all of this, I think, when we're going to start getting inflation data, I think Warsh is going to be able to say, hey, inflation's coming down under me. I think he did a phenomenal job addressing inflation. I really think we're going to see deflation, inflation decline. Everything that's going on in oil is generally helpful to that. But also, I think he's going to start discussing some of these other metrics like Trueflation, Zillow rents, things that actually don't say inflation's above 2%. I think that's going to be the key to his success, and why I think the market's really mispricing. Everything's thinking he's hawkish and we're going to get hikes. I think he's still dovish. He just needs the excuse, and inflation and how he looks at inflation is going to give him that excuse to be dovish again soon. Probably not this meeting, but soon.
Peter, thanks so much for joining us. Peter Cheer, Head of Macro Strategy at Academy Securities, joining us via Zoom from New York City. Story that's getting a lot of read on the Bloomberg terminal. Mini mania grips U.S. companies luring shoppers with tiny items. Think like, those little liquor bottles that you get like on an airplane. Right. Now you can get them like the liquor store.
I saw them at Morton Williams on the West End, and it was like 3 for $3 for Fireball.
Yeah, exactly. I don't know what's going on.
I didn't purchase any, but
we've got somebody who does know this. Jaewon Kong, Bloomberg News retail reporter. Jaewon, what is Mini Mania? What's going on there?
Yeah, so we've been noticing a pretty wide range of products come out with mini versions that are not subtly smaller, but they're visibly smaller. And we've seen these, pop across various products like tote bags, storage containers, milk frothers, carpet cleaners, as you mentioned, alcohol as well. And so they're typically cheaper than the standard versions, and many of them have been doing quite well among shoppers.
What was the most interesting thing that surprised you when you were working on this story?
Yeah, we spoke with Lowe's, and they have mini buckets that come in different colors, and they were talking about how they started noticing it and how they're thinking about it, which I thought was really interesting. They actually coined the term mini effect internally, and it's a nod to the long-standing lipstick effect theory, which of course points to how consumers pursue affordable treats, but buy fewer big purchases when the economy is volatile or certain. And so I thought it was a really interesting point of, pointing to a consumer who's becoming, more cautious about longer term commitments as inflation and also job market worries persist.
What are the retailers saying, or the consumer products companies saying? Is this kind of a fad? Is this something that they think might be a little bit more longer term? What are we hearing from some of those producers?
Well, right now, these items are helping drive traffic and transactions. And, like with all trends, we'll have to see how long they last. But in the case of Lowe's, for example, they're noticing that people are buying other products when they buy these mini buckets, stuff like flowers, cleaning supplies, even appliances. And a lot of experts, sort of predict that this is here to stay as people, kind of navigate through various macroeconomic uncertainties.
What's next for your stories? Are you going to do a follow-up on how this all develops?
Yeah, lots to look at and consider, and we're always looking out for new trends. So if you guys see anything in stores that you're shopping, let us know.
Yeah, maybe Morton Williams.
Exactly. What are the economics for these items? I mean, if you're making a mini this or mini that, are they still trying to put in the same profit margin?
Well, so generally speaking, for companies, if you're, saying items in bulk versus selling them individually, the latter is, better in terms of profit. So that's one element of it. I think right now for a lot of these companies, they are searching for additional foot traffic, additional transactions, because people are, and have been so sensitive to higher prices, especially higher gas prices. And so these are coming at a time when, they're looking for that extra, bump and help, and they're, providing it right now.
What do you think this tells us, I don't know, bigger picture as far as what this means for inflation and the economy?
I think it points to the fact that, the U.S. consumer, they have been spending and they, they're looking for promotions, discounts, but overall they have been spending. I think what we're starting to see now is when it comes to bigger purchases like financial commitments, obligations, those are areas where they're becoming a bit more wary and cautious. And so instead of pursuing those types of purchases, what they're doing instead is buying things that cost less and are literally small. So they have, less buyer's remorse, risk attached to it. So I think it, shows that people want to spend. They kind of want to reward themselves for being really cautious, but also don't really want to commit, the way that they have been.
Okay, Jaywan. Fascinating story here. Again, it is the Big Take story on the Bloomberg terminal and at Bloomberg.com/Big Take. You can find it there. Mini Mania grips U.S. companies luring shoppers with tiny items. It's a thing. You weren't imagining it. Yeah. Jaywan Kong, a retail reporter for Bloomberg News. Yeah, so you kind of get those little items, and they were already cutting back on portions, and
they were.
The restaurants have been doing that recently for the higher
the biggest
cost.
Trader Joe's in the country actually temporarily closed for renovations near me. So now everybody's
right?
So now we're trying to go to another one, but I'm sure I'll look for those tiny items there.
All right, very good. All right, looking at the markets here, a little bit of green on the screen here. The S&P is up 40 points, the Dow's up 127 points, and the Nasdaq's up 185 points at 0.7%. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ solidly in the green, all being led higher by chip stocks. We've got the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 4.5%. NASDAQ 100 Index up 1.4%. The NASDAQ Composite Index up 0.8%. A resurgence in tech powering that rebound for the stock market. S&P up 42, up 0.6%. Dow lagging up 0.3% right now. All of this, though, with the Mag 7 Index in the red, slumping by 0.5%. Again, the SOX bears repeating, up 4.5%. The VIX just above 16, a 10-year at 4.54%. The 2-year 4.17%. Gold at $41.30 the ounce, up 1.3%. West Texas Intermediate crude moving lower again, down 1.9% right now to $72.15 a barrel. Brent, the global benchmark, at $76.77, down by 1.6%. And Bitcoin, 62,934 per token, up by 1.4%. Again, we've got the Dow, the S&P, and NASDAQ all advancing. Meta Platforms has unveiled a paid AI developer model for the first time. Our Kurt Wagner spoke with Mark Zuckerberg about it. Kurt will be along to talk about it right here on Bloomberg Intelligence coming up at 11:53. Up next for Wall Street, earnings out of Delta Airlines. That'll give us a glimpse into the health of the consumer and corporate spending on travel. Today, we're looking at airline stocks moving higher as oil declines. Delta shares up by 2%. Rivals United up 2.4%. American up by 3.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Jess and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Jess Menton sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio and streaming on YouTube as well. Well, chipmaker SK Hynix is telling investors it intends to price its U.S. listing at $149 per American depository receipt. That's according to people familiar with the matter. Despite recent volatility in the Korean memory chip makers' shares, at that price, it's a big deal. It would raise around $26.5 billion. And it would be the largest ever first-time share sale in the U.S. by a foreign company, topping Alibaba Group Holdings' $25 billion debut. So a lot going on out there, and this thing's slated to trade tomorrow. Let's break it down a little bit with somebody who's familiar with that part of the world. Dee Zhao joined as portfolio manager at Thornburg Investment Management, joining us via Zoom from Santa Fe, New Mexico. Hey, Dee, I think a lot of our audience, our viewers, our listeners probably aren't too aware of SK Hynix. Tell us about this company and why you think it's going to be, why it's coming to the U.S. markets.
Sure. SK Hynix is one of the 3 largest memory maker globally. And arguably, they're probably one of the leaders in memory, as they have the dominant market share in HBM, which is used in AI chips, and number 2 market share in DRAMs. And the memory players right now, all 3 of them, Samsung, Hynix, and Micron, are in the midst of this global super memory super cycle. So they're benefiting a lot from this AI demand, driven demand.
Well, looking at this, as investors have a new way to buy into this memory boom, how are you talking to clients about this, and how are you suggesting that they position after such a big run already in memory stocks?
Yeah, we're still positive in memory. So we see this cycle as much prolonged versus previous cycle. So in the past, memory has been seen as very commodity-driven, cyclical business, and we tend to think about them in sort of 3-year cycles. But because this AI boom right now we're experiencing, we think this memory cycle going to last much longer and also has much higher margins. For example, in the past cycle, the peak margin for all 3 memory guys, they were generating 40-50% operating margin. But today, all 3 of them are generating 80% operating margin. And we expect this kind of margin going to last for at least another year or 2.
One of the challenges for upgrading and investing in AI is just getting enough memory chips and a shortage here. Tell us how the industry plans to deal with that going forward.
Yeah, so this is a great question, Paul. And in the past, we always have this problem of, when we see high demand from the customers and then the memory players expand capacity. And when the down cycle comes in and then you see a significant earnings derating. So this time around, because the demand has been very super strong, and on the supply side, we have a very clear visibility on, all three of them a capacity expansion. So, all three of them are together expect about adding about 100,000 wafer per month per year. That's about 14-15% of a capacity overall. It sounds a lot. It is a pretty aggressive target, because if you think about Hynix alone over the last decade, they only added about 25,000 wafer per month per year. So, but even with that, if they can achieve that target, they're still not going to meet the demand. So we think the AI demand alone will add about 20% growth every year over year for memory.
How do you think this ADR listing will broaden SK Hynix's shareholder base and the potential to narrow the company's valuation discount relative to Micron? Because Micron was one of the best performers in the first half of the year, second to SanDisk, and Micron up over 250% so far this year. So how does SK Hynix benefit from this?
Yeah, that's a great point, and that's also kind of one of the reasons why SK Hynix is trying to do this, right? Because, out of the three memory players, U.S. domestic investors, especially the retail investors and SMA investors, only have access to one of them, which is Micron, and the top 1-2 players, SK Hynix and Samsung's, we don't have access to those stocks. So having SK Hynix listed ADR in the U.S. broaden the accessibility for investors in the U.S.
Is SK Hynix they're going to do this U.S. listing, get access to a fresh pool of capital? How much capital needs do you think this company is going to need in the coming couple of years? Is this one of these tech companies that's going to keep coming back to the equity and debt markets, do you think?
So like I mentioned, they're actually making a lot of money, and they're making a lot of cash flow. So they actually have their net cash. They have enough cash to do capacity expansion. So let me put some number behind this. So SK Hynix does about they work on the 3-year period. So right now, the current 3-year they're working with right now is 2025 to 2028. We think they're going to generate about 420 trillion won, and that's about $300 billion US. The previous 3-year cycle, they generate about 5 trillion won in free cash flow cumulatively. So they are making significant cash flow. And this is just not isolated to SK Hynix, and Samsung Electronics and Micron is doing the same thing. So we don't think they're gonna come to the market asking for money for capacity expansion, but more sort of providing access to investors and perhaps like what Jess was saying, that narrowing the valuation gap versus Micron.
We only have about 45 seconds left, but what's the biggest challenge here, particularly when it comes to expanding manufacturing capacity?
Time, right? So, building a fab takes a lot of time. It's, minimally 3 years. So we actually have pretty good visibility on all three players' capacity expansion roadmap. I would say the biggest challenge for the stock for all three of them is it's not just supply, it's more on the demand side of things, right? So as long as this AI CapEx cycle continues, we think memory cycle will continue. But if for whatever reason demand start to soften, and that might be the biggest challenge for the stocks.
Dee, thank you so much for joining us. Really appreciate it. Dee Zhao, Portfolio Manager at Thornburg Investment Management, giving us some breakdown, some color on SK Hynix. Again, the ADR listing will begin trading tomorrow here in the U.S. So again, looking, and they raised approximately $26.5 billion with this offering here in the U.S. I'm looking at, for this year, free cash flow, $100 billion. This is good.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Jess Menton sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We are streaming live on YouTube as well. Some news from Meta. Meta Platforms unveiled a version of its AI model dubbed Muse Spark 1.1 that includes a new paid tier for developers, marking the first time Meta has charged businesses for access to its models. Let's get the more details from Kurt Wagner, senior reporter covering social media for Bloomberg News, who just sat down with Mark Zuckerberg, Meta's CEO, and had a wide-ranging interview. Kurt, thanks so much for joining us here. Talk to us about what you and Mr. Zuckerberg discussed regarding Meta's AI strategy here.
Yeah, well, I mean, the motivator behind the interview was this release that you just mentioned, the Muse Spark 1.1. And we spent a good chunk of time talking about where Meta stands in the AI race right now. I think the prior models that the company has released have really been seen as sort of second tier behind the OpenAIs, the Anthropics, and even the Googles of the world. I think Mark Zuckerberg admitted to me in our conversation that they're still trailing Anthropic and OpenAI in a lot of ways, but he was very proud that this new model benchmarked better than the Google models. And he said this was sort of a milestone for them to you know, in his words, kind of deliver something that's a higher quality than what Google's doing. And, you know, they are racing to try and develop super intelligence. They're racing to have the best model on the planet. They have another one coming. It's called Watermelon. I don't know exactly when that's going to be, but he talked openly about how that is going to, in his mind, push the frontier of AI development and progress. So, you know, a big part of the conversation was Muse Spark 1.1 and what that means for the business. But a big part of it was just where do they stand and does he feel like things are moving in the right direction? And he feels very confident about where they are.
Hey, Kurt, looking at Meta's stock, META is the ticker, it's marginally higher now, about 0.4%, but it had been lower this morning on the back of some of that news. Why do you think that is? Obviously, the stock is down this year, but of course, it was on such a tear in recent years after a lot of those job tranches, and obviously its move into AI and other vehicles there. What do you think's going on as far as how shareholders are viewing this?
Well, the narrative around Meta's AI business for the last 6 months or so has been that they're spending a ton without a clear path for recovery. Like, where's all this money going to come back into the business? And in the last couple months, they've tried to answer that in several ways. They have a consumer chatbot subscription that they announced. They're going to be selling access to AI agents for businesses. Of course, there's today's news where they're going to be selling their model to developers via this API. And then we had a great story last week on Bloomberg about the fact that they're also exploring a cloud business, taking some of that compute capacity that they've acquired and maybe reselling it or using it in other ways that aren't just for its own products. And so I really think we've started to see a potential business shape up for them on the AI front in the last 2-3 months that didn't exist before. And I think you're starting to see the stock slowly, you know, reflect that people are saying, okay, they're spending a ton, but now we have a better sense of how they're trying to make money from this that we didn't necessarily know a few months ago.
So this seems to be this whole AI chase, if you will, by the technology space in general. It's just iteration after iteration after iteration. Where does Mr. Zuckerberg think Meta is in that game here? Is this something that they can continue to invest in, continue to improve in?
Well, one of the things that I asked him about was, why do this, right? Like, there's so many companies. There's several companies that are kind of racing for this, what you would call frontier AI model, this tip of the iceberg, tip of the spear. And I'm like, why spend all this money when, you know, you could essentially license some of this technology from someone else who spends all the money, right? Maybe make it cheaper. And his answer was, look, if we don't control the technology, we're at a disadvantage, because their goal, Meta's goal, is to build personalized assistants for everyone in the world. So they want every single person to be able to open their phone or put on their smart glasses and have that personal AI assistant there. And if, you know, they're relying on OpenAI's technology or Anthropic's technology, they just can't control what the priorities are. Mark Zuckerberg is big on that. He's big on making sure that no other companies have leverage over Meta. And so I think for him, he's saying it's worth the spend because we can then, you know, build the model that's going to do exactly what we want. We don't have to hope that someone else does it for us. And so for him, it's worth throwing all this money at that problem, even if there are going to be several competing models, simply because he wants that control moving forward.
Of course, to your point, critics have questioned whether or not the pivot will end up paying off. What did he tell you as to why he thinks it will?
Well, he thinks that this is the most exciting technology that has ever showed up in his lifetime. And so he imagines this world, what they did with social media in some ways is a similar strategy. They made it free, right? Facebook and Instagram and WhatsApp, those are free tools. Obviously, there's advertising. You do sort of pay, if you will, by giving Meta access to your attention and time with your data. But ultimately, he's saying, hey, we're trying to make a tool free, give it to as many people as possible, and figure out how to make money from it later. And I think that's sort of what he sees here. Is he goes, hey, everyone's life will benefit from AI. This is his perspective, of course. And let's make this as cheap and widely accessible as possible, and we'll kind of figure out some of the business a little bit down the road. And so for him, I think that's the motivation, is he wants his product in as many hands as possible. And so that's why he's willing to sort of undercut on price. With a lot of the stuff they've announced.
Kurt, thanks so much for your time. Really appreciate it. Kurt Wagner, senior reporter covering social media for Bloomberg News. He is based in Denver, and that is the big take story today, our big story today on Meta, big important story here. So we appreciate that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Jess Metton, thank you for sitting in for Scarlett. We appreciate that.
Always a pleasure.
All right, Scarlett shall return tomorrow. That's what our people are telling me. This is Bloomberg. Good morning.
From ABC News, I'm Michelle Franzen. Renewed tensions between the U.S. and Iran, with the U.S. targeting Iran's military sites again after Iran fired on ships in the Strait of Hormuz this week. ABC's Martha Raddatz has the latest.
What is clear is that this war that the president said would last 4 weeks is now in its 5th month, with strikes resuming, the ceasefire declared dead, no deal on eliminating Iran's nuclear program, and Iran continuing its threats, saying America still hasn't learned that bullying and breaking promises are no longer cost-free.
The conflict leading to fewer ships moving through the strait, once again a disruption that could impact oil and gas prices. In Maine, Graham Plattner has dropped out of the Senate race. He says due to funding issues, the Democratic nominee was facing a string of allegations, including sexual misconduct and a new claim of sexual assault by a former girlfriend. Plattner denies the allegations. State Democrats now have 2 weeks to replace him on the ballot. David Hearn, the former Olympian charged with damaging the lining of the Lincoln Memorial reflecting pool, appeared in court today.
The brief hearing in D.C. Superior Court had former Olympian David Hearn entering a not guilty plea. Attorney Norm Eisen.
It is not a crime to touch the reflecting pool, to touch water in the United States of America.
In an interview with ABC News shortly after his arrest, Hearn insisted he only touched a loose piece of blue liner and didn't rip or tear anything. Prosecutors have charged Hearn with felony destruction of property, a crime that's punishable by up to 10 years in prison. Stephen Portnoy, ABC News, Washington.
In Utah, the preliminary hearing continuing for Tyler Robinson, the man charged in the fatal shooting of conservative influencer Charlie Kirk. Fans are remembering Bonnie Tyler, who died today. The singer and Welsh performer, best known for her 80s hit Total Eclipse of the Heart, was being treated in a Portugal hospital for an illness. Bonnie Tyler was 75. You're listening to ABC News. In Mississippi, the family of an 18-year-old Nolan Wells, who died while celebrating the July 4th holiday on Horn Island with friends, are searching for answers in his death. State authorities suspect Wells might have drowned but are still investigating. Family attorney Ben Crump says they're doing their own independent investigation, including their own autopsy.
We're trying to be very transparent because the family has some concerns about the state of Mississippi doing an investigation of the death of a young black man where young white students may be looked at as having some culpability. So the family is concerned about that.
The family says they also plan to hire private investigators and speak with witnesses. Weeks before summer training begins for high school and college football, programs that parents and coaches are planning ways to keep kids hydrated. Marshawn Nealon's family also wants players' brain health to be taken into consideration.
Marshawn Nealon is the Dallas Cowboys defensive end who took his own life in November. His family provided brain tissue to researchers who have found that despite using state-of-the-art helmets and new NFL safety regulations, the 24-year-old was suffering from CTE, a progressive brain disease associated with repeated head impacts.
ABC's Jim Ryan. Starting Sunday, you'll have to pay more for a first-class Forever stamp. It's going from 78 to 82 cents. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Traffic in the Strait screeches to a halt. Welcome to the Thursday edition as the U.S. attacks Iran for a second straight day. And Iran answers by shooting at American allies, I should say, in the Persian Gulf. We're going to get the latest on all of this from Bloomberg's Washington correspondent Tyler Kendall. She's at the White House and we'll have insights this hour on the battle space from Bloomberg defense analyst Becca Wasser joining us today live from London. Graham Plattner is out in Maine. We'll do a post-mortem on the campaign and talk about what comes next for the Democrats in that state with Bloomberg's Nancy Cook. She's been covering this for us and will be in studio. And later, David Rubenstein brings us an important conversation with the CEO of CVS, David Joyner. It's all after a look at Wall Street. Let's get to the markets first with our friend Charlie Pellet. He's at the top of the tower at World Headquarters in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. We are at the best level of the day right now. New heights for the S&P 500 index up 49 at 75.32, up by about 0.7%. Yes, crude oil is retreating, but this is also all about those chip names today. Chip stocks are rallying. The SOX, the Philadelphia Stock Exchange's semiconductor index, up now by 4.8%. NASDAQ up 0.9%. The NASDAQ 100 index up 1.5%. And again, the S&P, to put it all in context, up 0.7. Now industrials up 185 now, up by about 0.4%. The VIX right around 16 now, with the 10-year at 4.54%, the 2-year 4.17%, and the 30-year holding above 5%, 5.05% right now on the 30-year. Spot gold is up $49 the ounce, higher by 1.2%. The precious metal now at $41.27 the ounce. But again, a retreat for crude. WTI down 2%, just above 72 a barrel. Brent back below 80. In fact, it's 76.47, a drop today of just about 2%. As for the market backdrop, given the Iran war, Michelle Weaver is head of U.S. thematic research at Morgan Stanley, and she was a guest this morning on Bloomberg Surveillance.
Whenever you have these periods of geopolitical instability, you always have to go back to the fundamentals. The fundamentals have to remain your North Star. And the fact of the matter remains, we're still in a really strong earnings environment for U.S. stocks. We saw the average stock in the Russell 3000, so just the typical small company, up 10% year over year in the first quarter. That's the strongest earnings growth they've seen since 2021.
Morgan Stanley's Michelle Weaver interviewed this morning on Surveillance. I mentioned the drop in crude oil today. We're seeing the oil majors move lower as well today. ExxonMobil down 2.2% now. Chevron lower by 1%. ConocoPhillips down 2.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, we thank you. Feels a little bit better than yesterday, and we'll have more on the markets with Charlie Pellet in about 15 minutes here on the Thursday edition of Balance of Power. You made it to Little Friday.
We're getting close. You know, coming after a short week with the long weekend, this thing seems like 2 weeks in one, but I guess every week sort of does, right? It's the 9th of July. There are questions about whether we are back at war with Iran, and we may not be able to answer them today. But we're going to do our best. With an update coming up from the White House, Becca Wasser is going to join us from London with the options that are now facing the president, who is back home. He's got a bunch of events on his schedule. None of them are open to the press. Mostly things described as signing time and executive time. But if he does emerge, of course, we'll be talking about it with our eyes on the markets here. And we talked yesterday about whether this is the new normal, whether anything really changed at all. We're blowing up more stuff. Iran's shooting back a little more. But there's technically still a ceasefire. Aside from the president saying it was over, there's been no formal dispatching of the MOU. And the markets are creeping higher again here. The price of oil is rolling back. And by the end of the day, we'll probably be talking about the reflecting pool or the Arc de Trump or something else that has nothing to do with what matters. And we'll all be surprised the next time this flares up. Then again, as I said, we blew up a lot of stuff last night. Second straight day of attacks, U.S. Central Command taking to Twitter, because that's the only way you communicate around here anymore. Another round of strikes to further degrade Tehran's ability to attack commercial shipping in the Strait, which, by the way, may as well be frozen with a foot of ice, because no one's going through it right now. Strange to see oil fall back. Then again, with the technical response to yesterday's big jump, I don't know, you figure that out. About 90 targets were hit, though, by the U.S., including air defense systems, coastal surveillance assets, missile and drone storage sites. U.S. forces remained vigilant, I read, lethal, and prepared to execute operations directed by the commander-in-chief. The IRGC has also been busy hitting bases in Kuwait and Bahrain. That's the way they do it, you know. They don't have much ability to strike us. They're not going to go shoot at an aircraft carrier, so they lob missiles over to our friends in places like Kuwait and Bahrain, where massive U.S. bases and ports are located. Saying in a post on X, Mohammed Galibaf, the parliamentary speaker, "Let me be clear, if you strike, you will be struck back." The president says, "We've already won." That was the message on Air Force One last evening when he went to the back of the jet to talk to reporters. Listen.
We have many ways we can win, but we've already won militarily. They have very little left, and they want to make a deal so badly. They called a little while ago. They want to make a deal so badly. I just don't know if they're worthy of making a deal. I don't know that they're going to honor the deal.
Now, that was the new Air Force One, right? I'm getting confused. They had to put him on the old Air Force One to get out of Turkey. Then I guess they met the old one met the new one in England, and he got back on the new jet. The one with the luxury and Corinthian leather, gifted by Qatar. Let's figure out what's going on by way of the White House. Then we're going to get analysis from Becca Wasser. Tyler Kendall is on the North Lawn right now, where the sun is threatening to come out. Tyler, it's great to see you. Welcome back. Have we heard from the president today about any of this? Do we know the status of the MOU?
At this point, Joe, President Trump was asked yesterday about whether or not these developments meant that we are going to see all-out fighting when it became very evident that the White House's patience was wearing thin when it comes to the diplomatic efforts. President Trump himself has outlined that that doesn't necessarily mean that all diplomacy is off. He did seem to give some leeway yesterday for his negotiators to continue their work, though he said in his opinion he doesn't think that it will ultimately prove fruitful. And the fighting that we've seen in the last 48 hours does mark the most significant uptick since that memorandum of understanding was signed. But what really feels different about this time, I think it's fair to say, is that we saw the U.S. put back on the economic pressure. We saw the U.S. earlier this week revoke that waiver to allow Iranian crude to get to market. Previously, when there's been flare-ups, those sanctions had been in place. But the fact that this was considered to be really that carrot rather than the stick to get Iran to the negotiating table, and the U.S. has already chosen to reverse that, that does seem like a very significant development beyond the kinetic action, because this was something that the White House was really willing to put out there, put on the table. But at this point, it didn't seem to budge Iran in the right direction.
It's interesting you point this out, Tyler. Iran has rushed out tankers carrying roughly 11 million barrels of crude the past 24 hours. We're reporting on the terminal here. The problem is it's on the water. They just can't get it out anywhere if the president's going to be blocking the strait. We'll have to follow this very closely. And Tyler, we thank you. I'm sure we'll have more to talk about in our second hour here as we go live from the North Lawn of the White House to our Bloomberg Bureau in London, where Becca Wasser is standing by. Our top defense analyst at Bloomberg Economics is with us as the president is once again presented with a menu of options. Becca, I'm really glad you could join us, and I'd love your thoughts on what's happening right now, how we find 90 targets 2 nights in a row of attacks when the president has said that we have already defeated them militarily. How do we keep finding new things to target?
Well, one is it's because targets are regenerating. We see Iran trying to rebuild its capabilities and shifting assets all around. That's going to generate new targets. But also, so much of this, it's really restrikes. You see this continued cycle where essentially the United States finds itself mowing the lawn, to steal an Israeli phrase, which is continually going after targets again and again to keep them from regenerating to a point where they can hold various assets at risk. And so this brings the U.S. into a really slippery slope where it's starting to look as though we're going to be in conflict for a very long time, and that potentially could risk being in one of the very forever wars that, frankly, Trump wanted to not even get into in the first place.
And here we are with the president saying we're hitting them 20-1. I don't know what you make of this. Listen to the rhetoric from the president last evening on the scale of this most recent round of attacks, Becca. Here he is.
We just hit them very hard. And I say we hit them 20-1. Every time they hit us, we're going to hit them 20. They did a little something today, but it was really retribution for last night. They hit actually 3 boats, not 2. And when they hit, we hit back much harder.
They hit 3 boats, not 2, he said. When they hit back, we hit back. 20-1 is his point. Becca, I don't know if that's a military strategy, but how different in scale and intensity are these attacks that we're pursuing these last 2 days based on what we've seen over the past couple of weeks?
Well, let's start with the math. I am no economist, but I'm pretty sure that 3 times 20 is 60, not 90. But that being said, I think we did see really a slight shift in some of the targets that the U.S. went after in this second day of strikes. And that is an expansion of the geography slightly, as well as purposely going after 2 railway bridges. So that's critical infrastructure that can be used for military purposes, but also civilian purposes. And I see that as a signal to Iran of, if you are going to continue these strikes, we have options to escalate. And one of the ways in which we can escalate is to go after some of the basic civilian infrastructure across your country. And that's going to also cause you some pain with your own domestic population.
Okay, I'll bite on the bridge because Iran issued a statement about this, saying that this was a direct violation of the MOU. Others have said it smacked of war crimes when you start attacking civilian infrastructure. What really went on here, Becca?
I think there was an effort to try and, once again, degrade Iran's ability to be able to carry out attacks. And perhaps they were using these railways for logistics and trying to move material around. But again, it's a very slippery slope here for the United States. If you go after civilian infrastructure, and they can argue that these are essentially dual use, things that can be used for military means as well as for civilian means, making them acceptable under international law. But it is a slippery slope, and particularly when you've had rhetoric from the president in the past where he's essentially said that he's going to annihilate an entire civilization in reference to Iran. You look at certain attacks on civilian infrastructure, and you find yourself potentially in a place that is not necessarily the most palatable.
Becca, thank you so much, as always. Something tells me the London Bureau is getting smarter all the time. She leads our defense analysis at Bloomberg Economics. Becca Wasser, thanks to you. The statement from Iran's foreign ministry about the attack on the railway line and that bridge, a flagrant violation, the words chosen, of Articles 1 and 5 in the U.S.-Iran Memorandum of Understanding. Much more ahead on Balance of Power. We haven't even touched Maine yet. Graham Plattner is out, and he's angry, and so are most Democrats in Maine. Nancy Cook is on the way in next on Blue.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now on the S&P 500 index, up almost 50 points to 75.32. That is a gain of about 0.7%. Chips leading the way higher. Right now we have got the SOX, the Philadelphia Stock Exchange Semiconductor Index, up 4.6%. NASDAQ up 0.9%. The NASDAQ 100 Index up 1.5%. Dow Industrials holding on to a gain of 0.4%. But to be sure, S&P best level of the day. Again, we have got the VIX right around 16, the 10-year at 4.54%, with the 2-year 4.17%. Crude, West Texas Intermediate down 2%, 72.03 a barrel. Barrel of Brent, 76.44. Brent crude down by 2.1%. Bitcoin up 1.1%, 62,739 on Bitcoin. Meta Platforms has unveiled a version of its AI model, Muse Spark 1.1, that does include a new paid tier for developers. It marks the first time that Meta has charged businesses for access to its models. Meta shares up now by 1.8%. Recapping the Dow, the S&P, NASDAQ all higher, the SOX surging 4.5%, S&P up 0.7, the NASDAQ 100 index up 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you, sir. We'll get back to Charlie Pellet as soon as possible with more on the markets. We might have to wait a minute because we've got an important conversation coming that I warned you about. David Rubenstein is going to be sitting down with the CEO of CVS, the drugstore chain and healthcare company, coming up in just about 10 or 15 minutes here. We're going to join them live in a conversation with David Joyner that will become one episode of Peer-to-Peer right here on Bloomberg. They're going to do that at the Economic Club of Washington, D.C. So what in the world is going to happen next in Maine? I'm not even sure exactly what's happened so far. 11 minutes of freestyle video. Graham Plattner, handheld phone video, suspending his campaign late last evening, as everyone saw coming, worst kept secret, I should say, in politics. He posted it about 11 o'clock, 8 o'clock at night, 11 minutes long. Don't mind me. As we heard from the pro-choice women's PAC, Emily's List, 11 minutes and zero accountability. He did not apologize. In fact, he said he was not guilty of the allegations, and he was not very happy about the way this had worked out, which we'll get into in a moment with Nancy Cook. Before that post hit, Maine's Democratic Party was already trying to figure out how in the world we're going to manage this, assuming he does drop out. Do we have some sort of convention? Do we have a primary? Do we have a deal inside the party? Should he have a say in it? We asked all these questions to Jim Messina, the legendary Democrat strategist who ran President Obama's re-election campaign. Here's what he said on Bloomberg.
Graham Plattner's career in politics is done, whether he realizes it or not. And when you've caused all this, you and your campaign don't get to decide who the nominee is. When you've lied to the press and the public of Maine for months, you don't get to decide who the nominee is. And when you ran a campaign that didn't fully vet your candidate, you don't get to decide who the nominee is. So the only people that should decide who the nominee is the voters in Maine and the Democrats in Maine. And they're going to run an open, transparent process, and I think that's exactly right. Sadly, as you and Joe know more than anyone, we Democrats have a little experience in replacing our nominees in the middle of the cycle after 2024. What we learned here is we need an open, very clear process, and the candidate doesn't get to pick.
Okay, so let's say, for just the sake of this conversation, Jim Messina, Graham Plattner goes back to eating oysters. A new candidate is selected, and you get to run the campaign. You're the campaign manager. What do you do to get out of this and give Democrats a chance to flip the seat?
You go straight back to the grassroots. You campaign in every single county in Maine. You reintroduce yourself. You understand that this is a state that is independent and you represent that moment. The reason Susan Collins continues to win in a state that Kamala Harris carried by 7 points is she does better with women voters, especially in the Portland metro market. And so you pick someone who can have a conversation with those voters and say, this is very clear what this election is about. It's about Susan Collins having been there way too long, and it's about a new change. And that's how you campaign straight to the grassroots and stop all this kind of national politics.
Well, but if you consider the map nationally, knowing Maine is kind of a must-pick-up seat for the Democrats if they want to flip the Senate, would you be targeting spending more money in Maine or diverting more to some of the other races, Texas or Iowa or Ohio, to kind of bolster your chances in case Maine is, in fact, out of reach?
I agree with Kayleigh's earlier statement. I don't think there's a lot of scenarios in which the Democrats can carry the United States Senate without winning Maine. Like you can figure it out, and I run 60-some thousand simulations of the election, Kayleigh, and there aren't a lot where you don't need Maine. And so, we're talking about states right now like Texas, like Ohio, like Alaska, where Democrats lost by double digits. Then you're talking about Maine, where we won by 7 points. It's just hard to believe you'd win those states and not win Maine.
All right, there you have it from Jim Messina. So there's a brush fire, if not a dumpster fire, burning for Democrats in Maine. By the way, if you're Susan Collins today, you're probably not really happy about this either, because you were feeling pretty good about your chances against Graham Plattner. What will be the answer procedurally? The Maine Democratic Party says it's going to hold a nominating convention later this month. We only have a couple weeks to play with, remember, where 600 delegates will pick the nominee. Now, before we bring in Nancy, who's been all over this story, she's been up in Maine and has been indispensable with our coverage, just have a taste of the video. Vertical, handheld, freeform video, Graham Plattner last night in Maine. Listen.
I have faced some very serious allegations, and I just want to make it clear. This is all false. We did it the way that we were told we are supposed to make change, and we won. And now they are not going to let us have it. Not if it's me. And so we're suspending campaign operations.
There it is, suspending campaign operations. Nancy is, of course, Bloomberg's senior national political correspondent, Nancy Cook, with us live in our Washington bureau. So everybody's angry in Maine, especially if you're a Democrat. How do they put together a convention this quickly? And I'm assuming the Plattner camp will have no say in this?
Yeah, Maine Democrats have said that the Plattner camp really doesn't have any say, and the Plattner people have alienated, Democrats in D.C., all the donors, the people, who they need to write the checks, and so I think they're really being blocked out of the process. But what Democrats are facing is potentially a very chaotic convention the last Saturday in July with 600 people. We're seeing a bunch of people's names floated as potential candidates. Some state politicians, a brewery owner. Do you know what I mean? It's just like, it's sort of a free-for-all. And it's wild to me that it's reached this point because, as Jim Messina said, control of the Senate for Democrats really runs through Maine. Right. And it's wild that it's gotten to the point where now the nominee is going to be picked in this convention on a Saturday in a few weeks.
Boy, you mentioned some of the folks who are knocking around. None of them are named Janet Mills, by the way, which I find fascinating that Chuck Schumer's pick still has no chance in Maine. We're told to look to the gubernatorial primary, and there are a couple of folks out there. You mentioned Maine Beer Company's Dan Kleben, Maine Senate progressive Troy Jackson, but we're looking at former CDC Chief Nirav Shah as a real contender, and Maine Secretary of State Shanna Bellows. Is that the field, or could this be disrupted with a name that we're not even looking at yet?
I think that's the field so far, but really the Plattner news is not even 12 hours old, and so I think that we could expect potentially other people to either float their name or to jump in. I mean, I think it's kind of a free-for-all for the next few weeks, and what I'm looking at as sort of the next steps are, are donors willing to
spend money on this?
Right.
And then also, how do Republicans change their tactics? Republicans were thrilled to be running against Graham Plattner because they saw him as a deeply flawed person with a lot of skeletons in his closet, and they had a huge file of Oppo research on him, half of which I feel like we actually hadn't even seen. And so how do Republicans recalibrate the money that they have to spend, but also their strategy when they don't know who they're going to run against?
Wow, it's interesting you mentioned the Oppo. I was talking to an important Republican source last evening who said that this was all going to drop from the other side after the 13th, when it was too late for him to get out, that everyone who had done Oppo research on Graham Plattner knew about this finding. That would have been curtains, I'm assuming, for Democrats in Maine. What are the odds that they can pull out a compelling victory against a stalwart like Susan Collins?
Well, I think that the sources that I talked to say that it's really Collins' race to lose now. As Jim Messina was saying, Collins has been so effective at making the argument to Maine voters that she is, on the Appropriations Committee. She brings money back to Maine. That is how she has survived in a state that usually tends to support, that voted for Harris, Kamala Harris. And so I think she'll continue to make that argument. I do think that what could help the Democrats is we've just seen a real anti-incumbent fervor this election. We've seen that in Michigan. We've seen that in Colorado, where the Democratic Socialist candidate beat an incumbent. People are tired of establishment politicians, and that anger about the state of the economy and just how American voters sort of feel they're being ripped off by people in D.C., that could hurt Collins.
Well, we'll see if that can manifest itself for Democrats all over again. But I'm wondering what the lessons are, and I've asked a few people this, Nancy, for the Democrats who fought for Plattner after the Nazi tattoo, after the initial allegations of philandry or sexting outside the marriage, all the stuff that we heard about. Elizabeth Warren stood by him. Ro Khanna traveled to Maine to say, I believe in redemption. Bernie Sanders hung in there. I could keep going. Did Democrats learn that they can't play the same game as Donald Trump? Or what's the question I'm supposed to be asking here? Democrats are not good at not apologizing, right? When you look at the Ken Paxton example, for instance, he's been frequently compared with Graham Plattner, not that he was ever accused of assault. Democrats are in a very different place than Republicans who say, well, this is our guy, we're not apologizing, let's start investing in the campaign.
Well, I think that there's two real lessons for Democrats here. One, I think that all those people that you mentioned, Sanders, Warren, Ro Khanna, they were so wooed by Plattner because he agreed with their policy positions and the progressive stance on taxation and the economy, that they sort of were willing to overlook these obvious red flags in his background. But the second lesson is, and I've talked with some high-level Democrats about this recently, Democrats are so desperate to win back working-class voters, and particularly working-class men, that I feel like in Plattner they saw someone who could do that. And they were willing to overlook all of that. You have to remember Trump 10 years ago kind of came in and took the working class voters from Democrats, and they haven't won it back. And so Democrats are out there searching for, people who seem working class or people, who don't seem establishment, to try to win that key voting bloc back. And Plattner was doing that for them. The interesting thing, though, is there was a New York Times poll out of Maine recently that showed that with Maine working class men, Collins was ahead of Plattner 30%.
Wow. So maybe they didn't have what they thought they had here, which is interesting to consider. Nancy, is the conventional wisdom correct? If Jim Messina is doing 60,000, did he say, simulations, and most of them require Maine for Democrats to take the Senate, that is the gateway to the majority. Without Maine, it can't be done.
Yeah, I think that's correct. I mean, they need this Maine seat. I would argue it's the most competitive Senate race in the country, and it has been for some time. And I think that we're going to see, between now and November, a huge amount of money poured into that on both sides, and just, it's the stakes are so high there.
Yeah. With that said, this move to embrace democratic socialism, or fight it depending on the Democrat you speak with, and there seems to be a real push and pull here. There's a real argument. How do you frame this now? As our national political correspondent has covered a lot of elections, it's clearly not just Manhattan. Then again, Denver's not middle America either. At what point is it the Michigan primary, for instance, that will determine the direction that this party's going in?
That's a great question. And I think that Michigan, in addition to what happens in Maine, is sort of the next key thing that I'm looking at, because there's a more establishment centrist candidate there versus a progressive candidate. But I think that what we're seeing with the Democratic Socialist Party is that, primaries and debates within parties are good. I talked to a bunch of Democrats yesterday, and they're like, we're never going to say that we shouldn't argue among ourselves, because that's how you sort things out, and that's what primaries are for. But I do think that the Democratic Socialist movement is, as you're right, outside of New York. And I think that the reason that it's appealing to people is because people are so mad about the state of the economy. Wow. And a lot of the ideas that Mondami and others are pitching are really sort of economic ideas about, combating corruption, or feeling that the economy is tilted towards some people. And I think that the Democratic Party at large could take lessons from the rise of the Democratic Socialists. Not that they have to adopt those policies, but they are tapping into voters' very real anger about how the economy is going for them. And I think both parties would be, remiss to just dismiss that.
But you remember the Young Guns and the Tea Party? And eventually the Republican establishment kind of had to acquiesce. And it helped Republicans, I think you could argue, on the march to MAGA, sort of driving the future of the party. I'm sure there's a big thesis to be written in there, but do Democrats have something to learn from Republicans when their populist movement began?
Well, I think that Democrats are looking to the Tea Party as sort of evidence, or this is Republicans went through that in really 2010, let's say, and now Democrats are going through that evolution now. And, it's sort of an interesting moment when the party is sort of hijacked by people who have much more populist views. And how does the party adapt? In the Republicans' case, the answer to that was Trump, who combined, some Republican orthodoxy, like lower taxes and less regulation, with a much more populist stance on trade and tariffs. And so it will be interesting to see, especially heading into 2028, sort of how the Democrats blend this more moderate message with the progressives.
What are you hearing about this midterm convention? Anything? I know I'm coming out of the blue on this, but Republicans have decided to do one. Democrats are not. It's going to be in Dallas in September. Do you get prime time coverage when there's no presidential race? Is this worth the money?
So it's going to be September 9th and 10th in Dallas. I think that President Trump, I've been told, is very excited about it. So I think he's really the person driving the train on this. If you speak to other Republicans, they're like, ask the White House.
We don't know.
This is his show. But I think that, there's no party business that's going to take place there. The Republican National Committee had to change the rules basically to allow a midterm convention because this is something
it's not a nominating exercise.
No, it's like not something that's ever been done before. And so how sources have told me, it's really going to be like 2 days made for TV event to try to get voters excited to go to the polls when Trump is not on the ballot, which is something Republicans are worried about.
So he'll still headline this, presumably.
Yeah, I'm sure he'll speak one of the nights, but it's supposed to motivate and excite voters. Of course, the question is, against the backdrop of the ongoing war in Iran, gas prices, the state of the economy, like, is this going to be the thing that motivates them? I don't know. But there's really no official business. It's made for TV, and it's for donors to come and enjoy themselves and go to parties.
So get a skybox, have lobster tails, listen to Kid Rock. Should Democrats be doing one? If that's the case?
Democrats said they didn't want to do it.
Yeah, why not?
Well, because I think it's...
keep up with the Joneses.
I think that, A, they don't want to follow the Trump agenda. They want to set their own agenda. But also it's an expensive endeavor. Democrats, sort of a big tent situation. There's a lot of different types of candidates running. I think that they want candidates who are speaking to the constituents in their individual district. And they don't really have an overarching ideology or leader at this point.
Fascinating. This is so cool. How often do we get to spend 20 minutes with Nancy Cook? This is the best. This is the best day of the week right here. Nancy, thank you. I love this. And when we learn more about this convention in Maine, are you going to go up for that, do you think? Or,
I think I am.
All right, let's stay in touch on that. That's going to be a really interesting day. Can we go to that, James? No, to Maine, I'm saying. I think we go to Maine to the convention. It's the last weekend of the month. I'll let you know what happens there. Nancy Cook is our national political correspondent and the best of Bloomberg here in Washington. We thank you. Yeah, we're good to go? All right, I told you this was coming. David Rubenstein with David Joyner, the CEO of CVS, live at the Economic Club in Washington. Let's listen on Bloomberg.
And the reason I'm not a member is because I'm afraid if I become a member, I'll get emails the rest of my life. Is that a fair view or not?
It's no, that's not fair. It's a choice. So our
preference is to sign you up right here today.
Okay. What kind of discount do you actually get?
Well, it ranges, but you can get 10 to 30. In some cases, you get the extra bucks back, so it could be free.
Okay. Well, good. When I buy things, though, they have these long receipts, or I guess, why do you have that? Why is that? When I buy something in a machine, they give these long receipts.
Well, it's another one of the opportunities for improvement. So we're kind of known for the receipts because people used to like actually having the physical coupon to be able to use in the store. So we introduced a handful of years ago the opportunity to opt out and actually get it in the form of an email or in your extra care program. So we've had 260 million receipts eliminated because people have chosen to go online.
Okay. Or maybe I'll join the club. Is there any benefit? I'm going to get discounts, right?
Yeah, you could actually get free stuff.
Free stuff. I like that. Okay. Here's my question. Your company, CVS Health, was started. First store was in Rhode Island, 1963, I think it was. How did CVS grow to be the largest kind of pharmacy company or drugstore company in the United States from a little state like Rhode Island? How did that happen?
Well, it's a remarkable story. So it actually started out as the Consumer Value Store, so that's the acronym CVS, and it started in Lowell, Mass. in 1963. We didn't add a pharmacy until 7 years later. And by trying to make sure they're serving the customers well, they started growing through acquisitions, and it was for the most part kind of a Northeast pharmacy. That's where they were growing, and then they started buying chains across the country. So they bought Eckerd's and Revco, and ultimately bought Long's on the West Coast to give us a full national footprint.
Now, you were the largest in the United States in terms of pharmacies, would you say?
That's true.
How many do you have?
We have 9,000 pharmacies across the country in all 50 states.
9,000, wow. And what is the biggest pharmacy of all? Is it somewhere in New York City or something, or is it one that's the biggest?
Because we grew through acquisitions, each one of the formats are somewhat different. So the West Coast was the Long's pharmacies, and they just have a much larger footprint. So on average, we probably have 10,000 square feet in the CVS that you would know, and you could probably double the size of that in some of the other markets out west. And even in Hawaii, which is still known as Long's, I mean, those are really large stores, and it becomes more like a grocery store in addition to the pharmacy.
Now, your biggest competitor, is that Walgreens, or is it Walmart, or who's the biggest competitor for you?
I think it depends on where you're focused. So I think in a classic kind of standalone pharmacy, standalone peers would be a Walgreens. But we also are trying to capture market share for those that are in the grocery and the mass merchants like the Walmarts of the world.
I should mention, in the store that I go to, which is in Washington, D.C., it's a very nice store, no complaints, but I notice every time I want to buy razor blades that it's like locked up. And why are people stealing razor blades all the time, or why is that?
I should have brought my retail pharmacy lead today. So in general, there are some products that have a higher theft rate than others, and razor blades happen to be one of those. And it's a big issue from an organized retail crime. So those are the things that have high margins. They actually get stolen and they get resold in other markets. So you have to try to protect at least in the areas where you know you're most vulnerable. And the idea is to eliminate that altogether. So I'm hoping at some point we'll get to a place where things won't be locked up, and we'll have appropriate security and safety for our colleagues and our customers.
Okay, now CVS Health is actually 4 different divisions or companies, if I have it right. You have the drugstore part, then you have Caremark. What is Caremark?
It's a pharmacy benefit.
And what does that do?
It manages the pharmacy benefit on behalf of large employers, government payers, but ultimately we're being tasked with facilitating and administering the benefit, and negotiating with the drug manufacturers and pharmacies to lower the pharmacy costs.
So that was okay. And then you have a third part, which is Aetna.
Correct.
And Aetna is a health insurance company.
It's a large health plan, health insurance business. Yeah.
And then you have another division as well.
Yeah, it's the healthcare delivery business, which we have close to 1,000 clinics, healthcare clinics across the country, both kind of in the acute minute clinic is what you would know inside of CVS. And then we have Oak Street, which is what I would call more of a value-based care clinic serving the Medicare population.
Let's suppose I don't feel well and I don't have a doctor to go to or something. Do I go to the CVS healthcare clinic? And
yeah, We'd love to have you.
But what kind of level do you, I mean, you're not going to be doing, surgeries there, I assume, but you're doing, if you have a headache or something, is that what you're doing, Ed?
Yeah, it's different state to state, but for the most part, it's all of your cough, cold, flu. So it's taking care of the things that are most acute, during different times. But the model's evolving into a primary care clinic. So we'll have almost 500 of our 900 minute clinics that will have primary care capacity. So we're expanding the scope of services, just like any other primary care clinic that you would go to.
I'd like to talk about your story because it's kind of amazing how you came to this position. So let's talk about your background. Where were you born?
I was born in Dallas, Texas, a multi-generation Texan, and so I was born and raised and didn't leave until I went off to college.
And what did your parents do?
My dad was a salesman. He sold metal roofing, and my mom was a homemaker.
Okay, and do you have any siblings?
I have one sister. She's in healthcare sales as well, so it's kind of in the genes of being kind of following my dad's lead.
Now, you went to college at Texas Tech?
Correct.
And what did you study?
Finance.
Finance. Yeah. And after you graduated, what did you do?
Well, I graduated in the mid-'80s, and I was attracted to the banking industry, so I had taken a job with a bank, and they were giving out pink slips to the class before me because of the challenges that the oil and gas industry was having at the moment. So I accepted a call from Aetna to go interview, and so I ended up in Hartford, Connecticut, and as what they call an employee benefit rep, selling both the health insurance products and all the financial services. At the time, that job was selling also where 401ks and all the other things were coming into into the market.
All right, so you're working at Aetna, but then you left Aetna and you went to Caremark.
Correct. I was with Aetna for my first 7 years, and then I joined Caremark, which was a spin out of the alternate site businesses from Abbott, not from Abbott, from Baxter. And it was a small, kind of the idea was pharmacy benefits were just being incubated at the time. We were selling a mail service program to try to save money for members, and I came in right at the ground floor. We basically were $500 million in sales at the time, and kind of grew up inside that in that maturing industry.
And how long were you there?
I was there through 2007 when CVS acquired Caremark. And then I stayed all the way to 2019, and then I retired.
Now, you retired at 2019.
That's correct.
Then you got your RV and you started driving around the country.
That's it. That's exactly right. I've probably had more airline miles than probably the vast majority of the people in this room, so I decided it was time to go see it, on the road. And
so you drove around in your RV, and is that safe driving around all that?
It was perfectly safe. I'm an empty nester, so my wife and the dog, we spent 3 years kind of driving around the country.
Wow.
It was very safe. Yeah, this was a wonderful country.
And you're a fly fisherman, right?
I love the West. I love fly fishing, and that's definitely one of the
now explain to me, in fly fishing, when you do that, the fish's brain is like really small, and your brain is big. Why is it so challenging to catch a fish? The brain is so small.
I haven't been asked that question before, so I would say that it's still a thinking man's sport, and you got to learn a lot about the water, the currents, the flow, the pockets where all the fish are held, all the entomology around the bugs. So it's a I would actually have to think when you're doing this, but it is a small brain, but they still are pretty smart.
But when you catch it, then you got to throw it right back, right?
That's right. It's sport. It's catch and release.
Okay, you don't do deep sea fishing then?
I do from time to time, but it's not my thing.
Okay, so you're minding your own business. You worked at Aetna. You worked at Caremark. You retired relatively young. Yep. And then all of a sudden, somebody calls you and says, would you like to be the CEO of CVS Health? Yeah. Were you surprised?
Well, it was a call to run one of the divisions. It was coming back to run Caremark, and so I was 3 years. I was happy. COVID was probably tough on a lot of people, but I had a lot of idle time on my hands, more than I thought I would, and so I decided to come back because I thought we're at an inflection point in the market with both the pharmaceutical industry and the supply chain changing, and I thought a combination of running pharmacies plus the PBM, we could actually make meaningful change in the market. So I came back for that, and with the purpose to have and change the way pharmaceuticals are paid for and how they're delivered in this country.
All right, and then one day they called you up and said you want to be the CEO.
Yeah, and then we ran into some challenges in October of 24, and it was with one of the other divisions, Aetna, and so the board had asked whether or not I would consider being the CEO, and I said, okay. Hey, here I am a year and a half later.
Now, from the time you became the CEO, the market capitalization of your company is up about 67%. Your stock is up 65%. So I hope they're pretty happy with you.
Yeah, I'd say that the board's happy, the investors are happy, which is the ones that were.
What did you do to increase it in such a short time? It's about a year and a half, 2 years. How did you do that?
So the good news is, out of the 4 divisions, 3 of them were running and operating really well, and so my focus, at least over the last year, has been making sure Aetna gets back to the brand and the reputation and the ability to deliver kind of consistent performance. So we've been through 2 underwriting cycles with them. We've got, I think, our arms around how to project and or predict where healthcare costs are going, to making sure we're pricing our products accordingly. And then the next kind of phase of all this is how all these businesses fit together. So I've spent the last 6+ months making sure that that we actually get the enterprise value of how all these businesses fit together for the benefit of the consumer.
So if you're up 65% in a year and a half or so, can you do that again, you think?
I hope so.
Okay. So let me ask you, today, drug companies, pharmaceutical companies are generally not that popular because they are thought by some people to charge high prices for some new kind of drugs. But people don't dislike drugstore companies. Nobody seems to blame drugstore companies for high prices. Is that your observation as well? Or?
Yeah, I think there's a lot of blame going around at the moment. So while I think the pharmacist and the pharmacy has a bit of a halo, I think there's still a lot of blame going around who's responsible for the high cost of drugs. So the good news is it kind of just reinforces the fact that we have a really good brand and a good relationship that's trusted, and that ultimately helps us find solutions for those members.
How many total employees do you have?
A little bit more than 300,000.
And the average person who works at CVS stays there for how long?
It's different by the job category, but I would say the people that are actually moving up through the organization. I mean, I'm 40 years with the company, and I would say that I have a management team and a management team that generally is 10, 20 years in some cases, and it's all because of the upward mobility. So a big focus of ours is that there's a high turnover rate in the front store, because those are entry-level jobs, but the opportunity to actually take somebody that comes in through the front store, you can start moving them through, either be a pharmacy tech, you can move them into store managers, you can move them into other jobs. In fact, the store where I visit, there was somebody who was a pharmacy tech, which is helping the pharmacist in the store. We helped him pay for his college education, and now he's working in our finance.
When you go to your local CVS, do they notice who you are? They know who you are?
Yeah, there's probably more familiarity now.
You stand in lines, or you don't have to stand in line?
And this is kind of what every executive should do, which is that you take a back seat to your customer. So the idea is to make sure that your customers are being served, and you watch the flow, you watch how they're being treated, and so I will actually get taken care of when I need to.
When COVID came, CVS announced that you could get a COVID shot at CVS. And I said to myself, the man who does the checkout at CVS, he's going to give me a shot? I didn't know that there was the pharmacist doing it. I was worried that the guy doing the checkout was going to be giving me the injection, but they don't give the injections, right? It's the pharmacist.
That's right. And even before COVID, the vaccine administration was, for the most part, done inside of a doctor's office. And you look post-COVID, now the pharmacists and the pharmacy techs are doing the vast majority of all vaccinations in this country, which I think is really an important change and inflection point about the role of the pharmacist component.
Now, that's a business where it's free. Vaccinations are more or less free.
Well, nothing's free, but the payers ultimately subsidize it. Okay. Yeah.
So when you go to let's say, what is the most popular single item that CVS sells? The most popular thing?
It's generally seasonal, so you know, right now the CVS is the sponsor for USA Soccer. So we've done a bunch of promotions for USA Soccer. So it's the FIFA stickers that they're promoting inside the store. So it's in holidays, it's a different you know, set of items. But right now, because we're in the height of World Cup soccer, that's generally what people are buying.
And when I go to, let's say, a CVS and they have Christmas things for Christmas, or then they have things for Valentine's Day, when you don't sell those things for that particular holiday, do you put it back in storage and bring it back the next year, or you sell it at a discount? How do you do that?
You generally see a lot of discounts on those products after the holiday. And then a lot of it just goes to be resold in other areas. So it doesn't get repackaged for the next year.
All right, when I go to, what percentage of people actually use the automatic checkout thing? Because every time I do it, the buzzer goes off, and it's like skip the bagging or this or that. But does anybody, I mean, am I the only one that doesn't use it?
I'm going to have to find an advocate for you inside of the CVS. So it actually works really well. I think it's all customer preference. So you know, I prefer checkout with the self-checkout.
You use the automatic checkout?
I use it, but I also have the app. So I'm an Extra Care member. I do everything kind of within.
What's
within
the app
automation.
do for you?
Well, it allows you to have your payment information in there. It allows you to get all your discounts that you had for the products that you're buying, and it's such a simple, easy process. And then there are some people who want to stand in line and deal with the register.
Have you ever thought about what is the profitability of people that do the checkout and then they don't take their change and they leave the change behind? Is that a profit center or not?
Yeah, I would say that cash transactions are a very, very small part of what we're doing now. Most everything is done through credit and even actually done through your phone. So another reason to actually have that app is that you don't have to actually leave change behind.
Okay, so what is the reason why somebody who comes out of college should work for CVS Health? What's the reason? What's the benefit of working there as opposed to some other company? Why is it a good company to work at?
So one is I think we have an incredibly great company that provides and affords opportunities for all walks of life. So I had the good fortune of getting a college degree, and I was able to move through the organization pretty rapidly, and now I'm the CEO. So the story is saying if you want to come to a company who wants to build trust in the marketplace, wants to make a difference in healthcare, and then wants to have upward mobility and opportunity to do more and greater things, this is a great place to be. And this is the pharmacy tech that I told the story. My hope is that, you know, he didn't have a college degree. We trained him to be a pharmacy tech. We subsidized his tuition to get a college degree. Now he's in our finance department. I'd love to be able to say this is somebody who's gone on to do really great things because he started with what it takes to serve our customers.
Right now, Aetna was a major acquisition that was made, I think, 2018, something like that, for about $69 billion. A lot of money. What was the theory behind why buying a health insurance company would help CVS?
I think the challenge with healthcare at the moment, and we still find that 8 years later, is that it's very fragmented. So you've got the care delivery side, the hospitals and the doctors that are providing the care, and then you've got the payment system with Aetna, and then ultimately you have the pharmacy that's dispensing and or managing the cost, and it's all fragmented, and it doesn't work really well for the consumer. So the idea is that you pull all this stuff together and you can organize it for the benefit of the consumer, and you can say we've been able to improve their experience, so their net promoter score or their experience is positive, they're more engaged in their health care, and when they become more engaged, then you can start taking cost out of the system, because if they're more adherent to their medications, you take cost out. Or you figure out they spend less time in the emergency room when they could be coming into one of the lower cost clinics. So the idea is that it should work in a more organized way so that you actually get the payment and the delivery together and taking kind of the patient out of the middle, and you're focusing on how their health care is going to be delivered.
And that's worked out okay?
It's working. It works well when it's actually organized in the system, but we haven't evolved and matured that across the country to the degree that I'm hoping we'll get there.
Back to my local CVS. If I want to buy a product there, let's say Listerine, then you have your own product, a CVS equivalent. Is there any real difference between the branded one and the generic one?
Well, I don't know if there's any consumer goods company in the room, but The idea is that once it goes generic, then the idea is that we have some formulation that's very similar to what the brand manufacturer had put together. So, and it's less expensive, and it should have a trusted brand attached to it. So it's kind of how retail works today.
So people buy the generic typically, I assume.
Yeah, that's right.
Now, in my CVS, I've noticed increasingly that the section for canes, adult diapers, and things like that for aging people is more and more, is bigger and bigger. Is that because the population's aging, or I'm just more focused on it?
Seniors are a very important customer base for us. So I'm hoping that we're catering to that demographic or that population. But my guess is, because we've made a big effort to localize the store and the products inside those stores, that you must be in an area that may have maybe an older generation. But anyway, so that's why they.
I don't know, but it seems like
it'd
more and more.
It'd be tough to put that next to a college campus, right?
Yeah, it is tough. I mean, it's more and more of these, the bigger part of the thing. Okay, so let me ask you, if the United States has done a pretty good job in pharmaceutical companies and drugstore companies, why don't you expand in Europe or Asia? Why are you mostly focused in the United States?
Yeah, the U.S. healthcare system is an N of one. It's unique in terms of the fact that the private sector is still who is generally administering and financing the healthcare. So, and around Europe, it's mostly, and/or in Canada and other markets, you have national payers, and it works very differently. So most of the stuff doesn't export well to those markets.
So where are you going? If you're not going to export, where do you get your growth? I mean, you can't. How many more stores can you build?
Yeah. So if you look at the healthcare forecast, it's we're expected to pay $6 trillion for healthcare in 2026, and if you look at where the forecasts are, by the time you get to 2034, it'll be $9 trillion. So the growth is, how do we participate, and how do we begin to make a meaningful difference on attacking the $9 trillion spend? And I don't think the store counts will actually be as important. As you're going to see, as the population ages, they're going to require more medications, and as they require more medications, the pharmacy is going to play hopefully a very important role of helping them manage their care.
Now, to be a pharmacist, you have to go to pharmacy school. But I always wonder, what does a pharmacist get compensated? Do they get compensated hundreds of thousands of dollars a year? Is that a big income job?
It's different by market, but yeah, I mean, they're probably in the 140 range, so it's a good job, and we have all different types of pharmacy roles in our business. So some are working in the health plan to help provide the clinical services. Some are actually in the store, which you would actually know. But ultimately, it's we have 30,000 pharmacists that play a variety of different roles, and I'm hoping that this is where we're going to be able to make a meaningful change in healthcare, because they've gone to training, not just to dispense medications, but they've gone to school to be an active part of the healthcare system. And there was a whole bunch of movement around test and treat, so that you can go in and get tested at the pharmacy and ultimately get treated. And so it takes the need away from actually going to a doctor's office when it could be easily done in a pharmacy.
How can you be sure that the pharmacists, I assume they're all honest, but maybe there's a bad apple occasionally, aren't taking the drugs and putting it in their pocket and then selling it somewhere else or something? How do you measure make sure all your drugs are not leaving the place inappropriately?
Yeah, so they're inventory controls. So we do manage the count, and there are certainly the areas that probably most concerning would be the controlled substances, and those are all locked in a safe. So you would not actually run the risk of that being one of the theft items.
So when you go to your own pharmacy, do you ever break through the line, or do you stand in the line with everybody else? Or
like I said, when I go to the pharmacy, I do it for two reasons. One is I want to work with the teams, and I want to observe and see how the store is running and operating. When I go there for my own care, it's I generally am always getting behind the lines. I don't want to kind of cut in front of the customers. But there's the beauty about the pharmacy is that if I really wanted to, I could actually go through the drive-through. I could have it delivered to my home, but ultimately, I like being there in person, so I get a chance to see how the store is running.
And now I read that you are beginning to experiment with having drones deliver pharmaceutical items to your house. Is that is that realistic, or?
Who knows? I think it's certainly things that we're experimenting with. I think right now we've become, the pharmacy is the most conveniently located healthcare service in the country. There's still 65,000 pharmacies across the country. So it's so convenient that, and so close that people, even when we actually offer free delivery, people still choose to come into the store. So I think we're going to continue to experiment and think about new delivery methods, but until we actually see a big, strong demand from the customers that they want more stuff delivered to their home, we're still wanting to make sure that store experience is best in class.
So there are some pharmacies in some big cities that are open 24 hours a day.
Yeah.
I think you have one in DuPont Circle. I think it's open 24 hours a day. Do people really buy a lot of pharmaceutical things at 2 in the morning, 3 in the morning, 4 in the morning?
Yeah. So most of those are tied or really close to other healthcare facilities. So there are people that have needs. One is different hours. People work different hours, so they need to have access during when their work schedules or when their free time is. But we also have people being discharged and or coming in and out of the healthcare facilities that need access to pharmaceuticals. And so the idea is that we know kind of the density and the range of where the shopping pattern is, and so that's why I think it's a really important part of how access is delivered inside of our stores.
Now, for security purposes, do you have like little cameras above the roof or the ceiling so you can see who's stealing things, or do you have some of those?
Well, you don't really have. We do have cameras, but you can actually watch the local television and you can see people actually stealing stuff out of our stores. So it is an area where I'd love to be able to say that the cameras actually become a deterrent, but we still have an issue, as I said, with organized retail crime. There are still people coming in with just bags of stuff, putting it in, and so the idea ultimately is that we find that we have either security or other people at the store that become the deterrent, so you don't find people
steal things. For example, somebody comes in with a bag and they just steal a whole bunch of stuff. Your policy is not to go chase them or shoot them or anything. You just call the police or something. Is that what you do?
Yeah, everything is about de-escalation. So the idea is that they're going to do it, and it really doesn't. We don't want to put our colleagues in harm's way. We don't want to put our customers in harm's way. So that's kind of the downside of kind of how people have been more willing and probably more brazen to go do all this. So that's why we continue to experiment with the right type of security in the stores to try to at least deter
so when you
this.
Tell people at a cocktail party that you're the CEO of CVS, what is the most common question you get?
Why is healthcare so expensive, and why is it so complicated? So and most people I think are frustrated with their healthcare experience, and so I spend time talking about what I'm trying to do and what our company's trying to do to make healthcare better.
So if you're the CEO of CVS Health, you have to be presumably healthy because you don't want to be unhealthy if you're in that position. So what do you do to stay healthy?
I grew up playing soccer. I still play soccer at this age, so that is probably not.
Soccer, is that safe?
Well, my wife doesn't think so because I come back hobbling many times. But
Your board of directors is happy for you to be running around and playing soccer.
I'm not skydiving. It's just I think it's a great way to have. It's a great cardiovascular, and it's an old man's game now. I'm in the over 40 league, so people are gotten a lot slower, and
they have an over 70 league.
We could find you one.
Yeah, look for one. Yeah. Okay, so what is the pleasure of being CEO of CVS? And were you shocked when they said, come out of retirement and be the CEO?
Yeah, I think, certainly I didn't plan for this, and so I would say, yes, I was shocked and a little soul-searching because being CEO of a large healthcare company today comes with a different level of risk. So it's conversations you have to have with your family, with your kids, and
While you're driving around with your wife in your RV, all of a sudden you say to your wife, I'm not going to be doing that anymore?
Yeah, I was.
What did she say?
She probably saw that I was getting a little antsy at home, so I think she was probably saying this might be a good idea for a little while.
So today, if you could run the healthcare situation in our country, what would you do to change healthcare to make people live longer, be healthier, get better supplies of pharmaceuticals? What would you do if you were in charge of health?
I think there's so many opportunities, and it's like when I've been a year and a half in a turnaround it's going back to the basics and the fundamentals. And today, the healthcare system, they don't talk to one another. It's amazing how technology is so advanced in other industries, and in healthcare today, there's still pockets of data that's not shared. So from a consumer standpoint, if you go to 5 different doctors, you got to cobble together, the 5 different medical records, and if you go to 2 different pharmacies, the same thing. So I think technology is going to have a meaningful change in how healthcare is accessed, and I think it's going to be better for the consumer. And then ultimately, if we can actually fix the fragmentation and what I call the friction in the system, then the patients may want to engage differently, and that then leads to a higher engagement rate, generally leads to better health outcomes.
The biggest problem you're worried about today, other than getting through this interview, is what is the biggest challenge you have?
I'd say right now that I'm in D.C., and I talked to Melissa, which runs our government affairs, the government's role in terms of how they want to influence and or shape how healthcare is managed in this country. So I spend a lot of my time, both at the federal level and at the states, trying to help, one, educate, and also describe, what are the real drivers of healthcare costs, and then making sure that we play an active role to help.
Do you deal with members of Congress ever?
I've been back for 3 years, and I've had 4 congressional hearings already. So yes, I spent a lot of time here.
Is that an exciting experience when you meet with them?
Not really, no.
Well, what do they mostly ask you? Why prices are so high or something like that?
I don't really get asked a lot of questions. I get told. So yeah.
They don't let you answer very much?
Not much, no. So
okay. So today, if you were going to rebuild the pharmaceutical, the drugstore industry from scratch, what would you do that'd be different? Was there something you would make the drugstores different than they are today, or they pretty much have everything that you think they should have?
Yeah, I think for the stores, we've spent, I think the retail sector has had a bunch of macro pressures just because I think the customer needs and expectations are changing. And so we've spent a lot of time investing in technology so that the technology works for our pharmacists and for our technicians. We spent a lot of money in terms of the training and the education, and then ultimately we changed the payment model. So there was a cross-subsidization that works inside the pharmaceutical chain today that didn't work really well, and it made it really difficult for the consumer, and it created a bunch of variability in terms of how the stores were performing. So we fixed the pricing model, we added technology, we invested in our colleagues, and now we have capacity for the 30,000 pharmacists that are taking care of our customers to do more things than just dispense the medication. So where I'm going next is trying to have them practice at the top of their license. This is also a reason why I spend time in D.C. is because primary care in general is shrinking or contracting while the demand for primary care is expanding. So I think the pharmacists play a really affordable, convenient, and I think a really important kind of value for where I think healthcare is
Now,
headed.
the Affordable Care Act, did it really change how pharmacies act, or didn't have that much impact?
It didn't. I mean, I would argue that it had more people covered, so you had more insurance or members with insurance to deal with, but it didn't really change fundamentally how the pharmacy was practiced.
And who buys more products at the CVS store? Is it young people, middle-aged people, older people? Who are the bigger customers for you?
Yeah, it's definitely the seniors. I mean, as you age, you have more conditions. More conditions generally lead to more medications, and so that's we've always typically catered to to the aging population. But the GLP-1s has been a new fad that now it's kind of bringing younger folks back into the.
Have you noticed that older people complain more than younger people about things, or not?
They're more talkative.
Right.
They probably use the register more, and they actually want to have conversations versus the younger that wants to do everything digitally.
Okay. So do you enjoy your job?
I do. This has been, 40 years of doing this has been incredibly rewarding. There's a part of what you want to give back to the 300,000 people that come to work every day to serve your customers. And I couldn't be more proud of being able to make a difference for them.
Now, do you ever go to Walgreens, another company, see what they have?
When there's not a CVS and I'm forced to go into something, I might go, and we also like to check out the competition from time to time. So.
And what do they do that you should be doing? Anything? No.
I think we've got everything going right now. So,
So they don't have any good ideas for you. What about, is Walmart a competitor for you?
Walmart is they're a growing presence in pharmacy, and it's a different customer base generally than somebody who shops at the pharmacy. But we've got a relationship with Target, so we have a bunch of CVS's inside of Target. So that's a good, important relationship for us to be able to capture a customer that generally wouldn't come into a standalone pharmacy.
The biggest single complaint that you might get from customers, if you were to add up all your complaints, what is it? It's that you have to stand in line, the machines don't work, or prices are high. What is the biggest complaint?
It's not a complaint. That the number one question is where's my script? You know, and it's been electronically routed from their doctor's office, and they want to know whether or not the script is ready. And so we have 500 million phone calls a year into the pharmacy. 500 million, and 75% of them.
How many calls?
500 million calls into our pharmacies. But
they ask if their prescriptions they're ready.
But they're asking a bunch of different questions. You know, how much is it going to cost? You know, there might be some reason why the prescription wasn't filled. They need to get additional information from the doctor. So those are all things that generally require phone calls. And so the idea is, when I said earlier about how all the businesses should work together, you know, if we focus on simplifying and taking the friction out, we should be able to take a big percentage of those phone calls out of the system because they don't have a reason to call because we're going to be able to manage them. And once again, the app will be able to tell you where your prescription is.
Okay, well, all right, so that's the biggest complaint. People want to know when their prescription is. What's the thing that people are the happiest about when they go to a drugstore? What do they like the most about a drugstore?
When we actually talk about the delighters inside the pharmacy is when you've surprised them or delighted them around generally what things cost. So everybody's talking about how expensive drugs are in this country, and they are. But 90% of the medications in this country are generic, and we have the lowest cost generics of anywhere in the world. And so the average cost is around $7. So if we can actually continue to show them how we've saved them money, then generally that's where you build the trust.
Generics are 90% lower in price than the branded product?
Yeah, at least, yeah.
Wow.
And but it's that last 10% that everybody is struggling with because it's that 10% of the brands or 90% of the expense. And that's where everybody is reacting to how can I pay for.
So if you need a prescription, do you ever go to your drugstore and say, where is the prescription, or they have yours ready to go?
I use my app.
Use that, okay. And if you were to come to my drugstore, the one I've been talking about, would they recognize you, you think?
They probably.
I would tell them who you are.
Here in the D.C., I spend quite a bit of time here in D.C. because everybody has a view of the stores in this market. It's a very important market for us.
Okay. Look, you've been a very good sport. I go to your pharmacy all the time. It's right near my house. I don't know that I'm your best customer because I don't use all your services. I probably should, subscribe to some of these things. But I'm always afraid I'm going to get emails the rest of my life if I subscribe to your service. Can I get not on your email list because I don't want to get emails forever? How do I do that?
I would love to take some time to set you up, and I promise you won't get any emails. We love you either way, but as long as you're a CVS customer. But I will make sure that you get taken care of, and you won't get an email, you won't get a text. We'll make sure all this stuff.
I'm going to go today, and I'm going to say I just met with David Joyner, and he said I'm going to see what they know who you are. I mean, they have your picture there somewhere.
They probably have it in the back somewhere. Yeah.
Look, you've been a good sport. You've done a great job. I wish I had bought the stock at the time. And by the way, the stock was up 65%, as I said. Will it be up another 65% in about another year or so? Should I be buying it now?
I would say that my plan is to continue growing this company.
And you're going to stay for
I'm hoping the investors actually reward us for that.
How many more years do you want to do this?
I have a lot of work to do still. So
and you don't want to? Would you ever go into government to be Secretary of Health or something like that?
No, I like my retirement.
All right. Well, look, David, thank you very much for being here. It's a very good story, and congratulations on your success.
Well, perfect. Thank you so much.
Thank you.
All right.
I have a gift for you. I have a gift. Hold on.
All right. From one David to another, peer-to-peer. David Joyner, the CEO of the health and drugstore chain CVS, talking with Bloomberg's David Rubenstein. That will be a future episode of Peer to Peer. But hey, you got to see it and hear it first, right here on Balance of Power, the Thursday edition live on Bloomberg TV and radio. Really fascinating as we watch CVS shares today. Not so hot, down $2, about 2%, but it's been, as David just pointed out, a pretty good year, up about 28% year to date, up 54% year over year. With our eyes on Wall Street, we have a lot to cover this hour and want to bring you the latest on the U.S. and Iran, with a second day of strikes breaking out. Tyler Kendall standing by on the north lawn of the White House, as well as our political panel. First, let's update Wall Street with CVS in mind. We bring in Charlie Pellet. He's at World Headquarters in New York with the latest on the markets. Charlie, what do you have?
All right, now we've got two themes going on, chips and oil. We begin with what's going on with chips, specifically the SOX. It is surging now by 4.8%. That, of course, the Philadelphia Stock Exchange Semiconductor Index. We are seeing a tech rally today. Right now, we have got NASDAQ up by 1.2%, but where all the big techs are located, the NASDAQ 100 Index up now by 1.7%, and the SOX up by 4.8%. To give you some context, the S&P by comparison up 0.8%. Dow Industrials up 157 now, up by about 0.3%. The VIX now below 16, a 10-year at 4.53%, with a 2-year currently yielding 4.15%. Spot gold up $49 the ounce, up 1.2%, 41.26. I mentioned crude. It is lower now by 2.2%. A pullback for West Texas Intermediate back below 72 a barrel, 71.89. Brent just above 76 now, down by 2.5%. Former Fed Chair Ben Bernanke has been appointed to Anthropic's long-term benefit trust. That's an oversight body meant to keep the AI company accountable to its public mission. And the jersey that New York Knicks star Jalen Brunson wore in Game 1 of the NBA Finals was sold for a little more than $1 million in a Sotheby's auction. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That's Joe Matthew. This is a Bloomberg Business Flash.
All right, great, Charlie. Thank you so much. He'll be back in about 20 minutes' time with another check on Wall Street. Our eyes specifically on oil today, and curious to see prices pulling back to the extent that they are, with more than 2% declines for WTI and Brent, considering nothing really has changed other than less traffic, and obviously that means less oil getting through the Strait of Hormuz. This follows a second straight day of attacks, and in both directions. The United States, according to U.S. Central Command, says it completed another round of strikes involving 90 targets, air defense systems, coastal surveillance assets, missile and drone storage sites. And Central Command pointing to the possibility of more, saying U.S. forces remain vigilant, lethal, and prepared to execute operations directed by the commander-in-chief. In the other direction from Iran, the Islamic Revolutionary Guard Corps saying it struck U.S. bases in Kuwait and Bahrain and is threatening to expand such attacks. Whatever Iran throws at the U.S. or its allies, however, the president telling the press corps on Air Force One on his way back from the NATO summit that the United States will send much more in response. Listen.
We just hit them very hard, and I say we hit them 20-1. Every time they hit us, we're going to hit them 20. They did a little something today, but it was really retribution for last night. They hit actually 3 boats, not 2. And when they hit, we hit back much harder.
Every time they hit us, we're going to hit them 20, the commander-in-chief says. Still today, some 24 hours after the president said the ceasefire was over, it is still unclear what the status of the MOU is with Iran, what the status of the strait is exactly, other than Bloomberg reporting that very few ships are getting through at this point, as very few are willing to try. Bloomberg's Tyler Kendall, our Washington correspondent, is at the White House now with more. Has there been any other official language coming from the White House on this, Tyler?
Well, Joe, at this point, we haven't heard from the president quite yet today. He does have a few events on his schedule. As of now, they all remain closed to the press, though no doubt we'll be seeing if they perhaps could open up later this afternoon, or if he gives us an update on his Truth Social. Because at this point, the president was asked just yesterday whether or not this flare-up in fighting means that the ceasefire is totally over. As you know, he said he thinks it's over. He was asked if this means that we will see a full resumption of hostilities, and he said, quote, out? I don't know, which is leaving open the door that perhaps negotiations could resume in some regard. He himself said that he wouldn't prevent his negotiators from moving forward, though he said that he ultimately doesn't think that it could prove to be fruitful. We know that the diplomatic efforts had been stalled during this week while the funeral for the former supreme leader was held in Iran and set to schedule to end today. So we'll see if maybe there's some sort of engagement. We are getting these headlines that Iran is talking to some regional partners, including earlier today, Qatar, as well as breaking across the terminal moments ago, a call seemed to be held with Saudi Arabia. But Joe, the thing that really needs to be sorted out here is the strait, because as you're talking about, we're seeing very little flows through. But important to point out, if flows are going through, the imagery is showing us that they are not going anywhere near that corridor that the U.S. coordinated that is closer to Oman. Any flows are going closer to Iran. And we should also point out, Joe, that it appears evident that a lot of ships are turning off their radars, their transponders, so that they can't be detected. And that may also influence just how much we know is actually getting through that waterway.
Really interesting. As we look at a national average, $3.84 for a gallon of regular gas, according to AAA. Tyler, following the surge that we saw in crude oil prices yesterday, albeit they are down about 2% today, is the White House still talking about taking any other actions, including suspending the federal gas tax? That seemed to peter out pretty quickly.
We used to talk about that so much, nearly every day a few weeks ago, Joe, but at this point, we haven't really heard that much messaging around this. President Trump seems to be solely focused on what's going to happen next in terms of the kinetic action when it comes to the conflict in Iran. We can say that perhaps the most high-profile fallout so far since these tensions have escalated is Bloomberg News' new reporting this morning, for people familiar, that Qatar is pausing efforts to rapidly revive production at the world's largest LNG facility. That is going to be something that we should watch really closely here, because our analysts at Bloomberg Economics just put out a new report. They crunched the numbers. We had seen flows surge to 16 million barrels per day, but the last 7-day average has been cut in half to 8 million barrels per day, and that certainly is going to ring some alarm bells here at the White House.
Yeah, there was some heavy damage to that country's LNG infrastructure in the outset of this war, Tyler, and at the time said it could be 2 or 3 years before they're back to the pre-war flows. Tyler Kendall on the North Lawn of the White House, we thank you as ever, Bloomberg Washington correspondent. As we wait to hear from the president today, and he could still open some of the events that he has on his schedule, billed so far simply as signing time and executive time, which we frequently see on the presidential guidance. We're also covering breaking news and a vacuum that has been left in the Senate race in Maine. Listen.
I have faced some very serious allegations, and I just want to make it clear. This is all false. We did it the way that we were told we are supposed to make change, and we won. And now they are not going to let us have it. Not if it's me. And so we're suspending campaign operations.
An emotional Graham Plattner in an 11-minute free-form handheld vertical video seemingly recorded on his telephone, raging against the party machine and making the announcement that many, if not most, Democrats in Maine were hoping for, suspending his race for U.S. Senate. This, of course, is not the end of the story. As we've heard repeatedly from organizers in the Democratic Party, the Plattner campaign was trying somehow to affect the outcome of, well, what happens next and who might replace him in carrying the Democratic torch in an effort to unseat Republican Senator Susan Collins of Maine, frequently targeted by Democrats, never toppled. And there are questions this evening about how exactly this is going to go forward. The party is now talking about a nominating convention with only weeks to go. And we wonder if that will be enough for voters to feel like they had a say in this and to have a credible campaign move forward in such a short period of time. A lot easier said than done, as we now play to our political panel for their take on this. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis join us now. I'm glad to say Jeannie is here, democracy visiting fellow at Harvard Kennedy School's Ash Center, and our friend Rick Davis, partner at Stone Court Capital, our Republican strategist. Now what, Jeannie? How do you pull off a convention with 600 delegates with 2 weeks?
Yeah, and can I just say, Joe, he needed to say five words. I'm suspending my campaign. Instead, we were treated to this crying game, narcissistic, blaming the media, blaming everybody, never taking responsibility for the very credible allegations against him of breaking and entering and rape, along with the many other things, including Nazi tattoos. That was a video for the ages, I have to say, and one we really didn't need. And, I would just give credit to the Maine Democratic Party, the executive director there, Devin Murphy Anderson. She has done a brilliant job pushing back, particularly on something that you mentioned, which is the reason apparently this video took so long to come out, because this guy and his campaign wanted a role in his replacement. Now, can you just imagine if somebody like Eric Swalwell said, I'll step down from the governor's race in California, but I'd like to decide who's going to fill in. It is narcissistic. And, the Maine Democrats do have a process in place. It's a short time period, but boy, good riddance. And there's a big, rich Democratic bench there that can certainly fill and excel in these shoes.
Well, the crying game had a surprise ending, as I remember here, Jeannie, and this can too. If anybody could pull this off, I figure it's Rick Davis. What do you have, 2 weeks? So it's July 27. You need to hold a nominating convention this month, Rick. 600 delegates to pick the nominee. Go. How do you do it?
Getting a hall and filling it with people who are already leaders of the Democratic Party of Maine isn't the hard part. And even picking a candidate, that's just a couple of ballots. Boom, you got a candidate. The hard part starts then, which is getting the entire Democratic Party to embrace that individual, to get the money wrapped around that individual in order to wage a campaign that's going to be the most expensive campaign in the midterm elections. I mean, they're talking about a potential ad buy totaling $400 million. And if the candidate is incredible, the money doesn't show up, and really it doesn't matter whether or not you'd had a convention or not. So the trick here really starts post-convention, and it almost doesn't matter who they pick. I mean, the parties are going to have to coalesce around this individual, regardless of their barnacles or their abilities, and and make this a competitive race. Because as we heard from Jim Messina earlier today on this show, he's run every kind of rationale around this, how do Democrats win the Senate. And the one thing he keeps getting back to is all roads lead through Maine. So this is the kind of thing where if the Democrats are prepared to spend hundreds of millions of dollars on a brand new candidate with limited statewide experience and probably a record of losing, that's what's going to make this critical for them.
Boy, really something. And yes to all of this. Jeannie, we heard from Emily's List. The pro-choice women's PAC responded to that video post that Graham Plattner put on Twitter. 11 minutes, it says, and zero accountability. With that said, what do we need to hear from the Elizabeth Warrens and the Ro Khannas and the Bernie Sanders, who were okay with the Nazi tattoo, they were okay with the sexting and the philandering, whatever else all these other accusations were, but found a line here? Because a lot of this, as I think you have stated, could have been prevented.
It absolutely could have. And Emily's List, I couldn't agree more. They are absolutely right. Zero accountability there. And I do think you have Democrats with eggs on their face. And I would say it starts with the DSCC. It starts, unfortunately, with the Democratic National Party with Chuck Schumer. Part of what we have to do is go back when Plattner was first plucked out of obscurity, and he was plucked by DC and New York City progressive consultants. He didn't grow up organically out of the Maine woods. He was plucked. And what they did is they wanted Janet Mills to run. She was uncertain. She was hemming and hawing. And they pushed out other really viable candidates, which is why we saw so many candidates get in on the governor's race there. And so they do have egg on their face. They're going to have to account for this. But I do think this is in some ways the best thing that could have happened, and the fact that it happened in time to replace him. And Joe, I have to say, one person we're not going to see on the ballot is McDreamy. Patrick Dempsey wrote an op-ed. He's not running, but he is going to look to see who the candidate's going to be. But there are a lot of viable candidates out there, and a lot of progressives who can, without all the baggage, who have the same issues on their side that Plattner was running on. He is not the only progressive out there.
Well, and some of whom have been vetted and were in the gubernatorial campaign. Nirav Shah is getting a lot of talk, former Maine CDC chief, as well as the state secretary of state, Shanna Bellows. We'll see about that, obviously, but these could be somewhat familiar names, certainly on the convention level. We'll see, I guess, on a statewide level. Rick, I want to dive back into this video that Graham Plattner made, because he said a lot in 11 minutes, and it got a little conspiratorial at times. You could sort of feel the cosmic irony that this man is sensing as he sits out there on the deck in Maine, steps from the oyster farm. Listen to how he put this sort of media political party conspiracy together in what he sees as a war against him. Listen.
We live in a political system that is not built for normal people. It is a system that is built structurally to make sure that movements like ours cannot flourish. That if they begin to succeed, they can be crushed. But now the ball is in the court of the Democratic establishment. My name might be on the ballot right now, but that ballot line belongs to the people of Maine. And on November 3rd, it needs to belong to the people of Maine. And the next Democratic senator for Maine needs to belong to the people of Maine. They need to reflect the will and the values of the people of this state.
Now, beyond making you think that you don't want to be around this man when he's angry, Rick, a lot of people believe what he said. Even take Graham Plattner's name out of it and this campaign, believe that about American politics. And as somebody who has taken so-called normal people, albeit many exceptional ones, as a campaign manager and molded them into a candidate and started a career in politics, I just wonder how you respond to that.
Yeah, look, this is the politics that we live in today, not the politics that I grew up in the 80s, 90s, and 2000s. And you could close your eyes, and as David Axelrod said today, Graham Plattner took his script from Donald Trump. I mean, this is the same kind of rhetoric that Donald Trump used when he first ran for the Republican nomination, right? Oh, these Republicans, the establishment's against me. We're going to have to rip this out of their hands. And literally, if you'd close your eyes and change the voice, it just very well could have been the same person, not taking responsibility for any of their own shortfalls, not taking any responsibility for anything they'd done wrong in the process. And so, look, I mean, this is the script. And every time Democrats criticize Donald Trump for, this kind of lack of accountability, all they got to do is look in the mirror and see Graham Plattner staring right back at them. And so until we have an agreement that somehow none of this actually is good for politics or good for the people who practice politics, then I think we're going to just see more of this kind of junk. I mean, the last thing we needed to do is have to watch that video, listen to him not take responsibility, and count how many cars went by while he was given that thing. Because it's the worst produced thing I've ever seen in my life. I would only wish
directing
that there were
this?
sirens, come pick him up.
Oh, man, it happens to the best of us.
Happens to the best of us.
Jeannie, he suspended his campaign. That used to be something that you did when you were thinking about dropping out of the race, which I thought the first video was. Remember, he was going to stop down and think about things. Now he's suspending the campaign. Everybody, including me, says, well, he's out of the race. Should we assume that? I mean, is he waiting for some sort of window to come back?
He can wait. The New York Times poll just before he dropped showed, this was before these allegations came out, showed that he was losing to Susan Collins. And I am going to just remind everybody, the Republicans let Donald Trump become president and run 3 times on their ticket. And they have nominated Ken Paxton to be their senator from Texas. The difference is Democrats have pushed out this Plattner, have pushed out Plattner. But the other thing, Joe, is I think we need to get over this moment where if you are working class, if you are somebody who has never run for office before, you have somehow committed these atrocities against women, you have made anti-Semitic statements, and we're supposed to look away. There are a lot of wonderfully successful, progressive, populist people out there who have not been accused of these kind of really credible and horrific crimes. So the idea we have to take one with the other is laughable, and that shows that these consultants who went there did not do their job, and the Democratic Party did not do it. It's until now that they got him out.
Boy, really something. Just quickly, Rick, as a campaign operative, what happens to the folks who are running Graham Plattner's campaign, may have not shared information or were responsible for this dumpster fire that we have here? Do they get jobs in the next cycle? How does this work?
Yeah, first of all, on suspending the campaign, it's a legal framework. It allows him to continue to spend money and take it in to pay the bills that he owes. So that's just a nomenclature. Yeah, it's going to be very hard for these guys the way this went down. That video is going to basically tattoo unemployable on their forehead in politics.
Wow, jeez. All right, speaking of tattoos, pun intended, I'd say we put this one to bed. Rick Davis and Jeannie Shanzano will help us figure out, though, how we're going to get through this convention and figure out what this race is going to be. I feel like we need to get up to Maine, everybody. Producer James is going to set up the bandwagon. Maybe we'll be on the way. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, thank you on this day after Plattner suspends the campaign. We're going to turn back to the news from the White House and from Iran with a second straight day of trading fire in an MOU that is still up in the air. We have not heard from the president today, but we have heard from CENTCOM, and we're going to get an update coming up on all of this stuff and spend some time with Emily Harding at CSIS. We'll also get to Wall Street. We may as well do that right now. Charlie Pellet is standing by at World Headquarters in New York. Feels a little better than this time yesterday, Charlie. What do you have?
Absolutely right. We got two central themes today. Semiconductors, as in the SOX, the Philadelphia Stock Exchange Semiconductor Stock Index, up 4.6%. Also a retreat for crude oil. Right now, West Texas Intermediate crude at $71.56 a barrel. It is down now by 2.6%. Bottom line here, S&P 500 index up 60, up by about 0.8%. You run the GIP screen on the Bloomberg, and you can see that we are just about the best level of the day on the S&P. Dow Industrials up 190, up by about 0.4%. NASDAQ up 305, up 1.2%. But the NASDAQ 100 index full of big tech names up 1.7%. Again, the SOX up 4.7%. The VIX just above 16 with a 10-year 4.53% and the 2-year 4.15%. Gold is up 1.4%, 41.33 the ounce. West Texas Intermediate crude, $71.63 a barrel. WTI now down by 2.6%. Earnings news, PepsiCo said consumers pulled back in the second quarter, slowing its efforts to revitalize its North American snack business. Today, looking at shares of PepsiCo, they are selling off. Right now, we do have PepsiCo shares declining. Also declining today, a rival Coca-Cola. Coke, by the way, down 0.8%. PepsiCo right now down by 3.1%. Also, after earnings, we're seeing Levi Strauss shares up now by 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That Joe Matthew is a Bloomberg Business Flash.
Okay, Charlie, many thanks. He'll be back coming up at the top of the hour, 2 p.m. Eastern Time, as we kick off Bloomberg Business Week Daily with more on Wall Street. Humbling feeling if you sold your Micron yesterday. As soon as you think you've got this figured out, it turns around. Indeed, the memory stocks, the chip stocks are in many cases surging today. Micron specifically up almost 8% now, $75 a share to leap back above $1,000 after everyone had left it on the side of the road, said to be cyclical, up too far, too fast. Then, of course, you wake up, it's a new day. NVIDIA is having a little bit of trouble, but we're seeing gains in Intel, in Broadcom. And we want to dig a little bit deeper with Nora Melinda, of course, covers the markets for us, our markets correspondent, live from World Headquarters in New York. Nora, this rotation is getting to be manic. I'm getting whiplash. How about you?
You and me both. I mean, I am dizzy, as I was just saying yesterday. Yet a new day. And as you mentioned, Micron is really on the mind of a lot of investors. It's a great day to be an investor of Micron because we are seeing it's the biggest point contributor to the S&P 500 gains today. And this is coming after some news that we saw, essentially that it's going to be raising its spending on new U.S. plants to $250 billion. Now that's up from $200 billion before. And of course, we know that this is kind of to feed the memory demand. All the attention's really been on memory right now, and that's where you're seeing Micron stepping up to the plate. Also, the reporting showing that this should create more than 90,000 jobs. So you're certainly seeing Wall Street celebrating as they're seeing Micron really looking toward how they can fit into this puzzle in terms of satisfying, I should say, the demand that we're seeing for memory.
Nothing major really came out of the headlines from Iran overnight, at least market-moving headlines, Nora. So people seem to be feeling a little more relaxed today. You've got a VIX of 16. Oil prices are rolling back, despite the fact that we were still shooting there, 90 targets last evening. But I'm wondering what the next catalyst is, if nothing more than earnings. This is next week already. I mean, it's time to go again, right?
That's the thing. I think the market's looking ahead to earnings. We've also got CPI data just coming up here shortly. But you are seeing the market today looking past the headlines that we're seeing in the Middle East. And we're seeing a risk-on mood in the market. If you take a look at the NASDAQ 100, it's up about 1.7%. And so we are seeing it sitting near some of those session highs as we're really seeing some risk appetite here percolating in the market. As you mentioned, oil, looking at Brent crude, it is pairing some of its earlier gains that we saw recently, and it is here in the red. So investors are just trying to figure out what the next trade is. Of course, we're going to see fundamentally when we look at the economy and some of the economic data that we have ahead, but really earnings is what the market is looking for as to whether or not corporate America still remains healthy in this environment.
Okay, Nora, thank you so much. It's great to see you. Nora Melinda live in New York, watching Wall Street for us here on Balance of Power. It's the Thursday edition, and we're still following the bead in Iran. After another night of back and forth, this was the second straight night of attacks by the U.S. as promised by the president. And while we've not heard from Donald Trump today, U.S. Central Command on social media saying forces completed another round of strikes with 90 targets this time, air defense systems, coastal surveillance assets, missile and drone storage sites, and saying that U.S. forces remain vigilant, lethal, and prepared suggests there may be more where this came from. The president has repeatedly been presented with military options, and we know that fire is coming back in the other direction, not necessarily at the U.S. Armada that has been lined up near the Strait. The IRGC struck U.S. bases in Kuwait and Bahrain, repeating a pattern that we have seen, striking our allies in the region that are home to U.S. assets. And we want to hear more about this and maybe get a better idea of where we stand, where this MOU is, where the ceasefire stands, with Emily Harding, Vice President of the Defense and Security Department at the Center for Strategic and International Studies, CSIS, and a real expert as we watch her resume as former Director for Iran in the National Security Council, former Deputy Staff Director on the Senate Select Committee on Intelligence. Emily, it's been a long time, and we're glad to have you back. Welcome to Bloomberg TV and Radio. Are you assuming the ceasefire is over, or that we're simply continuing this pattern of tit for tats against the backdrop of some form of talks?
I don't think it's really over. I think this is definitely another example of war being a continuation of policy by other means. Basically, both sides are communicating with violence at the moment. What we see is the Iranians expressing their displeasure at several triggers that have happened recently, including Israeli strikes inside Lebanon, some clashes with the Kurds in the north of Iran, and then also this transit of ships close to the Omani side of the border. And we just saw them wrap up funeral festivities for the Ayatollah, and that's a moment where they seem to really have wanted to reassert themselves in the Strait. And then we see the Trump administration pushing back very hard with retaliatory strikes. So we are in one of these cycles, but that doesn't mean that we can't return to negotiations, return to a ceasefire when both sides have, in effect, said their piece.
Well, Emily, the U.S. attacked Iran's coastal southern provinces, and according to Iran, this is not from CENTCOM, 2 bridges in eastern provinces along the railway line to the city of Mashhad. Iran calling the attacks, this is a statement from the Foreign Ministry, I'm sure you've seen it, a flagrant violation of Articles 1 and 5 of the MOU. For starters, what are we doing dropping bridges here? That seems like an escalation. And what do you make of a flagrant violation? Does it still stand?
I think both sides could shoot some talking points back and forth on who's violating the MOU more, but that's really not a productive conversation at this point. On the point of the bridges, though, I think there's some conflicting opinions about that. From a military perspective, you could say that those bridges were very useful militarily to move things around inside Iran that are necessary to keep harassing the strait. On the other hand, it's also civilian infrastructure, and civilians need to get around. So this is one of those things where inside the Department of War, there would have been a lot of debate. Inside CENTCOM, there would have been a lot of debate over whether these were legitimate military targets. We're also pretty deep into this conflict at this point, and while we started it with a huge target deck, those have kind of worn down a little bit. So now what we're looking for is smaller targets, small fast boats, and things that are really going to send a message. And to me, those strikes on bridges and infrastructure really says to the Iranians that, look, we can bring some serious pain to your administration, and we're going to be in this to win this.
Wow. I wonder, and I've asked a few people this, when you hear a couple nights in a row, hey, we just struck 90 more targets, we're taking the fight to Iran, having heard repeatedly from the president that we have defeated Iran militarily, we've destroyed their Air Force and Navy. How can we continue to find so many new targets? Are they rebuilding, reconstituting sites, or are these lower level, lower grade targets that might not have been prioritized earlier in the war?
Right. So there are big strategic targets like the facilities where they're working on nuclear weapons production, where they're working on nuclear enrichment. Those things have been thoroughly destroyed. When you look at smaller targets like these, however, it is pretty easy to rebuild some of it. A lot of what they're doing in the Strait is they're harassing shipping with small drones. Those are very easy to hide, very easy to produce, and very easy to move around the country. So those are going to be the kind of mobile targets they're looking for now. We've also seen them try to harass shipping in the Strait with small boats, small fast boats. Those can be hidden in any number of places all along the Iranian coast, and they can keep moving that material into position. So while we are continually knocking down a lot of these targets, some of them are going to come back on. Others are going to be like deeper into the target deck, or these things that we didn't strike before that now we're going to send a message by striking.
Got it. As I mentioned, you were director for Iran on the National Security Council 0708, so the George W. Bush administration. Emily, to what extent were you talking about this very issue, to the extent to which you gamed out having to protect the Strait or maybe occupying Karg Island? Are the stories and targets you're reading about now familiar to you? I realize you can't describe classified information, but were these considerations that long ago?
Quite familiar. In a lot of ways, this is a war that we've been planning for, waiting for 20 years. Back when I was on the National Security Council, we were seeing the Iranian government go after our troops in Iraq in a very aggressive way. And so we were planning for a potential escalation that could lead to this kind of war. We did the war games, we did the planning, we did the op plans. This has been something that the Pentagon has been ready to do for a very long time. And granted, they've been updating those plans based on what would be the most legitimate targets, the most painful targets for the Iranian regime. But one of the features of all of those discussions was always, how are they going to try to close the Strait? Will they be able to shut down global shipping? What can we do about it if they do? This particular round of conflict, I was surprised by how little preparation there was for that eventuality, that they were going to close the Strait. It just seemed like an obvious move that they were always going to try to make. And I think what has really surprised the world is just how little effort it really takes on the part of the Iranians to make it unpalatable for things like global shipping to move through that very narrow waterway.
This is fascinating. That's, of course, when the commander-in-chief was calling Iran part of the axis of evil. We all remember that speech. Emily, what do you make outside of maybe lack of planning for the Strait, the rest of the way the military has selected targets and comported itself over the past couple of months? Is this similar to what your administration would have done in terms of approach?
Oh, I think so. I mean, it's really a tale of two policies. There's one policy, which is the military execution of the president's orders. And in so many ways, that has been amazingly, perfectly, wonderfully done. From rescuing the downed airman who was in Iran to the very precise targeting to minimizing civilian casualties whenever possible, to being able to find, fix, and finish very quickly with the help of some new technologies. A lot of that has been proving the way of American warfare works very well, very efficiently, and can be lethal when it needs to be. On the other hand, though, you have the overarching policy of the conflict. You know, what are we really trying to accomplish here? There are things that you can accomplish via military means, and there are things that you just can't. So early on in this year, what we saw was the Trump administration come out and say that they were looking for things like an end to violence against protesters. They were talking about things like regime change or a new regime in Iran. And then they kind of backed off that rhetoric. And I suspect it's because somebody explained to them that these objectives are very difficult to achieve through military means. Instead, we shifted to this framework where we were looking at nuclear and Navy, and those things you can accomplish.
Now he's calling it the denuclearization is the word we've been hearing from the president. Emily, really great to have you back. Don't be a stranger. Emily Harding, CSIS. It was a clinic on what's happening overseas as we wait for more hard information from the administration. I'll see you on the late edition of Balance of Power.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. Bloomberg Business Week Daily. Carol Masser and Lisa Mateo, lucky for us, in the house. She does weekend duty here.
Yes.
And you're also doing daily duty.
Doing daily duty. It's a good one.
She covers it all. She's, of course, in for Tim, who is out this week. And we've got a lot going on. Once again, we are looking at a market where we are seeing a risk-on trade, in particular in the tech trade, Lisa. We've got the NASDAQ 100 higher by more than 500 points.
Yeah, it looks like the markets are kind of feeling the economy can absorb everything going on with all the headlines, all the geopolitical tensions. So far, so good.
Yeah, we continue to kind of have days where we look through what's going on in the Middle East, and then there are days that it is front and center. Semiconductors really leading the way today. We're going to be talking about that a bit over the next few hours. The SOX up 4.5%. We're going to get more on the trade for you in just a moment. First up, though, we are going to talk about U.S. and Iran, the trading of airstrikes back and forth, tit for tat, that we are seeing between the two. Is it a conflict? Is it a denuclearization? Is it the end of a ceasefire? Is it perhaps just tough peace talks? We don't know. We hear all different things to describe it. So we're going to try and find out some answers about where we are in that situation. Plus, we mentioned Zuck getting aggressive with Meta's pay-to-use AI. What I love about this, Lisa, is that all of a sudden it seems like Meta Platform's leaning much more aggressively into that trade that has excited so many investors, and that is hyperscalers.
Yeah, and it'll be interesting to see who will follow along kind of in the same suit.
Yeah, exactly. So we're going to dig into that. You highlighted on our planning call this morning, we got to talk some politics.
Of course. Yes, most definitely. Everything going on, of course, the infighting amongst Democrats, that's the big story there. And what, Republicans, do they have to kind of change their strategy and everything?
And midterms are just around the corner.
Just around the corner.
We're going to talk about that. And then we've got a great market guest to tie it all together. Sit tight, everybody. Lisa and I have a lot for you in the next 60 minutes. Let's get you going, though, with a check on the trade. Here's Charlie Pellet.
Hi, thank you very much indeed. Looking at two major themes for markets today. You guys alluded to both, chips and oil. And right now, we have got stocks pushing higher. You run the GIP screen on the Bloomberg, looking at the S&P 500 index, just about the best level of the day. But let's begin with what is going on with chips. We've got the SOX, the Philadelphia Stock Exchange Semiconductor Index. It is up by 4.5%, as Carol mentioned. Right now, the NASDAQ 100 index surging 1.7%. NASDAQ Composite Index up 1.2%. And should point out that on the NASDAQ 100 index, now looking at a gain of 504 points. S&P up 61. That is a gain of just about 0.8%, with the industrials, Dow Industrials up 187 now, up by about 0.4%. The Bloomberg Mag 7 index up 0.3%. Again, the SOX up 4.4%. All of this with the VIX right around 16. The 10-year 4.53%. The 2-year 4.15%. Gold is at $41.33 the ounce, up 1.4%. West Texas Intermediate crude down 2.8%, $71.48 a barrel. And Bitcoin now at 63,140. Bitcoin up by 1.7%. Chip names, shares of Broadcom, they're surging 4.4%. Micron up now by 7.7%. Intel up by 2.1%. Nvidia, though, in the red. Nvidia down by just about 0.4%. Recapping stocks higher, chip stocks are rallying. S&P 500 index up 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. Carol and Lisa, that is a Bloomberg Business Flash.
All right, great stuff. Charlie, thank you so much. And as we said, we're going to be talking about the chip sector a little bit later on Bloomberg Business Week Daily. By the way, the stock's still up about 85% year to date. All right, folks, let's get to it. As we mentioned at the top of the hour, the U.S. military attacked Iran for a second day. Tehran retaliated against American allies in the Persian Gulf. And so that has raised fears once again of a return to war after little progress seems to be making in those efforts to secure a diplomatic outcome. Peace talks, as we know, can be difficult. President Trump addressed the latest on the relationship. He did so aboard Air Force One yesterday as he returned from the NATO summit in Turkey.
We have many ways we can win, but we've already won militarily. They have very little They have very little left, and they want to make a deal so badly. They called a little while ago. They want to make a deal so badly. I just don't know if they're worthy of making a deal. I don't know that they're going to honor the deal.
All right, that, of course, was President Trump talking about Iran. That was aboard Air Force One yesterday, returning from the NATO summit. As the two continue their tit for tat, Lisa, we said this at the beginning. Yeah. Sometimes it's called a conflict. Sometimes the president says, no, it's a denuclearization of Iran. They talk about the end of a ceasefire, an escalation, war. Like, it just goes back and forth, yeah. Right? And so what exactly is going on? And that is something we're hoping to tackle here as we continue to follow it. Edward Fishman is back with us. He is Senior Fellow and Director of the Maurice R. Greenberg Center for Geoeconomics at the Council on Foreign Relations. He's also author of the New York Times bestseller, Choke Points, American Power in the Age of Economic Warfare. He's a perfect voice for us. Ed, thank you so much for coming back on here. As I keep saying, and Anna, one of our producers, saying, wait, what is this? Like when we were talking about in our planning call, conflict, denuclearization, a war, tough peace talks. Hard to know where we really are in this situation. And we have days where the markets look through it and some days they don't. Where are we, in your view, when it comes to the U.S. war with Iran?
So look, I think that there's a fundamental, irreconcilable difference between the United States and Iran, and that is, what is the status of the Strait of Hormuz moving forward? This war, when the United States and Israel started it in February, was clearly aimed at regime change. When it became apparent that that was not going to happen, the United States sort of pared back its intentions to try to get denuclearization. But I think it became apparent that Iran's closure of the Strait of Hormuz was imposing so much pressure on the global economy and on the U.S. economy in particular, that it has really become a conflict over that issue. And even the memorandum of understanding, the deal that was signed last month, it left some serious ambiguities over the future status of the Strait of Hormuz. And I think that's what's bubbling to the surface right now, the U.S. and Iran really fighting over what the status of the Strait will be moving forward.
Well, Edward, I want to stick on the Strait. Could, all the influence that Iran has on that waterway, could it kind of change the power dynamic in the Middle East permanently?
Oh, certainly. And I think that's what Iran sees and why Iran believes it's so important for it to retain control over the Strait of Hormuz moving forward. Because for Iran, the Strait of Hormuz offers really two major benefits. First of all, it's a deterrent, that any time the United States or Israel or any other country threatens Iran militarily, Iran can say, well, guess what? We are closing the world's most important energy choke point, and we can inflict significant harm on you. That's obviously what we've seen over the last few months. But I think there's another benefit for Iran, and that's just in terms of revenue. The Iranian government officials have said that they see the Strait of Hormuz as about a $40 billion annuity, just from charging service fees, insurance fees, other fees for ships going through the Strait. That's a huge amount of money for Iran. That would basically double the amount of money that they earn selling oil, which is their one major export. So I think it's going to be very challenging to get Iran to give up that control. But of course, the only way to get Iran to give up that control would require the U.S. to escalate militarily, and that doesn't seem like something President Trump really wants to do.
Why not go back to where we were? Give Iran the Strait. I mean, it seemed to work pretty well. And if we can get the denuclearization, which I thought was really the main goal here, and maybe a regime change, but that is obviously tricky, why not? Doesn't the U.S. say, okay?
Yeah, I think there's a few reasons, but I think first of all, free and open navigation of waterways is a linchpin of the international system that the United States has really buttressed since the end of World War II. And Donald Trump on multiple occasions has said that there will be no charges in the Strait of Hormuz. Marco Rubio has been even more explicit, saying that if Iran were to set up a toll at Hormuz, that would cause chaos. But the thing that's unusual, though, Carol, is if you see those really strong statements made by President Trump and Secretary of State Rubio, they really cut across the grain of what the U.S. agreed to in the MOU. Because the MOU very clearly, it says that Iran won't charge tolls, but only for 60 days. So it leaves the future of the Strait beyond 60 days not defined. And then also, the MOU said that Iran will determine the future status of the Strait alongside Oman. Gave Iran this role.
Help me understand something. I've been to the Panama Canal. I've watched big boats going through. They charge a lot. So what's the difference? What am I missing?
Yeah. So the Panama Canal, the Suez Canal, they are both man-made canals that require, engineering, officials to operate them. And so they have long charged fees. And for both the Egyptian government and the Panamanian government, they make billions of dollars a year operating those canals. I think probably the best analogy here for the Iranians would be either the Bosphorus, which is a strait, naturally occurring strait. Maybe the slight there is that Turkey controls both sides of the Bosphorus, whereas Iran is only one side of the Strait of Hormuz, or the Strait of Malacca. And in the case of the Bosphorus, there's an international treaty, the Treaty of Montreux, that does give Turkey the ability to regulate that waterway. They do make money off of it. So according to international law, the Strait of Hormuz is a naturally occurring strait. Iran should not be charging tolls there. But if they are providing value-added services, environmental cleanup, et cetera, they do have some claim to potentially charge fees. I think the challenge is what Iran is doing right now is not that at all, right? What they're saying is that if you try to sail through Omani waters, we are going to strike you with a drone or a missile. I mean, that is effectively, a gangster-style move that is really challenging for the United States to tolerate.
Hey, Edward, 20 seconds. So conflict, denuclearization, war. Like, what's the word? Real quickly. How do we call this at this point?
I think this is a war. I mean, it's a low-simmering war that doesn't have a clean ending and may not. I think it may be the type of thing where you have fighting that bubbles up and down over several years, where countries like Saudi Arabia, Qatar, and UAE cut their own side deals with Iran.
Man, kept keeping us busy, that's for sure, and not over yet. Edward Fishman, always appreciate your perspective. Senior Fellow, Director of the Maurice R. Greenberg Center for Geoeconomics over at the Council on Foreign Relations. Also check out his book, bestseller at the New York Times Choke Points. All right, good to have him here. We're going to continue to watch the developments in the Middle East, but we know market watchers continue to watch it too, Lisa.
Yes, most definitely. And we're also watching oil too on top of that. So we want to bring in Aaron Mulvihill. He's a global alternative strategist, JPM Morgan Asset Management. Aaron, so I have to turn after our conversation that we had. I'm looking at Brent crude. It's at $75 a barrel. WTI crude, $71 a barrel. They're down about 2.5%. I mean, what does that tell you after the conversation that we just had?
Yeah, I mean, we just had a great geography lesson there from Edward. If I take us to another part of the world that's actually quite interesting in terms of the impact on oil is Russia right now. You've got the Iran conflict, but also the Russia-Ukraine conflict is one of the factors that's impacting the price. So we've seen, we get questions, why is oil not even higher than it is right now? And one of the factors is Russia has got a plentiful supply of crude oil, but it's not able to refine all of that crude oil right now because Ukraine has made such an impact on the refining capacity of Russia that now there's 1.5 million extra barrels in play on global markets out there that Russia is actually exporting.
But it's not being refined, which is why we're not necessarily seeing it reflected at the pump, correct?
Exactly, and we might see diesel prices continue to remain higher even as oil prices come down.
I'm so glad you brought it together because I don't think we can talk about one war without thinking about the other because they're, between the alliances and relationships and so on and so forth, and then the impact on the global economy. Do you look, though, through the U.S. war with Iran at this point? Because there are days where the market certainly does, and then there are days that the market does not.
I think we have to. There's other dynamics at play that are just that much more important long-term than any conflict can be, and AI is just the most transformational of all of the impacts right now. So I think that a lot of investors are looking through. Over the last couple of months, you certainly had a negative impact from the war and the geopolitical issues, but there's so much positivity and enthusiasm around AI right now in public
fundamentally
markets,
backed?
in private markets. Backed by fundamentals, a lot of cash flow generation, certainly. Some of it is more future-looking. Certainly in the venture space, a lot of enthusiasm right now around not just the foundational models, but how are companies and applications going to use these models and apply them to actually generate real cash flow for businesses, for consumers. So, and we're starting to see this kind of convergence of the public and the private markets now with more IPOs coming to the markets recently and a lot of IPOs in the hopper as we see.
And there's a lot of enthusiasm around the AI trade too. But is there I don't want to say a less expensive alternative, but what else is there aside from the AI trade?
That's a question, Lisa, we're getting a lot from clients right now where they're excited about AI, that they want to be unexposed to AI, but what else is out there that's a little bit different? And so we're pointing them towards, at least in the private markets areas like real estate, that have positive dynamics, but they're not AI-linked dynamics. There's part of it is AI, but you're seeing in San Francisco, New York, property prices going up because AI companies want their folks in the office, and they're renting out office space. But that applies also more broadly to the markets. We're seeing the real estate market now recover from a bottom. And if you look around, everything looks expensive, but real estate actually today looks pretty cheap on a historical basis.
One of the things I wanted to ask you about, and something we're going to kind of dig thematically over the next couple of hours, is that you look at the Mag 7, and it is definitely lagging in a big way. If I look at the index overall, let me just pull up the Bloomberg Mag 7 index. You're looking at it up about 1% year to date. If I look at the S&P 500, it's up 10%. The equal weight is up about 12% here. The Mag 7, NVIDIA, Alphabet, Amazon, they've gone nowhere. They are trailing 300 stocks in the S&P 500. Something like a Dollar Tree or a Hubble Inc. are outperforming. Is that significant in your view?
It's a very important trend. We've been looking at this for a couple of years now. So if you go back to 2023, every one of the Mag 7 beat the S&P 500. The next year, I think 3 of the Mag 7. Last year, very mixed bag. And this year to date, again, a very mixed bag with some of them beating, some not. So we're seeing this trend broaden where it's not just the Mag 7 now, but the semiconductor companies, the memory companies, all these companies that are in the chain, as well as in the private market space, companies that are supplying the power, the infrastructure, they're being the beneficiaries right now of the AI trade. And it's sort of a cash flow conversion. We're seeing the Mag 7 spend massive amounts of cash. And the beneficiaries of this right now are those that are kind of the supply chain components of AI.
So can I just follow, just real quick, so do you think that's significant, it's going to continue? Or do you think it's an opportunity in terms of that they're, underperforming?
It's a fantastic opportunity for stock pickers. And so we think this is a good opportunity just for active management in general. So if you're sort of a passive investor, you're along for the ride. If you're an active investor, you can put the research in and understand which of the Mag 7 are likely to outperform, which of their beneficiaries and customers are likely to outperform. We're at a historical high right now in terms of stock dispersion, so there's enormous opportunities for stock pickers.
Well, you mentioned opportunities. Do you see any signs of volatility under the hood too?
Certainly massive amounts of volatility. So it will not go without volatility. There's mechanisms to avoid some of the volatility, and that's where we would point towards something that's less correlated to AI, either in the public space or then in the private space. Real estate, as I mentioned, infrastructure is another play.
Why is the VIX below 16? I don't know. Maybe not everybody loves that index.
Where you've got
but
overall stock volatility is low, but intra-stock volatility is higher because you have now this sort of dispersion of companies that are likely to outperform. If you look at software, not doing so great, although we're starting to see a recovery in some software companies. So again, stock pickers are having a field day right now and trying to identify which are going to be the winners and the losers. A lot of volatility, but also a lot of opportunity to outperform for active investors.
Are you guys super busy when it comes to the IPO season? I was talking to one of our deals guys, and he says, I am nonstop. But he also said, not everything is actually great that is being trying to get through either regulatory or just come to market because they're thinking about what happens in the midterms. Just got about 30 seconds.
It's been a historically high IPO season. Q1 was higher than, I think, any year since 2021. But a lot of companies will probably not IPO. And so it's important also for investors to be exposed to venture and private markets.
Good stuff. Thank you so much. Tying it all up for us, Aaron Mulvihill. He is Global Alternative Strategist over at JP Morgan Asset Management, joining us in studio. Hey, coming up, we talked about semiconductors. We touched on tech. Semis are rallying big time again. We've got Meta unveiling its paid AI developer model for the first time. Not sure I know what that means, but Kurt Wagner's going to be along to explain it all. Tech Talk is coming up next. Do not go anywhere.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Gains for the U.S. stock market with the S&P 500 index very close to session highs right now, looking at a gain of just about 60 points on the S&P, up by about 0.8%. S&P, by the way, currently at 75.42. Dow Industrials up 0.3%, up 174 points. NASDAQ is up 1.2%. The NASDAQ 100 index, full of those big tech names, they are up right now by 1.7% against the backdrop of the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by about 4.2%. The VIX right around 16, 10-year at 4.53%, with the 2-year currently yielding 4.16%. Gold is up 1.2%. Spot gold, $41.26 the ounce. West Texas Intermediate crude, 72 even a barrel on WTI, down 2.1%. Barrel of Brent, 76.22. It is down now by 2.3%. Meta Platforms has unveiled a version of its most advanced AI model, Muse Spark 1.1. It includes a new paid tier for developers. We've got details coming up with our Kurt Wagner. Again, recapping, S&P 500 index up 60 now, up by about 0.8%. The SOX up by 4.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Lisa and Carol, that is a Bloomberg Business Flash.
All right, so appreciate it. Thank you so much, Charlie Pellet there. Carol Master along with Lisa Mateo in for Tim Stenovic. And I feel like every day, you know this at Bloomberg, you guys cover it on the weekend. I mean, there's just so much in terms of the tech community that drops, and we're going to get into some of it. We've got Meta and a most read story on the Bloomberg about Meta. In fact, a new headline just crossed from our Kurt Wagner about Meta Platforms and Mark Zuckerberg saying that they need all the computing power that they can get, and they're exploring an AI cloud business and how it makes sense. So we're going to dig into that in just a moment. We also want to talk about semiconductors, because Micron planning to spend and increase its spending on new plants in the U.S. to $250 billion to help meet unprecedented demand for its memory chips. And we know, Lisa, it's all about the AI boom.
It is, definitely. That's all everybody's talking about. And that's a big number, 250 billion. So we're going to find out how that actually breaks down.
Yeah. And Maggie Eastland, she's up in Syracuse, and she's been tracking Micron today, I believe, at an event by Micron. She's Bloomberg News tech reporter. Maggie, good to have you here with us. Chip sector, it goes up and down and has a lot as of late. Tell us about Micron, where you were, what you saw today.
Absolutely. So I was outside of Syracuse, New York today. There was a ceremonial concrete pouring. Micron is starting to build here in upstate New York. The announcement today, should note, is an increase of $50 billion. So they already had committed to $200 billion in U.S. investments. So they upped that today. It is also over a pretty long timeline through 2035. So it's interesting to see the shares up quite a bit, given that it's such a long timeline. As we know, memory is a cyclical industry, or at least historically has been. The question going forward is whether AI will be enough to break out of that cycle. And it's super interesting to see that investors are still bullish on supply coming as late as 2035.
Now, Maggie, we've been hearing so much about tech layoffs, but this apparently going to create 90,000 jobs. Is that correct?
Yeah, that's what the Chief Executive Officer, Sanjay Mehrotra, said today to an audience outside of Clay. So a lot of jobs being created here. Obviously, that's something that could help curry some favor with the Trump administration. Secretary Howard Lutnick was also out here in New York, praising this new investment.
What's telling to you, Maggie, you cover this sector. We talk about chips, it feels like every day. If you talk to Ian King, he's going to remind us this is all cyclical, and there's increased demand, then everybody does a big build, and then there's oversupply, and then everything collapses. And memory in particular, as he reminds us, go back a few years, and they just were so out of favor. What stands out for you as you see what Micron is doing and just kind of watching the trends?
Yeah, one piece of news that we haven't talked about is that this boom is creating a lot of political problems as well. So there's a long-term problem of, is this just another cycle?
Yeah.
And will we see another downturn? But there's also like short-term political problems. Apple right now is lobbying the Trump administration to essentially be able to use Chinese memory chips, which wouldn't be ideal for Micron or any of its competitors to have more competitors in the mix, essentially able to supply Apple, which is one of their top customers. There could also be, there was a letter from SEMI a few weeks ago just warning the administration, hey, please don't do anything that would distort the market dynamics here. So there's also a lot of, due to the shortage, there's a lot of short-term political pressure. And I think we can ask the question, based on this announcement, whether Micron is aware of that, and they're sort of trying to announce things that the Trump administration will see as favorable right now, and increase its investments to, gain more favor with those officials.
Right, and then on top of this, of course, we have the listing tomorrow of SK Hynix listing its shares, a U.S. listing. And so, again, they are the world's second largest memory chip maker. So there's a lot going on in the space, and all of a sudden it does feel like a ramp up of money, spend, investor awareness. Maggie, thanks. Maggie Eastland, Bloomberg News tech reporter out there in Syracuse, New York. Hey, we want to stay with tech and get to a couple of stories by our own Kurt Wagner. He is catching up, or caught up, I should say, with Mark Zuckerberg earlier for a lengthy interview and a few reveals. He is, of course, Bloomberg News senior technology reporter, Kurt Wagner. He's out there in Denver. Hey, Kurt, a second story just dropped of yours on the Bloomberg. Talk to us about your conversation with Zuck and like how it came to be, the timing of it all, and what he wanted to talk about and what you wanted to talk about.
Yeah, those aren't always the same. No. I think in this case, it ended up working out. But, the news that he wanted to talk about was this new model that was announced a few hours ago, Muse Spark 1.1. The model is, I think there's two things that are unique about it. One is sort of, it's improved with agentic capabilities and coding capabilities for Meta. That's a big deal. They've sort of always lagged behind the OpenAI, Anthropic, Googles of the world. In this case, Mark Zuckerberg was very excited to tell me that they've actually surpassed Google's Gemini in most of the benchmarks that they were measuring against. And so this sort of felt like a leap for them in terms of model quality. So I think that's one. The second big thing, of course, from a business standpoint, is that they're going to sell the model to developers via an API. So Meta will host the model on its own, data centers or infrastructure. But if you're building on top of it, if you're using it as a business, you would pay Meta a fee to access it, which is a business that we've seen from Anthropic and OpenAI and others. So Meta's kind of catching up on that front. And, he was excited to talk about that. And that took up a good portion of our conversation. But as you mentioned, we had another story just drop, which I'm happy to talk about, related to their cloud aspirations, which was something I was eager to talk to him about.
Well, go there, because I find it interesting, because they really, weren't like all the other hyperscalers, right? I mean, and now it sounds like they're leaning in big. Is this because they want to be like Amazon and have data centers for others, or is this them planning for the future when they need data centers?
I think it's both. And, to be clear, he stopped short of confirming our report last week that they were developing these businesses, but he spent a lot of time explaining why those businesses might make sense for them. And so there's kind of two parts to this. The first is, like a CoreWeave or a Nebius or something, they might just say, hey, we have excess or extra computing capacity, let's rent it to someone else who needs it and make a nice premium on that. They're one of the companies that can do that because they have all of this infrastructure in place and they're building a lot more. So that's one potential. The other is sort of doing what they're doing with Muse Spark right now, which is host models on their infrastructure and then sell access to them. It's something like AWS has a product called Bedrock. It's very similar. In that case, Meta would go out and actually have licensing agreements with Anthropic and OpenAI and others to kind of host their models, but then distribute them on their behalf and use their infrastructure that way. Both of those things I floated to Mark Zuckerberg. Both of those, he spent a great deal of time explaining why that would make total sense for the company. But again, not saying we're announcing anything today, just that it's, these are the types of things we are thinking about. And so I think, again, if you're an investor in Meta, you have to be somewhat encouraged by the fact that 3 or 4 months ago, we were sitting here going, hey, what's the business around this huge AI investment? And now today we have several different things that they've announced in the last couple of months where they're trying to make money from their AI investments, which, again, are very hefty and very steep.
And they've been making money. They need to make money because they've been spending money, right? And so let's talk a little bit about Zuckerberg's big spend. Okay, so he's been aggressive with it. He's trying to keep up with OpenAI or Alphabet or all of them. Is he feeling the pressure? Can you talk about his big spend?
Yeah, they're spending aggressively. It's they had record capex projected for 2026. I'm going off the top of my head here, but I want to say it was in the $140 billion range. They He's committed to spending $600 billion on AI infrastructure projects across the U.S. over the next couple of years. You know, they're building a data center that our colleague Riley Griffin went to visit down in Louisiana that is expected to be upwards of $200 billion for that single data center. So he is throwing money around very aggressively to build the infrastructure here. The question was always, well, what do you get from that, right? And up until very recently, the answer was, well, our ads are going to be stronger, or our recommendations and feed are going to be better. And that wasn't super satisfying to a lot of people. Now we're hearing them say things that we're hearing those other AI companies talk about. Hey, we're going to maybe rent capacity. Hey, we're going to charge an API for our models. We're going to charge a consumer subscription for our chatbot. Like, those are the types of products that they've started to tease over the last couple months, which makes, I think, stomaching a $200 billion data center at least a little bit easier if you're a Meta investor.
Does it get investors excited? And I'm just looking at Meta shares down 7% year to date, down 22% since August of 2025. Why are investors not so impressed, Kurt?
Well, because all of this is sort of ideas at this point. It hasn't necessarily shown up on the balance sheet at earnings, right? It's like the story that we wrote last week about them considering these various cloud businesses I talked about. That sent the stock up 9%. I think it was $125 billion of market cap moved in a single day. That's people excited about the prospect of them making money from this. But that's a big difference from, you know, showing up at a quarterly earnings and saying, here's the money that we made.
Well, there are ideas like making glasses, and then there are ideas like the metaverse. Like, which one is this? Or we don't know yet.
I think this is much more glasses than metaverse, because one of the things Mark Zuckerberg and I talked about in our conversation was the AI's ability to do agentic stuff. So, you know, personal assistant, but also multimodal. He talked about that a lot. This ability not just to read text or to analyze a photo or a picture, but to be able to analyze video, to be able to analyze even sound, right? Like, if you are wearing glasses and you have AI built into the glasses that's supposed to be your assistant, you need those glasses to be able to see, where are you? What's happening around you? What are people talking about? And so they're building this AI specifically for those use cases, which to me feels a little bit different than this sort of, the metaverse felt very VR to me. I know it's not exclusively VR, but that sort of was like, you put on the headset, you kind of transport to another world and you're in the metaverse. The AI stuff they're doing feels a little bit more real life, in the sense that, hey, you're going to wear these glasses out and about, and you're going to have an assistant talking in your ear the whole time that can, you know, help you do things or see things that you might not otherwise see.
Yeah, and we've been talking about this AI lab too. So is that part of it? I mean, they're spending billions on AI talent to be part of it. How is that progressing?
And just got about 30 seconds here, Kurt.
Yeah, Mark Zuckerberg says better than he thought. That started a year ago, essentially from scratch. He's very happy with where they're at. All the stuff that we're talking about is pretty much coming out of that lab. So obviously the business framework is somewhere else, but the technology is from that lab. And so he was praising the lab in our conversation, for sure.
Yes or no? Was he happy?
He seems happy.
Okay. I always like to know how people are, like their mood. Hey, Kurt Wagner, thank you so much. Bloomberg News senior technology reporter joining us from Denver. When we come back, we're going to talk politics. The Democratic infighting that's put the party's midterm targets at risk.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks pushing higher. Chips, the big story today. The SOX, the Philadelphia Stock Exchange's semiconductor index, up now by 4%. NASDAQ 100 up 1.6%. NASDAQ up 1.2%. The S&P is gaining 0.7%, with the Dow up by 0.2%. Not just chip makers, but oil is declining. That's also giving equities a boost. The Bloomberg Mag 7 index up 0.6%, and the VIX right around 16. The 10-year 4.53%, the 2-year 4.16%. Spot gold up 1.1%, 41.24 the ounce, while West Texas Intermediate crude down 2.3%, 71.86 a barrel. Earnings news. PepsiCo said consumers pulled back in the second quarter, slowing its efforts to revitalize its North American snack business. Today, we're looking at shares of PepsiCo down 3.8%, rival Coca-Cola down 1.2%. Also reporting earnings, Levi Strauss, the stock trading lower by 1.1%. After the bell, tomorrow morning, by the way, we will be hearing from Delta Airlines ahead of earnings. Delta surging now by 2.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Lisa and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Ready to talk some politics?
Let's do it.
You are on our planning call. You're like, we got to do some politics here, guys. All right, so let's get to it. I don't know if you've checked the calendar lately, but we are less than 4 months away from the November midterms, which is kind of amazing because I do feel like they're creeping up on us. We do find Democrats facing some infighting between some different factions, which threatens to undermine the party's potential success in those midterm elections.
Yeah, and it's just around the corner, too.
Yeah, exactly. And we've seen the crisis playing out in real time. We've seen that in Maine, where Senate candidate Graham Plattner has sought a say in how he is replaced on the ballot following a sexual assault allegation, which he has repeatedly denied. He did comment on this yesterday, and he talked about suspending his campaign and moving to withdraw from the race.
I have faced some very serious allegations, and I just want to make it clear. This is all false. We did it the way that we were told we are supposed to make change, and we won. And now they are not going to let us have it. Not if it's me. And so we're suspending campaign operations.
That was Graham Plattner last night on social media. Let's get more on the troubles among the Democrats. Bloomberg News senior national political correspondent Nancy Cook. She is in the Bloomberg News DC bureau. Hey, Nancy, good to have you here with Lisa and myself. Let's start with Graham Plattner and how that illustrates some of the infighting going on among Democrats.
Well, what's basically happened is that, Graham Plattner was not the pick of sort of the moderate centrist wing or Minority Leader Chuck Schumer. He was really the pick of, a group of consultants who went looking for a new type of candidate and didn't really vet him at all. And then he managed to start campaigning, and he excited a lot of people in Maine with his message about economic populism. And really, Janet Mills, who's the governor there, dropped out before there was even a primary. And so, it speaks to his candidacy, really speaks to just people's desire for, fresh faces, Democrats trying to find new types of candidates to represent them. And now there is, of course, a race on to see who's going to replace him over the next few weeks. But it's really just distracting from, the top Senate race in the country in Maine. We have Susan Collins, who's an incumbent, who's going to be very well funded. And it's just tricky right now because Democrats should really have the wind at their back in the midterms.
So, Nancy, where do Democrats go from here? And also, does Plattner have a say in any of this?
Plattner isn't going to have a say in it. The Maine Democrats have taken over the process, and they're going to have a convention. We think the last weekend of July, there's going to be 600 delegates. There are several candidates who have already thrown their names out there. I think that we'll see even more to come. And so it's just a matter in the next few weeks of the party in Maine identifying who is going to be the Democratic nominee. And it will be really interesting to see what Maine voters think about this. Who is going to actually get to decide this? Will there be a debate? And what do different, DC groups and donors, how are they trying to play in this?
Well, on the same thing, what lesson do you think Democrats learn from this? I mean, why did they wait so long? I mean, we saw kind of the writing on the wall with Plattner. Why did they wait so long?
Well, I think they waited so long, and he really enjoyed the support of some key progressives like Senators Elizabeth Warren and Bernie Sanders and Representative Ro Khanna, because the Democratic Party is really desperate to win back working class voters, particularly men. And I think that, he agreed with a lot of progressive policy positions on taxing people or how they view economic policy. And so I think that these more establishment politicians or people here in Washington were willing to overlook some very obvious red flags on his resume and potential problems and a lack of vetting because he espoused the same policy positions they had, and because, as I said, Democrats are so desperate to win back white working class men, and they felt like, here's a guy who's an oyster man, he's a veteran, he can help us reach new types of voters.
So can you talk us through kind of the bigger picture? Like, what's the bigger impact if Democrats lose Maine? What can happen?
Well, the bigger picture is just that they run the risk of not taking control of the Senate in November. Democrats, basically need to flip 4 Senate seats to take back control of the Senate. And Maine was viewed as one of the best possible chances that they had. And so by having this race sort of descend into chaos and infighting and people not really being sure what's going to happen, really with just 4 months to go, it makes the larger prospect of Democrats taking back the Senate much trickier. And, we have another key primary in Michigan coming up in August. That's also going to be a moment when voters will have to decide between the more progressive wing of the party and also a more moderate candidate. So there's just a lot of infighting now within the Democratic Party over the future of the party and what it should look like. And that is clouding out things that they could be doing, like talking about their own agenda or critiquing Trump, who is underwater in the polls, or his handling of the economy.
Oh, gosh, Nancy. Here I keep thinking, all right, so President Trump first came to the White House in 2016, lost in 2020, Joe Biden was back. Here we are now, Trump won again, President Trump won in 2024. I mean, Democrats have had a lot of time to figure out strategies. And I find it interesting that you're saying, like, the clock is running. Maybe they need to be a journalist, or maybe they don't, because sometimes we wait till our final deadline to get it done. But come on, like, who is the head of the party? Who's really helping them say, guys, this is an opportunity for change. Let's listen to America. Let's figure out something different. Like, I don't understand why it just feels like the clock's ticking and they're under pressure and they don't really have a great strategy.
Yeah, that's true. Those are all great points. They don't have a clear leader right now. There's not a clear ideology. They're fighting among themselves. I talked to, one Democratic operative yesterday in D.C. who said, look, primaries are supposed to be the party sort of hashing out their differences. It's useful for people in the party to disagree. But what is happening is that the infighting is really threatening their ability to take back the House and the Senate. And that's just a larger issue for them about how they're going to actually wrestle power back from the Republicans and whether or not they'll be able to.
So the last 30 seconds that we do have here, Nancy, what does the path to creating this united front look like? What does a kumbaya moment look like for the Democrats?
Well, I think that what they have to do when they identify whoever the candidate is in Maine and they pick someone in Michigan, the party just really has to get behind those people. And, the infighting has to stop and the donors have to start giving money and Democratic voters also have to turn out.
And you just said giving money, that's going to be an issue as well, isn't it?
That's a huge issue. Yeah. Republicans have about 3 times as much money as Democrats heading into the midterm. So, Democrats have a historical advantage. Typically, the party in power loses congressional seats in the midterms, but Republicans have a ton of money in their war chest.
Just going to say 2016, 2020, 2024. Here we are. All right, Nancy Cook, thanks so much. Great story. Bloomberg News senior national political correspondent Nancy Cook. She's out there in our D.C. bureau. Quick story we just want to mention. Goldman Sachs has banned employees from trading on prediction markets except for sports and entertainment bets. So again, we continue to see pushback. This story by our Todd Gillespie. Check it out. It is on the Bloomberg terminal. All right, we are headed for a break. We've got a market where we are seeing certainly the tech sector outperform, the NASDAQ 100 leading on a percentage basis. We'll get another check on the trade for you in just a moment. We'll also take a look at stocks on the move. That's coming your way. I'm Carol Master along with Lisa Mateo, and you are listening and watching Bloomberg Business Week Daily on this Thursday. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, folks, it is 2:53 on Wall Street. Carol Masser along with Lisa Mateo. We are getting close to the last hour of trading on this Thursday. Just a quick rehash of where we are. Pretty much, Lisa, stocks hovering near their highs of the session. What does it mean? S&P up about 56 points, or up 0.7 of a percentage point, 0.75 of a percentage point, I should say. Dow up 119, if you care, up 0.25%. And you've got a NASDAQ 100 that definitely is leading the way, up 1.6%, up 476 points. So we're definitely seeing risk on trade here.
Again. Yeah, and you'd never think we've been talking about so much about geopolitical pressure, Iran, everything, and
everything is awesome.
Everything is on fire. But even look at oil. Brent crude down nearly about 2.5%, and WTI crude down about 2.5% too.
Exactly. So kind of looking through it, but we have been here before. We know that, and that's after 2 days of gains in global oil prices. I'm Carol Masser along with Lisa Mateo. Let's get to some stocks on the move. With us to do it is Bloomberg News Deputy Team Leader and Senior Reporter. She rocks always, Jess Metton, and she joins us with Stock Movers. Good to have you here.
Always a pleasure. So good to see all ladies here right now. But we love Tim.
We kind of know who rules the earth. I'm just going to say. All right, let's get to